In there. DAX futures pretty flat, Eurostoxx 50 futures as a whole pretty flat. And Tom, we are layering in a host of corporate earnings stories this morning.
In focus for us very much on that point will be the banking stocks on the back of a decent beat, very strong set of numbers from UBS. We've been speaking, of course, to the CEO, Guy Johnson's been there, of course, with Sergio Amotti. Santander as well, a strong beat. Lloyd's coming through with numbers. So banks very much in focus for us today. Mercedes was actually a beat. It was a little bit softer in the Chinese market. Not a big surprise given competition there, but they got new models in the pipeline. And top line, it was a beat for Mercedes, so watch that stock for you as well. Adidas also a beat as well, and this has been quite the journey for this maker, of course, of sports shoes. First quarter operating profit coming in above the estimates at around 705 million euros.
Absolutely. So the earnings story is certainly front and centre today. We've got plenty of European banking earnings, as Tom's just been going through there, and other corporates from other sectors as we work our way towards, yes, a Fed rate decision later on, but crucially, all of those earnings reports after hours due from big tech, where CapEx will certainly be very much in focus. Let's, for the moment, though, focus on a European earnings season, earnings story and how that ripples through the markets here. We've had banks reporting from various markets, from Spain, from the UK, from Switzerland, so we'll certainly keep those in focus. Are we going to see the markets jumping on the positivity around those bank earnings stories, or finding any chinks, any kinks perhaps in the guidance coming through? But that's one of the sectors that's firmly in focus this morning. So the FTSE 100 pretty flat, actually, out of the gates. Might we see a bit more downside? The futures have suggested we'll see a bit more downside on the London market this morning. We've had big pharmaceutical companies in the UK reporting, GSK, AstraZeneca, both reporting numbers as well today. The CAC 40, I can see, is down by 0.2%. The IBEX over in Spain also down by 0.2%, 0.3 in fact. But sometimes that is a market that just moves around more than the others. The AEX over in Amsterdam is up by 0.2. So we have actually, Tom, a really quite divergent picture across these equity markets. I wonder if some of the sector influence on these indices is what we're seeing coming through at the top level.
We're seeing a bit of a rebound for tech. That's the top performing sector right now, Anna, with gains of a little over 1%. It had been the biggest drag across the European space yesterday. So tech is up there. Financial services also gaining around 1.1%, close to 1.2%. So financial services, tech, telecoms, basic resources, autos as well as a sector performing positively. Most sectors in positive territory. The headline level, of course, across the stock 600 gains, as you were saying, of a little over 0.1%. On the downside, it's retail. Biggest losses coming through there. That sector currently down 0.8%. Losses on consumer as well, up down 0.7%. So retail and consumer under pressure. Interesting, despite the beat that come through from Adidas. Top of the list across your sectors, financial services and technology.
Yes, indeed. So that's the sort of sector breakdown picture. I can see the financial services, yes, is just, so technology strong, but financial services also strong, and that takes my mind to UBS, and indeed it is the UBS effect. So UBS opening up by 5.7%. So as a result of that, we see some strength coming through in the financial services space. Technology, as you rightly point out, doing really well as well. And retail, consumer products and services, yes, certainly at the bottom of the basket. We have a couple of ex-dividends coming through in the retail space, so we'll keep that in mind. Carlsberg of interest as well. We got some numbers coming through, volumes of beer sold, for example, and the earnings story, and that stock up by more than 3% at out the gates this morning.
From the micro to the macro now, because we have Spanish CPI crossing inflation data out of Spain. Year-on-year CPI for the month of April, you're looking at 3.2%. That's year-on-year. The survey had been for 3.5%. So on a year-on-year basis, a little softer. When it comes to the monthly print CPI out of Spain, you're getting an increase of 0.4%. The survey had been for 0.9% on core. Important, of course, when it comes to how the ECB thinks about these inflation prints. CPI core year on year, 2.8%, a little softer again than the survey and a little softer than the previous month as well. 2.8% is the number on core.
Yeah, we'd seen the previous month, so March, we'd seen a bit of a jump up in the Spanish inflation picture as a result of everything that was happening in Iran. And so maybe April, in that context, looking less dramatic. But our colleagues over at Bloomberg News on the Eco team choosing to focus on the EU harmonised 3.5% number, which actually shows a bit of a step up. So we will keep that in view, and we work our way towards the German numbers, which are due out a little bit later on today. Let's talk about where we are on these equity markets. We are joined now by Quay Nguyen, who is with us this morning, CIO of Equity Strategies at Research Affiliates, and nice to have you with us. Thank you very much for coming in, Quay. Nice to get you on the programme. So let me ask you, taking a step back, we've got a lot of earnings reports out today, and we'll have a lot of earnings reports out from big tech in the US later. It's easily, I've had to remind myself of where we are year to date on these equity markets, because I've been so focused on the recovery we've seen in big tech that actually that was perhaps masking where else we've seen some strength. So actually I was quite surprised to see that Asia and emerging markets have done better than the S&P if you look year to date, despite the strength that we saw in big tech. And of course that year to date picture hides a whole lot of volatility, but you quite like things outside the US right now. Talk us through your thinking.
Yeah, absolutely. I mean, we've always been advocates of diversification, not just geographically, asset classes, and so on and so forth. But one of the things that we've seen is that valuations in the non-US, not just in Asia, in emerging markets, but also in Europe, are much more reasonable. And you're getting to a point where you have some very, very high quality companies that aren't necessarily trading at the same multiples that you see in the S&P, which is dominated by the Mag 7.
Yeah. Okay. So that's where we see those mids. So what about emerging markets? I mean, that's one area that I think you also like, and yet emerging markets, when you think about the strength that we've seen in the dollar, some people have suggested that that's a sort of challenged investment theme. You don't see it that way.
Having a dollar strength is always challenging, but if you look, you have to look at this over the longer cycle, right? So last year we saw a significant period of dollar weakness, very, very supportive. It's not clear to me that the dollar strength is necessarily something that's here to stay. I mean, a lot of fight for the dollar this year is really because people are looking for a good bunker to hide out in during the Iran war. Now that markets are beginning to look past that, I think that we're going to see some more stabilization there. And the fundamentals in the emerging markets remain strong, and so we continue to like those markets.
To have conviction in EM, you need conviction on weaker dollar.
No, to have conviction in EM, you need conviction on global stability.
Okay. What's giving you the evidence that there's going to be global stability anytime soon?
Well, I don't think that I think that the Iran war was a big kind of left tail event. But I think what we're seeing now is that the focus in the U.S., at least on the political side at least, is to reach some form of global stability. It's not, I mean, if the United States really wanted to escalate, the United States would have done so by now. But again and again, what we're seeing the message now is we want to reach some form of resolution. We want to reach some form of global stability. Markets are basically looking to see through what's happening over there right now.
I'm just trying to weigh up the current stronger greenback and the inflation impacts and the exposure of many EM markets to the oil price shock. Not all of them, but many within that basket, and how that factors in to that bullish call on EM. This is a longer term view rather than here and now.
This is a longer term view. I think that the EM has already taken that hit, right?
That's already priced in.
A lot of it's already priced in, and I think markets are now beginning to recover and trying to see through all of that. Having said that, oil prices can go up, but they're not going to continue to go up 20% every, week.
Right, yes, well, yes, there'd be some demand destruction perhaps if they did. Quay, let me ask you about big tech over in the States then, because we're going to get some earnings from big tech names, 4 of them reporting after hours today, so that's going to be a real focus for investors. And there's such a big chunk of the S&P, there's such a big chunk of the US equity capital markets that they're difficult to avoid. Are you looking to increase exposure to big tech or retreat from that? How are you treating that dynamic?
So big tech has really lagged over the last 6 months, maybe 6 to 12 months or so. And yet, what you find is that these companies continue to grow. Their earnings are very, very solid. Their fundamentals are very attractive. The problem that they had was that the markets got ahead of those fundamentals. And so our expectation is that there could be some opportunities to pick up some of these very high-quality names at more reasonable valuations going forward. In some of our strategies, many of our active strategies, we already own some names. We've owned Meta in the past. Last year, we actually picked up some Alphabet, and more recently, we're starting to bite on Microsoft.
Yeah. Okay. And what signal will we take from the capex commentary that we get from these big tech names, do you think? Because on the one hand, you need it to be strong enough to comfort that the AI trend is still there and worth investing behind, but not so strong that it really starts to eat more than it has already into free cash flow. Seems to be one way to sum it up, but I don't know what the right number looks like.
I think these companies are so cash flowing that so far their capex spend seems pretty reasonable. I think they're, or pretty affordable. I think the big question is, what are they going to say in terms of when investors can start to see a return on this investment?
In light of that, I mean, we saw the jitters yesterday as a result of the reporting, the Wall Street Journal reporting around OpenAI and its shipments. What do you make of that? Is that a buying opportunity for some of these OpenAI exposed names, or is that a material concern?
I'm not sure that it's a material concern, because if you look at OpenAI, you say, wow, they really disappointed, right? And yet many, many companies would give it their right arm to be able to grow as quickly as OpenAI is growing. And so I think there's still a lot of fundamental growth there. It's just a question of, is it overly priced into the markets or not?
Craig, when you're thinking about your diversified portfolio then, I mean, is there a place for healthcare? Is there a place for some of the sectors that...
Absolutely.
You don't necessarily take them for the big growth numbers, but they have defensive qualities.
There are some stocks in healthcare in particular that have been very, very undervalued, and they've popped, right? I mean, one of the big names that's popped over the last 6 months has been Bayer, but also in the United States, Bristol Myers. So these are not the most exciting names. Nobody goes around going like, wow, I bought some pharma stocks. They talk about tech and everything. And so we're finding some significant overlooked opportunities in many of these areas.
What else beyond healthcare?
Well, we're seeing strength in financials, one of the things that you mentioned already. And then also I would say in communications. So in communications, I know that Meta and Alphabet have been very, very big headliners because of Mag 7, but also you're seeing things like Vodafone pick up. So
Vodafone is not a sexy name when you think of tech, necessarily for some, I should caveat. But it does, in terms of the pace, in terms of when you look at the stock performance of a Vodafone versus a Meta, I mean, there's a huge differential.
There's a huge differential, but also Vodafone got so cheap, right? And I don't think that you can really get a big explosion in technology without telecommunications coming along for the ride.
Okay, well, that's one of the stocks that is on your docket, along with healthcare as well, and a view on EM. Thank you very much indeed for the analysis and for the insights on these markets. Quayne Yuen, research affiliates, of course, with those insights. Let's check in on the core 6 right now. Again, big day, of course, for earnings, so that is filtering through for some of these names. We talked about tech because that was the worst performing sector across Europe yesterday, and ASML was a drag there, dropping around 3%. Today, ASML is up 0.8%, so repairing some of the damage. Schneider Electric exposed the data center story, up just 0.1%. A little bit of a weakness that we're seeing for LVMH in the luxury space, just down 0.6%. Nestle as well, also off by 0.4. A little bit of downside pressure for Novo Nordisk, down 0.2% right now. So that's a touch on the core 6. Rheinmetall in the defense space, up 2 points, 2.4 points. Let's get a check on some of the other individual stocks on the move, again, through the lens of the earnings story with Charlie Wells. Charlie.
Good morning, Tom. So the market really is digesting this raft of earnings that we've got dropping this morning from a lot of these banks and a lot of other big companies across Europe. You can see sort of a mixed picture as the market sort of works through the profit beats that all of these banks had. You see Deutsche Bank down. You see Lloyd's down. I think there's some questions here about trading, right? We saw huge trading bonanzas coming from their Wall Street competitors, but again, not so much here. Some of this is the dollar story, right? A weakened dollar actually does not bode well for banks trading here in Europe as they convert those dollars that a lot of their trading desks trade in back into, say, euros or pounds. So some pressure there, but UBS really up almost 5% this morning. Now, this is really striking, right? Because UBS has really been battling the Swiss government about some capital requirement legislation going through, but they had a really strong profit beat and also gave some indications of potential payouts back to investors. So that really could be boosting some of the sentiment here. Boosting sentiment as well, let's turn to Carlsberg, because they saw some strong volume in their earnings report. I want to talk about them because up over 4%. Now, we know that the alcohol market has been challenged recently because people are kind of, teetotaling. They're pushing off some of these alcoholic drinks. But what Carlsberg had to say today was that actually their non-alcoholic beverages are performing well. So again, giving them a boost, the market liking what it's seeing here. Let's flip to Adidas, another really great read on the consumer here in Europe and globally as well, up almost 8% here. Now, this is striking, right? Because the footwear market, if you go to a shoe store today, you will see it is so fragmented. Some of these big kind of storied brands have been struggling. Not Adidas so far. They had a really good earnings report. They had, that Samba, some of these classic sneakers giving them a boost. But also, anyone who watched the London Marathon over the weekend would have seen that some of the winners were wearing Adidas shoes. So bodes well for the prior quarter, but also for the quarters going forward this year. So Adidas up almost 8% this morning. Another great read on the consumer, but also a lot of the news that we've been hearing. Mercedes, so interesting. They've been facing some challenges in China. Of course, we know the fuel price. We know that consumer is downbeat right now. Fuel prices, again, putting consumers in a negative mood. But again, giving a pretty strong outlook, saying they've got pretty good orders going forward. And Bernstein analysts saying, it was a pretty good report for what looks like it's going to be a complicated year. So Mercedes in the green this morning. And then we've got deal news. We've got Kone, the Finnish elevator maker, agreeing to buy TK Elevator. That is giving some positive sentiment to this space right now. So Kone up over 1%. ThyssenKrupp, this is interesting, right? Because they hold stakes in TK Elevator. So that seems to be giving them a lift this morning. And for Kone, this is important. This could be one of the biggest private equity transactions in Europe ever. And also, interestingly, it would give Kone more access to that very lucrative elevator maintenance market in the United States. So the market liking what it's seeing, a lift for these elevator companies, if you catch my pun.
Oh, we certainly do, Charlie. Brilliant. Thank you very much indeed. Charlie Wells on that lift. In the deal-making space. Charlie, thank you. Coming up, Airbus suffering a steep profit drop as aircraft deliveries slow. We'll get details on that aircraft maker, of course, and the future, what it all means for the months and quarters ahead. That's next. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
every trading day, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's the world's second-largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
The recent developments in the Middle East are now putting a new major uncertainties on the table, with supply chain disruption on energy and driving inflation higher, and potentially already, as we speak, denting a little bit the consumer confidence in the world.
It's still very early days. It seems if this situation lasts for longer, that GDP growth all around the world might be a little bit lower.
In this geopolitical environment, if you have a bank that has the risk management capabilities that we have, for example, on the fixed income side, and then you have the advice capabilities that we have on the wealth management side, it kind of plays to your strength.
As long as labor markets remain strong, as they are at the moment, this is not a negative scenario for a retail bank like us.
The impact of what happened will be resolved in a classical way we saw in the last 10 years, V-shaped. Everything is going to go back into normality.
Executives from Deutsche Bank, UBS and Santander on the potential risks from the conflict in the Middle East, and talking about the bounce back there from Sergio Amolti. Let's quickly check in on what we see in the banking sector then this morning. I mean, broadly speaking, we're seeing quite a lot of movement to the upside in UBS and downside for Deutsche Bank. A lot less movement in Santander and Lloyds Banking Group, but that's what we have right now. Let's bring into the conversation Force of Analysis, Tom Metcalf, our EMEA Finance Managing Editor, who's with us on set this morning. Tom, let's start with the big move upwards, and that is UBS, up by 4.4% right now. A strong set of numbers, still not a huge amount of clarity on the capital requirements from the government, but a strong set of numbers.
Yeah, and it's interesting that capital reform hasn't really dominated the conversation, this set of results yet. But yeah, no, I think investors looking at those results, really interesting to see inflows back at the US sort of wealth management arm. That was always sort of a bit of a overhang. And then, of course, there was some very carefully worded language, both from Amolti and in the statement. They've already got this $3 billion buyback out there, but, you know, reading between the lines as a suggestion, maybe there's a bit of upside around that, and I think that always encourages a bit of a jump in shares.
Deutsche Bank, different fortunes for Deutsche Bank. Top line earnings were a beat, but it seems like provisions are weighing on the stock. The stock is down around 3.1% right now. What kind of stands out to you from the Deutsche story?
I think you're right. I think it's that provision story where they are just warning on CRE, for instance. So that's a surprise to the downside. But yeah, it's an interesting tale, right? Like, you know, it did look like trade held up at least. And I think the challenge for Deutsche Bank, as it was for Barclays yesterday, is even if you have a strong performance, you're in the middle of the pack. You know, when you look at those US banks, really what investors want to be impressed by that is, record-breaking stuff, a bit more like what we saw out of UBS.
Let's move on to the Spanish banking sector. Santander's share price moving a little higher this morning, up by around 0.8% in a pretty flat market. Interesting that the CFO was telling us that the hit from MFS, which has been something that's been rippling through so many of the banking stocks in Europe, so the collapse of MFS having an immaterial impact on Santander, according to the CFO, which was interesting. Away from that, what else stood out to you from the narrative from Santander?
Yeah, I mean, strong lending. It does seem like a lot of the sort of core bit of that bank, retail across the world really is doing well. And yes, on the MFS front, again, like Barclays, sort of saying this is all in hand. Obviously, unfortunate misstep, but kind of reassuring words there for shareholders.
Lloyds Bank, currently flat, essentially. They've reiterated their guidance. The UK arguably is in a more challenged space, given the growth dynamics and the inflation hit. How is all that factoring into the fortunes of Lloyds?
Well, it's hard to see in sort of tangible changes in any of their results, right? I was watching the headlines come through, and broadly as expected, guidance the same, somewhat of a beat, but yeah, basically almost sort of business as usual there. And despite, as we just heard from those executives, all these big geopolitical challenges, which even for a UK-focused bank will massively impact Lloyds, you would think. Broadly speaking, they haven't really cut through into the results or the outlook yet, and I would say that's just true of all banks. It's another sort of set of earnings where, despite everything going on in the world, you look at the banks, you look at their provisions, you look at kind of any signs of distress, you're just not really seeing anything like that yet.
At the moment, they're making the money on the volatility, aren't they?
Exactly.
Certainly, equity markets have been an area of
Is that a theme that continues into the second quarter? Tom Metcalf, thank you very much indeed on the banking space, of course. Let's switch focus to the industrial player that is Airbus. Shares moving, of course, higher after the plane maker said it is confident, you can see the gains there, 2.6%, it's confident it can achieve its full-year aircraft delivery and earnings targets. This despite a steep earnings drop in the first quarter amid a persistent engine shortage, holding back jet handovers. It's been a long-running issue. Let's bring in Bloomberg's managing editor for aviation, Benedict Kamel, joining us from Berlin. Benny, Airbus, a slow start to the year then. They're talking confidently. How achievable do you think are these full-year targets, given all the headwinds this industry is facing?
I mean, investors are clearly looking at this as a sort of glass half full scenario, but you're right, it's been an incredibly slow start to the year. They handed over only 114 aircraft in the first 3 months of the year, and their target for the full year is 870 aircraft. So that's a real stretch if you think that's something they can achieve in the last sort of 3 quarters of the year. However, Guillaume Faury, the CEO, yesterday saying, look, we wouldn't put out these numbers if we didn't feel good about them, and right now that's how we feel. Yes, the environment is choppy. Yes, the Middle East is something that concerns us all. But the good news is, so far, no customer has cancelled anything. No customer has deferred orders or asked for some sort of delay. Quite the opposite, actually. A lot of customers are coming to us and saying, we need those fuel-efficient aircraft right now because of what the price of fuel is doing. So there is an impetus to get those aircraft out faster. But as you said, one key issue here is the engines, and they don't have them at the moment, particularly those made by Pratt & Whitney. So as long as they can resolve that problem, they should be okay, but that's a big if.
Yeah, it's really interesting, isn't it, that this would have seemed, this seems on some levels as if it's the kind of statement that could disappoint. Morgan Stanley saying these were weak numbers, they missed against consensus, but at the same time there was nothing overly surprising, and some comfort was taken from the way they are ramping up to produce more aircraft. So a real mixed bag. So where does all of that leave Airbus against Boeing?
Well, it's always the back and forth between the two companies, and Boeing reported last week, and they had a really solid set of numbers. And if you think about the last couple of years, Boeing, frankly, was a basket case, and their earnings showed as much. And they usually had, heavy charges, steep losses, and they've really come back, and particularly on the production side. So in some ways, the tables have turned somewhat. I mean, Airbus is still in a stronger position than Boeing was when it was weak, but still, sort of the boot is on the other foot in a way right now with Airbus, and they have to sort out these engine issues. But as we heard from Morgan Stanley, no real surprises in the earnings, nothing ugly that people weren't expecting. We did hear from Airbus 2 months ago with their full-year earnings, so there wasn't a big sort of change of mood between what happened in February and where they are now. So people are thinking it's broadly under control. They know what the issues are. They are talking to Pratt & Whitney to get these engines back into the door. And as I said, as long as they can resolve that, they should be okay, because the demand picture is there, and the aircraft are in high demand. The customers want them, so that's really helping them.
Benny, thanks very much. Thanks for joining us. Bloomberg's managing editor for aviation, Benedict Kamel, with us from Berlin. Coming up on this programme, we will be talking to Jean-Claude Trichet, the former president of the European Central Bank, of course. That's ahead of tomorrow's ECB rate decision. Somebody who knows quite a bit about managing interest rates at a period when inflation is on the rise and growth may be under pressure. We will certainly get his insights on where the ECB could go next. This is Bloomberg.
Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
This is the opening trade, 30 minutes into a really busy session for European corporate earnings. So let's take stock of where we have got to. Well, we haven't moved all that far at the overall European equity market level. We're down by 0.1% on the Stocks Europe 600. But beneath the hood, different geographies telling slightly different stories about the performance here. The Xetra DAX actually up by 0.2%. To the downside, though, the FTSE 100 being weighed down a little bit by what we're seeing from some in the drug sector. Also, the Rolls-Royce under pressure a little bit. So we see BAE Systems under pressure a little. So all of those heavyweight names taking the edge off the London market just this morning. And the CAC Carron down by 0.2%. Tom, what do you see under the hood?
Yeah, it's a turn of sentiment, isn't it, from the futures picture that had pointed to modest gains for European stocks. But certainly the earnings story is providing that granularity across the Stock 600 then. The majority are now in negative territory, to your point. Down 333 are currently in negative territory. In terms of where you're seeing a bit of upside, 245 stocks currently in positive territory, 246. In terms of volumes are down close to 20%, 17.4%, so that's something factoring in as well. Slightly lighter volumes. Again, a massive week for earnings. You've got the mega tech earnings coming through from the US later today, and of course the central bank action as well through this week with the Fed later today. UBS on the leaders and the big gainers coming through. A really strong set of results for UBS. Gaining currently at the stock up 4%. We've seen it up around 5% earlier part of the session. But again, 4% gain for UBS on the back of a very strong set of results. The investment banking business performing very strongly. Asset management and wealth as well up there with the gains on that first quarter in terms of revenues. Airbus, interestingly, some challenges, but pointing to a brighter picture going forward, and particularly the demand story around their major customers continuing to place orders. So Airbus seeing some relief on the back of that, up 2.3%. Investors cheering that forecast and that outlook for Airbus. Adidas on the consumer front as well. Very strong set of earnings. Profits coming in higher than expected, and the stock is being rewarded as well, up 7%. On the downside, let's flip the board and have a look. Anna was talking about the healthcare sector as being a bit of a drag across the FTSE 100. Absolutely correct. GSK is currently down 2.6%. That's despite the fact that earnings actually for this drug maker here in the UK came in as a beat in the quarter. Deutsche Bank Bank. Also, headline basis was a B. Maybe it's the provision story that's leading to a bit of negativity in terms of the investor reaction to this story. Deutsche Bank stock is currently down 3.2%, and Airport de Paris currently down 4.5%. That stock a little lower by close to 5 points, down 4.5% currently. So those are the laggards as we stand, at least, Anna.
Tom, let's get an update on some of the other stories that we're following this morning. President Donald Trump is reported to have told aides to prepare for an extended U.S. naval blockade of the Strait of Hormuz. According to the Wall Street Journal, the president has decided to continue putting pressure on Iran's ability to export oil. The decision suggests that the U.S. could be moving into a lengthy period of uncertainty, with the fighting largely halted, but no durable resolution to the conflict. The embattled UK Prime Minister Keir Starmer has won a House of Commons vote on whether he should face an ethics probe over Peter Mandelson's appointment with a solid majority. Next week sees Starmer's Labour Party face a high-stakes set of elections in England, Wales and in Scotland. And Hungary's incoming Prime Minister, Peter Magyar, is set to push for a deal to restore access to billions of euros in frozen EU aid. In his first trip to Brussels since his landslide victory 2 weeks ago, Magyar will hold talks with Ursula von der Leyen and Antonio Costa to salvage the payments that were suspended over rule of law concerns under his predecessor, Viktor Orban. The EU has made it clear that it won't release more than $20 billion in frozen funds until the new government addresses a series of infringements. Tom.
Let's get more insights in terms of the impacts on Europe as a result of the continued closure of the Straits of Hormuz and how central banks may react to the situation. The ECB likely to leave interest rates unchanged this week on uncertainty around the economic impact of the energy shock. President Christine Lagarde likely to keep her options open for a rate hike, potentially as soon as June, potentially. Jean-Claude Trichet, former president of the European Central Bank, very pleased to say, joins us around the desk this morning. Jean-Claude Trichet, thank you very much indeed for your time.
Pleasure to be with you.
We were speaking to a guest on the show earlier this week from Blue Bay Asset Management who said that another month of closure of the Strait of Hormuz and we could be looking at recession in the Eurozone. How close are we to negative growth in the bloc?
I think that uncertainty is absolutely dramatic. I would not confirm that 1 month would be the appropriate time, if I may, for getting such a very bad result. But it's clear that this is an option which we have to get in mind. After all, the IMF itself said we have several scenarios, and the worst one is a recession scenario. So, and not only for Europe, by the way. So, because a lot of other countries are badly touched, including in Asia. The U.S., paradoxically, because the U.S. is at the heart of everything at the present moment, but is not touched as much because protected very largely by its own self-sufficiency. And but still, of course, the prices are up also in the U.S., it seems to me. And so that also creates problem. I hope that all those problems will drive the partners to get a deal and to reopen the strait.
And through the lens of the ECB, with that mandate on price stability, traders now pricing in more than 2 interest rate hikes from the European Central Bank this year. Would you hike if you're at the ECB right now?
I think that the universe is so uncertain, and you have both, I would say, the deflationary, depressive effect of what happens and the inflationary effect. So both are operating. And after all, the depression is helping, paradoxically, of course, in terms of less inflation. So all taken into account, it seems to me that to remain, I would say, in a position of quiet and calm observation of the situation, hoping very much that the European pressure to reopen the strait will operate. But I think that the sentiment of the market that it's very unlikely that there would be changes is correct in the sense that it corresponds to the extremely high uncertainty that we have. Events are uncertain, and also the impact on growth and on inflation is also to be seen.
So some of the impact still to be seen. Good morning to you, Jean-Claude.
Good morning.
You used to say often that for the ECB, there's just a single needle in the compass, and that is pointed firmly at inflation. So why is it a good time to pause then in terms of interest rates and not hike now?
Because we have obviously the kind of supply shock that, again, we have to wait to see whether you have secondary effects that are operating. The enemy are the secondary effect. You know, the price of oil, we have no way to correct the price of oil. We cannot substitute to the President of the United States or to the Ayatollahs in Iran. So we have to accept that we cannot do many things, but on the secondary effect, on the capacity of this increase of prices to be, I would say, operating in all the economy, there we are very important. And that's the reason why the anchoring of inflation expectations at the level of our definition of price stability, namely the famous 2%, is something which is very, very important. I'm sure that the ECB, and I hope also the US, will be very keen on not unanchoring inflation expectations, which is one of the great success of the central banks in the past years.
Yes, I mean, do you see anything worrying in the inflation expectations yet? And how long would Eurozone inflation expectations have to remain elevated before that means that the ECB must act?
I mean, again, it's a question of appreciation by not only by one person, but by the college, if I may, the Open Market Committee in the US, by the Council of Governors in Europe. I would say that you know when you are analyzing both the market and, of course, the survey, when you have really the start of unanchoring of inflation expectation. We are not there at all. And we will follow the events as, I would say, carefully as possible. If we had the sign that the state is closed for a very long period of time, we would be in a situation where, of course, secondary effects would have been very likely, because you take that the union will say, well, this will be up for a very long period of time. We ask for immediate augmentation of wages and salaries. So that is one of the secondary effects, of course, that we have to follow extremely carefully.
But for now, is it fair to extrapolate from what you've been saying that for now you think the market pricing of more than 2 hikes this year is the markets are getting over their skis on that?
Frankly speaking, the market itself is in a totally uncertain world. So this, I take it as the sentiment of the market. I would not say that it is my sentiment, of course. I think we have to remain extremely cautious and prudent in a world which is extremely highly uncertain.
Do you think we've learnt a lot, Jean-Claude Trichet, and your experience is useful here? Do you think we learnt a lot in 2008 and in 2011 when you were in charge of the ECB about the circumstances in which it is appropriate to hike into and when it is not? Because there have been suggestions that maybe the ECB in the past has hiked into weakness.
Well, the ECB had to run a new currency, a currency which had to gain its own credibility. And as I said, we had the main responsibility to be sure that inflation expectations, medium long term, would be correctly anchored. And that, of course, in a universe where you had very different public opinion. You have the north of Europe, you have the center of Europe, if I may, you have the south of Europe. And the sentiment are not the same in all. So I think that when I was in this extremely difficult period of time, during 4 years, the main, I would say, consideration was, are we sure that we continue to correctly anchor inflation expectations, which is good, of course, because it's our mandate in the ECB, but also key for, I would say, sustained growth and sustained confidence in the economy.
Given the ruptures to supply chains through COVID, through this conflict, through Ukraine, through Iran and the US, longer term, do we need to start to factor in higher inflation, structurally higher inflation?
I don't think so. I think that if you say that, if I may, when you are responsible, you are calling for higher inflation. Central banks are used to permanent challenges to inflation. You mentioned a succession of challenges. From time to time, we have also a challenge of deflation to materialize. And it's been the case during 10 years. So something it goes up, sometimes it goes down. I mean, I'm speaking of the challenges that we have to cope with. And this idea of trying to anchor expectations around the famous 2% is very, very important. It worked extremely well, I have to say, in preventing all of us, from deflationary materialization. It proved very effective in a recent period of time. After we had the surge of inflation with the COVID recovery, we could regain control much better than in the past of price stability. On both sides of the Atlantic, I have to say. By the way, we are supposed to have the same definition of price stability in the US and in Europe, which helped considerably, in my opinion, in a recent period of time. And so all taken into account, it sometimes goes up. I mean, the inflation is supposed to go up, sometimes to go down, but this stabilization is part of the success of central banks during last years.
So you don't see a need to structurally rethink where inflation goes. What about structural rethinking about other aspects of the European economy? For example, defence spending. The years that you were in charge of the ECB, Jean-Claude, that looked very different in terms of the level of defence spending around Europe. Are you expecting this to be, well, what impact economically do you anticipate from higher defence spending across Europe?
Well, first of all, it is absolutely necessary because we have a war in Europe triggered by President Putin. We have the sentiment expressed by the President of the US that the protection, the defense protection of the US is not eternal in Europe. So we are bound to augment defense and to protect ourselves. I would say de Gaulle, I refer to de Gaulle because he was visionary in many domains. He clearly said Europe has to get autonomous as regards its own defense. And I think that it's truer today than it was before. So, of course, that has consequences in terms of, I would say, investment that have to augment, so pressure on the savings. We have a lot of savings in Europe, so I think that we are able to care and to take ourselves the appropriate, I would say, capital to invest. On the other hand, of course, it is something which transforms very profoundly the European economy, and if really the Europeans are augmenting that far their own defense spending, of course it has also in terms of growth an impact which would be positive.
Thank you very much. Thanks so much for being with us this morning in London. We do appreciate it. Jean-Claude Trichet, former president of the European Central Bank, of course. And the ECB isn't the only central bank which will be delivering its interest rate decision tomorrow. Tom, Guy and I will have a special programme, special coverage of the Bank of England's rate-setting meeting. That starts at 12 noon UK time. So you don't want to miss that. We won't miss it, Tom. We'll be here.
We will not. We'll be here for that full coverage. I also want to clarify a question that I asked the Santander CFO earlier about MFS. I should have said Santander lent to a special purpose vehicle that backed MFS.
8:45 here in London. Coming up on the programme, 4 of the Mag 7 report later today in a key test of whether AI investments are paying off. What are we watching for in that CapEx number? More on that next. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacqua, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacqua. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it's happening. I'm Anne Marie Hordern in Caracas, Venezuela, and this is Bloomberg.
Welcome back. This is the opening trade, 8:49 here in London. And European equity markets taking a bit of a leg down. The DAX managing to stay flat, but the CAC 40 and the FTSE 100 both firmly in negative territory. Just working through, Tom, then all of the earnings reports coming through this morning, and maybe they start to look a little more negative. US futures, I note, a little weaker than they were earlier, but still just in positive territory.
Yeah, just holding on to gains. S&P even is just edging into positive territory. Nasdaq futures after a rough day yesterday, pointing up by 0.2%. Let's look ahead to what else we're thinking about through the day. 10 a.m. UK time, Euro area April consumer economic confidence. We had Spanish CPI, of course, out earlier. 1 p.m. UK time, German CPI. So further details on inflation story out of the Eurozone. 3 p.m. UK time, the Senate Banking Committee is scheduled to vote on Kevin Warsh's nomination as Fed chair. Will they get that across the line? And at 7 p.m. UK time, it's the actual Fed rate decision, potentially Jay Powell's last press conference and last decision as head of the Federal Reserve. And on the earnings front, out of the US, Alphabet, Meta, Amazon, Microsoft, a huge day for tech earnings. Let's get more in terms of the results and what to zero in on, where the focus should be. Bloomberg Intelligence analyst Matt Bloxham. Let's start with the Alphabet story. Is this a data center story? Is it a TPU story? Is it a DeepMind story? What for you is going to be the focus when it comes to Alphabet?
I think it's all of those stories. I think in particular, people are going to be looking at their cloud revenue business. I think that's going to be the same thing across all these companies. Is are we seeing a pickup in cloud sales as AI momentum builds? And you don't forget these 4 companies you just mentioned are planning to spend almost $650 billion in capex between them this year. So there's a lot of expectation riding on them to kind of demonstrate that that's coming through in terms of top line. Also, Google is spread across a number of different businesses. Is their advertising business holding up in the face of AI competition? Are they closing the gap on Anthropic, on coding assistance? Is Gemini still in the lead versus ChatGPT? So there's a whole raft of issues I think people are going to be interested in to hear from them.
Okay, so that's a rundown from Alphabet perspective. And then you move on to something like Meta, where we have the Venn diagram of things we're interested in. There's some overlap there, but there's some different nuance. I mean, CapEx and free cash flow, is that going to be the epicenter of things when it comes to Meta?
I think they're definitely going to be in focus. I think also margin is going to be in focus for them because we heard a few days ago that they're planning to cut 10% of their workforce and not fill another kind of 7 or 8% of outstanding vacancies. I think the market is expecting a fairly significant squeeze on margins, but it's going to be interesting how they manage that narrative and whether they can also point to an acceleration in revenue growth to help kind of justify the amount of money they're spending on infrastructure build-out.
OpenAI, we saw the sell-off yesterday across the Nasdaq 100, down about 1%. You had the likes of CoreWeave, SoftBank, of course, over in Japan, selling off pretty aggressively on this Wall Street Journal reporting that OpenAI is not meeting its metrics. They've pushed back.
Yes.
Is that likely to repair the damage?
I don't think so. I mean, I think if you look at public statements both from OpenAI and Anthropic, their key rival, there has been a crossover in sales momentum. So OpenAI talking about maybe $24-25 billion of annualized revenue right now. Anthropic's now at $30 billion, and that's been a very recent crossover. So I think that there has been a shift in the kind of pecking order, and you hear that anecdotally. People are talking about Anthropic and Claude the way they used to talk about ChatGPT, and in an enterprise context, that's the one that has the momentum. So I think clearly there have been some ambitious targets missed, but OpenAI is still an early stage company. Sometimes it is hard to kind of gauge what is a realistic metric and when you're going to hit it. So I think there's a bit of noise around this, but for sure the momentum has shifted, and I think there's pressure on OpenAI to kind of regain its crown as the kind of the leader in the AI race.
Yeah, that retail versus corporate client divide is really interesting. Matt, thank you very much. Thanks for joining us. Matt Bloxham, Bloomberg Intelligence analyst, with the latest on the tech story as it will develop later on today. Another story that will develop today is the Fed, of course. Fed rate decision due later on. Joining us now, Skylar Montgomery-Koenig from the Markets Live blog. And Skylar, good morning to you. So what will you be watching from the Fed? Because, to some degree, we will care more about Kevin Walsh, probably, and what he thinks the Fed is going to do and how he wants to reshape the Fed, etc. But there will be things that no doubt Powell can say that will be interesting for markets, not least of which his own future and where he plans to go next.
I think that's exactly the point. The number one thing markets are watching for are whether or not Powell confirms if he stays on the committee. So the idea being there are 12 voting members. Yes, Walsh very much skews the way the market's pricing the outlook in the future, but all those voting members have a say. And if Powell stays on the board, that means that's one less dovish member that can be appointed by Trump, and it skews it. I'll also say risk towards this meeting, while I think other stuff matters more, as in the Bank of England will be more exciting, earnings matter more, they definitely skew more hawkish, and that's because we've just had inflation rise. It's pushed out the pricing for cuts, but the U.S. is unique in G10 in that there are still somewhat cuts pricing. And as I said, that's that kind of stickiness of Kevin Walsh, and that the idea is the market thinks he'll skew the board dovish. And so the risk is that that gets priced out on elevated inflation, particularly with the starting point for inflation in the U.S. being already very high.
We had inflation crossing out of the Eurozone, or at least out of Spain. We're getting more data out of Germany. Later this morning, we were speaking to the former ECB president, Jean-Claude Trichet. He kind of pushed back on the idea that we were close to a recession in Europe, but he did point to the incredible uncertainty, and he kept coming back to that. What is your current take in terms of the stagflationary risk to Europe and the Eurozone from the data that we've seen so far?
Yeah, I mean, the data has been very clearly stagflationary. So yesterday we got the ECB consumer survey, as well as the kind of bank lending survey, and bank lending conditions for corporates as well as consumers have gotten worse. At the same time, if you look at consumer expectations for inflation, they've surged from 2.5% in February to 4% now. So that's a big surge, and that fed into bonds, and that we got a sell-off. It was helped along by the idea that you might get more fiscal out of Germany, but when we get inflation data today, that's very much where the risks skew, because we have inflation already coming in higher, and sentiment data has shifted, but we haven't really seen it in like high-level activity data. And I think COVID taught us that the sentiment data, particularly in the U.S., maybe more so than Europe, doesn't tell us a lot about whether or not consumers actually spend. It's maybe more worrying in Europe because you've had lower retail sales, despite wages being better in the past year and sentiment being more positive prior to the war. But certainly the risk is still tilted towards inflation being more worrying than growth.
Skylar, thank you very much. We're going to get the German regional inflation picture in, 4 minutes' time? Just less than 4 minutes. So we'll get all these different regions of Germany dropping onto the Bloomberg terminal. Then later on, 1 o'clock UK, we get the German number as a whole in terms of inflation. So we'll continue to monitor that. Thinking of the Fed decision, though, that still lies ahead for today. Surveillance will be here. The surveillance team will be here with the Fed Decide special. That's at 6:30 London time. We get the decision at 7 UK and the press conference at 7:30 UK. They will have all of that wrapped up for you. That is it for the opening trade.
The Pulse is up next. Stay tuned. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome to Bloomberg This Weekend. I'm David Burke.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Newsmakers and market movers. This is The Pulse.
Wednesday morning, welcome to The Pulse. I'm Guy Johnson. I'm in Zurich today. We've got a lot going on. UBS signaling a bigger buyback as traders help smash estimates. But Chief Executive Sergio Mossi warning us that investors may be a little overconfident about what's happening with the Middle East conflict. The US signaling it will stick with a naval blockade of Iranian ports to try and force Tehran back to the negotiating table, plus investors on edge, of course. It is a bumper day of earnings from the US tech giants. We've also got a Fed rate decision coming up a little bit later on. How is all of this being priced into the markets? Let's take a quick look at what we are seeing. Equity markets broadly are fairly flat on this side of the Atlantic. Over in the United States, ahead of the big tech reports we're getting later on, the Nasdaq is bid right now. We're up by around 0.3%. The US 10-year a little on offer. Look at the number at the bottom though. That is the number you want to pay attention to. We are now 113.49, up 2%. On Brent. That is the big figure that we are watching out for. We're also starting to get some economic data coming through as well. We've got CPI data coming up a little bit later on out of Germany, but we get the state data. This on the back of very strong data out of Spain a little bit earlier on. Bavaria consumer prices up 0.5. We're just getting that. North Rhine-Westphalia up 2.7. That's a year-on-year number. One was a month-on-month. One was a year-on-year number, just to confuse things a little bit there. But the broad picture at the moment is oil prices are higher, tech prices are higher. Those are the two things that the market is grappling with right now. But we've got an awful lot of earnings that we need to price into these markets right now. So let's get on and talk a little bit about some of the bank numbers that we've seen coming out from across Europe this morning. We've had a series of numbers. We've had Deutsche Bank, we've had Santander, and we've had UBS. Look at UBS. We're up by 4.6% on the back of the numbers that were delivered this morning, the Q1 numbers. This after the Swiss lender posted first quarter profits. They're very much topped estimates. The bank confirmed also its intention to add to the 3 billion tally of share buybacks this year. That comes a little bit later. They're accelerating that buyback program. So I caught up with the bank's CEO first thing this morning, Sergio Mossi. We started off talking about the company's earnings and what traders in particular have delivered.
not only our traders. I think that all the businesses have been performing quite remarkably. I mean, if you look at all of them delivered double-digit growth. And also from a regional standpoint of view, we had outstanding results across the board, and particularly in our Asian business.
Okay, let's talk about the buyback. Last quarter, you indicated that things would improve this quarter. We were expecting an update. We were expecting a positive update. That was the signal to the market. This time round, you haven't delivered that. There's a number of different reasons behind that decision, and you basically punted it until the next quarter, Q2. One of the reasons appears to be around the capital requirements story that is currently now starting its journey through Parliament. Are we really going to have enough clarity next quarter for you to be able to give us an update on what's happening with the buyback?
Yeah, well, actually, we are giving an update this quarter by saying that we believe we're gonna complete the 3 billion buyback by the end by Q2 results, so by the end of July, which is clearly a change compared to what we said before, which was we would do 2 billion. So I think that in that sense, what has changed is that there are 2 or 3 conditions for on how to manage capital returns. One is progress on integration, which we tick the box with the migration of the Credit Suisse clients into our Swiss platform. Number 2, the financial performance. You saw the strong results in the first quarter, and our ability to maintain a capital level at around 14%. We are at 14.7%. So I do believe that we delivered on some things. The uncertainty around the regulation is something that is going to take time.
Yes.
And is definitely will influence our capital return plans, but it's not the only conditions.
Okay. Do you expect any clarity by next quarter on that front?
Not a lot of clarity. I think that if you look at the political processes starting early next month, so in a week time, and I think that is going to take time. This is a complex matter. It took first 2 years of discussions. I think we cannot really pretend that the Parliament jumps into conclusions very quickly. So we are happy to be able to contribute.
The Parliament, you're going to contribute. Okay, we'll maybe come to that thought in just a moment. Parliament normally waters things down. Do you expect it to water this down, the foreign subsidiary 100% rule? Do you think that gets watered down by Parliament?
I honestly, I don't think I'm hopeful. I don't expect anything. I'm hopeful.
Okay.
There's a big difference between being hopeful and expecting anything.
What do you want out of it? What would be an acceptable? You're lobbying hard. What's the end point that you want to get to with this lobbying effort? What would be?
We are not lobbying hard. We are just representing the interest of. It's our duty and right to basically highlight what are the consequences to our shareholders, to our clients, and also to the employees in Switzerland. I mean, we have 30,000 people, so we are just trying to contribute to a fact-based discussion. So, and which it was not always the case. So what we expect, I mean, is we are not asking for anything other than having something that is internationally aligned, and allow us to compete out of Switzerland in a fair way. But it's also very important because the issue is that what needs to be done, the true lessons learned from the Credit Suisse crisis, really understanding the root causes of what happened is very important, because without the concessions that were granted to Credit Suisse would have not gone down in this way.
All of that, I'm sure, is correct, but the government is looking at 100% foreign subsidy and the foreign subsidiary capital requirement. You've never said what the number is you want. You've never said you want to contribute, but you've never indicated publicly what would be an acceptable outcome. We must be getting to the point.
We are not in a negotiation. We are a receiver here. So, I mean, it's not like by saying what we want that we're going to get what we want. So I think that there are plenty of options.
But you've never said what you would take. You've never said what would be an acceptable number.
What we are trying to show is what are the international standards, what are our peers of the race.
Standards? What is an acceptable international standard?
The outcome of this proposal will translate on us having 30, 40, 50%, I mean, depending on how you calculate, an extraordinary amount of excess capital that is going to be totally unproductive and won't that is not capital that you can use to give loans, to serve clients, and or to do acquisition, to return capital to shareholders. So it's basically dormant and unutilized capital. So we want to, we want to be able to compete while also protecting taxpayers, right?
So what's the number? So what you want to be able to compete, but you want to be able to protect taxpayers. There is somewhere in the middle there.
Guy, do you really believe that I'm going to give you a number?
No, but at some point we need to find out, don't we? The Parliament is now debating this. You're at 100% in Parliament. It's going to get watered down, maybe, but what would you take when it comes out of Parliament?
But it's a political process. They need to decide based on all the facts they're going to use. So we are contributing. So we are not going to engage in putting down numbers and having a debate. So I think that we have to put down facts, and we have already a very strong regulation. When our existing regulation, when fully implemented, is strong enough, or was strong enough, for UBS to take over Credit Suisse and stabilize again within 5 months. So this is a fact.
Okay. The lobbying effort, let's just talk about that. The finance minister said that your efforts are not very Swiss. That sounds like a fairly blunt attack on UBS. Your response to that?
Well, look, I think that is our right to represent, and duty to represent our interest, and I'm not going to go down and engage in this kind of...
But how would you describe relations with the government at the moment? Are they functional? Are they workable? What's communication like? Because that sounds like a fairly blunt attack on UBS.
I think our relationship is professional.
Professional. Excellent. Let's talk about kind of what happens next, therefore, in all of this. You must be reaching the point where you have to make some fairly tectonic decisions about what you do with this business. It feels like you're at the point where it's kind of go big or stay home. Go big or shrink. Is that the point we're getting to?
It's premature to speculate about timing on these things, because it may or may not take. It may take months, or it may take longer to resolve this matter. So we're not going to jump into the conclusions. Our top priorities is to operate successfully as a global bank out of Switzerland. We always say that, and we're going to continue to fight till the last minute to make sure this can happen.
Okay, so it is still possible that you could relocate. That is still an option.
This is a speculation, so I'm not going to comment on speculation.
You have said that shrinking is not an option.
That's a certainty.
Okay, so that's off the table. So shrinking is off the table.
But that's not a speculation. That's a certainty.
Okay, so that's a certainty. So you're not going to get smaller. So are you going to get bigger? So your chairman has talked about the fact that buying a wealth manager in the United States would be a possibility.
That's a speculation.
He said it.
But, no, he said that we will need to take measures to protect our shareholder interest. That's another matter.
He talked about buying wealth managers in America. Would an acquisition give you more?
But that kind of statement was done back and totally outside the context of this discussion on too big to fail. So the fact that we want to continue to grow we are the leader in wealth management. And the U.S. is a very attractive market. It's the largest market in the world. And what we are trying to do is to make sure, by the way, we make more than $2 billion a year on average in the U.S. And we believe we can make it better, and we can grow further. And it's part of who we are. So, but this comment was done a couple of years ago, totally outside this too big to fail discussions.
Nevertheless, would an acquisition in the United States give you optionality? I'm trying to figure out what your options are.
No, our options right now in the U.S. is to execute on our current plan. We can do better with what we have, and we have plenty of room to really understand what needs to be done organically or non-organically to grow. But the center of our strategy will always be to be around wealth management. So 60% of our revenues right now is in asset gathering businesses, asset management and wealth management. And so whatever we do won't change who we are.
So I should not expect big decisions at this point. You're not there yet.
Absolutely right.
Okay, next 6 months I can park that. Because that's the question I get from analysts. It's kind of, you're talking to Sergio, can you find out what's happening in the next 6 months? Because we're expecting big things to happen and we think he needs to make some decisions.
Well, how can you make decisions without having all the information? And we have some critical informations needed before making strategic decisions.
Sergio Motti, the CEO of UBS, speaking to me here in Zurich first thing this morning. As we saw those numbers being released, very well received numbers this morning. The bank is certainly delivering at the moment. You're certainly seeing the iBank in particular delivering very strongly. The shares are up really well on today. Let's talk about, it's been a busy day for banks. It's not just UBS that's out with numbers this morning. Santander's net income also beat. Deutsche's a slightly different story. Deutsche Bank posting higher than expected profit and revenue with fixed income and currencies trading a little flat for the year. Investors, though, maybe punishing the bank a little bit this morning. Santander edging a little bit higher. So we caught up with both the CFOs. So let's take a listen to what they had to say.
FX has certainly played the headwinds from dollar-euro or year-over-year certainly played a role. That said, first quarter last year was a record quarter for FIC. So I think matching a record performance in these conditions, I think, gives me a lot of confidence that not only have we been able to overcome the FX headwinds, but able to match a fantastic first quarter. Obviously, there is a little bit of a March impact in there that impacted the results, but all in all, I think FIC's held its own.
This is the first quarter that we are presenting after our Investor Day in February. We are on a very, very good path to meet our targets for the year. But very importantly, this is a very strong first step towards the 3-year plan. And at this point, we see no reason to change either our guidance for the end of the year or the targets for the next 3 years.
The view from Santander, the view from Deutsche Bank. Let's talk about the markets, because trading has actually had a fairly big impact on all of these numbers today, and we're seeing a certain amount of volatility emerging already in this session. So a few minutes ago, I showed you what was happening with the NASDAQ. Futures now rolling over on the NASDAQ. Oil is definitely moving higher, spiking, you could say. President Trump saying just a few moments ago that Iran can't get that act together. We are seeing a standoff. The Strait of Hormuz is still closed. Oil prices continue to climb. But at the same time, you're seeing earnings delivering and you're seeing technology stocks rocketing higher. Wolfgang Rockberg, equity strategist at J. Safra Saracen, joining me here in Zurich. Good morning.
Good morning.
So you've got this tension in the market at the moment. You've got an oil price that's kind of, 113. We're moving higher this morning. We're spiking. We're pushing higher. We're at year highs now. And at the same time, you've got earnings numbers that are coming through okay, but they're slightly rearview mirror, so they're kind of reflecting what has happened or will happen. And you've got this view that technology is going to deliver. The chip stocks in particular are going to be massive beneficiaries of AI spend. How does this tension in your mind get resolved?
Well, if we look at the market itself, what's worked quite well over the past 2 months is the correlation between the PE and the oil price. Yeah? So basically inversely correlated with the PE benefiting when the oil price falls. Over the past 1.5 weeks or so, there's been a bit of a decoupling. Say basically the PE is now priced for an oil price of 90. Oil price is obviously back above 100. So say the market is really trying to move on from the conflict. Yeah?
Is that the right thing to do?
I think it's the right thing to do in a sense that I would say, there's a window for a solution, for a resolution of the conflict. Yeah? I think the two parties are moving towards one another in a sense that they, kind of put options on the table. And say if the stress increases to a point at which, in particular, Trump would say, okay, this is unbearable, this is now really hurting him, he may turn around and try to strike a deal.
So we're still relying on the Sacco trade?
In a way we do, yeah, in a way we do. But I think until, let's say, 2-3 weeks ago, the situation was slightly different in a sense that really you couldn't see how the whole thing plays out at the end of the day because the Iranians didn't even come to the table, let's say, to negotiate. Now they've shown some willingness at least to open the Strait of Hormuz because they feel the pain themselves, which I think, is creating an incentive on both ends to find a deal at the end of the day. If this will happen in the very near term, difficult to say. But I think there's a cap, let's say, in terms of like how high the oil price will go at the end of the day and how low the market could potentially go.
What's the upper cap?
The upper cap for the oil price is probably somewhere at around 150 max, but say this is not our base case. But I would think at this point we will really see oil starting to hurt the consumer in the US, which has not happened so far.
That hasn't happened yet. We're starting to see it showing up in Europe, though. I see the PMI data. It's started to roll over. Spanish CPI this morning, higher. We're going to get German CPI very shortly. The ECB is potentially talking about hikes. Are we back to American exceptionalism when it comes to equity markets? Do I want to put money to work in Europe? Do I just put money to work in the United States?
If I look at the data, definitely, we are back at US exceptionalism as compared to Europe. Most recent economic data, as you mentioned, PMI is weaker in Europe. We also had the bank lending survey coming out of the ECB, quarterly bank lending survey coming out yesterday. Conditions deteriorating to the worst since the end of 23. And this is a great lead indicator for PMIs, which suggests that PMIs actually go below 50 over the coming months, after the drop which we have seen now in March or in April in the flash numbers. And this is not pointing at an environment in which Europe can thrive. On top of that, and I think the transmission channel through the central bank is, let's say, more difficult in Europe than it is in the US. Obviously, US Fed has a double mandate. They say basically, look, we look at inflation, but we also look at the cycle or the labor market in particular. While in Europe, it's very clear focus on inflation, meaning if we were to see a kind of further spike in inflation, the ECB may react more aggressively to that. And I think the market is priced for that as well. In terms of if we look at the rates market pricing, obviously 2 hikes from the ECB, no hikes from the Fed.
Is it American exceptionalism therefore? Do I just buy America or do I just buy big tech? It's slightly more geographically sort of uncertain where I buy big tech because you can buy it in Asia as well. Obviously, there's a lot of chip stocks out there, or in the United States. But am I just buying tech to hide from the geopolitics? Is that the narrative?
Kind of. But I think what's happened also is that the tech trade has broadened, in particular in the US. Look at industrials, look at utilities. All of these sectors have somehow become part of the tech supply chain, and as such benefit from the massive spending which we are seeing in coming from the hyperscalers. Something which we expect to continue, and meaning it's more than just tech in the US. In Asia, I would be more selective. It's just tech in a sense that it's basically
to the energy market in Asia more so. So maybe much more selective.
Exactly. But if we listen to what the semi names in Asia are saying, in terms of like shortages on helium and so forth, where there was some concern just a couple of weeks ago, they seem to be fine. They've kind of rejigged their supply chains, getting more out of the US, have some storage capacity still, or have some helium in storage. That they won't suffer for another 2 months or so, before basically helium starts to become more critical.
Okay, last question. We're often looking at the downside because we're worried about what's happening with the geopolitics. But is there a risk of people? Are you hearing talk of people about a melt-up? That basically you get markets pushing to extreme levels. Does it feel extreme at this point?
It doesn't feel extreme if we look at valuations. We're back at 21 times in the US. PE, at the peak, we were closer to 23 times. So we've definitely derated. In particular, if you look at semis, if you look at software, some of the sectors which were more highly valued, valuations look quite reasonable now. So it doesn't feel extreme, but I wouldn't expect a massive melt-up unless we see a resolution, really, kind of a proper deal in Iran. And then you could really see the market pushing higher because the biggest roadblock is just being removed. But for the time being, fundamentals strong, geopolitical risks lingering, kind of an environment in which the market can grind higher if earnings come through as they are expected, but not a major melt-up from where we are right now.
Wolf, thanks very much indeed for stopping by to see us here in Zurich. Always appreciate it. Thank you very much indeed. Wolf von Rothberg, equity strategist at J. Safra Saracen. Thank you very much indeed. What are we going to talk about next? Airbus says it's confident it can achieve its full-year aircraft delivery targets, despite last night delivering a steep earnings drop. Benny Camel, who leads our aviation coverage, are going to join us next with the details. That's next. This is Bloomberg.
Your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend. This is Bloomberg Television.
23 minutes past the hour. Let's talk about one of my favorite subjects, aeroplanes. Airbus says it's confident it can achieve its full-year aircraft delivery and earnings targets. This despite a steep drop in earnings that was delivered last night. These are Q1 earnings. The persistent engine shortages continue to be an issue. They make money when they hand aircraft over. You can't hand aircraft over unless you've got an engine on them. Anyway, let's talk about this with our managing editor for aviation, Benedict Camel. Benny, the engine problem persists. Can they fix it for the rest of the year?
Well, rather confident Guillaume Faury seems to think so, but if you look at the numbers, there's a lot of hope built into that. They're still sticking to their prediction for the year, thinking they can hand over 870 aircraft. But if you look at just the first 3 months, just a few more than 100 that they handed over. So there's a big, big delta there between what they did in the first quarter and what's remaining. But again, they said, as usual, it will be backloaded, that sort of parlance from Airbus, that we'll have most of our production crammed into the last couple of weeks of the year. And they think that they can get some kind of an agreement with Pratt & Whitney to hand over more of the engines. Pratt & Whitney being the main culprit here on the A320. That's where they're missing the engines. So if they can get that resolved, they should get to or close to their target. The upside is the demand is there. Customers aren't deferring orders. That was one of the key questions that Guillaume Faury was asked. Are customers wavering? Is anyone nervous about what's going on in the Middle East? The answer is no. Everyone wants the aircraft. Everyone's actually wanting them more than ever because they are fuel efficient, and we all know what's happening with fuel. So that demand picture is there, but it's just that Airbus is having trouble making the planes, and that's holding them back.
So let's talk about momentum, which is important when it comes to aeroplanes. Airbus is struggling for momentum, but Boeing appears to be regaining its momentum. Is this a fair comparison? Is it because the starting positions over the last 18 months, 2-3 years appear to be very different?
Yeah, absolutely right. I mean, if you look at the Boeing earnings a week ago, really no nasty surprises there, which is something we'd sort of gotten used to over the years. There was always something tucked in there that was quite horrible. In this case, a very steady Boeing doing what they do best, which is making aircraft and making them at a faster clip. They are increasing output of their 737. And Airbus, you know, again, no nasty surprises, but again, no forward momentum here. They are being held back. And that's really what they need to watch, that you have a Boeing that is coming back, that is stronger, that has Donald Trump, the US president, as their sort of chief salesman. He's going to China in a couple of weeks, so we should expect some deals there. So that's where things are going.
Benedict Camel from Berlin, thank you very much indeed. Up next, we're going to talk about Mr. Trump. We're going to talk about no more Mr. Nice Guy. Diplomatic resolution? Maybe not. More next. This is Bloomberg.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Morning, welcome back. Watching The Pulse, I'm Guy Johnson from Zurich today, and these are the top stories you need to know about. UBS pledging a bigger buyback as traders help smash estimates, but Chief Executive Sergio Motti warning us that investors may be a little overconfident about the outcome in the Middle East. Oil spiking as President Trump says Iran can't get its act together and doesn't know how to sign a non-nuclear deal. Plus, investors on edge for a bumper day of earnings from the United States. We've got tech giants on deck. Plus, we've also, of course, got a Fed rate decision. Okay, let's talk a little bit about what is happening in terms of the corporate numbers that we are seeing this morning. UBS is having a very strong day. We're up by 4.36%. This after the Swiss lender posted first quarter profits that topped estimates. I spoke to the company's CEO, who, of course, is Sergio Motti, about what he saw in these earnings. He also gave quite an interesting outlook and maybe a bit of a warning, you could argue, to investors when it comes to the Middle East conflict.
The recent developments in the Middle East are now putting a new major uncertainties on the table, with supply chain disruption on energy and driving inflation higher. The expectations is not only that things are going to be resolved, which we believe and hope is they're going to be resolved, but the impact of what happened will be resolved in a classical way we saw in the last 10 years, V-shaped. Everything is going to go back into normality.
Meanwhile, the US President, Donald Trump, posting over the last few minutes on social media, warning that Iran can't get its act together, and warning basically about the lack of opportunities to get a deal done. Oil is definitely moving higher on the back of these comments that we've been seeing. So let's get a kind of in-the-minute update from what we know, what we don't know, from Jumana Basechi, who joins us now from Dubai. Jumana, we've had a load of comments over the last few hours, plus we've also had these comments out of the Wall Street, this story out of the Wall Street Journal as well. Talk us through what we know this morning and what's moving oil prices higher.
Yeah, that's right. Well, just in the last 15 minutes or so, we got this Truth Social post from Trump suggesting he is not going to be Mr. Nice Guy anymore. He's saying Iran can't get their act together. They don't know how to sign a non-nuclear deal. He probably means a nuclear deal in this respect. And of course, the background to all of this is we know that after a whirlwind trip over the weekend, the Iranian foreign minister, meeting with many mediators, presented a proposal to the U.S. to work towards ending the war, but via a two-phased approach. The first part of it would be the mutual lifting of the blockade around the Strait of Hormuz, and then deferring the discussions around the nuclear file to later. Now, the last couple of days, we have been waiting for an official response out of the White House. We haven't actually got an official one. But to your point, Wall Street Journal reporting this morning that President Trump has sat with his advisors, has assessed the multiple options that he has, including walking away, a resumption of hostilities, or indeed an extension of the U.S. naval blockade. And Wall Street Journal reporting that he's opting to continue the blockade because in his eyes, it is actually working. Because the longer this blockade goes on for, as we know, the more it's going to restrict Iran's ability to export oil. Storage capacity is filling up, and at some point, this will bring the Iranian regime back to the table. Now, that is the thinking from the U.S. perspective. And indeed, yesterday, President Trump described the Iranian regime as being very fragmented and on its knees. Now, the question is from here whether that is actually the case, whether the Iranian side will be incentivized to return back to another round of negotiations in the absence of the U.S. lifting their blockade, or whether we're in a situation of a standoff where both sides are waiting for the other side to blink. And the real possibility here, especially with this latest Truth Social post, of another round of hostilities, which cannot be removed as a possibility right now.
So the UAE has decided to walk away from OPEC. You've been getting the Emirati reaction, or kind of the thinking behind this decision. But what's the wider reaction in the region to this decision?
Yeah, well, Guy, it's interesting because the announcement itself was pretty shocking, but nobody's really surprised. The background to all of this is there had been simmering friction between the UAE and the Kingdom of Saudi Arabia, the de facto head of OPEC, for years. And that, it all came to a head back in 2021. And at the crux of this is, one, economic incentive, and the other is geopolitical. But on the economic side of things, the UAE has been pushing for extra production, and they've been pushing for extra capacity over the course of the last few years. Out of all OPEC members, they are the ones that have increased the capacity by the most. Before the war, they were pumping around 3.6 million barrels a day. They want that figure to get to 5 million by the end of 2027. But of course, were constrained by the collective decision-making by virtue of being part of OPEC. Now, when I spoke to the UAE energy minister yesterday, and this is right after the announcement, what he did say is a careful decision was taken, and right now will not hugely impact the market, as the market is clearly undersupplied. And I think here, if you look at the reaction in oil markets this morning, this actually vindicates the UAE decision to leave OPEC. If they had come out with this decision maybe a year ago when we were talking about the market being oversupplied, you would have seen the knee-jerk reaction of oil plunging the next day to account for perhaps a market share war in the market or an increase in production. Today is a very different environment. We're talking about 10 to 12 million barrels a day of the region taken away from the market. They knew that this was a window of opportunity for them to make this announcement and perhaps work towards increasing to their maximum capacity. And just one final thing on the geopolitical point. As we've been reporting over the last couple of months, there is a growing rift between the UAE and Saudi Arabia in terms of their differing approach to Iran and various regional conflicts as well, including in Yemen and Sudan. And it's all just come to the fore now with this latest decision.
Jumana, thank you for the updates. Jumana Basechi joining us out of Dubai with the latest. Let's come at this from a different angle. The Shell CEO says oil and LNG shortages caused by the blockade of the Strait are likely to drag on for months and possibly into next year. Well, Sohan telling us he foresees ongoing tightness in the energy market.
We're talking about 900 million barrels that have not been produced in the last couple of months, and that's been replaced by essentially stock drawdown. We're now sort of starting to reach some relatively low levels. We're talking about demand curtailment in certain areas. We're talking about fuel switching. So this is profound. And not just for oil, by the way. It also plays in, of course, for LNG. 20% of the global LNG production comes from the Middle East. And all this is happening with the backdrop of sustained growth in energy demand, of which, to your point, Ed, some of it is being, of course, contributed to by the growth in AI and technology demands. And so it is indeed a tight situation. And this is why it's incumbent upon us, the energy sector, to continue to invest in all forms of energy, to make sure that we are able to provide that energy to support multiple countries as they're looking to both grow in their own consumption of energy, but also those that are looking to underpin their AI and technology journeys ahead.
Well, El Sawan, the CEO of Shell, speaking to us a little bit earlier on. Let's try and pull it all together and get a handle on what is happening here. Gorana Gecic joins us now to talk about what is happening, the head of the Global Security Team at ETH, the Zurich Center for Security Studies. Good morning.
Thank you for having me.
I don't know where to begin because things seem to be moving quite quickly, but let's start with the idea that we have an extended blockade of the Strait of Hormuz. Is that the base case now? That we are in a kind of phony war, that nothing is happening and nothing is moving, but we still remain with a strait that is closed?
Well, that would be a sort of middle option, if you wish, between President Trump waking up one day and deciding this is all over and he's going to sort of step back and withdraw, or the alternative, which would be the other end of the scale, which would be a full escalation and resumption of a large-scale violence that we've seen in the first days of March. Look, at the moment, this is something that looks like a stalemate that is increasingly hurting both sides. Of course, for the United States, it's something that contributes to the affordability crisis, that's depleting munitions, that's depleting the attention and the resourcing that's now dedicated to the Middle East, when there are other things that the U.S. grand strategically could be doing. But of course, it's hurting Iran as well. And now it's a question of who is going to budge first and what is it that they are going to agree on to get them to the table.
If you look at the bell curve, if you look at the distribution of outcomes, so stalemate is in the middle.
Sort of.
Kind of, sort of, maybe somewhere in the middle. But how close are those two other tails to them? Like how big are those tail risks? How likely could they kind of shift to the right or shift to the left?
Well, I would say we've been observing President Trump in this role for the past, 10 years now, nearly, right? With a little bit of a break. And the thing with Donald Trump is that we simply don't know, right? This is the thing which allies need to plan with, that rivals also seem to be testing, that they have to take into consideration in their calculus, because as we've heard now, he's saying he's no longer going to be a nice guy. A couple of days ago, there was still talk of Islamabad talks. He was threatening with civilizational erasure just before that. So just that sort of risks that are associated with this sort of highly personalized decision-making are extremely high on both ends, right? It could be a sort of step back, and it could be the famous Taco, right, that Trump will chicken out in the end, but it could well be something that, you know, is more on the belligerent side, and notwithstanding the fact that we have a huge deployment of U.S. military resources in the Gulf that we didn't have necessarily just a couple of weeks ago, right? And those options are still on the table, and while they are not being now the front and center of some of the media discussions, they have been on the table just as well, right? Special ops and similar other things, seizing of Harg Island and all the rest.
So I remember studying IR. And I remember game theory, and there's all kinds of kind of sort of diplomatic theories.
Signaling.
All kinds, like loads of things that you get taught. None of that is being applied right now. So what are we watching? Like how do you kind of view this? How do you compartmentalize, put it in a, what is it that's happening here in terms of diplomacy or lack of diplomacy, or what is it?
So I think that the adjective unconventional has lost all the meaning, right? We are far from that. We are far from, you know, just that point where we were tearing up all of those IR kind of 101 books. Where we are is basically trying to read the tea leaves of what some of the closest advisors to the presidents might be saying. Who is that last person that he's talked to? Again, ultimately, he is the decider-in-chief. Some of the things that he is reactive to or has been is how the stock market is faring. We know that he doesn't like the bad news there, but what might sway him to maybe lessen the tensions is the fact that with every day we get closer to the midterms. Of course, that's happening in November. So the longer, again, that this goes on, he doesn't want this necessarily war to be still on top of the news agenda. So those are the things we should be eyeing out for, right? Rather than these sort of theories of interagency process conducting kind of, we are
none of that works anymore. Let's look at this from the Iranian point of view. What is your assessment of how fragmented the Iranian regime is? there is this concern that oil tanks are filling up, and as a result of which they're effectively going to have to cap wells, which may not be able to be reopened, so they don't want to do that. What is the driving motivations, do you think?
As it has always been from day one, it's regime survival. And if anything, for Iranian regime, this has made it just more hardline. Regardless of what's going on in the country and what is going on, what we can hear, at least from media report, is a shortage, of course, of food now, huge inflation rates, right? Things that are happening in terms of, you know, some of the damage to the infrastructure that are going to take decades to fix. But at the same time, this is not a game of, you know, what the populace at the moment will be doing or saying, because it's time of war, and it gives still the upper hand to the regime in Tehran. On the fragmentation question, I would defer to anyone who is more of an Iranian politics specialist, but at this point in time, I would say that the incentive would be, again, to hold together at the moment, right, and kind of try to coast through this crisis rather than to try to sow division, because they know that this is, again, the lack of cohesion is something that could lead ultimately to the demise.
Great to see you. Thanks for stopping by us, updating us on what we should be watching out for. Gorana Gercic joining us from the Centre for Strategic Studies at ETH Zurich. What have we got coming up for you? We're going to move from the geopolitics back to the markets, back to the tech story for the Magnificent Seven report later today in a key test of whether or not the AI investment story is paying off. More on that next. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance. Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Seven minutes past the hour. Welcome back. You're watching The Pulse. I'm Guy Johnson in Zurich. Now, ahead of the full German CPI reading this afternoon, fresh data from the country's state suggests that the April print may not be as strong as feared. The uncertainty around the economic impact of the energy shock is likely to see the ECB, though, maybe leave rates unchanged tomorrow. But we're waiting for more information. That said, we did see quite a hot Spanish number a little bit earlier on. Maybe that is a factor that we need to put into the thinking as well. Zoe Schneeweiss, Bloomberg's economics editor, joins us now. Mixed data, Zoe, so far this morning. We're going to get the German data a little bit later on. The hot number out of Spain is worth paying attention to. But this data feels, and I put it with the PMI data, this data feels more and more stagflationary with every number that I see.
Yes, that's right. Even though the German numbers later this afternoon, might not be as strong as some had feared, anything close to 3 obviously is very bad news. That combined with the GDP number, with those GDP numbers, and we will get GDP readings across the region for the first quarter tomorrow, just does point to that stagflation picture. Again, the first quarter, the numbers might not be as bad yet as what we will see in the second. The first quarter, we had 2 months of that first quarter before the war started, but still 1 month just will mean that growth won't be as strong as it might have been otherwise, and that stagflation picture is very bad news for the ECB.
Yeah, it makes you wonder what exactly it will do. There is a danger in hiking, and there is a danger in cutting, and there's a danger in doing nothing. So what are we going to get tomorrow? And more importantly, what do you think we're going to get in June?
So tomorrow, it's unanimous from all economists we've surveyed, it'll be a hold. The reason behind this is they just don't have enough hard data yet. And the numbers we have, those PMI numbers, those other survey numbers, people, as Philip Lane, the chief economist of the ECB, pointed out, those numbers, those data, all are based on people reading the same reports we are, where there's just uncertainty there. So they are, in a way, guessing as much as we are. We need some more hard data. So tomorrow's too early. June is very much on the table. And economists and markets here both do agree that they think there'll be a hike in June. Lagarde herself tomorrow, let's see what she says. She generally has tried to be very careful here. They have that whole line with a meeting by approach. They don't want to preempt anything. They don't want to tie their hands. Because if you remember back in 2022, one of the reasons why they started late was because back then they still had forward guidance. And forward guidance was then blamed for not starting to hike as soon as they maybe should have, although the ECB is trying to explain that back then waiting maybe a few months longer than they should have on hikes didn't actually change the overall picture. But still, the ECB is keen to avoid mistakes, and therefore giving hints but not being that concrete is their way forward on this.
So a must-watch press conference coming up tomorrow, and we look forward to the coverage from you and the rest of the team. Zoe Schneeweiss joining us ahead of the ECB. Credits are also, of course, trading cautiously ahead of today's rate decision from the Fed. Jay Powell's final meeting before his term as chair expires. So let's talk about what we can expect here. Bloomberg's Jill Desis joins us on this. So you got a whole sort of question around what happens with the interest rates, but to be honest, that's the boring bit. What's happening with the economy, I think, is a more exciting conversation. What is a really exciting conversation is, what is Jay Powell going to do next? Is he going to stay, or is he going to go? Because if he steps down as chair, he doesn't have to lead the board. So what's the story there, Jill?
Yeah, Guy, I mean, that's really the only question here. I think it's, pretty widely expected. Fed's just in wait-and-see mode when it comes to rates. So when it comes to Powell, I mean, that's the one where we want to see whether or not he ultimately stays on. Look, at this point, the vote for Kevin Warsh looks like it's pretty poised to go forward. Powell's term expires on May 15th. It's the middle of the month, so we're probably looking at Powell's last meeting here as chair. Now, his term, though, doesn't expire for the next couple of years, so that's really the question here as to whether or not this is an environment that he continues to stick around in. He's certainly indicated that until that federal probe into the Federal Reserve ultimately is resolved and done and dusted, that maybe he's not really going anywhere. But I think it's going to be really interesting to see how he takes this press conference and ultimately addresses ongoing pressures that Donald Trump certainly has from him. We've also seen in the form of Kevin Warsh talking about the idea of regime change at the Fed. Is that an environment that Powell can continue to operate in if he's no longer a Fed chair? I think that's ultimately what we're really looking to see out of his last briefing today.
It's going to be, again, must-watch television. So are we all good to go on the Warsh nomination? Tom Tillis is behind it. Nothing standing in his way now.
That does seem to be it. I mean, you've got broad consensus from the rest of those GOP senators that they're willing to move forward this nomination. It was really Tom Tillis that was standing in the way here. He seems to be satisfied with the responses that he's gotten from the administration on that probe into the Federal Reserve. So at this point, we're looking today at a likely advancement out of this Senate committee. Then they still have to sort of schedule that full Senate vote. But at this point, there doesn't really seem to be any further obstacles. So assuming assuming that there's no sort of like last minute surprises or anything like that, we're probably looking at somebody that's ultimately confirmed before Powell leaves on the 15th.
Jill, great stuff. Thank you very much indeed. Jill Deese is joining us ahead of the Fed meeting a little bit later on. And we're not done yet. So we've also got to deal with big tech. Microsoft, Amazon, Meta, and Alphabet all reporting after the market closed today. Apple, of course, comes tomorrow. Matt Bloxham is here from Bloomberg Intelligence to update us. There's a lot about to happen. Which bits do I need to pay attention to? What are the key things that I should be looking out for?
Yeah, so obviously this is a big quarter. The four companies reporting tonight, between them, are planning to spend $650 billion of capex this year. That's up about 70% year on year. So a huge amount of focus on whether those investments are starting to show incremental traction on revenue. Certainly across the board, consensus is generally looking for at least a modest uptick in revenue growth in this quarter. I think the focus of that revenue growth is really going to be around particularly what's happening in cloud demand, which is largely being fueled by AI. I think there's also some kind of questions here about margin, though, too, particularly with Meta. We heard last week that there are plans afoot for them to cut about 10% of their workforce in May and also not backfill another 6,000 roles. That'd be another 7 or 8%. So quite a significant effort there from Meta to actually demonstrate that they're looking to cut overheads to help fund investment for AI. So kind of real big focus on, are they getting a return on investment?
Matt, earlier on this week, we saw a little bit of wobble in the tech sector. There were concerns around whether or not OpenAI was going to be able to deliver on its numbers. The company's pushed back on that. Do you think that pushback sticks? Do you think the market believes that OpenAI, it's all good, that there's nothing to worry about?
I don't think so. I mean, obviously, we've heard publicly from both OpenAI and Anthropic recently about what their revenue momentum is, and there's been quite a big switch over there. So Anthropic now saying it's doing about $30 billion of annualized revenue, and OpenAI maybe about kind of 24, 25 billion. It was the other way around not so long ago. So, clearly the momentum is with Anthropic right now. For sure, I think OpenAI had some very ambitious targets. For example, getting to 1 billion active users on their platform by the end of last year. That's not quite happened yet. It's an early stage company still, so you would expect there to be some kind of juggling once they kind of figure out what the right momentum is. Clearly, it's growing at a rapid pace, but they've also, investing big. They were exposed to some kind of long-term supply contracts, so they do need to keep growing the business very rapidly, and there's a lot of competition out there.
Matt, great to catch up. Looking forward to the coverage later on as well. Bloomberg Intelligence analyst Matt Bloxham joining us ahead of Big Tech's Big Day. Okay, just a few updates on what's coming later. We're going to speak to Andy Burnham, the mayor of Greater Manchester in the UK. That's from the Bloomberg City Lab event in Madrid. A lot of politics around Andy Burnham right now. The future of Keir Starmer very much in doubt. US futures look a little like this right now. Oil prices certainly on the move, which is a factor that you want to pay attention to. So oil prices have moved up kind of 113 on Brent as we see ongoing expectations that we are going to see the Strait of Hormuz being closed. US equity markets aren't pricing in much at the moment. To be honest, with such an amount of news flow coming later on today into the form of big tech, plus also in the form of the Fed, you can understand why maybe traders are sitting on their hands right now and waiting for an update on what is going to happen. But at the moment, you've got oil up, but you've also got tech up a little bit, 0.3% on the Nasdaq. Anyway, from Zurich, hope you enjoyed the show. This was The Pulse. This is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
On AI, some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And we've seen this before through history, and you're seeing it now. It It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns, and a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning. I'm Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Maximum pressure. The U.S. signals it's sticking with its naval blockade of Iranian ports to choke off the nation's oil exports. The busiest day of this earnings season. Futures rising ahead of results from $14 trillion in market cap. And investors awaiting the FOMC rate decision in what could be, is likely to be, Powell's last as Fed chair. Let's get a check on markets around the world now. Winnie Su is in Hong Kong for the latest from Asia. Winnie.
Good morning, Bonnie. We're seeing Asian stocks leaning slightly towards the upside today ahead of the Fed and also these key earnings from the hyperscalers, which are going to have significant implications for Asia's supply chain. Now, we do have Japan on holiday today, but also South Korea's Kospi Index up ahead of Samsung's earnings due tomorrow. Now, we're close to the end of the month, and when you look at the monthly performance, we're talking about Asian stocks up about 14%, headed for its best month since November 2022, and even outpacing that of the S&P 500, given the strength in tech and AI. Now, you flip the board and see how that's translating into this chart that we're seeing here, with Taiwan's market cap shown in the blue line here, outpacing that of Canada's market cap, which is shown in the white line here, showing you how it is really being driven by this tech rally and the optimism in AI. Now, it is the world's #6 biggest stock market.
All right, Winnie Su there. Thank you so much. 2 hours now into the European Open. Let's get to Justina Lee in London. Justina.
Vonnie, if we look at European stocks today, a bit of a rough day with Brent crude still climbing higher. Now, looking at Swiss stocks here, obviously the index is down, but all the attention will be on UBS, which reported pretty strong earnings and is having a pretty good day today. Now, I feel like all week, when I've been on the show, I've been talking about those rising European bond yields, and it's still the same story today, with German bond yields still climbing higher and the CPI data coming up later today. And earlier today, we had the Spain CPI data, which shows kind of further gains, which will be something that the ECB will have to think about ahead of its rate decision this week.
Yes, another rate decision this week. 10 of them, aren't there? Justina, thank you so much. Let's get to these markets because we are seeing Brent crude above 114 now, which is slightly concerning. 120 was the high for this whole war period. And obviously the idea that there might be an even more protracted blockade on the part of the US of the Strait of Hormuz is causing some jitters in this market. We have WTI well above $100 a barrel now, and yields close to their highs of the year. Of course, that's more particularly on the FOMC decision later on today, but there's also this underlying nervousness. Now, what you're not seeing is that reflected in equities at the moment. Let's take a look at futures. Yesterday, we obviously had a sell-off. The S&P was down 0.5%, the Nasdaq down 1%. We're seeing a bounce back today because, of course, it is also a huge earnings day for these mega cap companies. $650 billion in spending. Is it going to trickle down to the bottom line in any marginal way this season? We'll have to find out. The Bloomberg Dollar Index is slightly higher right now. All right, let's get to some individual pre-market movers. Here's Chloe Melly in London. Chloe.
Good morning, Vonnie. NXP is up very strongly after a really upbeat outlook this morning. It seems that the chip maker is bouncing back from what had been an extended slowdown in the auto industry. And this actually echoes what we heard from Texas Instruments and ST Micro, so really pointing to a recovery in that auto end market. Moving on to another tech company, and Seagate is up very strongly today also after blowout results, with analysts saying that AI is fueling a structural shift in that business. And so we are seeing really bright outlook for Seagate translated into this very strong move this morning. And finally, Starbucks has boosted its sales forecast. It seems that the turnaround focused on nicer stores, on speedier service, is really working, really starting to pay off. And so we are seeing shares up almost 6% for Starbucks this morning.
Chloe Melly in London, thank you so much. And coming up in this hour, we'll count down to the FOMC decision with Andrew Hollenhorst of Citi. But first, President Trump warns his aides to prepare for an extended U.S. naval blockade of the Strait of Hormuz to keep economic pressure on Iran. That's according to the Wall Street Journal. Joining us now is Jumana Bersetchi in Dubai. So, Jumana, this, at least for now, may just be rhetoric. At the same time, Iran can't discount the fact that the U.S. can keep up this blockade for an extended period. How long can Iran potentially last?
Well, that's the big question that I think the U.S. are thinking about right now. And I should also just add that in the last hour, we did have a Truth Social post being put up by President Trump saying Iran can't get their act together. They don't know how to sign a non-nuclear deal. They better get smart soon. No more Mr. Nice Guy. That's the picture that he was putting at the bottom. So there's some suggestion there that his patience is running thin vis-a-vis the Iranian response. And of course, the background to this, as we've been reporting throughout the course of this week, is Iran did present a proposal via mediators to the U.S. With how they see the eventual end of the hostilities, a two-phased approach. They are offering a mutual lifting of the blockade in phase one, and then at some later point deferring the discussions around the nuclear file. And at the time, we reported that it would be quite difficult for the U.S. to accept that position because so far, the U.S. president and indeed many of the White House officials who've spoken about it have linked the two issues together. You can't necessarily delink the fate of the Strait of Hormuz to everything else that the U.S. has been looking to achieve from throughout the duration of this war, which is, of course, ensuring that Iran never go on to develop a nuclear weapon. I think what's emerging from this reporting, you referenced the Wall Street Journal reporting this morning, is that President Trump has evaluated the options, and the option that he thinks is the one that's going to continue to at least put a little bit of economic pressure on Iran is the one where he maintains the U.S. naval blockade in place. But at the same time, his patience seems to be running thin, and this doesn't completely close the door of a possible resumption of hostilities, which is why you are seeing that market reaction today, at least in the price of oil, to account for perhaps a prolonged closure of the straits and even a potential return to hostilities if Iran, on their part, don't signal that they're willing to come back to negotiations with the U.S.
Yeah, that's always in the background, isn't it? The UAE exiting OPEC, announcing it yesterday. Our colleague Javier Blas calling it an existential crisis for OPEC. But it's been some time coming. The UAE wants to pump more oil, right, Jumana?
That's exactly it. And, you know, the backdrop to all of this is that it was obviously a shocking announcement, but not surprising for people who've been following OPEC and OPEC developments over the last few years. And remember, we did have an incident back in 2021 where the UAE and Saudi Arabia essentially went head to head. And the crux of the issue is Saudi Arabia have been supporting prices, and clearly their fiscal incentives are a little bit different from the UAE's fiscal incentive. Their break-even for oil is much higher than it is for the UAE. The UAE has been pushing for more production. They've been building up a lot of capacity. Even before the war, they were producing around 3.6 million barrels a day. Their goal was to get to 5 million by 2027. As being part of the group, there were question marks as to whether they could actually achieve that full capacity. Now, and I spoke to the UAE energy minister yesterday, he said that the market conditions are right because the market is clearly undersupplied. So they knew if they made this decision, there wouldn't be a huge impact on the market because the market wouldn't be quick to price in all of this extra production. So the question is not necessarily what happens now, but once things return back to normal, what does this mean for UAE production? And also, what does it mean for OPEC cohesion as a whole?
Yeah, absolutely. Jumana, thank you so much. Jumana Bersetti there in Dubai. Investors awaiting the Fed's rate decision and Chair Powell's news conference with a little uncertainty surrounding the economic outlook and leadership at the central bank. Joining us now is Bloomberg's Jill Deeses. Jill, will we know any more after the press conference today about whether Fed Chair Powell is sticking around after this meeting?
Well, Bonnie, I mean, that's really the question, I think, on everybody's minds here. When it comes to the Fed's actual rate path, at this point, it kind of seems like a done deal. They're ready to hold. Just volatility around the Iran war is pushing them into a wait-and-see mode. But when it comes to Powell himself, there's still a lot of open questions here. I mean, it does seem that Kevin Warsh's nomination for that Fed chair position is on track. So this is likely Jay Powell's last meeting as chair. But remember, he still has a term as governor that's not due to expire until early 2028. So he could stick around for quite a long time. The issue, though, is whether or not that may actually happen because, we've seen Donald Trump, the president, rail against Jay Powell for many years at this point. There's obviously that investigation into the Federal Reserve that caused this massive cloud that was hanging over this entire process. Powell has certainly said that until that investigation is finally over, formally, that he's not really looking to leave. Some questions about whether or not some recent actions, by the government ultimately satisfy that. So I think what we'll be looking for out of this press conference from Powell later today is whether or not we actually get, any kind of clues as to how long he may actually stick around and whether he plans on fulfilling the entirety of his term.
Yeah, I mean, we know we're not getting a dot plot today or a summary of economic projections. We know that it's almost 100% that the Fed is going to stay on hold, so all eyes will be on succession and so on. What about the confirmation process? How fast could it be? We know there is a Senate Banking Committee vote today at least.
Yes, so at this point, we've gotten sort of an indication from that Republican holdout, Tom Tillis, that he's willing to proceed with this vote. So he's on that committee. That's going to happen today. It does seem like there's no other obstacles that really stand in the way of Kevin Warsh then ultimately making, that nomination before the full Senate. That still has to be scheduled. But again, as long as that takes place before May 15th, which is when Powell's term is due to expire, then we're likely to see Kevin Warsh become the new Fed chair. Now, again, there's no obstacles at this point. It doesn't preclude any sort of last-minute surprises or anything like that. But with that sort of resolution on the part of getting Tom Tillis on board, it ultimately does seem like that's going to proceed. It's just a matter of sort of when and how. But it all does point once again to this being Powell's last meeting as Fed chair. We'll see what happens in this briefing later today, and then at that point, it's really again just an open question of what that dynamic is going to look like going forward. Because remember, Kevin Warsh has promised as Fed chair, some sort of a regime change. So I think you're really looking to see how he ultimately steps into that position, and then what that dynamic, particularly with Powell still around, potentially ultimately looks like.
Jill, thank you so much. That is Bloomberg's Jill Deeses there for us. Now to other top stories trending on the terminal this morning. Finland's Kona has agreed to buy TK Elevator for about $34.5 billion, including debt. The acquisition gives Kona greater exposure to the U.S. market, where TK Elevator has an established presence. The deal marks one of Europe's biggest ever PE exits. Adidas shares soaring after reporting strong first-quarter sales that beat analyst estimates. Apparel and demand for football, running and training products drove the solid performance. different story for Aston Martin. The automaker reported another quarterly loss. The company's net debt stands at almost £1.46 billion. Shares are rising, though, after Chairman Lawrence Stroll's consortium put up a further £50 million to ease pressure on the car maker. Coming up, European banks delivered mixed results this morning. We'll have more next. This is Bloomberg.
Tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
What has changed is that there are 2 or 3 conditions on how to manage capital returns. One is progress on integration, which we tick the box with the migration of the Credit Suisse clients into our Swiss platform. Number 2, the financial performance. You saw the strong results in the first quarter, and our ability to maintain a capital level at around 14%. We are at 14.7%. So I do believe that we delivered on some things.
Shares of UBS getting a boost following strong results, keeping it on track to offer bigger buybacks this year. Let's bring in Bloomberg's Guy Johnson for more. So markets certainly reacting positively. Was it a bright quarter across the board for UBS, Guy?
So they did really well. So UBS had a really solid quarter, and the numbers reflect that, and the share price reaction reflects that. So Vonnie, yeah, really good numbers, particularly, and in some ways ironically, because remember this is largely a wealth manager. The investment bank did very well. So a bit like on what we've seen on Wall Street, the traders had a really solid quarter at UBS. It was a different picture, for instance, at Barclays yesterday. So the UBS traders did well, but it was other parts of the business as well. The flow data looked pretty good. Clients are given what's happening in the world at the moment, relying on UBS. So the numbers pretty much across the board look good. So that's why we're getting the share price reaction we are getting this morning. They've also slightly accelerated the share buyback. Sergio was just talking about that there. So what they've done is last quarter there was a bit of disappointment, and they said this quarter we'll promise we'll make sure we deliver more next quarter. So what they've done is accelerated the share buyback program. They were expected to be at kind of 2 billion this time round. They're now at 3 billion. So they brought 1 billion forward effectively, and that's going to be completed by the end of Q2. But it's what happens after that, Vonnie, that is the really open question. You've got this huge overhang over Credit Suisse right now in the form of these new capital rules that the Swiss government is proposing. Those have gone before Parliament now. They just don't have the clarity at this point in time to deliver sort of much certainty beyond this as to what happens with shareholder returns and buybacks in particular. So that's the real concern right now. So this is a company that's a bank that's kind of doing well, but has this big cloud of uncertainty over it with regard to the capital rules that the Swiss are going to impose. And we just don't know how UBS is going to, well, what it's going to do next to deal with that problem, Bonnie.
Yeah, it must have several planning scenarios, at least in the works. Deutsche Bank, Guy, I mean, it had a good quarter, but there were some red flags, really. A hit on commercial property being one of them, and credit provisions just surged. Can you tell us more?
Well, we are, so commercial property and the credit story in some ways are aligned. We are starting to see, Vonnie, a slowdown in Europe. You're not getting it over there in the States in the same way. The ISM data, I suspect, is going to look fairly okay. And certainly most of the data that I've been seeing recently reflects an economy that's still humming along fairly nicely. You are starting to see a bit of a rollover in terms of the PMI data here. And that, the kind of, you start kind of drawing the connection between what's going to happen next and what happens with the credit cycle. And there are concerns, and Deutsche Bank's right at the center of that. So yes, there are fears now about what's going to be happening there, and Deutsche Bank may be just emblematic of that.
All right, Guy, thank you so much. And that Sergio Ermotti interview available on the Terminator, thanks to Bloomberg's Guy Johnson. Here in the US, 4 of the biggest names in tech report earnings after the bell today. That's Alphabet, Microsoft, Amazon, and Meta. Joining us now is Matt Bloxham of Bloomberg Intelligence. Matt, just as a broad question, what will any of them tell us about the amount of CapEx spending this year and whether it's actually accruing even marginally to the investor?
Yeah, so those 4 companies are planning to spend something like $650 billion of CapEx this year. That's up about 70% year on year. I think they're going to be on track to that. I think what people are going to be focused on is whether that's kind of translating into a faster pace of top-line growth. And certainly for most of those companies, the analyst community is expecting at least a moderate uptick in growth, and for some of those companies, particularly for Alphabet and particularly for Amazon, and also perhaps even Meta, kind of how the kind of cloud revenue is expanding. I think also for Meta, going to be a big focus on the margin story. That's the other kind of big issue they were seeing, that these big AI investments are not just hitting CapEx, they are squeezing margins too. And obviously we heard last week that Meta plans to cut about 10% of its workforce, saving maybe a few $1 billion. So kind of there's going to be a lot of focus about how these companies are stitching together the investments they're making and how quickly we might see that payback.
Yeah, we got those layoff announcements from Microsoft as well already, so they weren't saving that news for earnings day, let's say. What will Microsoft tell us, given the software background?
Yeah, again, so this kind of big focus on the Azure cloud platform and the extent to which the pace of revenue growth there is accelerating as they get more AI demand. Obviously, there's been this recent announcement too that they've relaxed the relationship with OpenAI in terms of the exclusivity, and I think that's potentially kind of beneficial for both those businesses in terms of how they can kind of push demand going forward.
Matt, this Elon Musk suit, he testified that he's suing OpenAI and, Sam Altman and Greg Brockman, founders, 2 of them, because of its pivot. We know he's had a problem with this for a long time. What's new about this suit, and might it affect any of his businesses?
Yeah, I think it's still very early days of that trial. We're just kind of getting almost like open kind of statements from the kind of parties involved. Difficult to kind of really know what the kind of true underlying motivations here are. Clearly, Elon Musk is pushing that the company should return to its kind of charitable status. And obviously, OpenAI is planning a huge IPO at some point, possibly later this year. And if Elon Musk is successful, that would derail those plans, potentially kind of really hurt the OpenAI investment plan. They've obviously just raised $122 billion of capital to support that growth. Now, obviously, Elon Musk has his own IPO plans with SpaceX, including XAI, a platform which is a rival to OpenAI. So, some kind of quite significant, both kind of public market and investment perspectives coming here, depending on how this suit goes.
All right, Matt, thank you so much. That is Matt Bloxham of Bloomberg Intelligence. Coming up, your front page news. This is Bloomberg.
80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
This is Bloomberg Brief. I'm Vonnie Quinn in New York. Time now for your front page news. First up, the New York Times leading with King Charles's visit, saying it was a masterclass in Trump 2 diplomacy, obsequiousness balanced with prodding about NATO, some wise cracks at the president's expense, plus what the Times calls the shiniest, Trumpiest of gifts, a golden bell from a World War II submarine called HMS Trump. Next up, the Washington Post reporting former FBI Director James Comey has been indicted on allegations a photo he posted on social media last year constituted a dangerous threat to the president. The indictment cites a photo of seashells on a beach arranged in a pattern making out 8647. Trump is the 47th president, obviously. Comey issued a video statement saying that he is maintaining his innocence. And finally, the Financial Times reporting Goldman Sachs has stopped its bankers in Hong Kong from using Anthropic's AI models. The FT says Western models banned in mainland China, not so much banned in Hong Kong. And this move, it comes as a result of Goldman talking to Anthropic. This is Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Maximum pressure. The U.S. signals it's sticking with its naval blockade of Iranian ports to choke off the nation's oil exports. The busiest day of this earnings season. Futures rising ahead of results from more than $14 trillion in market cap. And investors await the FOMC rate decision. It's very likely to be Powell's last as Fed chair. So taking a look at these markets, your eye is drawn immediately to Brent crude, which is closing in on $115 a barrel. That's only $5 off the wartime peak. WTI well above $100 a barrel, and that spread is widening once again. We have yields close to their highs of the year. We'll see if anything happens after today's FOMC decision. Markets not obviously pricing in any kind of a move in interest rates, but there might be some questions as to what happens next in terms of the staffing of the Fed. Let's look at futures, though, because even with oil at these prices, we are seeing futures higher. We are definitely lower than we were earlier, but NASDAQ 100 futures look like we might see a bounce back after yesterday's 1% drop for that index. Of course, all of those results come after the closing bell, so we'll see how those companies report and what they have to say. And then the dollar index very slightly stronger before the FOMC decision. For some stocks to watch now, let's get to Chloe Melly in London.
Good morning, Bonnie. NXP is up very strongly, more than 15% this morning after a very upbeat outlook. It seems that the chip maker is bouncing back from what had been an extended slump in demand from car-making customers. And so this follows in the footsteps of what we've already heard from Texas Instruments and ST Micro. And so it seems to point to a real recovery in that auto sector. Moving on to Seagate, which is also up this morning after blowout results. And it seems that AI is really creating a structural shift in this business and really boosting that demand for storage. And so we are seeing those really good results, and therefore those shares up almost 18% this morning. And finally, Starbucks is also up. It seems that its turnaround, which was really predicated on upgrading its stores, on creating speedier service, is paying off, is really working. And so Starbucks upgraded its sales forecast for this year, and we are seeing that reflected in those shares as well today, with the stock up about 6% this morning in pre-market.
All right, Chloe, thank you so much. Chloe Melly there in London. Markets awaiting what's likely to be Fed Chair Powell's last news conference, at least as chair of the central bank. Joining me now at the desk is Andrew Holdenhorst, chief U.S. economist at Citi. So, Andrew, obviously, Fed Chair Powell's last decision as Fed Chair, most likely. Is that your base case?
I think it will be his last decision as Fed Chair. We should have Kevin Warsh seated by June.
Yeah. So what's he going to have to answer first? Is it going to be questions on $115 a barrel Brent crude? Or still, like 2 months and change into this war? Or is it going to be what happens with him next? Is he staying on the board?
Yeah, you know, a little over a month ago at the last FOMC meeting, we were thinking that by the time we got to this FOMC meeting, maybe there would be more clarity around oil prices and the situation in the Middle East. And of course, there is not. So that uncertainty is still hanging out there. I don't know that he's going to be able to answer a lot of questions on that point, other than just saying that uncertainty is high and they don't want to give a lot of guidance at this moment. Concerns about if oil prices stay higher for longer, do you get individuals who see gasoline prices that are higher, who start thinking, maybe inflation is going to be more persistent? Do you get firms that are more willing to pass those costs through into consumer prices and generate inflation that way? So that will be a concern. So he will get that question. We'll hear something about that. Yes, he's certainly going to be asked about his plans to stay on the board. I don't know if he's going to give us an update today.
Yeah, well, just on oil prices first, it's been a while now that they've been elevated. Do we have any evidence in the data that there is bleeding going on into, the inflationary environment?
It usually takes months to see that pass-through kind of fully come through. If you think about what happens as a firm, first you would see some of your costs go up, the cost of transportation goes up. Then you start thinking about, is this going to be something that's persistent? Do I want to pass it through to consumers? Because if it's just going to be a temporary shock, then I probably just want to sit and wait. And yes, I'm going to have lower profits for a couple months, but then oil prices will come back down. Gasoline, diesel prices will come back down. I don't have to pass those costs through. Right now, that's probably where most firms are. So we wouldn't really expect to see much of that in the data this early. One place to look where we think we're probably seeing some effect already is jet fuel prices that have increased the cost for airlines. That's being passed through to airfares. So you're getting some effect on core inflation there. But for the most part, it's a headline inflation story. It's higher gasoline prices, higher spending at the pump. If this passes through to core goods, this would probably take multiple months to unfold.
Yeah, and we've been seeing a divergence between core PCE and CPI, right? Does that continue, and what does Warsh do about it? Because we know he looks at other inflation measures.
Yeah, that was really interesting in his testimony last week, where he said, look, I'm not just looking at core PCE. So the Fed target is a PCE target. That's their preferred measure of inflation. But of course they know there are methodological issues, there are technical issues with the various different measures of inflation. And Warsh sounded very open, not just to look at core CPI, which right now is running cooler than core PCE, but he mentioned trim mean measures. These would be measures where you throw out the really high readings and the really low readings for various categories. If you look at those trimmed mean measures, those are also running lower right now. So I think it's a pretty nuanced point. I'm not sure that the market really kind of fully noticed what he was saying. But if you look at these other measures he's talking about, they are running cooler. So that would be a subtle hint that he might be pushing in a little bit more dovish direction and saying, yes, core PCE is maybe our preferred measure, has been, but there are all these other measures and they're looking a little bit cooler.
Fascinating. He did also talk about AI and productivity on the labor side of things. So he seems to think that that will weaken the labor market. You have someone like Ed Yardeni saying, no, actually, AI-induced productivity will probably strengthen the labor market, and particularly the wage component.
Yeah, so, we have the history of technological progress in this country and globally, and the history has been that when you have a new technology, it raises productivity, and that actually ends up creating new jobs. There are jobs maybe that we're not thinking about right now, but there are jobs that will emerge and people will stay employed. That's always been the history so far. So that's what I think a lot of economists and historians of the economy are relying on. On the other hand, there's the risk and the danger that maybe AI is moving faster than other technologies. Maybe it's more disruptive than other technologies. You think about the transition that the U.S. economy has gone through over the last 50 years, the last 70 years, where manufacturing has declined as a share of the economy, services has expanded. Overall, that's been a positive thing for the economy in terms of growth, in terms of people are still working. But if you were a manufacturing employee, that job maybe no longer exists. And if we have something like that happening with AI and it proceeds very quickly, that could be disruptive. So there's a potential positive in terms of higher productivity, but a potential negative in terms of some jobs that exist now. Maybe AI can do those jobs.
So Warsh's scenario could play out. I have to ask you how material it is to the market whether Fed Chair Powell stays on the Board of Governors, right? At the moment, Polymarket has the chances down to more than 50%, down to more than 32% from 50%. But would it mean anything to the market in terms of, say, the Fed's future framework if Powell did stay on? He would be a governor, but just a governor.
Just a governor. So the most important thing is this transition of Fed chair. That chairmanship looks very likely now to move to Warsh, very likely by June. So I think we have a lot more clarity on that relative to where where we were on this a week ago or a couple weeks ago. And that means that Warsh is really going to be guiding this Fed. He is going to be the key voice for this Fed. But still material if Powell is there. It is kind of a committee of equals. The chair is kind of first among those equals. But everybody gets a vote on the committee. Powell would keep his vote on the committee if he stays on. And we really don't know at this juncture if he's going to stay or not. Having said that, it's not that Powell's been a very hawkish member of the FOMC, right? He's been kind of a centrist to a dove from time to time. So it's not even clear to me, depending on how the data come in, that there will be this huge gulf between Warsh and Powell in terms of where they want to go on policy. But let's see if Powell tells us something today.
Yeah, it's been a while since we've had a changing at the Fed. Andrew, thank you so much. Andrew Hollenhorst of Citi. Now to other top stories trending on the terminal this morning. AI companies such as Anthropic and OpenAI are rushing to London for office space, leasing more than 1 million square feet since the start of 2025. London landlords are struggling to boost the supply of top quality property, with AI firms looking for an additional 630,000 square feet. Citadel Securities expanding in Asia by recruiting high-profile hires and allowing Asian clients to trade U.S. equity blocks. According to Citadel Securities President Jim Esposito, the firm aims to leverage its strength in electronic execution. Pershing Square is set to go public today. Bill Ackman's combined IPO for his closed-end fund and hedge fund raised $5 billion. The IPO initially was set to raise as much as $10 billion. And don't miss our interview with Bill Ackman on Bloomberg Deals. That's today at 12 p.m. New York time. Coming up, squeezing Iran's oil exports. President Trump signals no let-up in the naval blockade. More next. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. President Trump telling his aides to prepare for an extended blockade of Iranian ports as the U.S. tries to force Tehran back to the negotiating table. This is according to the Wall Street Journal. Now, the president also posting on Truth Social earlier, quote, Iran can't get their act together. They don't know how to sign a non-nuclear deal. They better get smart soon. Joining us now from Washington is Kate Ackley of Bloomberg Government. So I guess this is the response to Iran's proposal, Kate? Is this all we get?
Well, what it sounds like is, he's trying to find ways meant to sort of squeeze Iran economically rather than actual, attacks and bombings, there has been this tenuous ceasefire going on. This is rough news for, gas prices. And as Republicans are sort of looking at their affordability message heading into the midterms, it's obviously the Strait of Hormuz has huge effect on oil and gas prices, but there are many other things. I mean, we've seen all kinds of shippers and the apparel industry, the high-tech industry is also concerned about products and things that they need to make their gadgets and high-tech chips to power artificial intelligence. All of this is caught up in this blockade.
Yeah, absolutely. Well, we're just getting lines now that Iran is citing the chair of the Oil and Gas Services Association, saying that storage is being managed and that the U.S. is wrong about the risk of oil pipelines exploding. So that's the response from Iran. Now, speaking of gas prices and Brent at 115, Republicans are trying to look for ways to ease it on the pocketbooks of voters. It seems they're looking at capital gains tax easing. Is there anything there that will gain traction?
Well, certainly among Republicans, that has been something that they've looked at before. There's Senator Ted Cruz on Capitol Hill was talking about this week. This is when they're looking at doing their second bill, sort of along the same strategy as they did the One Big Beautiful Bill last year, this reconciliation process, which is, can smooth things through the Senate on a just simple majority vote rather than getting the 60 votes needed to overcome a filibuster. So they're looking at this second sort of, we call it reconciliation bill. One of the things that they're looking at, some Republicans are proposing, is to ease capital gains taxes, again, as a way to kind of woo voters in the midterms, voters who are concerned about rising prices and affordability. Of course, on the other side, this sort of leaves the Republican Party, vulnerable to attacks that, this is something that would help wealthier voters, not, paycheck to paycheck type voters, lower income voters who might not be able to, use capital gains anyway. And so a tax break on that wouldn't necessarily hit their pocketbooks.
There's even the suggestion that Republicans could get this done by bypassing Congress almost and tying capital gains to inflation somehow through Treasury. To explain how that would work, Kate.
Well, that's what Senator Ted Cruz and some other senators have called on Secretary Bessent to do that. We sort of bypass Congress and tie capital gains, index for inflation. So that's an ongoing conversation. We'll see what amounts to that. But, again, it's sort of easier probably to do things through the executive branch rather than Congress, but it doesn't necessarily mean that it will happen.
Yeah, absolutely. Kate, thank you so much. That is Bloomberg Government's Kate Ackley. A massive day for earnings with more than $14 trillion in market cap companies set to report, including the largest tech names, Alphabet, Microsoft, Amazon, Meta, and Qualcomm. Joining us now is Mandeep Singh, Global Head of Technology Research for Bloomberg Intelligence. Many of these companies out with massive headlines in the last few weeks already, Mandeep. What more should we expect to hear from them today? At least let's start with the hyperscalers.
Yeah, look, I mean, there needs to be clear beat and raises, and even a strong beat is not enough. You want to see them show, improving margins when it comes to the hyperscalers specifically, given we know, all of them will be spending north of $100 billion in CapEx, and if they're planning to raise their CapEx, then the margin profile becomes all the more important of the, cloud revenue that they'll be adding. And for Microsoft specifically, I think because of all the OpenAI news, I think they have a bigger overhang in terms of explaining how they plan to kind of decouple from OpenAI, at the same time keep growing their Azure segment revenue, Copilot revenue, and I think there'll be probably a bigger focus on Microsoft compared to all the other hyperscalers tonight.
You know, we got some huge layoff announcements from a couple of these companies, obviously not tied now to earnings day. Was that on purpose? Typically that would give a stock a boost, but I guess if you're talking about AI taking jobs, it's not such good news.
I think for hyperscalers specifically, it has to do with cost controls. Given, they are raising their CapEx, the margins won't be trending up until they show those cost controls. And look, they have to, beat in terms of whatever the consensus numbers are, which are pretty high given, these are at-scale businesses. So you want to see a clear contribution of AI workloads or AI products to the top line, and then how that trickles to the bottom line. That's where, the job cuts and the cost controls come in.
Now, some of these companies have fared very differently this year. If you look at Alphabet, for example, it's up almost 11% year to date. Meta is up less than 2%. What do we expect in terms of how investors will reward the individual companies?
Yeah, I think, again, with Alphabet specifically, they have a lot going for them in terms of their TPUs that really have differentiated them from the rest of their hyperscalers, the vertical integration. So as long as they can defend the search part and, that is stable, I do think, there will be a clear beat and raise from them. But in the case of Meta, the expectations are quite high. We are talking about 30% top line growth. So that's where they will have to show that clear AI delineation in terms of what is the lift from AI and the latest model that they have released, and how will that drive that top line growth going forward, given the higher expectations we have.
Mandeep, a brief word on Elon Musk suing the OpenAI founders. We know he's had beef with them. Is this a wise thing to do? I mean, might he actually win this suit at some point in the future?
Well, I look at, OpenAI is going through a lot right now in terms of, them losing market share to Anthropic. And this sort of creates that distraction. Obviously, they want to be laser focused in terms of making sure their model is ahead of Anthropic. But clearly, we will have some sort of a verdict on this case. And I think we'll move past this.
Yeah, Mandeep, thank you so much. That is Mandeep Singh of Bloomberg Intelligence, in for a long day. Coming up, we're going to get you set up for that day with the Fed decision and lots more on deck. This is Bloomberg.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Bringing you you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Today, the Fed decides.
Regime change at the Fed is a matter of when and not if.
This is not a small matter.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
A series of shocks have interrupted progress.
We've completely priced out a rate cut for 2026.
This is a really tough time for all of us in markets.
There is nothing this institution can do in the face of the shock elsewhere.
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
This is Bloomberg Brief. I'm Vonnie Quinn in New York. Now look at what's ahead today. Starting with earnings, we're going to get all of these earnings: Alphabet, Microsoft, Meta, Amazon, and Ford after the closing bell. Then an executive session to vote on the nomination of Kevin Warsh. That's at 10 a.m. in Washington. And the Fed rate decision, that's at 2 p.m., followed, of course, by Fed Chair Powell's news conference, potentially as last at 2:30 p.m. No SEP, no dots. Plus, Bill Ackman's Pershing Square will begin trading on the New York Stock Exchange today. So let's get to some early movers. NXP Semiconductors in for a good day. A strong auto market bolstering an upbeat forecast for that chip maker. Seagate, well, this is on a tear. Look at this, up 17%, having already really just blown everything out of the water. It had a fantastic quarter. Everything was beat and raised and just all rosy for Seagate. And then Starbucks turnaround seems to be going well. It boosted its comp sales forecast. Its turnaround plan seemed to be bringing in all of the diners. It's up 5.6% in the pre-market. But let's take a look at the macro environment, because that's a little bit more concerning today, even with all the potentially good news on deck. We have Brent crude trading close to $115 a barrel, just $5 off the war peak. The spread to WTI has widened once again, but WTI is well above $100 a barrel, and we were already very close to our peak for pump prices. So no doubt this is going to send those even higher once again. So that bears watching, because for right now we have equity index futures pointed higher, but typically when you see oil prices this high, that's portended a very down day. Now in terms of yields, we have them higher, but really very close to their highs of the year. So the 2-year yield, obviously the one most Fed sensitive, even though we're not expecting any kind of a move today, at 385. And then if you look at futures, down day yesterday for equity indexes. May not be the case today, although we're off our highs of the session. So that is it for Bloomberg Brief. Do stay tuned. Surveillance continues the conversation next. This is Bloomberg.
Day 8 at the Mutua Madrid Open. Hailey Baptiste clinched the biggest win of her career after saving 6 match points against 3-time champion Aryna Sabalenka to reach the semi-finals. The victory was her first over a world number 1. She'll face Mira Andreeva in the final 4. And don't forget, you can watch all the action live daily and head on over to tennischannel.com to download the app.
Court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
The market remains dependent on tech.
The CapEx figure is what you got to be laser focused on.
We're just really not seeing the rest of the market able to overtake that Mag 7 cohort.
Tech breadth is broadening across the sector.
The technology genie comes out of the bottle. It never goes back in.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Wednesday, preparing for a big one. Fed Chair Jay Powell gearing up for what could be his last meeting as the White House reportedly prepares for an extended blockade of Iran. 4 of the biggest companies on the planet reporting quarterly earnings. Meta, Microsoft, Amazon, and Alphabet.
That, to me, is the most important aspect of today, to understand whether or not the rally that we've seen so far, particularly in tech stocks, can continue despite all of the headwinds everywhere else. Do we get the results that justify $650 billion of CapEx spending this year? Do we see an acceleration of that spend into next year and beyond? And does the market digest that, given the fact that people are getting a little bit squirrely about some other aspects of this global economy?
This is the story that supported this equity market, and we need it to keep supporting this equity market, because the other story is putting the squeeze on things. Crude up once again, potentially higher for what, 5, 6, 7, 8 consecutive days for Brent crude, up this morning by 3%, 115, and this from the Journal. President Trump instructing Gates to prepare for extended blockade of Iran, according to U.S. officials.
Blockade until they cave. That is really the tone right now from the White House. And you go on to read the remaining of that report. What the Wall Street Journal is saying is that Trump assessed that his other options, resume bombing or walk away from the conflict, carried more risk than maintaining the blockade. So they're not escalating, but they're not de-escalating. And right now, when you have that blockade, and Kepler's talking about 12 to 22 days, that's when we can potentially see some shut-ins. And there are reports that the economy right now is struggling when it comes to Iran.
You can see this rippling through asset classes, so let's go through them. Start with crude, $4 away from the closing high on Brent, at the front end of the futures curve. That's crude, that's commodities. Check out bonds, retesting the highs of the year. For the long bond, we're right there on 30s. And then equities. Equities on its own planet, already up from the lows and nowhere near to retesting them, higher by more than 10% from the late March low.
There is one little sign that maybe things are not as complacent under the surface, and that's the equal weight S&P 500 that isn't making those new highs. And you are seeing it sag to some of the lowest levels that it's been. So you start seeing that versus big tech, and you can see this is a completely tech-driven story. This is not some sort of macroeconomic call on the U.S. economy accelerating, although it is if you take a look at some of the earnings, which is also what's been propping up some of these equities. This is a difficult moment. The earnings have to come through, or else that really does take the one pillar out of the market that's holding everything up.
The equal weight S&P 500 down for 6 consecutive days, the longest losing streak so far this year. Coming up this hour, we'll catch up with George Goncalves of MUFG as the president considers an extended blockade. Angela Zeno joins us of CFRA with big tech earnings on deck, and Priya Misra of JP Morgan looking ahead to the Federal Reserve. We begin this hour with stocks holding steady ahead of a critical day for Wall Street. George Goncalves of MUFG writing, "It's one thing to climb the wall of worry, it's yet another to be in denial of the reality still to come. We think broader financial markets have overshot again and are at risk of serious disappointment." George joins us now for more. George, good morning.
Good morning. Good to be
That's
here.
a bearish way to start this morning, sir.
It's a bearish way to start. It's potentially Powell's last Fed day, and we'll see if he can change that kind of bearishness into some sort of optimism here. But I think it's the right call.
What do you think we're going to be disappointed by?
I think we're going to be disappointed by a number of things. One, if you go back in the analogs of history, and if you look at, again, people don't like to go back to two distinct periods, 2008 and 2000. People just don't like those 2 years. And you can have good news, and you can have markets end at a high note and then kind of top tick things. And so earnings really do have to deliver today. And you have a lot of optimism already priced in. You have valuations, again, back to screaming high levels. It's all about the equity market. It's all about the tech sector within the equity market. And one could argue that makes the economy much more fragile. Each time we do this, we are so dependent on stocks never going down.
Paul Tudor-Jones, legendary investor, speaking to Patrick O'Shaughnessy in a podcast and saying this: 2000 was the easiest bear market I've ever seen in my whole life. Went on to say it's got so many similarities to right now. What are the similarities to right now?
The similarities are a concentrated kind of view, the euphoria around a new new technology like AI. Again, the sort of kind of liquidity that created, meme stock and investing. All of this is kind of very similar. We use different ways of expressing what was happening back then, but it was bubble-like conditions, and there's, I think, a repeat of that happening now.
You said something that I find really interesting, which is that this market going up is one of the big reasons why people keep being bullish. It's almost like a Ponzi scheme of bullishness, right? The market goes up, so you feel bullish, so you put your money in the market, and it goes up. How big of a pillar is that to the overall recovery, to the resilience in the U.S. economic data, to really underpin the justification to keep going into stocks that make them keep going up, that then keep propping up economic conditions?
Yeah, it is kind of a vicious kind of cycle up. The question, we haven't really felt the vicious cycle on the way down, largely because there's really no net sellers or real sellers, and most large investors have to be fully invested to kind of participate with the upside. And when they do try to hedge, they use the options market, which then creates these sort of squeezes on gamma, on options. So it creates this weird dynamic that's kind of perpetual until one day it's not. We haven't felt that yet.
I guess the biggest counterpoint to that is potentially we've seen every single potential puncture point to that. I mean, well, you name it: high oil prices, high bond prices, uncertainty at the Federal Reserve, political uncertainty, hot wars. I mean, all sorts of concerns. Why hasn't any of that been enough?
I mean, I think the market structure has clearly changed. I mean, there's been well documented the passive flow. That's why I've always looked at the jobs market as the most critical component. People have jobs, they contribute to their 401ks. It keeps the system going, right? I think that's why it's so critical that we're at this interesting inflection point, potentially, that if AI is really that good, it's going to hurt the jobs market over time, at least in the short term. I think it will, short to medium term. And as you retool the economy around that, you might lose, AI is not going to be contributing to 401ks. They're going to be replacing, you start doing windfall taxes at corporations. This is a really interesting crossroads, and maybe just the totality of all these things will start to be like a burden on the economy. At some point, it's that last straw that breaks the camel's back.
Aren't we already doing some of that when the president comes out and says tech companies need to basically subsidize consumers' energy bills?
Look, I think there's going to be a need for some kind of cost sharing, load sharing for sure in the future.
And you think it's going to be more of a burden on corporate America to pick that up?
Look, ultimately, how this all shapes out, I really don't know. No one knows the future on how this works out. It's going to depend on future administrations more so than anything else. But I feel pretty confident both in this election cycle and in 2028, AI is going to be on the ballot box.
What do you think it is this year, before we get to 28, that shakes this market out of what you believe is denial?
I think, look, I mean, the front and center is the oil price. And I think just the fact that we've been into denial, the biggest denial is that somehow we can like turn on and get production back, that we can kind of replace all this inventory that's been depleted. And as we're going through that process, I think it's going to really be a kind of rude awakening for markets, that it's going to be a drag on growth in the second half.
We speak to Stuart Kaiser of Citi. This is something he's been talking about coming into this week, that these slow-moving risks just keep on building, keep on building, keep on building, and then you break. You reach a tipping point. I have no idea if we're close to one of those, but some people think we are.
And what people are watching is that long-dated oil contract and the fact that it's reaching almost $90 on Brent crude for December. People are watching that and saying, hold on, it's going to cross some bogey where suddenly the stock market's going to wake up and say, we're broken. We don't think we like this very much. And right now, you aren't seeing that. And part of it is because the earnings keep giving that forward look that is more positive. And at what point do you start to have to see some of this reflected in some of the rhetoric coming from the C-suite?
George, are yields higher now for different reasons, or the same reasons we made those highs just a month or so ago?
I think yields are higher for a number of different reasons, and they've not participated in the broader risk rally because it is a pure macro kind of expression. And so it is capturing, a longer kind of wait and see mode for central banks, not just in the US, because like the hawkish rhetoric that's been coming out from overseas has also kind of pushed up US rates. The global kind of rate connection is there, and it's clearly an issue for the US bond market. And, fiscal concerns, because, we all know at some point if something does break, the government's going to come to the rescue. So I think there's a lot of different factors that are kind of at play.
But to John's point, earlier in the conflict, people were looking at higher yields as a result of rate hikes in direct response to oil prices, which was absolutely a negative. Yep. Now suddenly, it's because the economy is doing just fine, the consumer can keep spending. It's almost like yields are rising for the right reason. At what point, even if they're rising for the right reasons, does it become a breaking point for equity valuations?
I think markets, get enamored around clear lines in the sand. 5% on the 30-year, if that breaks. You get above 450 on the 10-year. And if you were to ever go back to 4% on the 2-year Treasury, then the market, I think the broader markets like stocks would actually care about that.
What business does the 2-year have at 4%? So we asked that question repeatedly back in March. I think we have to ask it once again at 385. What business does the 2-year have at 4% when we, as far as we understand, the bar to hike at the Federal Reserve is incredibly high? What business does a 2-year yield have trading above Fed funds?
I really think it has very little business. So we're actually relatively constructive at the front end. We think that's the best sweet spot, highest risk reward for the bond market is being long positive carry treasuries in the front end.
So right now, looking forward, what's the best hedge to something potentially breaking, although it hasn't yet and could potentially keep going?
So unfortunately, it's been the trade that's been the hardest to kind of keep in place, which has been the curve steepener. And that's the best macro expression that has to get reset every so often because it doesn't deliver until it does.
George, it's good to see you. Thanks for breaking it down. A bearish start to this Wednesday morning, going into a massive slate of earnings after the closing bell and the Federal Reserve decision later this afternoon. 30s at 495, 10s at 436. With an update on stories worldwide this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. President Trump telling his staff to prepare for an extended U.S. naval blockade of the Strait of Hormuz. The Wall Street Journal reporting the president has decided the blockade is a less risky option than resuming bombing or extracting the U.S. from the conflict entirely. The White House is working on dialing down its feud with AI giant Anthropic. Axios reporting the U.S. is developing new guidance that would allow agencies to get around Anthropic's supply chain risk status and begin onboarding its new model, Mythos. A draft of an executive action is reportedly in the works. UBS posting first quarter earnings that beat analyst estimates. The investment bank increasing revenue by almost 30%, with equities and FX delivering the biggest boost. UBS is giving cautious signals of increasing the $3 billion buyback it's already lined up amid ongoing tension over Swiss regulation. And that is your Bloomberg brief. John.
Hey, Vonnie, thank you. More from Vonnie later this hour. Up next on the program, standing firm against Iran.
We're doing a little Middle East work right now. We have militarily defeated that particular opponent, and we're never going to let that opponent we're never going to let that opponent have a nuclear weapon.
Up next, we'll catch up with Colonel Wayne Sanders of Bloomberg Intelligence, live from New York City this morning. Good morning.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations, the players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Check out this day ahead. Just look at it. 2 p.m. Eastern Time, Federal Reserve decision, 2:30 news conference. After the closing bell, Microsoft, Amazon, Meta, Alphabet, just phenomenal. The earnings slate later on this afternoon and this morning. The small matter of a vote to look to push forward the confirmation of Kevin Walsh for the top of the Federal Reserve.
Finally, the Senate Banking Committee will have that vote. Senator Tillis is going to vote yes, so it's going to get out of the committee. Not only that, he might pick up 2 Democratic votes in that committee, which would be a pretty big deal for Kevin Walsh.
I'd like to make a proposal. I think they should spread this out. I don't think that this is good casting. I think that they really need to, a little bit every single day so we can adequately focus on it all, because this is just a bit too much.
You're trying to produce.
That's a day ahead.
I think we need to produce this particular news
It's
cycle.
a day ahead that gets you out of bed. That's what it is.
It's my favorite week. If you love financial markets, this is the week for you, without
Totally.
a doubt.
That's
without a
right.
doubt.
So spread the joy. Make it a little bit so you can really
Make it
just
your
dig
favorite
in.
month.
Some drip feed of
exactly.
tech earnings on
Microsoft.
Thursday and Friday too.
Yeah,
Okay.
I think that's all I'm saying. I'm not saying to take away from the week. I'm
You want
saying
the build-up.
to build. You need the drama, the crescendo.
But how good is it to have a Kevin Walsh Senate Banking Committee vote right before we hear from Jay Powell?
It's perfect scheduling.
Yeah.
You happy with that scheduling?
That's good.
Okay.
Well done, Washington.
All right. Washington delivered for once.
Exactly.
All right, let us see. Equity futures right now, the S&P 500 just about unchanged. So the Nasdaq elevated, bouncing back by 0.3%. Notable the moves elsewhere, particularly in crude, in commodities, and in the bond market too. Check out crude. Looking at another day of gains for Brent. Brent crude up once again by, what are we up by, 3% this morning? 8 days of gains for Brent crude, up 3% to about 115, and just short of the closing high. Since this war started, and that closing high had a 118 handle.
This is really the Stuart Kaiser point that we keep going back to. What's the tipping point here when markets wake up and say, this is no longer something that's temporary? It isn't temporary when it's 2 months, 3 months, and we potentially have no end to it, and when you don't have a sense of how quickly some of these barrels can get back into the market.
Folding that move in crude into the bond market too, Bramo. Just starting to see yields drift higher once again. It's a stealthy sell-off with 30s back to 495. 10s at about 436, and yields up again at the front end of the curve by 2 to 386.
There's some discussion about the Federal Reserve this afternoon signaling that they aren't necessarily interested in multiple rate cuts going forward, that maybe they will adjust policy downward. There's also a push to potentially put in that symmetric risk of potentially a rate hike. How much will that matter to markets? Will it make people feel like maybe the 2-year has business doing somewhere for around 4%? Or does it sort of get dismissed as, well, it's just Fed Chair Jay Powell trying to leave his last mark?
Trying to anchor inflation expectations.
Yeah.
There's just a sense that even if they have that more symmetrical bias, you drop the easing bias, that no one's really going to believe it. Are they really going to hike interest rates? One bank thinks they might. BNP Paribas. James Egelhoff making the case that maybe the next move is a hike, potentially, not the base case, but at least exploring the potential for that later this year.
I would like to see the conversations between President Trump and Kevin Walsh, if that were to happen. I think that would be interesting. Let's see.
Let's talk about the commodity market. Under surveillance this morning, standing firm against Iran.
We're doing a little Middle East work right now, 2 of you might know, and we're doing very well. We have militarily defeated that particular opponent, and we're never going to let that opponent we're never going to let that opponent have a nuclear weapon. They know that, and they've known it right now very powerfully.
Here's the latest this morning. President Trump reportedly telling aides to prepare for an extended blockade of Iran to force the country back to the negotiating table. Some great reporting once again from the Wall Street Journal. Bloomberg's Tyler Kendall joins us now from Washington for more. Good morning, Tyler.
Hey, John, good morning. Well, as talks remain stalled, we've actually already heard from President Trump today with a 4 a.m. Eastern post saying that Iran, quote, better get smart soon. That seems to be adding to the sense that the U.S. isn't too interested in the off-ramp that Iran presented that could see a reopening of the Strait of Hormuz in exchange for the U.S. lifting its naval blockade. But that proposal would delay or postpone any dialogue around Iran's nuclear program, something that this White House maintains just is not acceptable. And that's led the Wall Street Journal to report that in recent meetings, President Trump has opted towards keep squeezing Iran's economy and oil exports by keeping this blockade in place, deeming it less risky than, say, resuming fighting or leaving without any potential deal. And the proof is already there that this is the course of action that the U.S. is sticking to, as CENTCOM yesterday confirmed that it had boarded another commercial vessel in the Arabian Sea under suspicion that it was headed towards Iranian ports. And we saw this doubling down by the U.S. Treasury Secretary Scott Bessent in a post on X yesterday, saying that the U.S. will continue its, quote, maximum pressure campaign when it comes to the Iranian economy, and that he claims that Karg Island storage capacity is nearing its highest level. Now, John, in addition to this, we also saw Bessent's Treasury Department yesterday issue a warning to financial institutions against facilitating transactions with Chinese oil refiners with ties to Iran, as Beijing still remains that #1 consumer of blacklisted Iranian crude.
Tyler Kendall with the latest from the nation's capital. Tyler, thank you. For market participants out there reading that story from the Journal, I'm sure it went something like this. Extend the blockade. An extended blockade. What was this? Haven't we already had one for the last 2 months?
Well, exactly. What do we mean when we talk about extended? It's extended beyond what? 1 month, more month, 2 more months? And that difference is actually really important.
Joining us now to discuss is Colonel Wayne Sanders, Senior Defense Research Analyst at Bloomberg Intelligence. Colonel, welcome back to the program. Just working through the Journal piece, Tyler went through some of this. There seems to be 3 options on the president's desk: maintain a blockade, resume the bombing, or walk away. Do you see one choice is more likely than the other at this point?
Yeah, I think that extending the blockade right now is definitely the best option that President Trump has, because the blockade is working, it's providing the pressure that you're already looking for. The bombing campaign did a great job of destroying a lot of the military infrastructure across Iran, but at this point in time, Iran has already proven they're not exactly worried about the Iranian people, and some additional military strikes I don't think is really going to gain the U.S. anything. It actually makes the U.S. look more like an aggressor on that if we were to continue to do that without being provoked by Iran. Iran, since April 13th, has pretty much stopped their drone strikes as well as their missile strikes, and has really focused all their effort into the Straits. So I think at this point in time, when you look at the leverage of national power, right, you have diplomatic, information, military, and economic. At this point in time, I think the economic lever right now in the Strait of Hormuz is probably the biggest one that President Trump's using.
Well, and they're doubling down at Treasury, at least. They're talking about how putting out a statement to financial individuals to not participate in the toll, and then on top of that, when it comes to OFAC, they're basically making it a lot harder for those Chinese teapot refineries to accept Iranian crude. Do you see any evidence that this is actually moving Iranians on the ground in the regime to want to come to the table when it comes to the peace talks?
The only reason I would say that it does is because they have not moved on back to military operations. I think if they were at that point in time not worried about it, then they would just go back to hitting the strikes. But I think the fact that right now Iran is still staying low on the strikes and is focused more on this, they're still doing it in the shadows. They're still moving around in the background, trying to find a way around this. They've looked at trying to figure ship to ship, in terms of moving some of the oil around and all that. But the blockade is in place. U.S. CENTCOM has already reported, 34 to 37 ships have been turned around at this point in time. And the fact that the U.S. naval blockade is still actually boarding and interdicting some of these ships as well shows at that point in time to Iran that, hey, look, we're not going away. And I think President Trump's message to continue to extend that blockade is very poignant, and is the reason why he did it.
So how long do you think the blockade will actually be extended? Are we talking weeks or months?
Well, I think at this point in time, they're just waiting for Iran to break. I think at this point in time, U.S. CENTCOM and Fifth Fleet have the ability to keep this blockade in place. Military Sea Lift Command, Rear Admiral Nicholson had brought up a few days ago that, they figured it out now in terms of being able to provide the supply chains all the way for all 3 of these aircraft carriers and the carrier strike groups that are there. It's actually allowing them the opportunity to figure out how to supply the suppliers. He went through a whole big diatribe on that, which was great. being able to show that, hey, we have the method and means necessary to be able to provide beans, bullets, fuel, and everything that is necessary to continue that blockade.
Colonel, it seems like the U.S. is being pretty clear about what they're doing as this blockade does go on. There's also discussion about how the military assets are positioned in the region. What's Iran doing with this time that does seem to be a ceasefire? Are they building up their drone capacity? Are they building back up or accelerating production of nuclear weapons?
I think at this point in time, the biggest thing that Iran is doing is they are trying to position themselves in case it goes back to a military strike type of war conflict that we had, prior to the ceasefire being in place. So a lot of it is going to be positioning those weapon systems. It's going to be trying to move the launchers around. They have to do it stealthily, obviously, because of intelligence, surveillance, and reconnaissance capacity of the United States. So they're doing a lot of that. The production capacity, if they have any of these additional production facilities to build the Shahed 136 drones, which have been very effective against the Gulf states especially, then they will continue to do that. But one of the biggest targets of this has been their drone production facilities. So I think at this point in time, it's the drones that they currently have, are they positioned in the right place to be able to provide a strike? The IRGC fast boats continue to be a piece to maneuver them around the Straits of Hormuz in case there was going to be military escorts of additional vessels and they needed to be able to create a strike. They're doing the same thing that the U.S. is doing, and that is positioning themselves in the best way. They're doing something in wargaming that's called action, reaction, and counteraction. So they're putting all their things in the ground and saying, if the U.S. does this, we need to be prepared to do this. And then the U.S. is doing the same thing.
Colonel, you're one of the best, and we appreciate your time. Thank you, sir. Colonel Wayne Sanders there of Bloomberg Intelligence. We got a pretty healthy dose of hopium yesterday morning with two notes, one from the president, another from CNN. The president saying Iran had informed us that they are in a state of collapse and they want us to open the Strait of Hormuz as soon as possible as they try to figure out their leadership situation. CNN said Iran is expected to submit a revised peace proposal. What was notable about that is not whether I believe any of that is likely or not, it's how the market responded to it, or rather did not respond to it. That did not bring down crude over a sustained period of time throughout yesterday's session.
It barely registered in terms of the main stories that the market was looking at. They were watching the discussion around OpenAI. People have moved on because it's sort of, again, fool me once, shame on you. Fool me twice, shame on me. People are getting inured to headline roulette that doesn't pan out to anything.
Crude just grinding higher. And once again this morning, higher by close to 3%, close to 115 on Brent. Up next, we'll talk about tech. Angelo Zeno of CFRA with Mag 7 earnings on deck. Plus, your has got your morning movers. Starbucks rising on better than expected results. That stock is up by close to 5% in the pre-market. Live from New York City, you're watching Bloomberg TV.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Stocks bouncing back by 0.1% on the S&P 500, following the biggest one-day decline in about a week. No real drama there at the S&P 500 at the headline index level. Away from that, though, the equal weight, as noted by Bramo a little bit earlier on this morning, 6 days of losses for the equal weight, the longest since November. So there is a bit of tension out there in the equity market, if you look for it. On the Nasdaq this morning, up 0.4%, going into a stellar slate of earnings later on this afternoon after the closing bell. Want to turn to crude? 8 days of gains for Brent. Over that period, higher by 27%. The longest daily winning streak going back to May 2022, and just short of the high of the year, just short by some $4 this morning.
And this raises two questions. Number one, why is the U.S. shrugging it off? And number two, how much is this really going to pressure Europe at a disproportionate pace? This is really going to be the tale of the haves and the have-nots among companies, the have and the have-nots with industries and with regions. And that seems to be what's happening under the surface.
Goldman came out with a new forecast, and we made a big deal of it. 90 on average for the fourth quarter. Sounds terrible. Then you get into the numbers. Look at the contract table for Brent crude this morning. October 92, November at 90, December at 88. That's an average of 90. Market's already there.
And this is why people are saying, where's the tipping point? If we're already there at some of these places, at what point will the market wake up to that? What you're seeing is a lot of diversification and ultimately people depending on the CapEx spending from big tech to support and offset any of the potential dampening from higher oil prices. Also, the momentum that we've seen in the U.S. economy really keeps out surprising.
And the blockade is continuing, and based off this reporting from the Wall Street Journal, it is not ending. The president doesn't want to escalate, but doesn't want to de-escalate. He's not willing to take a bad deal. So that means the blockade stays. And if you look at some of the imagery that's going on, we're seeing 30-year-old tankers that have been off the radar for years showing up next to Karg Island because the Iranians are trying to find any levers they can to start storing some of this crude.
Yields just creeping higher alongside that move in crude. It's notable. Retesting the highs of the year on 30s, very close on the long bond at 495, 494 this morning. Up at the front end as well, going into the Fed's meeting this afternoon, up a single basis point, round it up to 385. Yields are higher now this morning than they were when the Fed last met at the close of business that day. I think that's interesting. The yields have carried on creeping higher over that period.
And it's independent of any Fed action. This isn't necessarily some kind of commentary on Fed discussion. That said, the probability of a cut by December has gone down to 24%. That was 35% on Monday, so it's rapidly going down as people take a look at the balance of risks and some of the rhetoric coming out of administration officials.
Twos at 385. Let's get you some single names, some morning movers. Massive day ahead for Wall Street. Yahara has more. Hey, Yahara.
Hi, John. We start with Starbucks. Shares are rising nearly 5% in the pre-market as the U.S. consumer shows up in force, helping the coffee chain beat expectations and boost its outlook, even as China remains a weak spot. But CEO Brian Nichols saying overall, customers are visiting their revamped stores more, and when they're there, they are spending more on their drinks. Turning to the data storage company Seagate, shares are soaring nearly 18% in the pre-market on what the street is calling blowout results. The company beat on earnings and issued an outlook way ahead of expectations, all having to do with AI driving enormous need for data storage, and that is helping the company on both pricing and margins. And we end on Booking Holdings issuing a warning that the Middle East conflict is starting to weigh on travel demand. So shares are falling 5% in the pre-market. Its revenue guidance coming in well below expectations because the company says fewer travelers are booking trips and more cancellations. John.
It's one to watch. Yahira, thank you. Appreciate the update. More from Yahira throughout this morning. On our radar this morning, President Donald Trump telling aides to prepare for a prolonged naval blockade of the Strait of Hormuz. The Wall Street Journal reporting the president thinks the blockade carries less of a risk for the U.S. than resuming hostilities. Elsewhere, King Charles addressing a joint session of Congress urging the U.S. to maintain its leadership role in the world and in NATO.
I pray with all my heart that our alliance will continue to defend our shared values with our partners in Europe and the Commonwealth and across the world, and that we ignore the clarion calls to become ever more inward-looking.
At last night's state dinner, President Trump saying that King shares his position on preventing Iran from obtaining a nuclear weapon. And finally, UPS reporting first quarter earnings that topped estimates and signaled bigger buybacks this year. Santander's net income also beating, and Deutsche Bank reporting a record profit despite higher provisions for credit losses. That's the wrap for European bank earnings this morning.
Yeah, you did see some good earnings from UBS and possibly momentum, despite the fact that the currency did seem to be dragging on a currency-adjusted basis with the dollar. Deutsche Bank was interesting. The credit provisions were for loan losses tied to commercial mortgage properties in the United States, particularly on the West Coast. And you start to see some of this come out, and it's just a mark-to-market that is bigger than expected in terms of the loss. These are the things I'm interested in. Where are people gaming out the weak spots that could potentially be problem areas going forward should the economy turn more significantly?
Guy Johnson sat down with Sergio Ramonti in a fantastic interview, and he was talking about how investors might be overconfident about what is going to be the outcome and the scarring basically from the Iran war, saying that the expectation is not only that things are going to be resolved, which he believes and hopes, but the impact of what happened will be resolved in a classical way. Basically saying we've gotten so used to basically things just going back to normal. And he's not quite sure things are just going to go back to normal after this.
Love Guy. Love Guy's work. Guy's the best. One of the best anyway. Don't want to offend all the other people.
Yeah, he was really pushing back on Ramonti in this interview. It was a good interview.
Check it out with Sergio Ramonti and Guy Johnson on Bloomberg.com and on the Bloomberg terminal. Elsewhere, earnings from 4 of the Mag 7 due out after the closing bell. Angelo Zeno of CFRA with a strong buy rating on Microsoft and Meta and a buy on Alphabet, writing companies have the ability to demonstrate faster than anticipated growth. Hyperscalers are likely to sustain, not increase, CapEx budgets. Angelo joins us now for more. Angelo, that last line's interesting. Are we entering a new phase for CapEx?
Yeah, so John, I don't know if we're entering a new phase, but I will say this, you know, we just saw these companies really kind of blow out their CapEx numbers back in when they reported Q4 results. So that was just 2 months ago, right? And when you kind of look ahead just 2 months later, I don't think much has changed. You look at where the street is at in terms of the CapEx numbers relative to where the guidance was. I think most sell-side analysts are towards the high end of kind of the range that was provided from a lot of these hyperscalers. So when you just kind of look at, what these companies are at least going to do in Q1, I don't see any sort of major tick up in terms of CapEx budgets. That could change as we go into the second half of this year, and depending on what that trajectory looks like. But at least as far as Q1 is concerned, I wouldn't expect any sort of major change to CapEx budgets.
Angelo, we're all tracking that story from the Wall Street Journal this week, indicating that OpenAI was starting to struggle to meet its own sales targets. It raises some questions about their own spending commitments over the next year or so into 2030. How do you think the other big spenders would respond to a development like that one?
Yeah, I mean, I thought that was an interesting article, to be honest with you. That I thought there were a couple of interesting takeaways, but it was very vague in nature. But when I think about just OpenAI, I think that was somewhat, the writing was somewhat, the writing was on the wall to an extent here over the last couple of weeks and months, just given some of the news flow that we had seen. But they had already reduced their CapEx budget from 1.3 trillion to 600 billion in terms of commitments. 600 billion still seems too high, but at the end of the day, I mean, listen, as long as the AI narrative remains intact, you continue to see strong adoption from the enterprise space. We'll see, actually, I think bookings growth in terms of the cloud guys reporting tonight is going to be really important, and what that non-AI OpenAI contribution looks like, especially for a company like Microsoft, which hinted towards 45% of OpenAI exposure last quarter. We kind of want to see what that non-OpenAI growth looks like, and I think it's going to be really strong, and I think these companies are going to be able to diversify away from OpenAI over the next couple of quarters. So I think that's a positive. But as far as OpenAI risk, inherently there's clearly going to be risk if they can't deliver and accelerate here, especially in ahead of a monster IPO later this year.
Angela, you touched on something really interesting here, which is the rest of their business, other than just the AI-specific aspects. How important is that going to be? Right? I mean, are we overly focused on the AI aspect, and are we really going to see more of a gut check on some of their core businesses? For Meta, it'll be the advertising and more cyclical aspects. For Amazon, it does sell clothes and things that you'd use to clean your home. And the others, just the wars over cloud computing.
Yeah, I mean, it's going to be key, right? The core businesses and really the two, big, most important trends is cloud growth, and it isn't all AI. And then, to your point, the digital ad market. And the digital ad market is going to be interesting to kind of see what, Meta and Alphabet say. I mean, you would expect the digital ad market to continue to be relatively healthy, but I think there are going to be pockets of weakness in areas like travel and what have you because of the war that's going on, or the Middle East conflict at this point in time. So the guidance will be interesting. But as far as kind of the main driver here, it will continue to be AI. You look at Meta's expected growth here this quarter, 31%. Q2 expectation of about 25%. The digital ad market was only growing, about 10, 11%. So these, a company like Meta, well outpacing the industry, largely because of that AI contribution and what they're delivering from an AI perspective to, the ad community.
Last earnings season, a lot of these big tech players were punished for accelerating their CapEx plans. You don't think we're going to see a repeat of that? There'll be more subdued CapEx spending plans if you call $650 billion for these four subdued. I'm just wondering how the market's going to take that. Is that going to be a positive, or is that going to be something viewed as maybe a lack of confidence or less confidence in the path ahead for AI?
Yeah, I mean, listen, I think as long as they sustain the CapEx spend, that's going to be what's going to be critical. I think everyone kind of realizes, hey, listen, these guys really, went out and just really ratcheted up the CapEx spend, probably more so than most had wanted them to do, 2 to 3 months ago. And I think that was a big reason you saw some uncertainty on the tech side of things earlier this year. I think that at this point in time, the street has kind of digested that. At this point in time, it's all about whether or not, you get the return on invested capital, whether or not you kind of get that accelerating growth and strong, bookings as we progress through the year. And that's really, I think, what the street is concentrated at this point in time. I think Microsoft will be a little bit interesting because they did report before both Alphabet and Amazon reported the last earnings season. And we all know that those two companies really, went nuts in terms of the CapEx spend. So I do expect Microsoft to potentially, ratchet up the commentary in terms of the CapEx spend this quarter. But again, I think that's somewhat discounted in the shares. You look at it trading about 21 times next year, the concerns on the SaaS apocalypse and what have you. So I think a lot of those concerns are baked into the stock.
Angela, you mentioned the monster IPO that we're expecting for OpenAI, but are you concerned that it's been put on ice for this year?
Yeah, I mean, I think there's growing concerns of that, obviously, and we'll see how the year progresses. I mean, when you see some of the comments, in the journal and what their CFO Sarah Friar has had alluded to. I mean, yeah, I mean, I think there's some concern about that. Again, we'll see how the year progresses. They did just do a massive raise in terms of the $122 billion. So even if the IPO gets delayed into 2027, I don't necessarily think it's going to have massive implications in terms of how they plan to spend. But yeah, I mean, I think the bigger risk is they need to see the growth accelerate as the year progresses. They need to be on the right track, because if they don't do that, I don't know how you possibly IPO, let's call it in Q4, and risk throwing that narrative out there to the street.
Things change a lot in this sector, and pretty quickly. I remember this time last year, Alphabet was dead, and look at that turnaround. Yeah. Angelo, thank you, sir. Angelo Zena there of CFRA. I'm pleased you mentioned the more cyclical parts of these companies, the likes of Meta, the ad business. That's something to watch for later. The cyclically exposed tech stories and how things are stacking up, given the war, given the increase on price pressure that we've seen as well around the world.
Yeah, there are regions that are putting off some of their spending plans because ultimately they've got other goals right now. Also, supply chain disruption. So you've got on one hand the cyclical aspects, and the other hand, are they having to pay that much more for chips and for other aspects to build out their data centers because of some of these supply chain fissures? These are all important aspects. It's one thing if you increase your CapEx plans. It's another that you're doing so because inflationary costs are making it so expensive that you got no other choice. Are those the same?
Nasdaq futures this morning, positive by 0.3%, a small bounce. Let's get you an update on stories worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. Adidas shares rising in German trading. The company reporting first quarter results that beat estimates. Adidas seeing momentum in its apparel division and healthy demand for its football, running and training products. Elon Musk taking the stand in his case against OpenAI. Musk is suing Sam Altman's company because he says its pivot from a charity to a for-profit business is wrong. An attorney for OpenAI says Musk's lawsuit is an attempt to undermine a competitor to his own company, XAI. Former FBI Director James Comey indicted for a second time by the Trump administration. This time he's charged with threatening the president's life. Comey's lawyer says he vigorously denies the charges and will contest them in court. And that is your Bloomberg brief. John.
Vonnie, thank you. More from Vonnie in 30 minutes' time. Up next on the program, calling for patience at the Fed.
The Fed has opened the conversation to not only holding policy steady, but potentially rate hikes. But the bar is extremely high. So more than anything, Powell is going to reiterate the need for patience.
Up next, the brilliant Priya Misra of JP Morgan from New York City. This is Bloomberg Surveillance.
The problem we've got as an industry is when the government's overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of the net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until midterm elections.
hear it first on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
Massive day ahead of us. Going into it, the scores look like this. Equity futures up by 0.1%. Let's round it up. A few tenths of 1% higher on the Nasdaq and on the Russell this morning. In the bond market, yields creeping higher going into the Federal Reserve decision later. At the front end of the curve, twos up 2 to 385. Under surveillance this morning, calling for patience at the Fed.
What we're going to hear from Powell is uncertainty, not only because of the international conflict, but the aged nature of the recovery, where we are on this pathway. The Fed has opened the conversation to not only holding policy steady, but potentially rate hikes. But the bar is extremely high. So more than anything, Powell is going to reiterate the need for patience to understand the evolution of the data and continue to remain in this steady pace of policy for now.
So here's the latest this morning. Investors looking for answers on how long the Federal Reserve will keep rates on hold at what's likely to be Jay Powell's final press conference as Fed chair. Priya Misra of JP Morgan writing, we can see the Fed cutting rates in the second half if core inflation slows down. Priya has more. Priya, good morning. It's good to see you.
Thanks for having me.
Let's get into it. Let's talk about what you're expecting in the news conference and in the statement later this afternoon.
Sure. So clearly no actual policy decision. What I'll be watching for is what's the, any sort of sense around this two-sided risk. It came up in the minutes. We don't think that that'll happen. I think Chair Powell has to keep talking about patience, wait and see. There's so much uncertainty. There's uncertainty on the inflation front. Do we get those second-order effects on core inflation? What happens to wages? There's also the labor market. So there's uncertainty on both ends. There's this AI once-in-a-generation, productivity increase. How does the Fed sort of navigate this? And I think he wants to come out of today, I think, with no market move. Because it's all about when does that straight open? What happens to the AI earnings? I think that's really, he wants to say nothing. I don't know if he's going to tell us whether he's going to stay on at the Fed. I hope he does. It's a risk management move, which he's brilliant for doing these risk management moves. But I think he just wants a boring wait and see, this is not our circus. That sort of an issue.
We'll spend some more time on his future in just a moment. I just have one final question on a more symmetrical reaction function. If they try and articulate that later this afternoon, would you believe them?
I think they are data dependent. But I think if they signal that a hike is as likely as a cut, I think the market's going to react. I don't think we're priced for that. We were maybe, 2 weeks ago, but now we've actually come back. I think the market realizes that the bar to hike is high. If they say it's equally likely, I think the market will react. I would look to fade it because here's the issue. Oil prices are high and those, forwards are starting to move up. There's a nonlinear impact at some point. It's very hard to argue at what level of these longer dated forwards. If oil prices stay high, that's a hit to consumer real disposable income. That's a hit to margins potentially with companies. I think it starts to wear on growth. But I think, so do they actually end up hiking? I think very unlikely if oil prices stay here or higher. But the market's absolutely going to react because I don't think we're positioned for a symmetric reaction function here.
The market's definitely going to react to any kind of commentary about whether Fed Chair Jay Powell is going to be governor still at the end of May or the end of December. Probably market has some odds on that. 35% chance that he'll be there until he will leave the board by May 30th and an 82% chance by December 31st. In the rates market, will there be a reaction if he gives a signal one way or another?
So I don't think so. I think, we've been all debating this, and it's a little sad that we're debating that more than, when will the Strait open and what's the impact on the economy. I think the Fed is a democracy. He has one vote. So if he does leave, I don't think there's a big reaction. I do hope he stays. He's a credible, permanent voter. There's a lot of debate at the Fed around current policy as well as the framework, this regime change that Kevin Walsh wants. I think to have Chair Powell or, Jay Powell stay on as governor, he's going to have a say in that matter. I don't think he's going to be shadow Fed chair. I think he's very careful. He will be very careful to let Kevin Walsh lead the Fed. But I think just having him there would be nice. It's a risk management exercise, as we're calling it. But I don't think if he says he's done, I think we should applaud him. He's the soft landing guy. He managed to cut rates, hike rates a lot, then cut rates, deal with 2 QTs. You know, I think we would all be very grateful for the service to the Fed. But I don't think the institutional credibility is at stake if he decides to leave. Because you've got, you know, many Fed officials, 18 other Fed officials, who are going to do the right thing for the economy. And I think I'm less worried about Fed independence, really unanchoring the long end.
This is the point that a lot of people have honed in on, the fact that a Kevin Warsh Fed doesn't seem to be shifting long-term expectations of inflation or even any kind of disruption to the bond market. You could get into a discussion about whether Fed Chair Jay Powell should stay on as governor or not. But do you think that that's notable and actually telling that the market seems to be completely okay with Kevin Warsh as almost a continuity Fed chair?
Right, because we heard the hearing and we didn't hear anything really crazy from Kevin Warsh. I mean, he talked about looking at trimmed PCE. Well, we do look at, the Fed looks at trimmed PCE. Remember core, core, X-core. The Fed does look at a variety of underlying inflation measures. So we heard that from Kevin Warsh. Well, that's continuity. We heard about no forward guidance. Well, the Fed has been in data-dependent mode for the last few years. I don't think they're actually giving us much forward guidance. He talked about using monetary policy as the primary tool. That's where the Fed is at. I think communication is the one I struggle a little bit with because that is different. And, is that changing the SEP? Is that giving scenarios? I think that's fair. Is that, nobody else speaks other than Fed Chair Warsh? I think then that's different. But we haven't heard that, and it's not clear that that's what he wants. So, yeah, I think, in all the scenarios, I think actually we heard Kevin Warsh's statement said he's credible. He's going to come in. He's got ideas. Every Fed chair comes in with ideas on communication. They make changes, but it's a collegial consensus-building institution. I think that's what they'll do. That's what the market's.
But how does Kevin Warsh go on a regime change journey with Jay Powell hovering above him?
I think it's going to be, a discussion-based format. I think Jay Powell, if he stays on as governor, he's going to have a view in it, on that decision. So will every other, I think 18 other members will have a view on how it's done. Certainly 12 in terms of voting decisions, or 11 others beyond Kevin Warsh. So I don't think he overshadows, he's been a governor for a while. He just stays on as a governor with the chair coming up with an idea. And they've debated. The framework review has happened twice. I think they're used to debating, should we be changing communication? Should we be changing the inflation target? They just did that. So I think it'll be somewhat similar.
Priya, good to see you. Lots
Likewise.
to think about. Priya Misra there of JP Morgan Asset Management going into this Fed decision later on this afternoon. Special coverage starts right here on Bloomberg TV at 1:30 Eastern Time. The decision at 2 p.m. The news conference about 30 minutes later.
Yeah, the decision on rates or the decision for Jay Powell? Because ultimately that is going to be the main discussion of what we're going to be talking about later this afternoon.
If institutional credibility is not at risk if he leaves, why is he staying?
Fair question. Maybe he just wants to. Maybe he just loves everybody and really just he enjoys it. He wants to enjoy the fruits of the
I honestly think he wants to go golfing.
We got some time to have this debate.
Fun.
I think he wants to deliver some speeches and make some money.
Right. That's what I think.
I mean, you'd think.
You'd think.
You'd think.
Coming up next, we'll catch up with Sarah Hunt of Alpine Saxton Woods, Libby Cantrell of PIMCO, Chris Marr of Ocean First Bank. Plus, we'll speak to the former Kansas City Fed President, Esther George.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Anytime you have an industry that grows like that, there will be pockets where things are more difficult. So if they're smaller companies, it's harder to deal with tariffs, it's harder to deal with labor and with rising interest rates. So there you may see some poor performance. That doesn't necessarily mean that lenders will lose money, but it may be more difficult. And then pockets of software, everybody's been worried about how will that play out. I think there was a lot of capital that was put in from very smart private equity and very smart institutional investors into software really in the 21-22 vintage that was pretty highly priced. And that, as that works its way through the system now 4 or 5 years in, you may see pockets there. But I also think that the need for income, people want income in their portfolio, and they can get that in many ways. You can get that from the treasury market. You can get that from a bank. You can get that from high yield right now is pretty good. High yield has very little exposure to software. And then you can get it from private credit where you maybe get more return and a little less liquidity. And so that, I don't see that going away. In fact, I see investors wanting more of that and wanting it from real estate, wanting it from real assets.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burke.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
There's not going to be any family fights. Fed stays on hold.
The resilience of the U.S. consumer is an important factor.
What we're going to hear from Powell is uncertainty.
It's a very difficult situation for anybody to come in and start cutting.
Maybe they cut by the end of the year.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now. Your scores look like this. Equity futures on the S&P 500 bouncing back by just 1/10%. On the Nasdaq, up by 0.3%. In the oil market, commodities look like this. Brent up again. Brent 114 and higher by 3%. And over the last week or so, higher by some 26-27%. The rally unreal. WTI triple digits. Coming up later, look at the state of this. What a day. Federal Reserve decision, 2 p.m. Eastern Time. 30 minutes later, a news conference. After the close, earnings from Alphabet, Microsoft, Amazon, and Meta.
You know, it's a little too much. I mean, we've got the geopolitics. We've got this question about domestic friction and questions about Fed independence and what is the future of Fed Chair Jay Powell, the soap opera that continues. And then we've got corporate America delivering a $14.3 trillion market cap of just a complete bazooka of earnings after the bell. You put it all together, it's like the crescendo. It'd be a great finale, right, if we were ending and then we could go home and be done. But there is a sense that going forward, this really is all going to hinge on the earnings from the big tech to keep supporting something that otherwise seems to be on shaky ground.
I hate to break it to you. It's April 29th.
Not even May. It feels like a great finale, though, doesn't it?
Bramo feels like we're in Q4.
Yeah.
Ready to take an extended break.
I'm not the only one.
No, I know you're not. This feels like one big, long trading day over the last 3 months. I understand that. The one constant, crude higher. 8 consecutive sessions now. Brent crude up again by close to 3%. 114 and only $4 away from the closing high since this war started.
So obviously this comes as the president is going to continue this blockade, according to the Wall Street Journal. What I find interesting is the Journal reporting is that when the president assessed other options, one would be to escalate, continue bombing, or de-escalate and walk away. Neither the president wants to do. So basically we're in this status quo. As you see, the Iranians really start to pull out a number of levers, like bringing out very old tankers and just trying anywhere to store some crude, store some oil before they are forced to shut-ins. I imagine the White House calculus is give them the hardest, most brutal economic pain and see if that works in terms of diplomacy.
And that move in crude just every single day, just slowly eating away at the bond market. just every day. Yields just grinding high just a little bit more at the long end and the front end. The long end sitting right below, really tight. Just a few basis points away from the highs of the year on 30s, on 2s, up again this morning by 1 or 2 basis points, 385. Going into this Fed meeting this afternoon.
A couple of weeks ago, bond yields were higher, and markedly so, rapidly so, because people expected some sort of central bank response to higher oil prices in the form of rate hikes. Then people said, wait a second, this could potentially suppress growth. This could be more of a growth killer than an inflation shock. And then just slowly, as oil prices have crept higher, we've seen earnings come in stronger than expected and consumers that have been able to absorb some of these price increases. And suddenly it's a 1-2 shock. It's both inflationary and potentially depressive to growth, and that is the quagmire for central banks.
I know there's an obsession about Chairman Powell's future. I understand why I've got all that. I actually think the more interesting piece of this now is actually the assessment of where we are in this economy, what their outlook looks like, and whether they move to a more symmetrical reaction function to basically articulate that the likelihood of a hike is just as likely as there is a cut. I don't know if people will believe them when they say that, but surely the market's going to react if they say that.
Beth Hammack is a voice on the Federal Reserve Board and from the Cleveland Fed, and she has been talking about this symmetric risk more aggressively, talking about the potential for inflation to come back. Do you hear that reflected? And ultimately, is that what the market wants to hear, or will they freak out? And that, I think, will be very interesting as well.
Futures this morning up by 0.1% on the S&P 500. Coming up, we'll catch up with Sarah Hunt of Alpine Saxon Woods with big tech earnings on deck. Libby Cantrell of PIMCO drops by as the Pentagon's defense budget faces GOP pushback, and the former Kansas City Fed President Esther George on the central bank's decision day. We begin this hour with stocks finding their footing on the busiest day of earnings season. Sarah Hunt of Alpine Saxon Woods writing, AI is the story that keeps on giving. It will be critically important to see how investors react to the announcements made by the mega cap tech stocks later on today. Sarah joins us now for more. Sarah, good morning.
Good morning.
What are you expecting to see this afternoon?
I would love to see everybody say things that are in line with what everyone is expecting on the CapEx front, on everything else. I'd love to see everything come in a way that calms everybody down post the AI story that started yesterday. I don't know what we're going to get. I mean, I suspect from looking at the semiconductors that you should be getting pretty good news, right? So what we've seen so far, it looks like things should be pretty good, but it's more critical now because of that AI story, OpenAI story yesterday, that circular argument people get more worried about. So we'll have to see how that plays.
Is inline CapEx good enough to validate the rally we've seen in semis?
I think so. I mean, they jacked CapEx up in December, right? So they talked a lot about this in the fourth quarter. I think now you've got that tension because you're seeing people being either laid off or bought out or discussions of layoffs. I think if you go too much higher, you're going to get people starting to worry again whether or not that CapEx is going to be productive enough, especially if they're laying off employees. So I think that inline is probably the cleanest, most neutral way to go, but we'll have to see how that plays.
One of the most convincing arguments from some of the bears is we just don't know how AI is going to evolve and who's going to be the winner longer term. Do you think we'll get a sense of who's hot and who's not, in the sense of Google's Gemini really picking up some market share, say, versus OpenAI, maybe some of the other chatbots out there, versus Microsoft, which has kind of struggled in some of their cloud adoption compared to Google and AWS?
I think you'll continue to see that differentiation, and I think that that's again why it's important that this goes well, just because you have that softness out of OpenAI. If somebody else is picking that up, that's different than everybody else slowing down on growth, right? So there would be a difference there, and people are going to be looking for that because everyone is looking to make sure that this growth is still as strong as it has been, and the bigger you get and the larger the numbers get, the harder that becomes. But I think right now, given what's also happening with energy prices and in Iran, like if the Strait was open, I would say it's probably less of an issue, but because it's still closed, you need to keep that juggernaut moving higher. And right now, that has been very narrowly driving the markets higher.
John's been really good about talking about the cyclical aspects of some of these businesses and what we could hear with respect to Meta, advertising, Amazon, consumer products. Do you think that this will be a cautious moment for them, given some of the rhetoric that we've heard from other officials, which frankly, other executives, I should say, which have been kind of mixed? On one hand, they've had really good earnings. They see a strong consumer. On the other hand, they feel like they have to say, well, you know, things might not continue if things get worse in the Middle East.
Well, and I think that this is the trouble that higher energy prices over a longer period of time start to have, because we've seen good retail sales, we've seen good economic numbers, but the question is, how long can that continue if you are not solving the problem that is really a supply and a Gordian knot problem of everything getting out at the same time and getting back into a cadence of tankers coming out, because all that last landing of oil, which has sort of cushioned all of this, is kind of over, and that's going to be a problem if we don't start to see that resume.
Do you think that's why the oil market is holding on to these gains? They're starting to wake up to the blockade is staying, and we are at the final cushion that they've been building up.
Well, and I think there's been all sorts of regional differentials of crude prices that are not reflected in the futures that we see, that are more the trading sardines and not the eating sardines, right? So I think that there is an issue about different crude differentials across the world and where the refining slates are. And again, this is an issue that, from a logistics standpoint, is going to take some time to play out. So I think it's reasonable to see higher prices for a longer period of time.
Do you think these two stories are connected? Meaning, if all the tech companies do really well today and the market goes higher, would that embolden Trump to be more aggressive in Iran?
Well, it's interesting. It's an interesting question, because I think that I was going to say I'm not sure it matters, but it does matter. There is an attention paid to where financial markets go. And I think that if this had been a slide from when this started, we would be having a different conversation. I'm not sure there's a difference right this minute because we're so close to highs. I think you'd have to see a more sustained problem or more sustained volatility for that to be part of the conversation. But I think that because of where we are, it gives more room.
Let's go back to when we started. So February 27th, the market closed on that Friday. Exxon was trading at 152.50. Let's go back to that Friday, February 27th. And I turn around to you and I say, Sarah, Exxon just closed at 152.50. I'm going to tell you exactly what happens over the next 2 months. The Strait of Hormuz will be shut for the next 2 months. Would you have said that Exxon would be trading at 150.56 at the close as of yesterday?
No.
What's going on there? What does that tell you?
So I think it tells you that there is and I don't think it's a wrong belief, that once you sort out the logistics problems, oil prices are coming down. And you're not bidding up the oil producers right now because you think this is a temporary spike in prices. And companies never get credit when they're over-earning for some reason that people think is temporary. So if you think about anything that's a commodity, if you have higher chemical prices for a period of time, they don't get the credit for higher prices and higher earnings, because if people expect the earnings in the out years to come down. I think there's an expectation that when you've solved the logistics, we were not short of oil before this started. We need all the energy because we're building all these data centers and we need all the things. But oil wasn't in, the supply shock is not because we have demand so high that we don't have enough supply. The supply shock is we can't get it. And I think the expectation is that's not going to change that rapidly. And so you're not bidding up the big producers.
There's a point that some of the guests on the show have made, which is the longer this goes on, the more that structural demand for oil will go down over the long term. People will look for other ways to diversify away from being so dependent on these particular producers. Is the price action that John was talking about sussing this out in any capacity?
I know, so I would push back on that a little bit, and I would say that I think that because we have so much of a high demand for energy overall, yes, you have temporary swings and you have people switching to EVs, but that's not going to be, I don't think, on the margin enough to make that change. You would have to have a much more sustained drop in demand for it. You'd have to have you'd have to be able to swap out jet fuel, right? You can't swap out jet fuel. You can't, there's certain transportation fuels, and oil is, generally speaking, more used for transportation than for generating electricity. So I think that that's a little bit premature until we have a substitute that you can really count on in volume. And right now, I don't think we have that.
Sarah, good to see you. Thanks for dropping by. Thank you. What a day ahead we've got. Sarah Hunt there of Alpine Saxon Woods. Brent crude this morning just short of 115. With an update on stories worldwide this morning with your Bloomberg brief, Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. President Trump telling his staff to prepare for an extended U.S. naval blockade of the Strait of Hormuz. The Wall Street Journal reporting the president has decided the blockade is a less risky option than resuming bombing or extracting the U.S. from the conflict entirely. The FCC is starting a review of the TV station licenses owned by Disney's ABC network over potential unlawful discrimination tied to the Commission's inquiry into Disney's DEI practices. The 8 Disney-owned stations are directed to file license renewals at least 2 years earlier than otherwise required. The State Department will offer a new version of U.S. passports featuring a picture of President Donald Trump inside to commemorate the 250th anniversary of American independence. The picture of Trump will be on one of the inside pages with the president's signature in gold appearing below. And that is your Bloomberg Brief. John.
Vonnie, thank you. More from Vonnie later this hour. Up next on the programme, unmatched military spending.
We have the most powerful, most lethal, most sophisticated, and most fearsome. It's a fearsome military on planet Earth.
There's a bit of pushback down in Washington. We'll get to that story with Libby Cantrell of PIMCO, live from New York City this morning. Good morning.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Small bounce this morning. Equities higher by 0.1% on the S&P 500. On the Nasdaq up by 0.4. What an afternoon coming up for the Nasdaq 100. Four of the biggest companies on the planet reporting earnings later. Bramo's upset. She thinks you should spread it out. Tuesday through Friday.
I just think every company should get its due, considering that each one of these is a huge component of our economy, so they each should get their moment in the sun. I love that we're talking with Sarah Hunt just a minute ago. You said, what's the best case scenario? She said, we get no news. It's everything's in line and we can just keep going. And then ultimately, I get it, but also if they were all doing separately, then we'd be interested in all
say the same thing about the Federal Reserve?
People
That's
just
the goal for Chairman Powell.
They want
a no news afternoon.
Yeah, which is just not going to happen.
With a schedule like this one.
I'm actually really excited, but I do think spread the love.
Let's turn to commodities. Brent crude up for an 8th consecutive session now. We're higher over that period by close to 27%. Brent this morning at 114.60 and higher today by 3%. Under surveillance this morning, unmatched military spending.
We have the most powerful, most lethal, most sophisticated, and most fearsome. It's a fearsome military on planet Earth. We have the strongest and most powerful by far military in the world. We have the greatest military in the world by far. Our military is unsurpassed. There's never been anything like it. Nobody's ever seen anything like it.
So here's the latest this morning. The Defense Secretary, Pete Hegseth, heading to Capitol Hill to defend President Trump's $1.5 trillion defense budget as it faces bipartisan pushback down in Washington, D.C. Joining us now for more, Tyler Kendall. Morning, Tyler.
Hey, John, good morning. Well, the White House is asking for the largest single-year increase of the Pentagon's budget since World War II. But Republican aides tell me this is just a request. We should view it more as a guidepost on where priorities are. And if we look at the fuller picture of President Trump's budget proposal, we are seeing a massive defense buildup paid in part by cuts to domestic agencies. And that could potentially set up some political risk as we head into the midterms and against the backdrop of an Iran war that is causing consumers lawmakers to pay higher gas prices. And that could be part of why we're starting to see some uncertainty from Republicans when it comes to this budget proposal, including the Senate's top appropriator, Susan Collins, who has previously supported hefty defense increases, but now finds herself in a tight re-election race. We're also hearing some concerns from conservatives when it comes to the idea that they would need to see more offsets if there's going to be more spending. But again, that could set up some political risk. Plus, some other lawmakers are now floating the idea that they could condition their vote on more spending if Congress is able to get a vote to authorize the war in Iran as we approach that 60-day mark. Now, keep in mind here, this is the president's fiscal year budget request. We're not even talking about an expected supplemental request from the administration, maybe in the range of $50 billion. We've gotten a few different reporting and talk about it from lawmakers. But, John, that may be the fastest and easiest way to surge more funds to the Pentagon because, by and large, Republicans do support the president's military aims.
Tyler Candle down in Washington. Tyler, thank you. Let's build on this conversation. Pleased to say, joining us around the table, good friend of this program, Libby Cantrell of PIMCO. Libby, good morning.
Good morning.
We've lost all appreciation for how big these numbers are. What's their track record of understanding where the 1 trillion goes, never mind the 1.5?
Yeah, I mean, I think as Tyler said, I mean, this is basically sort of reflective of the president's wish list. This is an opening bid, if you will. The budget is, kind of suggests what the president's priorities are. But we should also realize that it is going to, the actual spend, the actual appropriation for defense come for FY27 is going to be much smaller. Historically, this has been, as Anne Marie knows, sort of an $800 billion, up to $1 trillion of defense spending as of last year. A $1.5 trillion spending. Again, this is like pie in the sky kind of things. It's really to frame the negotiation. I think it does emphasize, though, it underscores how important the defense component is, maybe surprisingly, to this administration. So again, I think we should take this with a grain of salt. Our view is that we probably see maybe a small tick up in terms of defense spending. That would land around $1 trillion, obviously much short of the $1.5 trillion.
Do they have to get this done before the midterms?
Yeah, I mean, look, as you know, the end of the fiscal year is September 30th. Oftentimes, they're operating under something called a continuing resolution, as we all know, which is basically just a stopgap funding bill. Does this get a lot harder? I mean, maybe they get to do it in the lame duck, which is, of course, the period after the election before the end of this Congress. But look, I think that just in general, after the midterm elections, things are just going to get much more difficult for the Republicans. So any of these things that feel pretty ambitious, they should be trying to get done. The real story, I think, on Capitol Hill right now is just the lack of real progress in anything. Even though Republicans control both chambers of Congress, there is just very little movement on things that are FISA, the Farm Bill. I mean, things are kind of like the blocking and tackling of Congress, but I think does represent the fact that it's really difficult to get things done with small majorities, even when one party controls both chambers.
Well, also what's interesting about today is not just the defense budget request, but also Pete Hegseth is going to be really in the hot seat. And I've heard rumors that he's been kind of on thin ice. There's been mixed feelings about how Republicans in Congress feel about him. Do you think this is potentially a huge moment for him on whether or not the president decides to keep him on as his defense secretary?
Well, look, I think you're absolutely right. He is going to get a lot of pressure. I think a lot of Republicans, while publicly they're supporting this Iranian conflict, privately, there's some growing skepticism about how long we're in this, what the strategic objectives are, what the sort of framework for success is. And as you know, there's this War Powers Act that could require Congress to actually authorize this conflict in Iran. So I think you're going to get a lot of pushback on him, more just trying to get details about what the strategy is. In terms of his future in the cabinet, I mean, it's an open question for anybody in any administration. I will say, though, as you get closer to the midterms, and as we're looking at potentially either a narrower Republican margin in the Senate or even potentially the Senate flipping to Democratic control, there will be pressure for folks to go so the president can renominate people while the Republicans still, have the existing majority in the Senate.
Still trying to wrap my head around $1.5 trillion, a 44% increase in the defense spending. I mean, this to me highlights just how high the bar is to get anyone concerned about fiscal issues. I mean, given the fact that our debt to GDP is right there behind Maldives, Bahrain, Greece, and Sudan, here we are. So it just raises this issue. At what point will people start actually pushing back and saying, wait a second, we're supposed to care about the deficit. When are we going to do that again?
Lisa, I love the fact that you care about the deficits as much as we do at PIMCO. Yes, I mean, we talk about the deficits a lot. And we're talking to our clients, of course, a lot about it. I think as we have said many times before, the Treasury bonds benefit from this idea of like the cleanest dirty shirt, that like all of your shirts are dirty in the sort of sovereign bond closet, but the Treasuries continue to be the cleanest dirty shirt. And that is still true, right? The U.S. still has the most dynamic, most sort of innovative economy. It's the most liquid and deep bond market. However, we're hearing from clients, both in the U.S. and overseas, of these sort of continued worries, not only in the U.S., of course, but in other developed countries. But in the U.S., and as I've been saying, sort of Congress will keep on dancing as long as the music is playing. And if the bond market is not a constraint, then what is a constraint? Not to get too wonky here, but I think one thing just to have on your radar is I would assume this would be an issue in 2028 because the Social Security Trust Fund is supposed to go bankrupt, meaning it will pay out less than it brings in 2033. That may feel like far away. It's really not. And so policymakers are going to have to start talking about this. I would be surprised if this is not a presidential election. Be still our heart that we actually start talking about deficits. But in between then, 6 to 7% deficits, 6-7% deficits as a percentage of GDP. I mean, this is very high, and we're not even in a recession, and we're really not at war. So yes, I mean, we hear you, we share your concerns.
Thank you. I feel heard.
But again, I just don't think that unless the bond market is going to be the constraint, and there's some concerns at the long end, but it really has not been that kind of that constraint.
How much is this a big point in the Kevin Warsh nomination and any kind of Fed Treasury accord, especially given the fact that the Treasury is shifting away from long-term issuance, issuing more on the front end, and we're talking about ways to potentially lower rates on the front end?
Yeah, look, I mean, I think we would be, I think we'll sort of have to wait and see in terms of this accord. There's only so much, of course, that Kevin Warsh can do as chair. The chair is important, but not omnipotent, meaning like the power of persuasion is important in terms of the chair position, but he's only one vote. And as it relates to the balance sheet, he's only one vote of 12. And he's, of course, only one vote of 12 on rates as well. So, we'll just sort of see what he can do in terms of the balance sheet. And then, the Treasury is increasing their buyback program. That is something that they have been doing. But there's also a limit there, right? They do not have a balance sheet. It has to be balance sheet neutral. So there's only so much they can do in terms of, buybacks and what have you without really affecting the weighted average maturity of Treasury bonds. We're getting really wonky here.
Your base case, just a basic question. Middle of May, does Chairman Powell step away?
Again, open question. I think he will need to have every confidence in the world that this investigation, I think both at the Fed in terms of the IG investigation and then also at the DOJ, is put to bed. My view, my guess, my speculation is it would make sense if he were to stay beyond the midterms, just to sort of see what that. Again, I'm not trying to make news here. This is just a guess.
Okay.
But it would already out. But you think if you're worried about Fed independence, you're going to really want to see what that Senate majority looks like, and of course, then it also gives you some time with Kevin Warsh as well. So I just think, but the big point here is, does it really matter? And the Fed is boxed in here in terms of the macroeconomic conditions, and a Kevin Warsh Fed, a Powell Fed, I guess in the next few months, will it look that different? I'm just not sure if the inflation numbers and the growth numbers will really allow them to just take too much of a different posture.
Libby, appreciate your time.
Thanks.
Thank you for the deficit therapy as well. Libby Cantrell there of PIMCO.
Thank you.
I forget which congressman it was, but I think he said something like, we've been throwing Ferraris at Frisbees in the Middle East.
Well, this is the issue, right? How much are you spending $1 million for a $5,000 drone?
Right.
Got to stop that.
Up next, we'll catch up with Ocean First Bank CEO Chris Ma as AI fears return ahead of big tech earnings later this afternoon.
world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Futures just about positive. What a day ahead we've got of us. Ahead of us. I'll get my words out. Equity futures right now on the S&P up by 0.1%. On the NASDAQ, we're up by 0.3%. What a run we're seeing in crude. 8 days of gains for Brent. Brent crude on the longest winning streak since 2022, May of that year, I believe. Just short of 115 this morning on Brent, up by 3%, and just short of the closing high of the year so far, which was 118. In the bond market, when you see those kind of moves, you just fold it into fixed income, drifting high at the front end of the curve, again up by close to 2 basis points. Twos at 385, heading into this Fed meeting this afternoon.
Yeah, to me, I think the 1-2 punch is actually going to be really interesting. At what point do you start hearing companies be concerned about the inflationary hit from higher oil prices that then goes into either reduced demand or them jacking up prices and being able to charge more? And that might give the answer to the Federal Reserve. In some ways, the answer will be decided for the Fed by the companies and the policy and what goes on in the geopolitics more than by the Fed itself.
Have you noticed everyone dancing around the Chairman Powell issue today? It's been fairly entertaining.
You mean in terms of what they do and don't want to say?
Yeah.
They don't want to really weigh in on this in any capacity?
Libby was talking about him maybe staying beyond the midterms.
But, you know, she doesn't really
to
want to
see
make
what
headlines.
happens in the midterms.
You know, there is a sense, well, there are twofold issues. Number one, he wants to immunize himself from potential legal probes, so he doesn't want to necessarily get hinged, and if he stays on, it might immunize him a little bit more. And number two, there's a feeling that maybe there's going to be a padding out of the Fed or some kind of other issue that he's trying to avoid. That's my sense.
We're not political, but we're waiting for the consequences and the outcome of a political vote later this year.
Well, you can get into this argument, and that's why people don't want to, because it's just
already
fraud.
political.
Well, right, but it's fraud, and there's no real market upside for them to talk about it, just like there's no real upside for me to talk about it.
Priya earlier was talking about him potentially leaving. And if he left, it wouldn't damage institutional credibility anyway, because that remains intact. So why are we talking about him staying? Why does he need to stay?
You know, I guess these are all questions that need to be asked today at the news conference, and maybe they can all be hashed out.
So you don't want to go there?
Well, you know, I don't have really a hard feeling on it. I think that you have more passionate feelings about it, and I'm looking at what's the market reaction, and I'm not sure what the market reaction is going to be. And otherwise, I mean, honestly, let's just get on with it.
The DOJ dropped the probe. The Inspector General is going to look into it. I do think he has an off-ramp to take today, so if he doesn't, he will look political.
His bar, his metric is with transparency and finality, and maybe he decides that we haven't met that bar. And that's really the question, I think, for this afternoon.
And what types of continuing probes is he going to be looking for to be dropped, potentially exit stage left? Look, it's a valid question. I'm not undermining it.
I'll get Bramo's opinion by the end of the show. We'll just keep
We're having a vote today at the Senate Banking Committee for Kevin Warsh that 2 Democrats might vote for him. If there's a bipartisan vote for the incoming Fed chair, then why is he sticking around?
He's got establishment support, right?
Yeah, well, and market support, too, if you actually take it with their credibility.
We'll get there. Eventually. 2 hours away from the cash open this morning with your morning movers, Yahira has more. Hey, Yahira.
Hi, John. The bar was pretty high for Humana going into earnings because the insurance industry has been doing pretty well, including due to improving cost trends. So even though the company beat on earnings, it is holding its guidance steady, and that is not landing well. So shares are down 0.75%. Moving on to Starbucks, those shares are rising nearly 5% in the pre-market as the turnaround takes hold due to the U.S. consumer showing up in force, helping the coffee chain beat expectations and boosting its outlook, even as China remains a weak spot. But overall, CEO Brian Nichols saying that more customers are visiting their stores, and when they're there, they are spending more. And take a look at Robinhood shares. They are plunging down more than 11% in the pre-market, revenue coming in light. And the story there really has to do with the retail investor pulling back amid volatility due to the Iran war. You also have Robinhood saying that their expenses jumped and warning that its involvement in Trump accounts will involve another $100 million in investment. John.
Yahira, thank you. More from Yahira in the next hour. On our radar this morning, President Donald Trump telling aides to prepare for an extended naval blockade of the Strait of Hormuz. The Wall Street Journal reporting the president thinks the blockade carries less risk than resuming hostilities. Elsewhere, it's the busiest day of the current earnings season with more than $14 trillion in market cap reporting, including results from 4 of the Mag 7. Alphabet, Microsoft, Amazon and Meta reporting after the closing bell. And finally, the Senate Banking Committee likely to approve Kevin Warsh's nomination for Fed Chair in a vote later this morning. If Warsh clears the panel, his nomination will head to the full Senate for a final confirmation vote.
Can you imagine if he also gets confirmed today and then heads over to the Fed and says, I'm going to sit here too. Guess what? I'm Fed chair now.
Washington doesn't move that quickly.
Okay, well, make it really dramatic. We could really increase the drama of this finale.
Well, Mohammed El-Arian is putting out on Twitter that really what matters more is going to be the politics. Will Chair Powell repeat the defiant tone of his dramatic January video? And I think that's why this is important. Jay Powell could make this about himself if he stays on as governor and less about the institution. And I think it'll be incredibly interesting if he decides that he's going to announce he's staying on when there, as I just said, potentially bipartisan support for Kevin Warsh out of the Senate Banking Committee.
It risks creating a dependency issue when there isn't one. I also think the way they talk about the Federal Reserve right now undermines the people already on the FOMC. This is not the Supreme Court. This is the Federal Reserve. And just breaking down the board by who the president has appointed and who he hasn't isn't really how this works. And I think it throws a lot of mud at the otherwise fantastic work that the likes of Governor Waller, who was also nominated by this president in his first term, is doing at the Federal Reserve. This is not the Supreme Court. Other people have opinions on the future of this institution. It's a deliberative body that come up to decisions in a way that we weren't maybe 20, 30 years ago when one man set the tone for the whole committee. That's changed. I don't see it flipping back to that anytime soon.
It's a fair point. He has to articulate what concerns him that would require him to stay on. And I think that is sort of the key point. I will say, Stephen Myron, this is going to be his last time at the Federal Reserve. Then his term is up, and that's who Kevin Warsh would be replacing. So there are a number of moving pieces here that we have to consider.
Exactly. That was going to be my next point. Spare a thought for Governor Myron. Whether or not he has a job or not depends on what Powell might say today, because he can potentially stay and take Powell's seat. But if Powell stays on, and maybe that's what this is actually all about. Maybe Jay Powell actually doesn't want Myron to stay at the Fed. So he says, I'm going to stay a little bit longer. Maybe Myron goes out and gets a new job and doesn't wait around for Powell to leave.
Today's going to be a long day. We'll have more time to talk about this. Let's talk about those tech earnings. Coming as a new wave of AI anxiety leaves investors questioning the CapEx spend. Ocean First Bank Chairman and CEO Christopher Ma, I'm pleased to say, joins us around the table. Chris, good morning. Good to see you.
Morning, John. Great to be here.
Is this the real deal? So we've got these doubts about OpenAI and their spending commitments because they're not seeing the internal growth and they're falling short of their own targets internally. Do you think it's the real deal? Are you seeing the kind of growth that you'd expect from this kind of technology?
Well, we're certainly seeing it. We're seeing it not only within our own firm, our peers, our clients. You're seeing these dramatic improvements in your ability to produce. Not just, there's a lot of focus on the AI itself, this decision engines and, but as important as that is this revolution in the way you build technology from a coding perspective. So we're seeing our engineers able to be dramatically more productive than they've ever been. So you can automate things you would never have considered automating before. And we're seeing really important gains, things where we're taking 75–80% of the time out of a process, which improves the experience for our clients, makes things less expensive for us, but it's on both sides, not just decisioning.
I'm going to reduce this in a really crude fashion, so forgive me, but ultimately this is the focus. Revenue growth relative to the size of the workforce. Are you going to get more from the same size of the workforce, or are you going to get more from even less? How do you think about the trade-off between the two?
You're certainly going to get more for the same size of the workforce. So when I think about our bank, when I joined, we had about $10 million in assets per employee. You just think about that as a crude measure of efficiency. We're now at 16 million. I think we're going to be north of 20 million within the next 6 to 12 months. So it's a huge opportunity for you to run an operation much more effectively.
Is there a limit to how much people are willing to invest if the costs go up? And I'm talking about the component costs. I'm talking about just the commodity costs, as well as just the supply demand dynamics.
You know, Lisa, I think that when you look at everything that goes into a data center, and it's everything from chips to concrete and steel and plumbing and heating and cooling, I think we're going to have a choppy period over the next year or two as we balance out what investments make sense and what the true cost of this technology is. I think we often overlook that the price we pay for AI today has no relation to the cost to deliver it. So when you think about, in a fully formed way, with all these data centers up and the energy costs, what is the cost per query? What is the cost? Right now, it's kind of a subsidized thing where we're getting access to the technology very inexpensively. So as those fully burdened capital costs come through, we're going to see how effective it is.
Well, this is the reason why some people are looking and saying, well, on one hand, CapEx is good things. It represents some kind of promise. On the other hand, are we just paying continually more for the same amount, given the fact that prices are going up in a significant way? I mean, at what point does that become a constraint in the markets?
I think the most important short-term constraint, what we hear from our clients, and our clients are everywhere from DC to Boston, a lot of different industries, is they're very concerned about energy costs broadly. So yes, it's oil, but it's also the electricity costs going up. And when they look at that input cost and traveling through their corporations, and it's going to raise the price of everything. So energy is a really big conversation. It is a bigger conversation among our customers than employment is. And that, typically they would always complain about employment, but they're worried about energy.
And the conflict in Iran is just making that worse. Are we going to hear more of that today from the hyperscalers?
Yeah, Anne-Marie, I wouldn't be surprised because when you think about not just the data centers kind of sucking up all this electricity, oil on top of that, and then these multiplier effects that those costs then just creep their way into the logistics systems and they make everything more expensive. So that's the concern.
When you look at this space, what do you make of Anthropic and OpenAI? Is it hype? Is it ahead of their IPOs? Or is this real?
Well, we kind of go back and forth. I think it's real. I don't think it's going to have a uniform impact on everything that people think it is. So everything, it's going to solve world hunger and all that. I don't think it's going to do that. But it is very broad-based. We see our employees just experimenting with things, bringing stuff to us. Mythos is frightening. When you think about the security posture of your company and the ability for the bad guys to be that much more effective. So yeah, we got a lot to stay awake on.
Do you think it will help your institution become more resilient or expose potentially some vulnerabilities in the industry?
I think in the long term, it helps you become much more resilient. The pitfalls in the short term, right? As you're adopting this stuff, and is there kind of a short-term issue that pops up that you've got to deal with? But we've seen our cyber posture over the last several years. These tools are really helpful because you can't keep up anymore. You're getting attacked in a way that a human being cannot respond to, right? We've got these automated scripts to respond on things. So technology is both your friend and your adversary.
Chris, it's good to see you. Thanks for breaking it down. Thank you, sir. Thank you, Ocean First Bank Chairman and CEO. Christopher Ma, things moving very, very quickly. We mentioned this earlier, that 12 months ago, Alphabet was dead. It was all about OpenAI. Then Anthropic's taken over. Alphabet's really flourishing. And I wonder where we'll be 12 months from now.
And how much does it really hinge on capital markets remaining open so people can keep borrowing money or raising money in other fashions to keep investing in things that may change, but ultimately will protect them from some of the cyber risks and will insulate them from some of the costs from supply chains that they can overcome with efficiencies of scale.
Nasdaq futures this morning higher by 0.3% with an update on stories worldwide with your Bloomberg Brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. Yum Brands edging lower in pre-market trading after beating expectations for the first quarter on the top and bottom lines. Same-store sales grew 8%, thanks in large part to Taco Bell's value meals, offsetting more tepid results from its other brands. Elon Musk taking the stand in his case against OpenAI. Musk is suing Sam Altman's company because he says its pivot from a charity to a for-profit business is wrong. An attorney for OpenAI says Musk's lawsuit is an attempt to undermine a competitor to his own company, xAI. UBS CEO Sergio Ermotti speaking with Bloomberg's Guy Johnson today, warning financial markets are at risk of over-optimism regarding the Iran conflict.
The expectations is not only that things are going to be resolved, which we believe and hope is they're going to be resolved, but the impact of what happened will be resolved in a classical way we saw in the last 10 years, V-shaped. Everything is going to go back into normality.
Equity markets have risen to records even without a clear off-ramp for the conflict with Iran. And that is your Bloomberg Brief. John.
Vonnie, thank you. More from Vonnie in 30 minutes. Up next on the programme, bracing for change.
The momentum of the economy is there. It will probably sustain itself, broaden in the second half of the year. If that happens, and not only does inflation not fall, but maybe starts to rise, we're going to see a very, very different tone from the Fed.
In just a moment, we'll catch up with the former Kansas City Fed President, Esther George, live from New York City. You're watching Bloomberg TV.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Ahmed, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Here's the shape of things this morning. Equity futures just about unchanged on the S&P 500, positive on the Nasdaq following yesterday's losses. Yesterday on the S&P, the biggest one-day loss we've seen in about a week. Notable that we're seeing the equal weight decline. Lisa talked about that earlier this morning. 6 consecutive days of weakness there, lower across those 6 days. That's the longest streak we've seen so far this year. And with that, this move in crude, 8 consecutive days of gains for Brent. That's the longest this year. That's the longest daily rally we've seen going back to May of 2022. Higher by 3% at 114, round it up to 115. That's unsettling some things in the bond market at the front end of the curve. Yields just drifting higher. I've called this stealthy because it's been quiet, this sell-off in bonds. But we're building and building and building and retesting the highs of the year so far at the long end of the curve. And at the front end, up another 2 basis points, 386.
It's a good characterization. Yesterday, there was a 7-year auction, and it just tailed a little bit. It just wasn't great, and that's sort of how all the auctions have been of late, highlighting how people don't know how to price what is an ongoing, slow-moving crisis, potentially, in the works, which is the oil price, and exactly how the economy will adjust to it. When does it become inflationary, and when does it switch over to disinflationary because of demand destruction?
Those moves going into the Federal Reserve decision later on this afternoon, under surveillance this morning, bracing for change.
The Fed feel very strongly that the excess inflation that we have right now, that the bulk of that is coming from tariffs, and that should be fading over time. The momentum of the economy is there. It will probably sustain itself, broaden in the second half of the year. If that happens, and not only does inflation not fall, but maybe starts to rise, we're going to see a very, very different tone from the Fed.
So here's the latest this morning. Investors looking for signals on how long the central bank will stay on hold at what is likely to be Jay Powell's final meeting as chair. Joining us now to discuss is former Kansas City Fed President Esther George. Esther, a warm welcome back to the program, as always. At 2 p.m. Eastern Time, we get a decision. 30 minutes later, a news conference. What are you expecting to hear?
Well, good morning, Jonathan. I think it's clear the table is set for today's meeting, and the real question is not will they move rates. It seems likely they will remain on hold, but I think the question is how will they describe the outlook in this time of high uncertainty? Will they lean into the inflation issues that we've heard a number of the FOMC members talk about? Will they think about two-sided risk, if you will, to their mandates? And of course, the other part of the discussion, people are leaning in very heavily on trying to understand how the chairman might be thinking about his future role.
Esther, none of that is normal. That last point in particular is not normal. You know how this works typically. They move aside, someone else comes on board, we move on with life. Why is this moment so different?
Well, because it's been wrapped up in a bit of political fury, if you will. The chairman has had...
I think we've lost that line to Esther George, the former Kansas City Fed president, on an important moment for the future of the chairman of the Federal Reserve.
That's so much. She doesn't want to talk about it. I mean, I think
no one wants to talk about it.
I think that we should do that next time you ask me about it. I'll just sort of freeze.
Freeze frame.
Maybe you guys will too. Ultimately, it's a difficult moment because people are used to talking about a difficult economic moment that we're in, and instead we're having to suss out exactly whether it is going to be important for him to stay on, whether it will matter to markets. Right now, the market seems to be incredibly calm.
She stopped, and the shot was frozen. It was a technical issue, but when she was talking about political fury when it comes to Jay Powell, and you know what this is going to do, right? The conspiracy theorists out there in financial markets are going to be seeing that, and they're going to say there's a reason why she was frozen.
The fact that we're even talking about this is a problem. It's a big problem. And understand it's not just the chairman's responsibility to handle this issue. The blame lays at the feet of this administration as well for introducing this as even a conversation. We've talked about this all year. This could have been very straightforward. You've appointed your guy, move on with life. Kevin Walsh runs the Federal Reserve, a new outlook for the central bank. We're here because no one wanted to take the off-ramp. They just kept pursuing it, pursuing it, pursuing it. And I've mentioned this a few times. 12 months ago, when we were looking out 1 year, and we were thinking about what the future of this conversation would look like around the Federal Reserve, we were talking about a shadow Fed chair, the likes of a Kevin Walsh maybe, getting confirmed early, so we knew that he was going to be there in the wings. And that was the ultimate story. This wasn't even a consideration, the idea that Chairman Powell would stick around to 28 on the board.
Part of the reason why we're talking about this so much is President Trump
is a real estate guy. He's a real estate developer. He wants rates lower, and we're dealing with a significant amount of debt in this country, and it is much more beneficial for rates to be significantly lower. How do you accomplish that? Increasingly becomes the question in one supply chain shock after another that really does challenge the discussion, even though we are having disinflation on other measures. So it is a complicated economic discussion that has been brought into the mainstream by President Trump and produced in utterly dramatic fashion so that everybody can really play a part in this Bachelor Fed style.
And he was fanning the flames throughout the entire year and into this year. I mean, I was in the Oval Office that morning when there was reports that maybe he was going to fire Jay Powell. And that was really just mostly about the fact that he didn't think he was doing a good job, less so even about what was going on when it comes to the refurbishment. Then they went to the refurb. Remember, this was a president who went to the Fed, sat behind, alongside the chair, looking at all the work that was being done at the Federal Reserve. So there's been a lot to this story.
I believe we've re-established that connection, and at risk of offering any fuel to conspiracy theories, I hope Esther George is still with us. Esther, we want you to complete your thoughts on the future of Chairman Powell and why this moment is so different.
Well, it's different, Jonathan, because again, we have not seen this kind of political angst around a transition of leadership in the way that we have now. And of course, this follows on a long period of badgering of the Fed about its interest rate stance. And so it creates an environment right now that is unusual. Having said that, though, the institution, I think, is quite capable of carrying forward during this transition. And really, as I think about the committee and what they're doing this morning, I suspect they are squarely focused on the economic challenges and deciding what their stance of policy needs to be.
Couldn't agree more. Esther, it's good to see you. My apologies that this one's a bit of a short one. We'll get you back on the schedule soon and we'll catch up. The former Kansas City Fed President, Esther George, on the future of this institution and the focus on the Fed later on this afternoon, which unfortunately is not just about policy, the outlook, the economic challenges. It's also about the future of the chairman of the Federal Reserve.
I like what she did there. She said it's a committee, and she kept emphasizing the committee. And at what point do we have that emphasis rather than on one person who is the head of that committee, but ultimately is really held to the consensus vote of 12 individuals?
Right, it's a deliberative body, which is why people say, well, if Chair Powell stays on, he's just one person. But at the same time, he was the head of this institution. So if he stays on, doesn't that make it a little bit more complicated if Kevin Warsh comes in and wants a quote-unquote regime change?
I go back to two words, transparency and finality. It doesn't really matter what I think about any of this. I think the chairman set up his own metric for whether he can move on or not. He said it needs to be wrapped up with transparency and finality. And based on that metric, I believe where we are right now falls short of that bar. So it'll be interested to see how the chairman navigates that later this afternoon.
Yeah, maybe he'll have a technical difficulty and just freeze.
Just cut off the news conference.
Everyone just has to leave. You know, there are different ways to handle this.
True. Just pull the plug.
See. Yeah, exactly.
Yeah, okay. Let's hope they don't do that because we're going to have quite a long time to talk about nothing.
Yeah, okay, all right. Please don't do that. That's a terrible option.
News conference, 2:30 Eastern Time. Don't pull the plug, okay? Our coverage starts at 1:30. It wraps up several hours later. Coming up on this program, Stuart Kaiser of Citi, Shweta Kajuria of Wolfe Research, Tom Porcelli of Wells Fargo, the IAEA Director General, Rafael Grossi. Looking forward to that in the next hour of Bloomberg Surveillance, the third hour, just around the corner.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
The market remains dependent on tech.
The CapEx figure is what you got to be laser focused on.
We're just really not seeing the rest of the market able to overtake that Mag 7 cohort.
Tech breadth is broadening across the sector. The technology genie comes out of the bottle. It never goes back in.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now, and your scores, the price action looks like this. Equity futures on the S&P 500 just about positive. On the NASDAQ, up by 0.3. In the commodity market, up again on Brent for an 8th consecutive session, up by more than 3% and just short of 115. Heading into this day ahead. What a day ahead. Later on this afternoon, a Federal Reserve decision. 30 minutes later, a news conference. Then after the close, these names right here, the biggest companies on the planet reporting earnings. Alphabet, Microsoft, Amazon, Meta.
So you've got your geopolitical crisis, a question around how much the drip feed of higher oil prices are going to torpedo the economy and perhaps drive the hot war back into action. You've got domestic drama with the Federal Reserve. What is going to happen there? Not necessarily with interest rates, but with respect to the personnel. And then corporate America really delivers the bazooka, which is how well are the big tech names doing, given the fact that they have driven the rally not only in equities, but in economic optimism.
Well, let's start with the geopolitics, the squeeze in the Middle East and the moves in crude. The Wall Street Journal with this. The president instructing aides to prepare for an extended blockade of Iran, according to U.S. officials.
Blockade in hopes that the Iranians cave. That is what the president is deciding to do. And if you continue to read the Wall Street Journal report, it goes on to say that the other options of either escalating to start strikes again or de-escalating, basically just walking away and saying, we reached some of our targets, we're now going to leave because we don't want this impact on the oil market, the president is not willing to accept. So right now, I think the oil market is starting to wake up to the fact that we've already drawn down a number of inventories, and the president is serious, and the blockade is not ending right now. And you can see that as well, what is going on in the Strait of Hormuz, what the Iranians are trying to do in terms of putting any last barrel of oil somewhere to store.
You can see it through the pricing of the futures curve. Lisa's been on top of this all week. New highs for long-dated contracts this morning at the front end of the curve, just several dollars away from the highs of the year.
Yeah, you pointed out the fact that we all made such a big deal about Goldman increasing their forecast to $90 a barrel at the end of the year. And guess what? If you take a look at the December contract for Brent crude, we're at 88. So to your point, we're already there, and yet people don't seem to be paying attention if they're in the equity markets, at least not on the index level. Is this a boiling the frog moment where we reach a point where suddenly the frog's dead? And that ultimately is what people are looking at, even though it's not very nice.
Stu, how do you feel? Welcome to the program.
Well, the death of the frog, apparently.
Look, a warm welcome to Bloomberg Surveillance, sir.
Definitely.
You take a beat. Coming up this hour, Stuart Kaiser of Citi, ahead of Megacap Tech quarterly earnings. Tom Porcelli of Wells Fargo previewing today's Fed decision. And the IAEA Director General Rafael Grossi as US-Iran talks stall over Tehran's nuclear program. Conversation about nuclear war at the end of the program with Bramo, so that should be fun. All right, we begin this hour with stocks edging higher as Wall Street braces for a busy 48 hours. Stuart Kaiser of Citi writing the following. Tech stocks are priced for large upside moves. April 30th is effectively the largest day for S&P 500 earnings since 2012. A warm welcome to you, Stuart. A proper welcome. It's good to see you, buddy.
Thank you. It's good to be here.
We've been talking about your notes throughout the week. Lisa has. These slow-moving risks could turn what you say is non-linear if they persist. Are we close to that tipping point?
I mean, it does feel like it. Our commodity strategists think if this lasts, a couple more weeks, you're at $110, and if it lasts, call it a month after that, you're at 130 on TI, and that, I think, becomes a real issue for equity markets. I think what equity markets have tried to do is generally with the Middle East is compartmentalize it, and as long as oil doesn't tap us on the shoulder and say you need to worry, we're just going to trade AI and be pretty, bullish, optimistic folks.
Are you feeling that tap just a little bit more this week?
It's getting there. I think it's very interesting because of the FOMC and because of large cap tech earnings, that's just dominating conversation. But we are getting the incomings of what do I focus on after, after Wednesday and Thursday? And if unfortunately what we're focusing on is $120 of oil, then I think it can become an issue for equity markets at that point.
Is it a price level or is it a length of time? Which one?
I personally think it's a length of time, type issue. If you go back to 2022, you had WTI above $100 for 87 out of 102 trading days or something on that order. And equity markets were able to kind of survive that because the long-term oil never really inflected. I think you guys are hitting on the right thing, which is if I'm looking at that 18 to 24-month outlook, as that creeps higher, that's where you get worried. I do think this is definitely an issue of time, especially now that the kind of shooting has calmed down a little bit.
Not to ask you to have a crystal ball, but how long? Because people were saying back at the beginning, and John and Anne-Marie have been talking about this a couple of weeks. Now we're 2 months in, and suddenly the blockade's going to be even there longer. At what point does it really hit that trigger where all of a sudden people say, wait a second, we're going to go back to focusing on that?
Look, I think the issue is, or at the beginning of this, I think the administration was very cognizant of trying to keep oil contained, right? They were allowing Iran to export. They took the tariffs off of some of the Russian exports, et cetera. Now it seems like they're sort of going the other way a little bit because the goal of the blockade is to shut this in. I actually agree with the blockade in the sense that it's sort of nonviolent escalation, and I think that's where President Trump probably wants to be. So now it's a waiting game. Do they fill, Anne-Marie's Knicks cup up with oil because they run out of storage and they have to kind of give in, or do you get to a position where oil prices get so high and you start to worry about election and U.S. consumer risk and stuff like that?
So do you think the market is waking up to the more escalatory nature with the blockade or what OFAC did just yesterday going after more teapots in China than they are actually the physicality of what is going on?
Yeah, again, I think it's the equity markets are more than happy to ignore this until oil prices inflect. And the fact that we're not watching, bombs falling in the overnight gives us as equity investors even more freedom to do that. So again, this is a time issue, and I think at some point oil's not going to go, 105, 106, 108. It's probably going to go 105, 115 or something like that. And that's where I think it becomes a real issue for equity investors.
When do you think that happens?
I mean, if you believe our commodity strategists, you're 2 to 4 weeks out from that. But to be fair, to Lisa's point, 2 to 4 weeks ago, we might have said the same thing. So it could also be that in these times of stress, people find a little bit extra oil to squeeze out of things, right? Maybe you're running at 100% max production. Maybe you're running at 110% max production, i.e. a production level you can't sustain indefinitely, but you can sustain for a short period of time. So it could be we're squeezing a little more juice out of it than we thought we had.
You're not a bear. It's worth pointing that out. You're not a bear. You are actually looking at this quite bullishly at the moment. What underpins that bullish view?
The fundamentals. I think that's really what it boils down to. Like any of these risks, whether it's the economic data or the Iran stuff, if you had earnings turning over in the U.S. would be red, and there'd be a much different reaction function. So I think that's the key. To me is one, this has been a little bit slower moving, and two, you have very strong sort of earnings fundamentals underpinning things, which is why I think if there's one thing that worries me is actually the NFIB and the UMich surveys last month that just showed sentiment under so much pressure, because the longer this lasts, even though oil hasn't re-inflected, gasoline's at a 4-year high. So the refined products that really impact consumer spending are kind of, giving you that stress.
I really struggle with you, Mitch. So just convert me if you can. The idea that things have never been worse since the late 70s, that consumers have never felt worse, I just struggle with that. Agreed. I understand that things are bad now, and it's difficult for a lot of households, without a doubt, and I'm not undermining that. Just to say that things are worse now than GFC, than all the other things we've been through in the last 40 to 50 years, I struggle with that. Do you?
Yeah, I struggle with it as well, though. I think like the GFC was maybe a little too complicated, for some people, whereas price of gas is like an immediate hit in the face. Also, if you look at UMich split by political party, you kind of see there's also a huge political aspect in there as well. So do I think we're the worst ever? No, but when I see both small businesses and those sentiment surveys both turning lower, again, this is a warning sign as opposed to something that is an issue now. But, if you keep sentiment under pressure for 3 or 4 more months, I think then you start to worry about what's going on. And it's also what gets you there. To get sentiment that negative, you probably need oil and gasoline prices high for an extended period of time. And I guarantee you the Fed is not going to be happy about that, if that's the outcome.
So geopolitical concerns, earnings, it brings us to the Fed. Do you care at all about what happens later this afternoon?
Hopefully not, and I don't think. Well, I don't think the Fed wants us to, right? Honestly, I think
they never want us to.
Tune in 1:30 Eastern time. Thank you, Stu. Go on.
Well, you can see if I'm wrong at 1:30, but I would say that they're going to probably keep with the forecast uncertainty very high line. The worst nomination is sort of back on track. And I think the Fed, gun to their head, would probably just say, we want to get through this without too much commotion. The press conference will be interesting. I thought the press conference was a little more loosey-goosey last time, maybe than it has been in the past. So we'll definitely be turning out to that and watching every minute of it. But I imagine the statement, et cetera, they'll try to keep that right down the middle.
So far, the chairman's future is a non-event for financial markets. Seems to be the event for Fed watchers. Is that something we need to reconcile? Do you think it becomes a market event?
It's hard for me to see it becoming a market event. If you assume that the DOJ charges kind of go away, then, whether he stays on for another year or two, I'm not sure that's like a major issue unless it creates some sort of rift within the Fed, which seems unlikely. Warsh is a respected economist. He's worked at the Fed before. He respects the institution. So I wouldn't expect that to be the issue. I mean, if pillow fights are breaking out at the Fed between Powell and Warsh, maybe a different story. But generally speaking, no, I wouldn't expect it to be a huge issue.
Stuart, it's good to see you.
Good to see you too.
This was fun. Thank you, buddy. Thank you very much. Stuart Kaiser of Citi on the Federal Reserve later on this afternoon. That news conference could be spicy on the future of Fed share, and also, I think most importantly, where we are in this economy and the outlook for policy and the changes we could expect in the next 12 months.
Yeah, right now, that is a huge uncertainty. You're talking about the University of Michigan survey and how negative it seemed. And then yesterday, we got the Conference Board consumer confidence number that came out way above expectations. So pick your poison and try to interpret what this economic data really looks like.
It's a difficult moment. Looking forward to the news conference, 2:30 Eastern time. Our coverage starts at 1:30. Don't listen to Stu. Tune in for that.
It's going to be
at 2 p.m., we get that interest rate decision. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Vonnie has more. Hey, Vonnie.
Hey, John. Thank you. The White House is working on dialing down its feud with AI giant Anthropic. Axios reporting the U.S. is developing new guidance that would allow agencies to get around Anthropic's supply chain risk status and begin onboarding its new model, Mythos. Starbucks shares are up almost 5% in the pre-market. The company lifting its full-year guidance thanks to a strong rebound in the US that helped offset slower growth in China. The results suggest CEO Brian Nichols' turnaround plan is gaining traction. Billionaire Bill Ackman's Pershing Square pricing a combined IPO of Pershing Square USA and its hedge fund management company, Pershing Square Inc., in a dual listing expected to raise $5 billion. The two securities will begin trading on the NYSE today. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. More from Vonnie in about 30 minutes' time. Up next, the morning calls, plus Shweta Kajuria of Wolf Research saying Wall Street is underestimating CapEx spend heading into earnings. We'll get to that conversation in just a moment. Live from New York City this morning. Good morning.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
When you just kind of look at, what these companies are at least going to do in Q1, I don't see any sort of major tick up in terms of CapEx budgets. That could change as we go into the second half of this year. A company like Meta, well outpacing the industry, largely because of that AI contribution and what they're delivering from an AI perspective to the ad community.
A huge afternoon for tech earnings coming up later on this afternoon. That and pillow fights at the Federal Reserve, according to Stuart Kaiser over at Citi.
Why pillow?
I don't know.
I mean, spitballs, maybe. It's not that violent, which I like. I like that sentiment, please.
It looks like this. Futures just about unchanged on the S&P 500, positive on the Nasdaq by 0.2%, on the Russell up by 0.2. Let's get you some morning calls. First up, JP Morgan lowering its price target on Booking Holdings following earnings, citing the impact of the Middle East conflict on travel demand. That name is down some 4%. Your second call from Citi, raising its price target on UPS after its first quarter results. Seeing the sell-off in shares yesterday as an overreaction, that name is up by only 0.25%. And finally, BNP Paribas initiating coverage of Alibaba with an outperform rating, expecting cloud revenue growth to accelerate. That name is up by a little more than 1%. Elsewhere, four of the biggest companies on the planet reporting earnings after the closing bell this afternoon. With a preview, Ed Ludlow has more. Good morning, Ed.
Good morning, John. We're bracing for Earnmageddon, and capital expenditures is still the swing factor for the market, but probably given the Wall Street Journal reporting on OpenAI missing financial metrics in the market of the last 2 days, more than ever, Wall Street is looking for evidence of ROI. They want to see that capital expenditures is followed by boosted forward guidance and tangible revenue growth. And that's the dynamic of this market. It is an AI story, but if you think about how markets have behaved since the March bottom, take the S&P 500 or the NASDAQ 100, if you strip out NVIDIA, it is those four names that have been the big drivers of the multi-consecutive records that we've seen in recent weeks. So that's the story. You know, each of them has a comparable metric in CapEx. Meta does not have the cloud growth for us to track, but that is where we will look after 4 p.m. Eastern time today.
Armageddon. Getting Bramo excited, Ed. Armageddon this afternoon, Bramo.
Sorry, I couldn't hear anything. Earnmageddon. Earnmageddon.
Oh, no.
I wonder how long it took for you, Ed, to come up with. Really, Ed.
Please have brought that up. Didn't know what I was looking for this afternoon. Ed, thank you, buddy.
That
Appreciate
conversation
it.
goes later in the show.
Looking forward to the coverage. That's later, yes. That's quite the promo for the IAEA later on this afternoon.
Hope that's
this
not
morning.
Armageddon. Let's hope we just get Earnmageddon.
Okay, yeah, I didn't hear that at all. All right.
Yeah, I thought that was...
Okay. Shweta Kajuria, Wolf Research, writing the following. We expect 2027 CapEx for mega caps to increase 25 to 30% year over year. Shweta joins us now for more. Shweta, welcome to the program. We had a conversation earlier on this morning about maybe entering a new phase for CapEx. Are you expecting an increase from here later on this afternoon?
Well, first of all, thanks for having me. As far as this year goes, I'm not sure if we'll expect a material raise in CapEx for 2026. In part, it's because the guidance that each of these companies gave, $200 billion for Amazon and $175 to $185 billion for Alphabet, for example, we think accounted for a good level of conservatism, but there is a risk, if there is one, it skews to the upside in terms of raising CapEx. Our point really was, as these contracts are up for renewal and we think about 2027, we have seen 100% increase in year-over-year pricing for storage as well as memory, and that's going to flow through. And that is what we think the street is underestimating when we think about next year's CapEx.
Is this a good increase or a bad increase in CapEx if it's tied to higher costs? I mean, how is it going to be received by markets?
Well, CapEx increase has been negatively viewed by the market, in part because now, despite the very attractive free cash flow generating profile for each of these mega caps, at least within the internet space, it is in question. And the question is whether Meta and Amazon and Google will need to raise more debt capital in order to support this level of demand by investing in CapEx. So I think that it's going to be viewed negatively unless we see some material inflection in their top line growth. And that is something that we may see at AWS as well as Google Cloud.
Is this something where we're going to get a sense of the winners and the losers at this point? You talk about AWS and Google in the cloud space, but also when it comes to the AI space, given the report yesterday from about OpenAI in the Wall Street Journal, suggesting that Gemini is really taking a lot of share.
Well, part of the reason why when a lot of the AI names yesterday pulled back, we did not see a major pullback in Alphabet shares. And part of that is because Google is fully vertically integrated with their own chips, with their own cloud service, as well as with their own Gemini model. And that is a huge advantage that Alphabet has. And so if the consumer-driven app in the form of GPT is not meeting its metrics, then the structural headwind on Google search is also mitigated. And at the same time, the hyperscaler cloud business is also up for a good level of acceleration with margin expansion. So we do think that would be a positive for Google.
So, Shweta, who do you think is winning that race right now? Is it Google, Gemini, as opposed to OpenAI and Anthropic?
Well, actually, Anthropic, we do think that they are ahead. When we think of their most recent models, we think that they are doing arguably better than most other industry-leading models, especially in security and coding for enterprises. So Anthropic is really firing on all cylinders. And when we think about their annualized revenue run rate, they're now, 30 billion plus, and who knows, by the end of the year, it'll be significantly higher on a run rate basis. So we do think that Google and Anthropic are doing fairly well. And at the same time, Amazon is also narrowing that gap, especially in their Trainium chips against TPUs and GPUs, and they're catching up fairly quickly. And we'll see, hopefully, 30% plus growth rate in AWS in the first quarter reported later this afternoon.
John has brought this up a lot when it comes to the likes of Anthropic and OpenAI. Is some of this just trying to generate buzz ahead of blockbuster IPOs? Or do you think these models are real and going to really change our realities in the future?
The latter. I think that there is a lot of potential in these models, and what we may see is that so far there is a little bit of a lag from a lot of enterprises that are talking about the promise of being able to cut costs within their organizations, but we haven't seen much of that yet, despite the adoption of coding, etc. So headcount growth will not only moderate, but we may see a lot more of headcount cuts that could be coming that could drive down to the profitability. So is that a good thing at a macro level where unemployment rate could rise? I'm not sure where the balance will shake out eventually, but on a profitability perspective, for a lot of enterprises, we may see a pretty good boost in terms of productivity and profits.
We've got a massive afternoon coming up. Thanks for making time for us this morning. Thank you, Shweta. We appreciate it. Thank you. Shweta Kajuri there of Wolf Research. Let's talk about the OpenAI piece in the Wall Street Journal. This is really central. I think it's the epicenter, the foundations of the ultimate bear case, the bubble view, that you have a company that will fall short of growth, that has made massive spending commitments, which will lead to a huge misallocation of resources and overcapacity. That was the pushback we got from the likes of CoreWeave in their own statement yesterday, which is we continue to see demand exceed supply across the AI ecosystem. That's the pushback you're going to hear repeatedly.
And they have other customers as well, that OpenAI is not their sole customer. This is the key point, that even if, say, OpenAI is overinvested and might have too many commitments, how many other players are there out there willing to take up those assets at the same prices? And that, I think, is the reason why a lot of people are saying, even if OpenAI hits a soft patch, it isn't going to cause some sort of implosion in this particular industry.
Right, because there's so many other good models out there when it comes to Google Gemini, everyone that talks about Mythos and Anthropic. Interesting point, though, Jonathan, you brought up yesterday, not just the fact that OpenAI can't reach their internal targets, but when it comes to this IPO, the fact that maybe it's actually not as good, they can't reach their IPO, do they just get swallowed up potentially by someone else?
I've got no idea what happens here, and the growth numbers can change just as quickly, and I've mentioned this example of Alphabet repeatedly throughout this morning. You come out with a new model, things can change very, very fast, but let's just sort of run with where we are right now with this company. If they fall short, is the risk less existential for the Alphabets, for the Microsofts of this world? When they say right now, the greater risk is underinvesting and not overinvesting, is a lot of that because of what they see as an upcoming threat coming from elsewhere, from OpenAI, from Anthropic, and how would their view of those risks on the horizon change if that company went away?
Is there an existential threat because of the competition from some particular players who are hoovering up everything that they can find to try to make sure that they have the biggest footprint possible? Or is this an existential threat because this is going to be the business model ahead? And if they don't reach some sort of, intelligence that is beyond, then they're going to fall behind, right? Is it sort of an existential, we don't know what we're going toward, but we're going to try to keep building this tower to the sky? Or is this something that has a tangible kind of endpoint with a practical business application that they can see with respect to their customer demand?
These earnings calls could be very, very interesting later on this afternoon. Coming up next, we'll talk about the data, a fresh round of economic data set to cross. We'll speak to Tom Porcelli of Wells Fargo. He's with us to break it down and look ahead to a Federal Reserve interest rate decision later on this afternoon. That decision at 2 p.m., the news conference at 2:30. Into it, the price action looks like this. Equity futures just about unchanged on the S&P 500. The Nasdaq bouncing back by 0.3%, getting our attention once again. This move in crude, up by 3% on Brent, just short of 115, an 8-day winning streak for Brent crude, the longest since May of 2022. And with that push higher in the oil market, this in fixed income. Yields up again, 2 basis points higher at the front end of the curve, 386 from New York City. You're watching Bloomberg TV.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
"60 minutes out from the opening bell, the cash open just around the corner. Economic data dropping in about 20 seconds' time. Equity futures into there, just about unchanged on the S&P 500. Positive on the Nasdaq by 0.2. In the bond market, tracking the long end of the curve, very close to the highs of the year, with 30s at about 495. And the front end of the curve, with yields pushing higher over the past few sessions, up another 2 basis points this morning. Let's round it up, 386. With that economic data, Mike McKee has more. Good morning, Mike.
Good morning, John. It's not quite eco-mageddon, but it is a lot of numbers this morning. Durable goods orders up 0.8%. That's a strong number. Transportation up 0.9. So that tells me off the top, without looking at the details, this is not just a Boeing story this time. Capital goods orders, non-defense ex-air, were up 3.3% after a 0.7 rise the month before. So a lot of strength in durables today. A suggestion that maybe AI is really strong. We'll take a look at what the breakdown of the numbers are. The advanced goods trade balance is wider than expected, comes in at $87.9 billion for the month of March, with imports up 3.3% after 5.1% in February. That suggests still strength in the economy pulling goods in. Exports were up 2.5%. That's down from the 5.9% we saw in February. And then finally, we've got housing starts. They are down they are up on the month by 10.8%. Could that be weather, or could it be just more confidence from builders out there? 1,502,000 pace for the year. It is building permits that were down 10.8%. So all in all, a fairly strong report suggesting some strength in the economy, which may have some implications for the Fed going forward.
Mike, looking forward to the Federal Reserve later this afternoon. You, of course, will be in the room in that news conference. Do you think it's problematic that we're spending more time talking about the chairman's future than we are about the economy and the future for policy?
Not really. And I've said that I wouldn't be surprised, put it this way, if the first question to Jay Powell wasn't, what's your future plans? Because we know the Fed isn't going to do anything now. They are sidelined, as are pretty much central banks around the world, waiting to see what happens with oil prices, with the war. And don't forget, we've got tariffs coming down the road. So there's a lot of uncertainty about where the economy is going. And strength in the U.S. economy just strengthens the Fed's hand, their ability to sit on the sidelines. We are going to watch today to see if they say there is a two-sided risk. They've been worried about unemployment as the major risk. Are they going to elevate inflation to that level today when they put out their statement? And, of course, we've got the Warsh confirmation vote today. After he's basically confirmed by the committee, then he has to go to the floor, but he will be confirmed there. Do people care what Jay Powell thinks about where the economy is going from here, or does the focus immediately shift to Warsh? That may be answered by what Powell says about how long he's going to stay on the committee.
That is very true, Mike. Thank you. Looking forward to your coverage later on this afternoon. Mike McKee, of course, will break down that decision, and he'll be in that news conference at 2:30 Eastern Time. With us around the table, Tom Porcelli of Wells Fargo. Tom, good morning.
Hi.
Do you agree with the take from Mike McKee that it is not that problematic, that we're talking more about the chairman's future than we are about policy and the economy?
I love that you set it up that way. So, look, here we are with this massive tension, right, in the dual mandate. And I would bet that the very first question that he gets asked today at the presser is about whether he's staying or going. And I think when you have this kind of tension and you're asking that question first, yeah, I do. I think it's a distraction. And so what I would say is, I think it's actually incumbent on Powell to sort of highlight, well, if he is going to stay, why? Something more clear, because I thought we resolved part of this already, right? I thought part of the reason was the indictment. Well, if that's now off the table, then why would you stay? Because I think the risk is that he doesn't give us enough information, and then it becomes a question of, oh, what does he know that we don't? And then it becomes even more of a distraction. So I think he really has to thread a needle here on this.
Do you think it introduces a dependency issue for markets? Because right now I don't see one in the way markets are priced.
So I think, look, I think what markets want is just to get on with this. I think they want to know what the what the next meeting looks like. Is Warsh there, and is it also with Powell as a big shadow cast over him? I think what markets actually want is clarity.
Not to be a little bit flip, but do you think we're focusing on this because right now there's not that much more to say about the Fed?
So I would actually say I like being flipped too, but what I would argue that there is so much to talk about because when you think about the inflation dynamic that's in play right now, and the degree to which the Fed is going to focus on that, when you think about the labor backdrop, right? Like I wrote this in our daily yesterday. I would be stunned if someone asks him about the labor backdrop, when I think that there's a lot of tension in the labor backdrop too. So no, I actually think that there's a lot to focus on, and I think that this is acting as a big distraction.
The reason why I say that is because the Fed doesn't have control over most of what is causing some of these economic disruptions. We're talking about oil prices rising in the Middle East. That's clearly out of their control. We're talking about an employment market that might be as affected by artificial intelligence as anything else. Again, what's the Fed going to do about that? So how much does it really matter where the Fed sits? Aren't they just sort of sitting there being a receiver of all the incoming information rather than a setter?
It's such an important idea. And what I would say is, the Fed in a lot of ways will set the tone on this. I mean, I don't think that they could just be a passive, sort of listener of what's happening. I think they actually have to be an active engager of, hey, this is how we're thinking about how we might want to react to this. And by the way, if the reaction is, hey, we're just going to sit on the sidelines and wait and see how this unfolds, that's fine. But I think that messaging actually needs to be clear.
So then do they come out a little bit hawkish?
No, I think that they're supposed to be they are supposed to be as balanced as possible. Because I do think, so from our perspective, when you think about this inflation dynamic, I think Lisa's spot on. This is a supply shock. There's literally nothing the Fed can do about that. But I think on the labor side of the mandate, I think that there's actually a lot that they actually, I think, should be a little bit more worried about. I mean, the underbelly of labor, I think, is softer than most people appreciate. And that, for us, if you can find this exit ramp, which I think the administration wants to do sort of sooner than later, if you can find that exit ramp, I think that actually would clear the way for the Fed to be able to ease policy later in the year. But so much has to go right between now and then, and I think that's the conversation that the Fed is supposed to be having.
So you think the Fed still has a cut potentially this year when Kevin Warsh comes in?
Yes.
And he's going to use the labor market as his
By the way, I mean, again, to Lisa's observation on AI, we just wrote a note on this just this week, actually. We think that AI is having a marginal impact at best at this point on the labor backdrop. So when I hear the argument of, hey, by the way, we're going to be able to cut because AI is going to usher in disinflation, I don't disagree with that as an idea. I disagree with the timing. It's not going to happen anytime soon. So your best argument for cutting this year is the labor backdrop.
It's funny you say that. It was hardly mentioned in the hearing with Kevin Warsh. The focus was almost solely on the other side of the mandate. Why do you think that is?
Because I think at the end of the day, when you think about inflation, it is a significant issue for Main Street, right? That is just the reality. When you think about the people that are sort of asking the questions, they're going to want to make sure that the Main Street folks are covered in that regard, and I think that's why that actually came up more than even the labor side. In fact, I would say it was far more than the labor side, although as I've been arguing, I think we need to focus on labor.
Mike McKee, tracking the data. Mike, I know you've got more. What do you see?
Well, I broke down the durable goods orders, and it is really interesting. There is a huge jump in equipment that one would assume is made for AI and AI data centers. Computers and electronic products were up 3.7%, the orders numbers, after 1.3% the month before. Communications equipment up 3%. So we are seeing some strength in that area, and this comes as non-defense aircraft orders were down by 21%. So it isn't a Boeing story. We did see an increase of 16.9% in defense aircraft orders, which would also include things like missiles, et cetera. So the war having an impact there. But Boeing didn't carry this one. It is the AI economy that seems to be moving the needle here.
Mike McKee, thank you. We've seen that repeatedly, Bramo, repeatedly.
Yeah, this is the tension that I have. How do you deal with the fact that people say that the labor market could get hit by AI? This is all hypothetical. We don't know if it's going to be disinflationary.
Sure.
We don't know how much it's going to cause unemployment to surge. At the same time that the capital markets are wide open to finance all of these purchases for all of this AI equipment, even at higher prices, because people view it as existential. So that's where the inflationary aspect goes in, with really mixed signals from the employment market. I mean, it's a conundrum wrapped in an
I know where you're
enigma.
going. Don't worry.
Yeah, whatever. Carry on.
So we should build on this. Can you walk me through how your conversations with clients are going at the moment? Because I'm just thinking about the future and whether non-farm payrolls, which was like tier one economic data for financial markets and setting the tone for risk assets, whether it becomes less relevant.
Yeah, I think right now it is less relevant. I mean, you know, if I would order the things that we're talking about with clients, it's basically the Iran conflict, how that's going to impact the backdrop, inflation, obviously on the back of that. AI is coming up in virtually every meeting. Even, by the way, in the very early stages of the Iran conflict, people still found time to ask about AI. I mean, it was coming up relentlessly, which is why when I hear Mike McKee say, hey, CapEx crushed it, yeah, that makes a lot of sense. I mean, I think, you know, Q2 and Q3, we actually have CapEx performing incredibly well. So I think in terms of focus, it makes a lot of sense what clients are focused on, right? It's how is Iran going to impact the inflationary backdrop, and what is the Fed's reaction function to that? And our answer is the same, and it's been the same for the last month and a half. The Fed is going to sit on the sidelines because there's nothing they can do about a supply shock.
We're told repeatedly that the labour market simply isn't strong enough to generate broad-based price pressure in this economy. Do you agree with that?
Well, I 100% agree with that. I think, you know, when we heard this conversation about the Fed, you know, hiking rates, that was for us, that was an immediate fade. To be able to actually hike rates, you would need a demand shock to come into play, right? You would need some kind of wage price spiral dynamic. And how would you get there? The way that you would get there is if there's some additional new fiscal stimulus, not the stuff that's already in tow in the back of tax refunds. You need something new, I think, to really sort of put not just a floor underneath inflation, but to elevate inflation.
So if they introduced a more symmetrical reaction function later on, at least communicated one or attempted to, would you dismiss that, look through it?
No, I actually have a lot of sympathy for that, because I do think at the end of the day that they still need to defend their credibility as it relates to inflation. And so in that context, I have sympathy for it.
Tom, it's good to see you.
Good to see
Appreciate
you.
it.
Thanks.
Thank you, sir. Tom Porcelli there of Wells Fargo on the Federal Reserve, that interest rate decision later on this afternoon, with an update on stories worldwide this morning with your Bloomberg Brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. So recapping the data we just got, the U.S. trade deficit coming in line with estimates at $87.9 billion in March. U.S. orders for business equipment increasing by the most since 2020. The big surprise was in housing starts. They were up nearly 11% compared to estimates that called for a drop of 0.4%. United Airlines and Lyft are teaming up. Starting today, United Mileage Plus members can use their miles to pay for rides. This is the first time an airline loyalty program and rideshare platform have offered direct mile-to-ride redemption in the United States. In sports, the San Antonio Spurs are moving on to the second round of the playoffs after beating the Portland Trail Blazers in 5 games. Philadelphia defeated Boston to force a Game 6 at home, and the New York Knicks are 1 win away from the next round after beating Atlanta by nearly 30 points in Game 5. And that is your Bloomberg Brief. John.
You happy with that?
126 to 97.
Okay.
Incredible game.
Was this a Celsius morning? Is that what that was this morning?
No, I had, what did someone say? I have crude oil in my morning. That's where we're at right now.
Up late at the game last night, just about holding it together. All right, up next on the programme, the IAEA Director General, Rafael Grossi, as US-Iran talks stall over Tehran's nuclear programme. Plus, we'll catch up with Yahira. She's got your morning movers. Bloom Energy soaring after eyeing a massive growth pathway. That name is up by 18% in the pre-market.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
I would love to see everybody say things that are in line with what everyone is expecting. I'd love to see everything come in a way that calms everybody down post the AI stories. Everyone is looking to make sure that this growth is still as strong as it has been, and the bigger you get and the larger the numbers get, the harder that becomes.
That was Sarah Hunt of Alpine Saxon Words on the programme a little bit earlier this morning. Going into the opening about 44 minutes away, your price action shaping up as follows. Equity futures on the S&P just about unchanged, bouncing back on the Nasdaq higher by 0.25%. Let's get you some single names, some morning movers. Yahira has more. Hi, Yahira.
Hi, John. Ahead of tech earnings, this is the power story. Shares of Bloom Energy soaring nearly 19% in the pre-market as demand for power tied to AI data centers ramps up fast, helping the company deliver a beat and a raise. Analysts taking notice, raising their price targets. Moving on to Etsy, the online marketplace. Shares are up more than 7% in the pre-market after it gave a better forecast than expected, and that's because customers are spending more per transaction. And we end on shares of SoFi Technologies. They're plunging 8.5% in the pre-market, and this is really a cost story because other than that, the company delivered strong growth across the board on both revenue and membership, but expenses jumped more than expected. John?
Yahira, thank you. Thanks for the update. Great word this morning. Let's count you down to just an amazing 24 hours. Look at the diary, the calendar, shaping up as follows. Later this morning at 10 a.m., a Senate Banking Committee vote on Kevin Walsh. Later on this afternoon at 2 p.m., we get a Federal Reserve interest rate decision. 30 minutes later, a news conference. Then earnings from Microsoft, Amazon, Meta, Alphabet, and then tomorrow we hear from Apple.
This is really the blockbuster week, and today is the blockbuster day, so stay tuned. We'll be here all day.
Looking forward to it, right?
I think I am.
1:30. Coverage
This is going
starts
to be
at
a really
1:30.
interesting one.
Armageddon.
You sticking around for that? 1:30.
We're not calling it that.
Yeah. I'm
Bloomberg
just
Surveillance, the Fed
gonna-
decides. No.
I'll tune in from home.
Someone didn't sleep last night. Yeah. All right. Let's turn to the war in Iran. President Donald Trump reportedly gearing up for a prolonged blockade of Iranian ports. Peace talks on hold, with the future of Tehran's nuclear program remaining the key sticking point. The IAEA Director General, Rafael Grossi, warning that any new deal that doesn't guarantee the agency's monitoring on the ground will, quote, have an illusion of an agreement. Director Grossi joins us now for more. Director, good morning. Good to see you.
Hello, good morning.
Welcome to New York, and thanks for spending some time with us this morning. I've got a simple question, one I think a lot of people are thinking about. Do we know where the uranium actually is at the moment?
We knew, and we think we know. Most of this stockpile was, for the most part, in a big nuclear compound, which is called Isfahan, near the city of Isfahan. It was there. It was stocked there at the time of the 12-day war last year. So it is believed that the consensus of the community is that it is still there. Even the Iranians have said that it is. So yeah, that's the situation.
Is there any enriched uranium above ground that the Iranians could access? And if so, at what enrichment level?
There could be some amounts on another site, which is called Natanz. But I think both, even the underground and the above ground, which is a smaller quantity, would be accessible in case there was a wish to be there, to go there.
So what do you think the appropriate solution should be? Is there an off-ramp where maybe some of this could be moved to a third-party country?
Well, there is a negotiation. So it is for those negotiating to determine what they want or what they can achieve together in this process. It is, of course, clear that the issue of this material must be addressed some way or another. And there are different alternatives that have been considered, shipping it out, down-blending it. So it is for them to decide. The fact that there is this material is a fact. It is for them to decide. The IAEA, what the IAEA needs to know is that this material is not being diverted. It is accounted for, and we can check where this is.
Does the IAEA have an idea of what survived in terms of centrifuges? How many when it comes to the U.S.-Israeli attack?
Not exactly, because we haven't been able to return there. However, we know these places very, very well. We know the different characteristics of the buildings, and we know the kind of kinetic force that was used there. We do have satellite imagery, so we have a pretty good idea of what might still be there.
We have a ceasefire. Is it part of the negotiations, the talks? Have you asked to get access to these sites, to get your inspectors back in?
Well, I will put it, more or less. I will put it slightly differently. It is, the idea is that when there is an agreement, one essential component of that agreement is that whatever is agreed is inspectable, verifiable. In introduction, you were quoting something I said, that an agreement without verification is an illusion of an agreement. It's a promise. Who knows?
So I know you've been in touch with Steve Witkoff, Jared Kushner.
Yes.
Have you seen or spoken to President Trump as well as the Iranian side?
I've been working with Special Envoy Ambassador Witkoff and with Dr. Kushner, yes.
Are you closer to getting them back at the table?
To getting whom to the table?
The Iranians and the Americans back at the table?
To a certain extent, there is a table, and they have this table, it's on and off, but there is a conversation,
Have you returned to Iran since February 28th?
Myself? Well, the inspectors,
IAEA.
the IAEA, yes, partially, because we have been able to return to the places that were not attacked. Right? So the Iranians are making our return contingent to an agreement.
How much are you concerned that this episode will only reignite nuclear aspirations around the world in countries that see the success of North Korea and, frankly, the success of Iran, at least in the threat potentially to fend off this type of attack again, should they actually acquire a nuclear weapon?
I've heard that, and that is an argument that I frankly disagree with, and I'll tell you why. We've seen all the commotion and even war, destruction and misery proliferation attempts bring. You see this, and I'm not saying whether it was justified or not, I'm just telling you.
In the region. I mean, at what point do you expect to see more of this, considering that there are nations that would like to immunize themselves from these?
We cannot exclude it. I mean, you have a point. We cannot exclude it. The case of the DPRK, I mean, they proliferated in 2006. So 20 years ago, almost 20 years ago, they decided to cross the line. They tested. They expelled the IAEA inspectors a little bit later, I must say, because it's a story that has lots of ups and downs and processes, not dissimilar in a certain sense with what is being attempted with Iran, incentives of sorts, and then at some point that country in a different geopolitical, geographical scenario decided to cross the line.
North Korea, precisely the situation we're hoping to avoid in Iran.
Well, exactly. And right now, they seem to be amping up the stakes, considering that there's a report about how much more they have in terms of their nuclear stockpiles.
Director Grossi, appreciate your time. And we know you're in the running to become the next UN Secretary General, so best of luck with that effort.
Thank you very much.
Thank you, sir. Appreciate it. The IAEA Director General, Rafael Grossi there, on the situation in Iran. The situation for financial markets right now, looking ahead to this a little bit later on this afternoon. What an afternoon we've got coming up for you at 2 p.m. Eastern Time. Tune in later on this afternoon for Surveillance the Fed Decides. Kicks off at about 1:30. The decision at 2 p.m. We'll catch up with Bob Michael of JP Morgan, Sabahat Rajapra of SocGen, Matt Lazzetti of Deutsche Bank, Jeff Rosenberg of BlackRock. Then we've got to look forward to tons of earnings after the closing bell.
Which ultimately may render anything that we hear in the Fed meeting not interesting. I'm sure Jay Powell really hopes so.
Well, the Fed meeting will be interesting as long as Jay Powell gives us a little bit more of a hint of what his future holds.
Pillow fight at the Federal Reserve.
Yeah.
Hey, Stuart Kaiser at Citi.
I don't want that image.
No,
not
interested in them running around in PJs at the Federal Reserve.
No, lumber part rejected. I'd rather have Earn-mageddon.
Hard pass. What was that about?
No, I can't.
He worked hard on that.
Long day ahead on Wall Street. We'll see you later from New York City. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
The problem we've got as an industry is when the government's overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of the net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
It's a multi multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
It's the busiest earnings day of the quarter, 30 minutes to go until the start of trading. I'm Danny Berger. Matt Miller is off today. Bloomberg Open Interest starts right now. Coming up, 80 seconds that could set the market's next move. Alphabet, Amazon, Meta, and Microsoft all report after the bell. Meanwhile, at the Fed, Powell's future looms over today's decision as Warsh waits in the wings. And oil rises again as the White House weighs an extended blockade to force Iran back to the table. So again, it's the busiest day of earnings. More than $14 trillion worth of companies are going to be reporting. Just these four are over 15% of the market cap for the S&P 500. So 4 of the Mag 7 will be reporting. Options markets imply that the stocks will move in a nearly $800 billion direction in either way. They're off pre-market. We had a big decline for tech stocks yesterday, so can they save this rally? Let's go back over to the desk, because sitting there waiting to discuss tech earnings is Bloomberg Tech co-host Caroline Hyde. Hey, Caroline, good morning. So, I mean, it's going to be insanely busy today with all of these reporting. If you don't have an algo doing the work for you, I feel like it's going to be a headache of a day.
Where's your AI agent when you need them? Brace. It's going to be less than a minute and a half if the timings are the same as the previous quarter. You just get in swift succession the 4 key capex drivers, which not only dictate where the stock moves for them, and we could see the options market saying, we could see a swing of $750 billion of market cap among those 4 names. But just think of the ecosystem around them. Think of the run-up in chip stocks. Think of the run-up in memory names, in storage, because that capital expenditure doesn't just benefit you and I using our AI agents, but it benefits the whole amount of companies that need to help build these data centers. So the run-up that we've seen in Micron and others, that could be tested today as well. It's going to have such rippling effects.
It does feel like a really fragile moment. I mean, all you needed to do was look at yesterday, that story on OpenAI, really denting some of the performance of these big cap tech stocks. What does that mean for where the bar sits? Sure, they sold off yesterday, but these are still very richly valued companies.
And it's interesting with the OpenAI story, that's all about return on AI. How much are we seeing growth in the consumption of these things that are in consumer and enterprises' hands? How much are you actually seeing their ability to spend on capital expenditure? So it's an odd one, a balancing act that both Microsoft, Meta, Amazon, and Alphabet all have to get right. They have to show growth in their underlying businesses. With Meta, we want to understand that still the spend on AI is benefiting their advertising, meaning that we are seeing the fastest revenue growth in at least several years. But then you look at what's happening with Microsoft. Are they getting enough return, as well as seeing growth in the cloud area? Because remember, last quarter for Microsoft, the shares tanked. It was the most in like a decade because we were so worried about Azure growth slowing, and it was 38% then. What are we expecting this time? 38% again. So are they going to still show growth in the overall cloud? We're expecting just Alphabet to be up and away in terms of Google Cloud, or more than 50% growth. AWS, are they still managing to be the dominant force in market share? They've got to have growth in cloud, making up basically for the big chunk of capital expenditure they're continuing to spend. But maybe there's less testing of the adoption rates and more questioning of what are their ability to service. With Microsoft, it's always been, we've got too much demand, not enough supply.
All right, Caroline, looking forward to Bloomberg Tech today. It's going to be, again, a very busy one. Bloomberg Tech co-host Caroline Hyde. And elsewhere today, just if the tech earnings weren't enough to set for your agenda today, we also have a Fed decision. The Fed's widely expected to hold rates today at what could be Jerome Powell's final decision as chair. Let's discuss with Michael McKee, Bloomberg's international economics and policy correspondent in Washington. Mike, a hold, but it does feel like the language coming from the Fed in recent weeks has leaned more hawkish.
Well, it leans more hawkish, but at this point, they're not expected to do anything. I am happy to be the warm-up act for Caroline Hyde and Ed Ludlow this afternoon from 2 to 4 o'clock. After 4, I realize you don't care about the Fed because they're not going to raise rates or lower rates this time. We did have a lot of data this morning that gives them some hope that the economy can muddle through all of this. I'll skip right to durable goods orders. They were up 0.8%, which was very strong, driven by computer equipment equipment and supplies. Basically, what we're seeing here is that AI story continuing to power the business spending side of the economy. Trade deficit wider than expected. Housing starts stronger than expected. And capital goods orders, ex-transportation, 3.3%. So what we're looking at is an economy that maybe has the strength to muddle through if the Fed wants to sit on hold for a while. The question is, do they need to raise rates at some point because of inflation? Timetable this morning, 10 a.m., the Warsh Committee vote. That should take about 5 minutes, and we'll know whether he's going to be confirmed because, of course, then he'll go to the floor, and that'll be a fairly routine vote next week, probably sometime. 10 a.m. also, though, Supreme Court's meeting. We could get a Lisa Cook decision if the court has a sense of humor and wants to do something on the same day as the Fed meeting. 2 o'clock, the Fed decision, and 2:30, the Powell News Conference. I would not be surprised if the first question isn't something along the lines of, are you going to stay, now that Kevin Warsh looks like he'll be confirmed, but we'll have to find out, and then we'll wait for the earnings.
Just what we need on a super quiet, chill day is some news from the Supreme Court. Mike, you're going to join us later to have that covered. In case we do get anything, Bloomberg's Michael McKee, and of course, don't miss our special Fed coverage. We'll cover that decision kicking off at 1:30 p.m. New York time. Now, the Wall Street Journal reporting that President Trump has told aides to prepare for an extended naval blockade of the Strait of Hormuz as the U.S. intensifies pressure on Iran. He spoke at a White House state dinner yesterday.
And we're doing a little Middle East work right now, too, if you might know. And we're doing very well. We have militarily defeated that particular opponent. And we're never going to let that opponent ever, Charles agrees with me, even more than I do, we're never going to let that opponent have a nuclear weapon. They know that.
Joining us now is Bloomberg Washington correspondent Tyler Kendall. Tyler, what sort of deadlock does it look like we're in at this moment?
Well, Danny, at this point, it appears that diplomatic progress is stalled because the U.S. has made it very clear that it's not in favor of the latest bid that Iran has put on the table. In fact, you had President Trump posting at 4 a.m. Eastern this morning saying that Iran, quote, better get smart soon, because it's our understanding that Iran has signaled it could be in favor of a shorter-term agreement where we may be able to see a reopening of the Strait of Hormuz in exchange for the U.S. lifting its naval blockade. The thing is, Iran's proposal would postpone any sort of dialogue related to its nuclear program, and the White House has maintained that's just not going to be acceptable. Now, that's led the Wall Street Journal to report that in recent meetings, President Trump has opted to keep squeezing Iran's economy and oil exports by keeping this blockade in place, deeming that less risky than, say, resuming the military bombing campaign or exiting the conflict without a deal. This is, though, leading to questions here about a timeline. The blockade has already been in effect for over 2 weeks, and we're getting closer to that 60-day mark, but it is very evident that this is the course of action that the U.S. is pursuing, at least for now, because, Danny, just yesterday, CENTCOM had confirmed that it did board another commercial vessel in the Arabian Sea on suspicion that it was headed towards an Iranian port.
Tyler, so it seems like the question of actually having a more sustained military action on the ground is taken out of the question. Now it's this blockade. Is there any degree to which it's designed to put pressure on China? Have we heard anything from Chinese officials and maybe them pressuring Iran to make some sort of deal?
Well, actually, Danny, one of the reasons President Trump said Iran originally came to the negotiating table for the ceasefire is that he credited negotiators in Beijing on trying to ramp up that pressure. But the U.S. is now putting that pressure back on China. I'm sure, as you saw just yesterday, the Treasury Department issued a warning to financial institutions to not facilitate transactions between Chinese oil refiners that have links to Iran, as Beijing really does remain that #1 consumer of blacklisted Iranian crude. It's part of what the Treasury Secretary is calling the U.S.'s maximum pressure campaign when it comes to squeezing Iran's economy. In his words, also citing the fact that the U.S. is estimating that Kharg Island is nearing its capacity levels. There was that recent research analysis that came out that estimates that maybe Iran has about 12 to 22 more days when it comes to that oil storage. So we'll see if maybe that impacts the calculus here when it comes to the U.S.'s timeline. But Danny, to bring it back to China, of course, this is all playing in the backdrop of that we're expecting a summit to take place next month in maybe about 2 weeks between President Trump and Chinese President Xi Jinping, just raising the stakes of this conflict even higher.
Tyler, thank you very much. That's Tyler Kendall in Washington, D.C. Let's get a check on markets this morning because, yes, oil is back at 115, but the VIX is at 18. And yes, we sold off yesterday, but it didn't really seem necessarily driven by Iran. More of a tech-led sell-off, which is why you're seeing tech bounce back greater this morning. The S&P is a little changed. The NASDAQ is up 1/3%, but 10-year yields keep grinding higher, as do 2-year yields. They're both back at March levels. Again, an equity market that is unbothered by that and unbothered by the price of oil. Some of the other movers on our radar this morning, some earnings to get through. Starbucks reporting better than expected quarterly results as its turnaround strategy shows progress. And the CEO, Brian Niccol, will be joining this show with Romaine Bostick at the market open, so in only about 20 minutes time. Elsewhere, SoFi reported a 30% annual rise in non-interest expenses, which was well above expectations. Shares getting punished, down more than 9.5%. And memory storage giant Seagate saw steady growth last quarter and gave a forecast that was much stronger than anticipated. The chip makers really getting rewarded for strong earnings, up 15%. On the other side of the ledger, Booking cutting its outlook for travel as demand takes a hit from the war in Iran. CEO Glenn Fogel will be joining us just on the other side of this break. You're watching Bloomberg Open Interest.
Tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Peru is maybe first country inspired to me to how can I use the different ingredients. First time I went to Peru, trying to culture food. I never had this ingredients never used in Japan. Kind of like a wow, you know, and cilantros, chili, garlic, and olive oils. So a lot of good seafoods, complete a different way. Example, they have the fresh fish, but Japan the fresh fish uses sashimi. But Peru use fresh fish, make the called ceviche, cooked with lemon juice. You know, never use the soy sauce. First time I eat this, kind of the, wow. So then after this one, my open eye more, my cooking style that change, combined to Japanese style and another country food, then make noble style.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Let's get you some high-interest stories, a look at what's making headlines around the world. Republicans are weighing a plan to cut taxes on investments by adjusting capital gains for inflation, pitching it as a way to ease living costs before the midterms. Supporters like Senator Ted Cruz says that it could boost housing supply and investment, but the proposal faces legal questions, high costs, and criticisms that benefits would skew to wealthy taxpayers.
And Bill Ackman's Pershing Square IPO raised $5 billion, including a $2.8 billion private placement. That is short of the upper bound of its target at $10 billion, but enough to launch 2 public entities. The move advances Ackman's plan to build a Berkshire Hathaway-style investment firm. Investors get a closed-end fund with no performance fees and bonus shares in the asset manager. And I will be sitting down with Bill Ackman. That happens today at noon on Bloomberg Deals. And the Avis short squeeze looks like it's over. Shares are falling after a wider than expected loss. And a major investor sold millions of shares. The stock, which was once up nearly 600% in just a matter of weeks, is now in a sharp unwind despite a small revenue beat and improving costs. So finally, the shorts went out, not after some pain. Elsewhere in earnings, Booking shares are down in the pre-market, trading after cutting its outlook and warning that Middle East tensions are hitting travel demand. I'm pleased to say that joining us now is Glenn Fogel, CEO of Booking. And Glenn, look, you and the company are used to disruptions. I mean, things like COVID, concerns about the economy, all of this. How would you rank this? Does this have any sort of historical corollary in just how severe this pullback was due to the disruption over the war in the Middle East and geopolitics?
Well, thanks for having me, and it's a good way to start off. You know, I've had the pleasure of being in this company since the turn of the century, literally. So I was there when the first terrorist attacks in 9/11 happened, and that shut down U.S. travel for some time. And then you went to the global financial crisis, really bad for travel. And then you go into things like COVID, bad. For us, things like the Russian invasion of Ukraine, we were very big in Russia and big in Eastern Europe. And then you have the Israel-Hamas thing, and that very big in the Middle East. Now you have this. And there have been smaller things like volcano in Iceland that takes down European travel for 2 weeks. We had that issue. So this is just one aspect of being in the travel business where things are going to come up and it's going to impact short term, but the long term's always the same. And the long term is people like to travel, and travel is always in the long run going to go a little bit better than GDP. So as long as the world economy continues to increase over time, we'll grow faster.
In the meantime, what exactly does seem to be the issue, Glenn? Is it just the fact that people can't get to the Middle East region, or is it sentiment? Is it pricing that's too high that's deterring people from traveling?
Well, I don't think it's pricing primarily. I mean, let's start with the basics. When there are drones and missiles and bombs coming down in an airport, people can't travel there. So right away, you're taking out a lot of travel right there. Then the important thing is that places like Dubai or Doha, these are incredibly important transit airports for people who are going from Europe to Asia or people from Asia to Europe. Really big. That stuff shuts down, and all of a sudden you lost a lot of lift, and now there's going to be an impact on that. Then throw on top of that consumer sentiment, people a little concerned what's going to happen, so that hits it. Your price point is a good one. Price is up. You may not want to travel as much. All those things can compound, and all of a sudden you're not getting as much. But for us, I'll tell you, the thing is, we know in the long run it's all going to come back.
Are you, though, preparing for increased costs? Just because even if the conflict does resolve itself, there's some questions to how quickly the Strait of Hormuz can open. I know in your outlook you have a recovery by year end, but Glenn, what is the tail risk? What is the risk that energy prices stay elevated?
Yeah, it could happen. I mean, everybody gets to guess at this, right? I mean, nobody knows what's going to happen next. I don't know. You don't know. Well, nobody knows. But we know it will end at some point. And we all get to guess when it's going to happen. That's why people have to come up with their best guesses, what they think the long-term, thing is going to be. We think it's going to be sooner. We think that things will be good. We talked in our call last night about second half of the year. We're looking for the recovery. But that's our assumption. Everybody can make their own assumptions.
But what happens if that doesn't get cleared up in the back half of the year, Glenn? Is pressure enough that it gets even worse, or is that desire to travel, does it reign supreme over any headwinds to costs or otherwise?
Your point's a really good one. That demand for travel is so strong. We saw that in pandemic, right? As soon as a country opened up and allowed people to travel, they started traveling immediately and strongly. Remember, we called it revenge travel. That was great. Now, when that's going to happen, we don't know. And if the problem that we have in Iran continues for a longer time than some people are expecting, that's certainly going to impact travel during that time period. But that long term, that's not going to change. Come back to me. Look, when did travel really hit in pandemic? It was March. March 2000 or so. So now we're into now April of 2026. That's all long past, and things have come back really nicely. Why? Come back to me in 5 years and look at where we are versus then. That's that long-term view that we always take. Make sure that we're doing what we can control, which is making our service, our product better for our consumers. I can't control wars and politics. I can't control the price of oil. What I can control is making sure we're doing everything we can. Bring in things like AI to make sure things are better for our consumers. Making sure we're doing all the things that make it better to travel. We'll be there when the travel demand is able to come back because of these exogenous factors.
I know you look long-term, but I want to ask about an incredibly short-term thing because it is showing my own bias, Glenn. I myself want to go to some World Cup matches. First of all, they're insanely expensive, but, got to pony up to see the big matches, I suppose. But even so, just looking at what's happened in New York City, some of the data I was looking at, some hotels are filled like 18% for the World Cup. Some host cities beyond New York are even lower in terms of capacity. Hotels expected a surge, and it didn't happen. What gives?
Well, I think that's some incredible naivete among people who thought that this was going to be this incredible travel tsunami because of World Cup. Look, again, I've been in this business for a really long time, and every time there's a major global event, World Cup, Olympics, pick whatever you like, and everybody thinks there's going to be a tremendous amount of travel, and then it doesn't happen, and people are disappointed. And that's just the nature of how these things are. There's a lot of incredible excitement at the beginning, but then people see the prices, think about the trouble, and it doesn't happen. For us, the World Cup is always going to be a small thing. We're so big and so global, it's a blip. So I understand the disappointment that some cities are having right now, and some cities are getting a little benefit for sure. I mean, Dallas in the summer, let's face it, Dallas does not get a lot of travel in the summer. So any travel they're getting because of World Cup, that's good for them. But I understand it, and of course the prices are very high in terms of those tickets.
I also wonder if there's some political element to this. And beyond the World Cup itself, I, for example, was talking to a really big real estate investor who's saying, I don't know how I feel about hotels at this moment because international travel to the U.S. is still down. People are hearing stories of getting hassled at the border, and they decide, you know what, maybe I'm just going to go to Greece instead of coming to the U.S. Glenn, are you also seeing that divide between domestic and international travel?
Yeah, no, it is disappointing. As an American, I would love to have a lot more business coming to the U.S. for travel and helping our hotel partners, restaurants, all those things do better because more people come to visit. And it's still nowhere near where it was in the past. And I'm certain that part of it is politics. We are happy to see that the Canadian to U.S. has come back a bit, so that's a good thing. But it is an issue because there are a lot of places in the world to travel to. So if we don't compete well, which means promoting the U.S. as a great place to come and visit, our economy is being hurt by that.
All right, Glenn, we're going to have to end it there. Thank you so much for joining us. We appreciate it. Glenn Fogel, CEO of Booking. Coming up, more earnings on deck. Starbucks CEO Brian Niccol on the company's turnaround strategy and growing footprint. You're watching Bloomberg Open Interest.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Bringing you up to them in the news whenever and wherever it happens. I'm Chevrian in Seoul, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Today, the Fed decides.
Regime change at the Fed is a matter of when and not if.
This is not a small matter.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
A series of shocks have interrupted progress.
We've completely priced out a rate cut for 2026.
This is a really tough time for all of us in markets.
There is nothing this institution can do in the face of the shock elsewhere.
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
5 minutes into the start of your cash equity trading day, let's look at some of the single stocks on the move this morning. Robinhood saying that expenses jumped 18% in the first quarter. They also warned that its Trump account push would require an additional $100 million investment, that punishing shares down 12% on the extra cash needed. Fuel cell maker Bloom Energy, they boosted their revenue guidance for the full year and beat Wall Street expectations, up 23%. Man, some big moves today. And Jack Daniel's owner, Brown-Forman, they are falling. It terminated merger talks with Jameson whiskey maker Pernod Ricard. It also got a downgrade from JP Morgan. Shares are off 6.7%. Just a few minutes ago until we get your opening bell. And we are now looking at S&P futures that are negative after yesterday's decline. Not hugely negative, but it is notable. The NASDAQ 100 now only up 0.1%. The price of oil now at the highs of the morning. Maybe that's finally starting to pressure equity markets. We're up nearly 5%. Brent crude trading at $116.65. Meanwhile, your 10-year yield, that is also at the highs of the morning. We're up 4 basis points with both the 10, the 2s, all of them trading back at the levels we saw at March. So there does seem to be some stagflationary risk getting priced in. Coming up after this commercial break, we'll have your opening bell right here on Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Seconds until the start of trading. This is Bloomberg Open Interest. I'm Danny Berger. Matt Miller is off. A sell-off yesterday led by tech. And then today we have the busiest earnings day with 4 of the 7 Mag 7 reporting. S&P is off, starting that as the price of oil has trended higher. NASDAQ futures, those trying to recover yesterday's more than 1% loss, but we are certainly not getting there. It's 80 seconds that will change the market when we hear from the 4 of the Mag 7, Meta, Alphabet, Amazon, and Microsoft. Ring the bell. This is a fun one. Down at the New York Stock Exchange, you can see Bill Ackman and the Pershing Square crew celebrating their $5 billion listing of a closed-end fund and Pershing Square itself. Bill Ackman will be joining me at 12 p.m. noon today on Bloomberg Deals, so stick with us for that as we discuss the fund itself and what it took for him to list it. It's been a long road for Bill Ackman to get to this point. Down at the NASDAQ, we have the Women's Bond Club. They are a mentorship group for women in finance, which is a wonderful and important thing. So we're happy to see them celebrating down at the NASDAQ. All right, let's get to the big cap tech names that are going to be reporting. They are off pretty decisively this morning. Leading the losses, Alphabet and Microsoft, both of those are down more than 1%. Meta, Amazon, those are down 0.6%. So again, it is the biggest day of earnings season. More than $14 trillion worth of companies are going to be reporting, and this is the bulk of them, about 15% of the market's market cap. The focus will remain on AI spending, budgets, and cloud or advertising growth. So what will it bring us at the end of today's trading session? Let's go ahead and bring in Franklin Templeton, Senior Investment Strategist, Katrina Dudley, who's been patiently waiting at the table. Hey, Katrina, great to see you this morning. Okay, big tech has a bad day yesterday, but I have to say it feels like it's really fragile. The fact it sells off just on this Wall Street Journal story that maybe OpenAI isn't hitting its internal targets.
You're exactly right. The comments from Sarah Fryer about the concerns that you were having about the growth trajectory is putting in place questions regarding the CapEx. And if you look at those 4 names that are going to be reporting at the end of today, a lot of the questions are, will they keep their CapEx guidance? And how sustainable do they believe? So I do think that they're going to have to go out on the offensive in terms of explaining to investors, probably once again, why that investment continues to make sense. And I think if they do a solid job on explaining those ROIs, I do think that the stocks will work.
How important is that CapEx, not for the companies, but for the rest of the market, for the chip makers, for infrastructure, things that have been bid up really rapidly? It almost feels like this weird dichotomy where they don't want to be too aggressive in CapEx because they need to please shareholders, but if they're not overly aggressive, then the rest of the market suffers.
It's such a quandary for a CEO, and I've spoken to so many of them, particularly I used to cover the industrial space specifically, and you used to talk to them, it's that last unit of production before a downturn that is the most profitable. You still need to manufacture it because you actually don't know it was the last unit until the downturn happens. And if I have a look at CapEx spending, you continue to want these companies to invest because they've got revenues backing it. So take a look at Anthropic, obviously not listed yet on that kind of IPO schedule. They added in the first quarter alone $20 billion of ARR. And so that $20 billion needs compute to support it. And additionally, what we're starting to see in terms of the need for greater capacity than we probably expected is this credit and token usage. So it has a revenue implication because we're all paying for higher credits and tokens, but it does require a greater amount of compute to support that additional revenue.
And it's just been such a dominating factor in this market, even these private companies, which soon will be public. It feels like we're back in that environment where it is just the pillar of tech that's supporting things. I thought this was also supposed to be the year of broadening out, but then you get a day like yesterday where tech can take the overall market down.
So if I take a look at earnings expectations for the forward year, and I look, there's at least seven sectors that are going to grow their earnings greater than 10%. So I think if you're looking for a broadening narrative, the fact that that's such a broad group of companies, but as you've correctly identified, tech is still the leader of that pack at 27% earnings growth versus just over 10 for the overall market. So I think tech continues to lead the way, which is why when you get concerns over the pace of earnings growth, the entire market kind of sells off. It's like, they sneeze and everyone catches a cold.
Yeah, so today is just incredibly important then, just given that.
I just don't think you can underestimate how important these narratives, but I do think that the companies understand that, but we're all going to be listening so carefully.
Yeah, it's, again, if you don't have an algorithm doing your trading for you today, it's going to be an interesting one. Hey, Katrina, you're going to stick around with us. Katrina Dudley from Franklin Templeton. I want to get a check on Starbucks shares this morning because they are nearing an all-time high. They reported a strong second quarter sales. Shares are up almost 4%, or now they're up more than 4%. Again, it's a turnaround, and it's also a question of the consumer. Clearly, there is still healthy spending. We've seen that in the macro data. So Starbucks shares up 4%, and Bloomberg The Close anchor Romaine Bostick and Starbucks CEO Brian Niccol join us now. Romaine?
Welcome to our audiences across all of our Bloomberg platforms worldwide, television, radio, our partnership with YouTube. Romaine Bostick here, joined now by the CEO of Starbucks, Brian Niccol, fresh off the company's most recent quarterly report, 7.1% same-store sales growth in the U.S. That's a huge turnaround from how this company had been performing in the years past, Brian. When you look at that growth in the most recent quarter, was that based on transactions? Was that based on volume in the store? Was that based on higher prices?
Yeah, well, good morning, Romaine. And yeah, look, we had a terrific quarter around the world. And yes, the U.S. market definitely stood out for its performance. As you mentioned, we did 7.1% comp in sales. And the thing that is really exciting is it was driven by transactions. So a little over 4%, which just basically means more people were coming into Starbucks every day. And, what I think that really speaks to is the right menu offerings, the right service experience, and then obviously having an entire environment where people felt like they could actually experience the coffee in the moment or the drink in the moment that they wanted to have in their local community.
When you look at some of the momentum that over the last couple of quarters, 7% in the most recent fiscal quarter, fiscal Q1, I think it was 4%. There are a lot of questions about the full year guidance that you gave, which seems to suggest a potential slowdown in the second half of the year, 5% comp sales growth, and in terms of consolidated revenue, you're guiding to flat. What's going on there?
Yeah, well, so look, if you look at the first half of the year, we ended up being about a 5%. And when we look at the back half of the year, we took up our guidance from 3 or better to 5 or better to finish the full year. And, the good news is we had great momentum in the second quarter. That momentum has continued into April, and we'll see how it plays out throughout the year. Obviously, there's a lot of, different things happening in the world right now that we want to make sure we are prepared to handle, and we don't want to get ahead of ourselves, but we're optimistic about what the business can deliver, and we're very optimistic about where Starbucks goes from here. On the guidance, obviously, the good news is we think we've got the right plans to drive the top line. We've got the right plans to work the cost side of things so that we'll also see it flow through. So we're really excited about where we are.
Have you seen any impact yet on consumer behavior because of what's been going on with regards to higher energy prices, inflation?
We've not seen that affect the consumer behavior at Starbucks. And the thing that I'm really excited about is our sales growth and our transaction growth was supported by just about every income cohort. We had growth in every income cohort. And I talked about this a little bit in the call, which I really do think is something to remember, which is when Starbucks does the experience right, our coffee house leaders, our baristas create that moment of connection, that craft experience, the customization that our customers want at the speed at which they want. People come back saying, you know what, that was well worth it. And, I think the fact that we can give you just a little touch of luxury, regardless of where you fall in the income scale, people appreciate it, whether it feels like a little bit of a splurge or whether it feels like, an affordable premium experience. In both cases, people are walking away saying, you know what, that was really well worth it. I want to do that again.
When you came into this job in late 2024, you set out to revamp the stores, revamp the menu, revamp the customer experience. I know you've talked in the past about kind of grading progress on 5 metrics, largely around that customer experience, product availability, et cetera. Are you meeting those targets?
We have made tremendous progress. So you're referring to what we call our GROW report, where it's got 5 key metrics, and our stores are measured on those 5 key metrics. The thing I love about it is it's very simple. It's very straightforward. Our teams now know what they're accountable for. And not surprising, it's driven around, hey, great customer service, make sure you're in stock, make sure you're staffed, right? Make sure you do it with the right speed and make sure everything is food safe and that you give people the experience that they want. And we ultimately call that the 5-shot scorecard. And we saw a 30-point improvement among our stores getting 4 shots or better. And the reason why that's important is once you get above 3 shots, 3.5 shots, we see that play out in sales performance. And so the fact that we've made such tremendous progress is really exciting. And the thing that I love is what's probably most important about that scorecard is it gives us clear feedback to know when we're doing it right and where we have the opportunity to be better. And that's really going to be the key source of how we coach and grow in our stores going forward.
There's another big test, though, coming in your turnaround plan, and that is the rollout of basically the scheduled ordering system. I think that's supposed to debut on May 11th. The idea that people can sort of order ahead, pick up their order in a specific time frame. And I am just curious as to, how sort of the beta testing of this went. Are the baristas actually prepared for this? And how do you compare and contrast it with some of the previous pickup programs that Starbucks had that created some bottlenecks?
Yeah, well, look, the whole reason why we're doing this is to make sure that we are solving that bottleneck issue. So the good news is we don't have a demand problem when it comes to mobile order, right? Our customers want to have that access point. The good news is with our Smart Queue technology, we've done a much better job of sequencing orders between the cafe, the drive-through, delivery, and mobile order pickup. And now what we're doing is just adding another way for our customer, frankly, to have the experience that they want, which is, hey, look, if I know I'm going to be at Starbucks at 7 a.m., an hour in advance, I can put that order in. The thing that's great about that is our partners now know, hey, I've got an order that needs to be ready at 7 a.m. Our customer knows that order is going to be ready for them at 7 a.m. rather than going just into the app maybe 10, 15 minutes beforehand and finding out what time that drink may be ready. So it syncs up the customer with their drink. It gives our team members, our partners, the ability to really see what is coming down the pike. And in the testing that we've done, the people that participate in scheduled ordering, huge satisfaction for them, and our partners love having the clarity of knowing what's coming. Because remember, in the cafe, you can see the line. In the drive-thru, you can see the cars. In mobile order, it's hard for our teams to see what's actually coming. So the ability to have people schedule their order is a win for the customer, and it's a win for our partners.
You've made a lot of changes to the menu, and I am curious because I felt like a year or two ago, you talked about this idea of actually reducing the number of SKUs by about 30%. And you did get rid of a lot of things like the English breakfast latte and a few of the frappuccinos. But I was looking at what you've introduced, energy refreshers, ube, espresso creams, cherry chai, matcha, protein cold foams. I'm looking at a lot of things. Have you actually reduced the number of SKUs or have they actually gone up?
So we still total have fewer SKUs. And the thing that I love about the innovation that we're doing, it's consistent with how we actually build and make our drinks, right? So if it's a tall, you're going to get 2 pumps of or 3 pumps of whatever flavor that you're looking for. And it's going to be consistent regardless of whether it's cold or hot. It's going to be consistent. So what we did is we standardized the builds so that it gave our partners clarity on how to make these products. And, the other thing I love about this is a lot of the products that we've come out with that were probably like nostalgic or, favorites from the past, the ideas came from our partners saying like, hey, you should really think about doing X. And right now we're having tremendous success with mango. And that was one of those things where after visiting a bunch of stores, we heard it over and over again, like, hey, I think we need a citrus flavor at Starbucks. And, I'm happy to say the menu and marketing team were able to deliver on that for our partners.
This has added, though, some complexity, and your CFO, Kathy Smith, talked about this on the call, that some of the margin contraction that we saw in the most recent quarter was partly due to some of this product innovation. I mean, we talk about some of these drinks, the Tropical Butterfly Refresher. I've seen these things. They're works of art, but it takes a lot of labor and skill to go into that. So how do you sort of square the circle with offering these more flourishing products and at the same time maintain your profit margins in order to do them?
Yeah, look, I think this is one of the things we still have work to do on, which is making sure that the supply chain and the technology that supports the supply chain results in us being the most efficient we can be with our ingredients, the timing of when they show up, and the timing of how we replenish. And so we're working on that. We're making great progress. By the end of this year, we will get to a place where we'll have 90% of our stores having daily deliveries and 24-hour replenishment. And the reason why that's important is that supports then each coffee house uniquely with how they are ultimately, how many of those Tropical Butterfly refreshers that they sell can then be supported accordingly. So that's what Kathy was referring to, is we're still working through how do we manage that supply chain better? Because, look, we have a really simple principle. If the product or the food, or I'm sorry, if the drink or the food is on the menu, it needs to be in stock. And then the supply chain has to support the ability of our partners to be in stock with those items.
Brian, before I let you go, I do want to ask you, about a week ago, you announced about a $100 million investment in a new Southeast campus down in Nashville, Tennessee. 2,000 jobs or so are said to be going there over the next 5 years. That almost rivals the size of what you have out there in Seattle right now. What is the impetus behind this? I know you sort of framed this as more of sort of embracing a region where we're seeing growth, but is this maybe, people are going to draw comparisons, Boeing leaving Seattle and other companies sort of moving out. Is this the start of an exodus from Seattle for Starbucks?
Look, for us, this really was more to do with being strategically smart about putting the resources we wanted to put in the Southeast to take advantage of, frankly, a talent pool that's being created around procurement, technology, and then also the reality that, hey, we have the real opportunity to grow our business quite a bit in the Southeast, and we wanted to get a presence in that part of the country. Seattle continues to be our global headquarters, and I would just point out, like, there are a lot of companies that have multiple offices to support their business in the world that we operate today.
Brian, really appreciate you joining us. Congratulations on the quarter, and we'll talk again soon. Brian Niccol there, the CEO of Starbucks. Back to you, Danny.
Romain, thank you so much for that excellent conversation. Romain Bostic, co-host of The Close, of course, alongside the Starbucks CEO, Brian Niccol. Thank you both very much. Let's bring back into the conversation Franklin Templeton Senior Investment Strategist Katrina Dudley. Katrina, the space of consumer discretionary as a whole. So far this year, most of the sectors are up. The ones that are down are healthcare, financials, and consumer discretionary, despite the fact people are spending and the sales data has been strong. What's been the headwind for the sector?
I think it's actually the confidence number. I mean, that confidence number is at all-time lows. We've never seen it this low.
University of Michigan one.
Exactly. So if you take a look at that, what's driving it? First, you can't, geopolitical tension, the Iranian war. We're seeing at the pump, people are driving their cars in and they're seeing the tank. It's much more expensive. And if I look at from a financials point of view, 55% of consumers are talking about the fact that they're seeing financial stress or, the deterioration in their financial circumstances. And then finally, you have kind of jobs where people are not as confident about the jobs market. And I think those negatives are actually really driving that negative on the confidence number. However, I do think that one of the things that we talked about earlier in last year is this bifurcation in expectations, where you've had like certain depending on where you're leaning, you're a little more negative because of who's running the country. And I just wonder how much we're overemphasizing that University of Michigan number, because when I talk and we listen to people like Starbucks, Starbucks to me, while it's still accessible luxury, is still a luxury item. And you look at the numbers that we just heard then about, same-store sales growth, not just pricing, but transactions. Right. So the consumer is turning up and is spending, and that's the kind of the dichotomy. So we may be seeing seeing negative sentiment. We may be seeing some signs of financial deterioration, but as you're right, they continue to spend.
I just wonder at what point it stops, because it never has, and it's the question everyone's been asking. Even things for flights, we were talking to the booking CEO, and the hotels around the World Cup were insane. The cost of airlines, of flights, are so high right now, and they're raising prices, and the likes of JetBlue are like, we raise prices and there's still robust demand. It hasn't made a dent. Is the sky limitless? It's so boggling to me that people continue to be willing to spend and don't push back at all.
I think that people, we talk about COVID as a period, and I do think that, we had that revenge travel, and we talked about that, and I think that there's still a bit of a legacy that's coming out. It's not revenge travel, but it's more this idea, if I don't do it now, when? And so if I'm looking at travel, I'm saying to myself, time is never my friend. I want to travel younger and earlier, even as a retiree. So I think that they've just got that consistency of the experience. And then secondly, I always wonder in a time of war, it really does make you value family. So maybe some of this travel and these trips are trips home to visit family. And when you do that, you definitely don't see hopefully you don't see a big spike in hotel demand, because I'm hoping that they're staying at home and really forming those connections.
I love this as a thesis, Katrina. We all need this bright, sunny outlook. Thank you so much for joining. Always love your time and having you here. Franklin Templeton Senior Investment Strategist Katrina Dudley. Coming up on the show, AI spending, cloud growth, and ad revenue, the major sticking points for today's Mag 7 earnings. We're going to more on that next. This is Bloomberg Open Interest.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch
Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome back to Bloomberg Open Interest. Stocks are trying to head higher this morning, but they're facing a headwind of higher oil prices off the back of some reporting that perhaps there will be an indefinite blockade in Iran. At least that's what the White House is preparing for. So the Nasdaq goes positive, but the S&P down for another day. The Russell 2000 down 0.2%, as is the Dow Jones. That's down 0.5%. Brent crude, this is on the highs of the morning. Look, it is up 5%, 5.33%, and stocks are only down 0.1%. It feels like it doesn't matter. Will it ever make a difference? The thing that might make a difference today is all of the big cap earnings we're going to be getting. Microsoft, Meta, Alphabet, Amazon. 4 of the Mag 7 are going to be reporting. That's 15% of the market cap. After they sold off yesterday on this OpenAI report, a lot is at stake in about 80 seconds that they report. Again, they are likely to report in quick succession of each other. Bloomberg Tech co-host Ed Ludlow calling today Earnmageddon, is that right, Ed? Earnmageddon?
Yeah,
he joins us now. I feel like
Earnmageddon.
that also implies that it's going to be like crazy and bad and everything's going to sell off if it's something like Earnmageddon.
Well, you know, capital expenditures in that context is still the swing factor, right? Because that is what is common between all four. But I think the way you framed it, the market of yesterday with the OpenAI report from the journal that they're not hitting internal metrics, it's put the market's focus more on return on investment, right? That we will get capital expenditures numbers. The market always wants those hyperscalers and Meta to project confidence, but they also want to see revenue growth and they want an expanded outlook or forward guidance. So that's really the framing, and those numbers across those four are very big. You know, very interesting in how you frame it as a sort of weighting basis of the indexes, right? If you think about where we are right now, from the March bottom or low, and the rally we've seen in equity markets, the S&P 500 hitting records, the NASDAQ 100 hitting records, strip out NVIDIA and Alphabet, Amazon, and Microsoft largely account for that, right? And so there is a lot of jeopardy, and maybe that's why Armageddon is the term we're using.
I also wonder that this comes on the heels of various reports, Microsoft and others, Meta, I believe, about letting go more of their staff. And will that be discussed at all? Is it a reprioritization, or is it some admission that they're trying to get costs under control at the same time they're doing this huge amount of spending?
Well, just last week was when those stories broke, right? Meta is cutting about 10% of the workforce. That was reporting from Bloomberg, citing internal memos. Microsoft is planning, I think, 7%, but as voluntary redundancies or buyouts. So different mechanisms to achieve the same result, and framed very much on needing to focus where spending is. Headcount is a serious factor. From a payroll perspective, et cetera, but you know, probably will come up. At the same time, the change in position from when you and I were speaking in New York a week ago is because of that Wall Street Journal report on OpenAI, the revenue growths will be examined much more closely. That's what I'm reading on the Bloomberg terminal. And for what it's worth, in 80 seconds when 4 earnings hit at the same time, that's tricky to manage. But the earnings calls at the same time is equally as problematic, right? Because you tend to get more specific commentary on the trade-off between spending and growth on those calls. Good thing the Bloomberg Terminal's live transcription is so good. You can have all 4 earnings calls on 4 screens if you've got a 4-screen termy setup, which I do. I don't know about you.
I guess I'll need that. You're going to have to share it with me, Ed. This is the thing. Like, if you are a trader and you want to move around depending on what they say, it's so difficult. I mean, surely, I wonder if that makes any difference in behavior around these earnings, that everyone's just going to let their algos go off and decide how they handle these earnings calls.
Yeah, I mean, the one way I think I would look is how broad the reaction is, right? So after market, also look at the supply chain, NVIDIA principally, but the other GPU providers and the memory names. You brought up the Strait of Hormuz in the intro. The environment with capital expenditures is you need to spend them because of the scale of the required infrastructure. But the level of CapEx is also determined by the cost environment. And because of what's happened with the war in Iran, memory, but also, you know, the underlying supply chain for chip manufacturing, helium is something we talk about all the time. That's worth bearing in mind, and it will be discussed on the calls, not necessarily in the earnings statements.
All right, Ed, thank you very much for joining. That is Bloomberg Tech co-host Ed Ludlow. I don't know, Ed, you might get a few messages today asking for you to share your earnings transcript dashboards, because it is going to be wild after the close. And by the way, a Fed decision before that, too. Coming up in the next hour, Mark Thumser from MUFG says the war is underpriced in markets. Plus, we'll speak with the Marsh CEO, John Doyle, about earnings and insurance risk from the Iran war. And TKNG's Neil Grossman on Powell's last stand today. This is Bloomberg Open Interest. World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies.
With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
ABC News. I'm Brian Clark. Gas prices in the U.S. are at their highest point in 4 years as the war in Iran continues, and that's causing cities like Pittsburgh to reevaluate some municipal projects.
Gas prices go up. If paving costs go up, we will pave less streets next year because it will cost more per mile.
That's Dan Gilman, the mayor's chief of staff, and the White House confirms that President Trump met Tuesday with oil and gas executives, but says it was a routine meeting. Today, Pentagon Chief Pete Hegseth will face questions from lawmakers on Capitol Hill for the first time since the war began. He'll be there for a budget hearing. Argument at the Supreme Court this morning about the cancellation of protected status for immigrants from Haiti and Syria. ABC's Peter Haralambous has more.
The Trump administration has argued the immigrants were never intended to be permanent residents and that the conditions on the ground in both countries are sufficiently safe for them to return home. But lawyers for the immigrants argue the conditions in both countries are far from safe, with the State Department warning Americans not to travel to either country.
Former FBI Director James Comey expected to surrender today to federal authorities. He's facing 2 criminal charges, 2 felony counts for allegedly threatening the president with an Instagram post of seashells arranged to spell 8647. ABC chief legal analyst Dan Abrams says this may be the weakest case brought against one of the president's enemies.
This is going to be a ridiculously hard case for prosecutors to win. He has to have intended it to have been a threat for this to be a successful prosecution.
2 people were transported to hospitals after suspected tornadoes powered through North Texas. Mineral Wells Fire Chief Ryan Dunn says,
"We had significant damage, major damage in different parts of the area of the northeast sector of Mineral Wells."
You're listening to ABC News. King Charles continues his U.S. visit. He and Queen Camilla will visit New York City today, including a stop at the September 11th memorial. Meanwhile, in London, police are calling it an anti-Semitic attack after 2 people were stabbed in a neighborhood with a large Jewish community. A 45-year-old man's been arrested on suspicion of attempted murder. Testimony will continue today from Elon Musk, who is suing Sam Altman. Musk says he was tricked to invest in Altman's OpenAI as a nonprofit, but Musk says that Altman all along intended to turn the company into a for-profit business. New polling shows a tightening race for Senate in Texas, says ABC's Jim Ryan.
Senator John Cornyn and current Texas Attorney General Ken Paxton have both been courting the support of President Trump, but so far Trump has stayed out of it. While the GOP candidates head for a runoff next month, Democrat James Tallarico leads both in the latest Texas Public Opinion Research Survey in a hypothetical head-to-head matchup.
Big step towards NASA's space exploration goals as most of the core stage of the Space Launch System for Artemis 3 was transported by barge to the Kennedy Space Center. That mission set for 2027. The scrutiny continues on gambling in college sports a day after Texas Tech announced its star quarterback would enter a gambling addiction treatment program. The NCAA permanently banned 2 Fordham University men's basketball players for their roles in a point-shaving scheme. I'm Brian Clark, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube as well. We're streaming live at Bloomberg.com as well here. Stocks a little bit trading off here in the marketplace here. We'll keep an eye on that. It's a busy day. We've got Scarlett, tons of earnings after the close. Carol Master and Tim Stenovic, they will cover it all.
They have their hands full because you've got 4 of the Mag 7 names reporting today after the close. Alphabet, Meta, Amazon, Microsoft, Apple is tomorrow. It's a huge, huge part of the NASDAQ 100, of the S&P 500. Never mind the fact that you have a Fed decision today as well.
Yes, so we're going to be all over that throughout the day, so stay here at Bloomberg. This is Bloomberg Intelligence, Scarlett Fu and Paul Sweeney. Coming up, we're going to check in with Enda Curran, get the latest on the Fed decision and on the vote for potential Fed chair elect Warsh. So we'll get the latest.
Is that the title? I guess so, right?
I think that maybe 10 a.m. That's kind of some of the reporting I'm seeing. We'll see if that plays out. Tyler Kendall, Washington correspondent for Bloomberg News, will give us the latest on Iran as well as the King's visit to Washington, D.C. yesterday. Kim Forrest, founder and CIO of Boca Partners, will get her thoughts on the market. So a lot coming up in the next 2 hours. We'll get you set up for these markets and for the earnings after the close tonight. Right now, let's get a reset. Bloomberg Business Flash with Alexis Christophers.
All right, thanks very much, Paul. And oil is spiking. As a result, we have got stocks and bonds lower. The S&P 500 down about 10 points now. Dow Jones Industrial Average slipping about 184. The NASDAQ Composite down 41. This, of course, ahead of the Federal Reserve's meeting later today, possibly the last one with Jerome Powell as Fed chair. And consensus is that they're going to hold interest rates steady at the meeting today. And, of course, we're going to hear from those big tech heavyweights after the closing bell, including Amazon and Alphabet. The big story, though, today is really over in the oil pits, where Brent crude is up 5% at $116.79 a barrel. West Texas Intermediate crude up nearly 5% at $104.81 the barrel. The Bloomberg Dollar Spot Index now up nearly 1/3% at $12.0130. And we've got the 2-year yield at 3.89%, the 10-year at 4.40%. Quick check on Bitcoin. It's up about 1/4% at 76,636. Spot gold down more than 1.5% at $45.23 the ounce. And just want to call out Starbucks. The stock is up more than 6.5% after that better than expected earnings report. And ditto for Visa. That stock up 8% now after a blowout earnings report. And that's your Bloomberg Business Flash. Paul and Scarlett.
All right. Thank you so much, Alexis Christophorus. We do have some headlines here coming out, Paul, because it is an opinion day for the Supreme Court. And the High Court has ruled that it is curbing the use of race in drawing voting districts.
Yep.
going back to that gerrymandering idea.
Yeah, so we'll see in that. So we'll have some more reporting on that. Again, the red headline coming across the Bloomberg terminal. Supreme Court curbs use of race in drawing voting districts. And we've seen both parties, over the years.
Yeah.
It seems like it's more so than it's ever been, just kind of gerrymandering and redistricting voting districts. And it seems like both parties are doing it more aggressively than ever. So.
Right. It originally started off as something that the Republicans did, but as of late, the last year or so, you've seen the Democrats do it. In this specific case, the court has ruled that a majority black Louisiana district is unconstitutional. So the Supreme Court is restricting the use of Voting Rights Act in map drawing. Again, the Supreme Court curbing the use of race in drawing voting districts. My guess is this has an effect right away, so this has implications for what's going to happen in the...
Yeah, and again, this is a midterm election year, and the expectation typically in a midterm election year is the party that is not in the White House tends to gain a little bit of, gain some seats here, and that is the expectation that the Republican Party may win control of the House. And now there's even some discussion about the Senate may be in play. So we'll have to see how that plays, and we'll see how this Supreme Court ruling impacts those elections.
And we should mention as well, since we're staying on Washington, the Senate Banking Committee is also voting to confirm Fed Chair-elect, and I like the way that you put that, Kevin Warsh. That began at 10 a.m. And if you wanted to watch the proceedings, it's available to you on the Bloomberg at Live Go, L-I-V-E Go, on the Bloomberg terminal. Tom Tillis was kind of the last holdout. He's the senator from North Carolina who had said that he was not going to vote for Kevin Warsh or in this, hearing until the investigation, the DOJ's investigation into the Fed was fully resolved.
Right, and it sounds like that they do have an agreement now, and so now this voting can go forward, and we'll see whether he'll be able to participate in the meeting this afternoon. But in any case, that process is moving forward, which I think is positive for the markets in general. I mean, markets like to see a nice continuity in the Federal Reserve.
I mean, the big question now is whether Jay Powell will step down as well, because his term as chair ends in mid-May, but his term on the FOMC, on the board, goes on until January 2028. And what kind of assurances does he need in order to step down? And of course, this is something that everyone's going to be listening for at the FOMC presser, which begins at 2:30 p.m. Eastern time. Of course, we will be covering right here on Bloomberg Radio. The Fed decides. Tom Keene, John Farrow, and Lisa Bromwitz will be all over it.
Yep, that's starting at 1:30 p.m. The Bloomberg coverage, 1:30 p.m. Wall Street time. They'll get the statement at 2 p.m. and then the press conference at 2:30. Again, Supreme Court ruling today curbs the use of race in drawing voting districts. Let's get some perspective on what all this means. June Grasso is our legal analyst at Bloomberg here. June, talk to us about just the background of this case and then maybe what we may know about this ruling here.
So this is obviously a Louisiana case, and Louisiana has a third of its population is black. So it redrew, after a court battle, it redrew its maps to reflect that. And then it came before the Supreme Court, and the question before the Supreme Court basically is whether you can use race in determining these voting districts. Now, the Supreme Court has eliminated every other kind of challenge, basically, and what it did is, for example, you can't challenge gerrymandering for political reasons. So you could only at this point challenge it for racial reason. And now it appears that the court has curbed the use of race in drawing voting districts as well. This basically, I think it shatters the Voting Rights Act of the civil rights law that was so hard fought to get voting rights and to ensure voting rights for people of color. And so the Supreme Court already has taken away a section that required certain states to get pre-clearance before they redistrict, and that was a case called Shelby County versus Holder. And now in this case, it appears they're also getting rid of the possibility of challenging gerrymandering based on race. This could affect, I think people have said, as many as 12 different congressional districts throughout the country. So it's a 6-3 vote because the 3 liberals are in dissent. This court has really dismantled voting rights over and over again. So this is shocking in a way, but it's not a surprise after hearing the oral arguments.
So
what?
I'm sorry.
Oh, no. So what implications does this have beyond Louisiana? Because I'm sure plenty of states are watching this carefully.
Yeah, as I said, there are I think around 12 different districts that could be affected by this. And of course, they're mostly, I think they're all Democratic representatives in those districts right now. So if you take out the use of race and it's gerrymandered again, you're going to have less Democratic districts, most likely, less districts where people of color are in the majority. So I heard one election expert say that this is just sort of like Armageddon for voting rights if they decided to do what they did here. And it was written by Justice Alito, and I haven't gotten through it. It's written by Justice Alito, so you can imagine that it's very, very strict and very, very, he's always votes against voting rights. So
there you go. All right, June, thank you so much. Appreciate that. June Grosso, Bloomberg's legal analyst. Again, the Supreme Court curbs use of race in drawing voting districts. Another red headline, Scarlet crossing the Bloomberg terminal here. Warsh Fed chair nomination clears Senate panel vote. So after much delay, moving very quickly here. So we want to bring in Enda Curran, Bloomberg Fed and economics reporter. Enda, it looks like we're making some progress here, or the Congress is making some progress on getting Mr. Warsh on board.
Yeah, so after many months of protracted negotiations, we finally have had that committee vote now. So this moves Mr. Warsh's nomination out of the Banking Committee, and it should go on to the Senate floor for a full vote. Probably at some point soon. Mr. Powell, current Fed Chair, Mr. Powell's term ends on May 15th. Whether or not Mr. Warsh gets his full vote by then, or whether he's a few days over, it doesn't really matter very much, because the next policy meeting after today isn't until the middle of June. So today just really cements that after that extraordinary succession drama we've had since January over the DOJ investigation and all the rest of it around all the rest of the questions around the Fed, Mr. Warsh has now cleared that critical vote and is on the way to be the next chair.
Right. The question now is what happens with Jay Powell's seat. His term as chair ends on May 15th. Do you think this is something he's going to address at the news conference at 2:30, Enda?
I think it'll be hard to avoid it, Scarlett. As you say, his term as chair will end in the middle of next month, but he's entitled to remain on as a governor at the Fed until January 2028. Typically speaking, Fed chairs head off and enjoy their retirement or head into the sunset. But Mr. Powell made it clear, was maybe last month, I think it was, in his press conference, that he can't leave his governor role until the specter of that DOJ investigation into him and the Fed is cleared in all finality. Now, there's a debate over whether or not what the DOJ did last week in terms of dropping their investigation does meet that threshold of finality, because two things. A, they continue to appeal against the Fed's court win that quashed the DOJ subpoena in the first place. That's one thread on this. And the second part of it is the Inspector General investigation into the Fed, into the cost of the building renovation there, is expected to report at some point over the summer. And the DOJ made it clear they have a threat that they could renew their investigation depending on what that particular finding from the IG throws up. So from Mr. Powell's point of view, he may want to hang on till all of that's clear. Critics would say he should just move on because it risks sort of stoking political resentment and political criticism of the Fed. But he's sure to comment on it, I would imagine, at his press conference later today.
Independence of the Fed, where is that discussion these days, Enda?
It's become very fraught, very divisive, of course. You know, Mr. President Trump continues to hammer the Fed over interest rates. He wants them brought down quickly. He's even said that he would be disappointed if Mr. Warsh, if he gets finally confirmed as chair, doesn't get a move on pretty quickly as well. So that political pressure continues to be there. We await, of course, the outcome of the Supreme Court ruling on the Governor Cook case. That's going to be very important. We'll wait and see what Mr. Powell signals about his future. That's going to be very important. But I think between now and the end of the year, there will be a lot of focus on how will Mr. Warsh respond to political criticism? Will he kind of stand up as a heat shield for the Fed, or will he be seen as buckling under Mr. Trump's pressure on the one hand? And on the other hand, how do the rest of the policymakers react, including Mr. Powell, like Ms. Cook, etc.? So lots of question marks still in terms of the mood music hanging around the Fed.
We've kind of addressed all the existential questions related to the Fed. I'd even get to the decision itself, which comes out at 2 p.m. We know that the Fed is unlikely to do anything with the rates. It'll keep them unchanged at 3.5% to 3.75%. What is the thinking in terms of any kind of tweak to the language inside the policy statement?
Absolutely right, Scarlett. Probably because of the Iran war, they're kind of sitting on the sidelines, waiting to see where things go. So no change on the policy side, like you mentioned. There has been, though, this kind of debate a bit behind the scenes at the Fed about whether or not they should be signaling in the statement that, there's two-sided risk here. For sure, at some point we could lower interest rates. That was the story before the Iran war. But some officials at the Fed have been saying we should be warning that at some point we may have to raise interest rates. And it would be interesting to see if Mr. Powell sort of puts a bit of colour around that, if he says that debate gathered more steam today, whether or not even that line does appear in the statement, this idea that there should be two-sided risk signalled to the public. Some people think Mr. Powell won't want to signal too much new in his last press conference as chair. He wants to hand over to the new incoming chair and let him sort out the messaging. But I think that's one thread on today's story which people will be keeping an eye on.
All right, and thank you so much. Really appreciate it. And the current global economy reporter for Bloomberg News. He's based down there in Washington, D.C. Again, one of, I was going to say the big news of the morning, but I'll just say one of the big pieces of news this morning.
So many headlines.
Is the U.S. Supreme Court limited the use of the Voting Rights Act to create predominantly black or Hispanic election districts in a major constitutional ruling that buttresses Republican efforts to keep control of the House in this year's midterms and beyond. We want to go back to June Grasso. She is Bloomberg's legal analyst here. June, this is talk to us about the history of this ruling and this aspect of redistricting.
So, I mean, the Voting Rights Act has been under fire for, such a long time, and the Roberts Court has been very receptive to sort of destroying, I'll use the word destroying, the Voting Rights Act. In 2018, I believe it was, they took one part of the act which required pre-clearance. Certain states that had a history, considered to have a history of racism, Texas, et cetera, certain states in the South, would have to get pre-clearance before they redistricted, before their plans were approved. They took away that. And now this is really the other significant part of the Voting Rights Act, the remaining part of the Voting Rights Act, which was passed in 1965 to address discrimination against black votes. And I'll just read a line from what the dissenting opinion of Justice Elena Kagan, the three liberals who are in dissent, said, under the court's new view of Section 2 of the Voting Rights Act, a state can, without legal consequence, systematically dilute minority citizens' voting power. Of course, the majority does not announce today's holding that way, but it's understated, even antiseptic. So, I mean, this is really consequential, and it's consequential for, I think, the Republicans, holding the House. If some of these states can redistrict before the midterms, I mean, I don't know if that would be possible as far as timing, but it really is consequential for voting rights. And the court has, systematically through the years, you hear them say, well, we're so far away from the time of the Voting Rights Act, and there isn't, I mean, I think Justice Roberts was the one who said in Shelby County, we don't have that kind of discrimination anymore. Okay. So we don't, and how long can we keep doing this? How long can we keep having these rules that prioritize, race in voting districts? So I think it's a stunning decision, although the court has been heading in this way for a long time. I think a lot of people hoped that they wouldn't get to it at this point. But so, it's really consequential.
It's consequential, and you go back to the Voting Rights Act that you mentioned and how this is kind of part of the dismantling of it. What is left of the Voting Rights Act right now?
I don't think there's much left of it. I have to get an expert because the two biggest sections were the section that was eliminated or gutted in the Shelby County case, and then this section. So I don't think there's much left of the Voting Rights Act.
How are districts drawn up in the first place? I mean, that's my question.
That is a great question.
Well, gerrymandering. Have you seen you seen some of the, like, even if you look in Louisiana, in order to keep the House Speaker in a Republican district, they have these odd shapes that you would never imagine, different kinds of weird shapes so they can get in people that they want. It's political at this point. It's, and, the Democratic states do it as well. The Republican states do it as well. And it's, it's just the, I don't know.
My old district in New Jersey, which we've since moved from, I finally saw it on drawn somewhere, and it was unbelievably.
It's just a bunch of squiggly lines
Yes,
everywhere.
I'm like, how did they figure that out? Because having lived there, like, that's not how I think of my area.
No.
My area is this town, this town, this town. You know.
No, it's been cherry picked.
Yes,
Yeah,
exactly.
they have people who do this for a living, you know, and
Yeah.
they have all kinds of, electronic ways of doing it. But if you looked at this, I mean, the one in Louisiana looks like a sliver up the coast. I mean, but all the states.
Do that. Right.
And, there's the only thing that has happened is, but only in Democratic states, they've had maps drawn by commissions. So in that way, you get a fair map because it's drawn by a commission with maybe equal representatives on. But only Democratic states have done that, and that's put them in a bad position, which is why you have some states like California redistricting in a different way, not using the commission. So the way to do it is to, have a commission. But when you let Republicans or Democrats do it, they're going to do it to their own advantage, and it's so easy for them to draw maps and just eliminate certain, minority populations. It's a mess. It's a mess, really. It's just a mess.
Let me ask a really dumb question. When the Supreme Court makes a ruling like this, people jump into action right away, right? I mean, this has immediate consequences?
Well, yeah. Well, I think what will happen is, states will start looking at this and deciding what to do. Louisiana certainly is going to jump into action. Yeah, because what they're going to do is, the politics of it. They're going to start looking at their maps and seeing what they can do and how they can use their power as legislators to redraw the maps. I mean, I just think this is opening up a can of worms that, the implications are just crazy, I think, as far as what's going to happen next. Because, you see that what's happening in Florida is trying to redraw its maps without even this decision. So, we've come to the point where are we going to have Democratic states with all Democratic districts and Republican states with all Republican districts? It's sort of mind-boggling. I'm still stunned by this.
Does this change any of what California voters just decided or what Virginia voters decided?
No, I don't think this has anything to do with that because that was a separate. I think that Texas passed the Supreme Court. I think California may have passed the Supreme Court as well. They're saying that wasn't based on race, that was based on politics. And it's okay to gerrymander based on politics. So think about that. Think of it, it's okay to gerrymander based on politics. So, Republicans and Democrats are fine, or they're allowed to go in and gerrymander based on politics. Before this decision, it was just, you couldn't gerrymander based on race, and now you can gerrymander basically based on race, no matter what the Supreme Court said in its majority opinion.
What's left for the Supreme Court this session here? I mean, this was a big one.
Yeah, the case that we're waiting for at Bloomberg is the case of the attempted firing by President Trump of Lisa Cook, the Fed Reserve governor. And the thing is that every week that it's opinion day, we expect that case to come out because it was argued so long ago and because it seemed like the justices were on board with not allowing her to be fired. But it's taking so long that you start to wonder what's happening. Is it because they were writing a lot of concurrences and dissents? Is it because they're having a hard time distinguishing as they want to the Fed chair from other board members that he's fired? So is that what's taking them long? Are they just holding it?
That's what I think. I think they're just good programmers, and they're holding their juiciest one for them.
They say they don't. They say they don't, but I don't. I really don't believe that because it's no coincidence that all these controversial cases come down the last day of the term. So
when is the last day of the term?
Well, it's a movable date.
Okay.
It used to be the very end of June, and then they would go on vacation. But it's now, we've had a couple of times where it went into July because they couldn't get their stuff finished and they had so many late-breaking opinions. There used to be, there's a story about a justice that used to have his car waiting outside the court the last day so they could drive him to, his vacation spot. Then they all disappear and go to different locations for the summer.
All right, very good. June Grasso, thank you so much for that analysis there. June Grasso, Bloomberg's legal analyst, giving us the latest on the Supreme Court ruling. I want to bring in Michael McKee, covers all the economics and international aspects of our reporting for Bloomberg. Michael, you're down there in D.C. You've got a Fed meeting today. But, boy, we just had a Supreme Court ruling, which has obviously political ramifications for this country and maybe economics as well. What's your initial take of the Supreme Court ruling here?
Well, the ruling sets the stage for states to redraw congressional districts, but the question is, do they have time to do that? In some states where they have a number of black majority districts, it's already too late because filing deadlines for primaries have already passed. The issue is how many states could still do it. One expects that Louisiana would try, but the secondary question is then how far do they get with this? Because if you draw the districts, you know somebody is going to complain to the courts about it. It goes back into the court system to question whether the new maps are discriminatory in one way or another. It does have a long-term foundational impact, however, in that it dilutes minority voting power in the sense that you can't create a district that is basically guaranteed to elect a minority, and that would be a question of disenfranchisement for a lot of people. And the kind of deal that many states made that they would never admit is that we'll give you your own minority district, and then we will be able to use the rest of the state for our own white majority districts and most states Republican districts. So at this point, there could be a shift in the balance of power in some states once they can get around to actually changing their congressional districts.
Boy, this gets messy really quickly. That's the net effect of this kind of decision. Was this a surprise, the way that Supreme Court ruled?
No, it's not at all. In fact, legal and political analysts had been expecting this for quite some time. The court has not liked the Voting Rights Act for many years. Chief Justice Roberts has said that while it was useful at one time, it cannot be permanent law because many of the states and many of the aspects of the Voting Rights Act have been, you'd say, cured, taken care of. People can vote, poll taxes are gone, that sort of thing. So they've been gutting it one section at a time. This is Section 2, and now it is gone. So the Voting Rights Act itself is not worth much anymore, but that was expected, and that's why you have a lot of lawyers, especially on the Democratic side, waiting to pounce on any new districts redrawn to see if they can make the case that they discriminate in one way or another and aren't fair.
All right, Michael, you're down in Washington, D.C., and we have the Fed statement at 2 p.m. and the Fed conference with the media at 2:30. It looks like Mr. Warsh's nomination, after being grounded to a halt, is moving very quickly here today. What's the latest?
Well, it was always expected to move quickly once Senator Tillis dropped his objections because the Republicans control the banking committee, and that's what happened, a 13-11 vote. Most of the Democrats did not even show up for the vote. They voted by what's called proxy. Next, he goes to the floor. Now, they could do it within 24 hours. That's the limit. They have to wait before they can bring it to the floor, but the Senate is so wrapped up in other business with the budget, with the FISA surveillance warrant bill, that at this point, it's probably going to be another 2 weeks because they're off next week. And so maybe the second week of May. They're off next week. It's not a surprise. Legislative days are not the same as calendar days.
Clearly.
So it's probably going to be the best guess is the second week of May, which would be in time for him to take over as chair on the 15th when Jay Powell's term is up.
Okay, so that being the case, that this full vote will probably happen before May 15th when Jay Powell's term is up as chair. How does that change or affect, or maybe not at all, the news conference that Jay Powell will be hosting at 2:30 p.m.?
I don't think it changes at all because nobody expected Warsh not to get through the committee. The question is really, does Jay Powell want to wait around and see what criminal jeopardy might still be out there for him? They've dropped the probe at the Department of Justice, but said they could bring it back if the Inspector General finds any criminal liability. And even if they didn't, this Justice Department has shown that it can sort of make things up to try to pursue you. And we saw that with the Comey indictment yesterday. So does Jay Powell trust that the investigation is well and truly over, in his words, enough to resign? There's also the possibility, which has been talked about, that he might want to wait until after the midterms. If Democrats were to win the Senate, then they could block any particularly difficult nomination to the Fed by President Trump, and so he might want to do that. He's talked about preserving the Fed's integrity. So that's going to be the major question surrounding today's meeting, whether Jay Powell.
What are maybe the expectations for Kevin Warsh and his chairmanship?
Well, the expectation is that it's not going to be very dramatic when he takes over, because the economy sort of has the Fed boxed in at this point. Inflation is rising, and the longer the the Strait of Hormuz is closed, the more danger the economy faces from higher inflation from not just energy prices, but from second-round effects from things like food prices, because fertilizer's not getting through. So they can't really move to lowering rates as the president wants right now, and they don't really know what their timing is going to be as long as the war drags on. So Warsh will come in and we'll have a series of meetings probably where the Fed does nothing. Maybe he starts to talk to them about the idea of getting rid of the dot plot or changing some communications, but since he's just walking in the door, it's probably not something that's going to happen immediately. And of course, if Jay Powell stays on, it raises a question of who's really influencing the Fed at that point. Awkward, yes.
All right, Mike McKee, thank you so much. Mike McKee is our chief economics and policy correspondent here in New York, but he is in Washington, of course, to attend that FOMC decision due out at 2 p.m. Eastern time. Of course, we will have special coverage of the Fed Decides starting at 1:30 p.m. Tom Keene, Jonathan Farrow, and Lisa Bromwitz, they will be on Bloomberg Radio, Bloomberg Television. You want to keep it right here as we cover all of that. And ahead of that decision, we have a mixed day in equities right now. The S&P barely higher, the NASDAQ up about 0.2%.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
10:40 on Wall Street. I'm Alexis Christoforous. This Bloomberg Business Flash is brought to you by IBKR. Trade, election, climate, and economic outcomes with IBKR prediction markets right alongside your stocks and options. Earn interest on your position and receive $1 per contract if you're right. Learn more at ibkr.com/predictions. Oil is spiking today as the U.S. signaled it would stick with a naval blockade of Iranian ports to choke off Tehran's oil exports and force it back to the negotiating table. Brent crude is now above $117 the barrel. West Texas Intermediate crude up nearly 5% at about $105 a barrel. Ahead of today's Federal Reserve meeting on interest rates, likely the last with Jay Powell as chair, stocks are mixed. S&P 500 up about 3 points. Dow Jones Industrial Average down about 220. NASDAQ Composite up 45. As for some stocks in the spotlight, shares of Seagate Technology racing ahead 15% after the company said the data storage needs of quickly growing artificial intelligence applications helped more than double its profit during the latest quarter. Shares of Adidas up about 7.5% after reporting an upbeat first quarter report card supported by strong momentum in its apparel division and healthy demand for its soccer and running shoes. And shares of Biogen up 2.5%. Sales beat expectations. It's a sign the company's Alzheimer's drug is helping offset pressure of its multiple sclerosis franchise. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Paul and Scarlett.
Thank you so much, Alexis. That's a lot of news to digest. We went through a lot of earnings. We've got a lot more to come this afternoon, Paul, with 80 seconds of big tech earnings. Wow. That's according to a Bloomberg News story headline that will decide the stock market's fate after 4 p.m. this evening.
Absolutely. We got four of the biggest companies in the U.S., Alphabet, Amazon, Meta, and Microsoft, all reporting after the close here today. Let's welcome in David Kirkpatrick, founder of Techomni. He's been covering this tech space for a very long time. David, we got these big companies reporting after the close here today. The focus is going to be on AI. How are you looking at AI these days, and how do you think the companies are approaching AI these days?
Wow, Paul, thanks for having me. A great big question. Obviously, AI is the historic, massive technological transformation that is washing over all of us these days. So it is the story in technology and to some extent in business and certainly the defining story for the markets in many ways. So these companies have all executed extraordinarily well in the last couple of years, I would say. They have made shockingly large commitments to investing in this new technology. The question that will be on investors' minds today and for the foreseeable future is, have their bets been so large as to be illogical given the scale of revenues and profits that are possible as a result? But, I think today is going to be a pretty good day for these companies from an earnings point of view. The question is, will they disturb people with their forward projections, with what they say they're going to have to spend in the future, and with what they say about what might happen next quarter?
Yeah, that's a great way to put it. And let's just quantify that shockingly large investment that these hyperscalers have made in AI. They've earmarked $660 billion for 2026 on AI infrastructure. I know, it's so mind-bogglingly large. My question to you, David, is that sometimes investors are okay with what these companies are projecting. They feel comfortable with it. They cheer it, in fact. Other times they get really nervous and they kind of sell off the stock because it's much larger than they thought, or it's something that doesn't feel good at the moment. Where do you think we are with that?
Well, I think we're on a precarious knife edge, really. And I think that's hard to say because people are very aware that these stocks are very highly valued and the expectations are huge. And the entire market, to some extent, resides upon the outcome of these questions. So, the stakes are extremely high. So I don't think every investor is in the same place, but I would say on balance, they have to be very decisive today that they are making the right bets and that they will pay off over the long term and to some extent over the short term. I mean, obviously, investing as, you know, on average, these companies of the four we're talking about are putting maybe 150 billion, they claim, into, on average, into AI infrastructure this year. We won't see the profit results from that in the next couple quarters, but investors have to be reassured that there is potential profit coming that's proportionate to this historically large investment. I am not convinced, by the way, that there will be.
David, how about if you focus on Google here? I'm probably one of those people that said, boy, I think Google is going to fundamentally threaten search as we know it. And the biggest potential loser in that scenario would be Google. How do you view it?
Well, a lot of people worried about that, but that seems so far not to be true. I mean, Google, as the company that essentially invented a lot of the current AI design, the transformers that are at the base of this magical technology, they're in a very good position because they have extraordinarily high quality technology and a very, very good AI model. And they have done an also very good job, in my opinion, of using it to keep their search customers satisfied. The question is not so much, will Google continue to dominate search? There's a more interesting question, which isn't one that investors focus on so much, but as more and more of the Google search users do no longer need to click out of those search results, is this new model that Google has successfully used going to undermine the existence of the internet as an informational resource because people aren't going to the websites that produce this information anymore? So that's an interesting question, but I think Google is doing extraordinarily well, and Gemini has really risen as close to the top of the pack as anyone for its quality and its reliability.
David, I got to ask you about Meta as well, the company formerly known as Facebook, because you wrote the book on Facebook back in the day, The Inside Story of the Company That Is Connecting the World. We got word from China that their authorities ordered Meta to unwind the takeover, their takeover of Manus, which is an AI startup. China, just like the U.S., does not want the transfer of sensitive technology to a geopolitical rival. What does that mean for a company like Meta, which for the most part does not grow its own innovation? Oftentimes it kind of copies what others are doing or buys its way to dominance.
Well, in the case of AI, they've done both. They've done quite a bit of internal development, but they've also bought the majority interest in Scale AI and Manus and other companies. This issue of disentangling an acquisition that is essentially complete is a very challenging problem for them, but it's a bigger problem for the Chinese government and for Manus in some ways than it is for Meta, because, you know, if they had to somehow successfully strip out the Manus components, they would continue to be very well positioned in AI. I think it's an open question. You know, it's been widely reported in the last couple of days that the investors in Manus have already distributed the profits that they got from selling the company. So how is Meta going to get back the money they paid? It's a big problem, and it sounds like a lot of money, $2 billion, but with a company that's worth like 1.7 trillion in the markets, it's really not that big, and it's a vexing, weird problem, but isn't that big of a deal, in my opinion.
Dave, about 30 seconds left. How concerned should software as service companies be with AI?
That's a really good question. I wish I had the answer. Right now, my gut is not as concerned as has sometimes been said. But the really unknown is how completely is AI going to be able to essentially on the fly reconfigure any kind of software in the future for users based on their needs. If it turns out that the most aggressive predictions are true, that can happen, then really all these software as a service companies will have a serious problem. Yep. But the data repositories they control are so important. For now, I think they're fine.
All right, good stuff. David, always a pleasure speaking with you. David Kirkpatrick is founder of Techonomy, and of course, he is the author of The Facebook Effect, the inside story of the company that is connecting the world. Paul, we have another red headline here on the Bloomberg that just crossed. The Pentagon says the U.S. government has spent $25 billion on the Iran war so far. About, what, 8 weeks in, 9 weeks in?
Okay, all right. That's the bill that the Pentagon is disclosing here, and I'm not sure where the end is.
That is the big question.
But we have a ceasefire, so maybe this is
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney, live here in our Bloomberg Interactive Broker studio, streaming live on YouTube as well. So you can check us out there. Again, we got the 4 big mega tech companies reporting after the close. We're talking Amazon, Alphabet, Meta, and Microsoft. One of the issues is the growth of AI. And we've seen the market really discern winners and potential losers from AI. And one of the sectors that's come under pressure has been software, particularly software as a service sector. So we're going to break that down a little bit. We can do that with Neeraj Patel, Senior Software Analyst at Bloomberg Intelligence. Neeraj, I know you put out a research note recently on this, but we saw earlier, or late last year, earlier this year, some software stocks, and particularly the software as a service stocks like ServiceNow and Salesforce, really get sold off here. What's your view?
Yeah, I think when we look at the AI disruption to application software, huge market, 700 billion market, but definitely there's winners and losers. And from our view, system of record companies like Salesforce, like Workday, like SAP are in the at least not going to be structurally replaced by AI. Other companies that are in marketing application, HubSpot, Klaviyo, even some of Salesforce marketing, Adobe marketing, they have more pressure there because it's a very heavy language-based, repetitive type of solution that they offer to the clients, which AI is very good at. So we think they're more suspect to being displaced.
The software market is massive. We kind of forget that sometimes because we talk about only the big players, but there's a lot of startups and they're borrowing from the private credit market as well. And I go back to some news from the previous week about a Blackstone fund cutting the value of its loan to a dental implant company. That's, kind of private credit woes continued, but Blackstone also refused to extend a lifeline to a software company, Medallia. And I know that's kind of out of the purview of, the big software companies that we cover that are listed, but I'm wondering whether there's any spillover to the bigger software companies from something like that.
Yeah, I think it's a ripple effect, and I think you've seen this with the valuation coming down. And when we look at a couple valuation metrics, even for the big, large cap companies, they're trading on par with the S&P 500. That's never happened historically. They're trading at 20 times forward earnings, and they have about an 8 to 9% sales growth rate and an operating margin that's on par. And there is definitely spillover from these smaller companies because what that is signaling to us is the additional growth, which was an additional analytic or AI layer like Medallia was selling, like these other companies were providing, was sitting on top of a base core package. So the additional growth rate is being pulled down because AI is attacking the workflow layer, the analytic layer, the insight layer, which was an upsell and additional cross-sell for these companies.
What can some of these software companies do, I don't know, to protect their business, to defend against AI? What can they do?
Yeah, I think they're taking the steps. We're just not seeing it in the financials, and we're not going to see it for the next couple of quarters. You're going to see this steady low teens growth rate. The gross margin is going to be preserved, but under the hood, they are developing a lot of agents for their portfolios, and that's exactly what they should be doing. They're introducing agents, and they're introducing them quite aggressively. They're not going to charge customers for this additional usage. They want to land that account, and maybe after mid-2027, we expect some repricing of the subscription and the outcome task-based solution. So they're definitely taking the steps that they should be in introducing agent and AI native solutions, but it's just going to be, we're going to have to wait for some type of AI monetization to surface from these companies, which is going to take until mid-2027 from our view.
Neeraj, we were talking earlier about how 4 of the Mag 7 names are reporting earnings after the close. What will you be listening for as it affects your software industry?
Yeah, I think we've been trying to get a handle of, when is the financial impact to the application software and as well as infrastructure software going to take place? It's not there today, as we've stated. And I think, as you're pointing out, Scarlett, what do we look at is kind of a little gray. But what I've been focusing in on is what are the building blocks for these agents. And when I look at the building blocks, I see the coding agents, Claude Code, Cursor, OpenAI, Codex. Are the monthly downloads increasing there? Also, some of the other ecosystem metrics like MCP, which is a standard protocol of communication, are the downloads increasing there? Are the usage for orchestrating these agents? There's some other AI native solutions like LangChain and Crew AI. Is that usage being increased? So as long as that increase is continuing, which is being utilized by these big four cap companies, then we think agents are going to come to the enterprise, and it's just a matter of time, and it's giving us a signal that trend's underway.
Neeraj, thanks so much. Really appreciate it. Neeraj Patel, Senior Software Analyst for Bloomberg Intelligence. He's based down there in Princeton, covering the software stocks. Again, software stocks, particularly the software as a service stocks, really coming under pressure as the market tries to differentiate not only the winners in AI, but who might be displaced. And some of the software as a service companies were definitely being sold off earlier this year. So we'll be paying attention to some of the comments from the big tech companies this afternoon. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts in just a moment. S&P 500 absolutely unchanged on the day. The Dow's down 250 points. That's a 0.5%. But the Nasdaq eking out a little bit of a gain here, up 28 points, 0.1%. Being driven in large part by oil. WTI crude oil up $5.20 to $105 per barrel. 10-year Treasury yields higher by 5 basis points here today, pushing out to 4.39% on your 10 years.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Fed Day morning. Fed Day, of course, really beginning at around 2 p.m., but, you know, we're all preparing for it right now. This is Bloomberg Intelligence. Paul Sweeney and Scarlett Fu here with you as we get ready for a busy afternoon. We've got the FOMC decision, and we've got a lot of earnings coming up after the market close. We're going to talk about all of that, starting with Ira Jersey, our chief U.S. interest rate strategist, on the upcoming Fed decision, but also what a Fed Chair Kevin Warsh would mean and would do. Of course, he was just confirmed by the Senate Banking Committee. Now the vote goes to the entire Senate. Anurag Rana is our Bloomberg Intelligence technology analyst, and he'll be walking us through what he'll be listening for when it comes to the 4 Mag 7 names that will be reporting after the close: Alphabet, Meta, Amazon, and Microsoft. Rob Barnett, our senior energy and commodities analyst, will talk to us about oil. Those prices are on the rise this morning, with WTI up 5%, Brent also higher by 5%. We're now looking at $105 a barrel for the U.S. benchmark. And Nancy Tengler, CEO and CIO of Laffer Tengler Investments, gives us her stock picks. First, though, let's go now to Amy Morris for our Bloomberg Business Flash. Amy is in Washington.
Thank you, Scarlett. The entire stock market may be riding on 4 big names today: Alphabet, Amazon, Meta, and Microsoft, all reporting earnings this afternoon. Mandeep Singh is global head of tech research at Bloomberg Intelligence.
There needs to be clear beat and raises, and even a strong beat is not enough. You want to see them show, improving margins when it comes to the hyperscalers.
Mandeep Singh with Bloomberg Intelligence says the Magnificent 7 names could report within 80 seconds of each other right after the closing bell. The Fed's April rate decision also just hours away, 2 p.m. Wall Street time. The focus may be less on the future for rates than on Jay Powell's future as a member of the board after his term as chair runs out in just about 2 weeks. Bloomberg's Michael McKee in Washington.
We know the Fed isn't going to do anything now. They are sidelined, as are pretty much central banks around the world, waiting to see what happens with oil prices, with the war. And don't forget, we've got tariffs coming down the road, so there's a lot of uncertainty about where the economy is going.
Bloomberg's Mike McKee in Washington. Our coverage of the Fed decision and likely final Powell news conference begins at 1:30 this afternoon on a special edition of Bloomberg Surveillance, The Fed Decides, on Bloomberg Radio and television and the Bloomberg Business app. We do check markets for you all day long here at Bloomberg. The S&P 500 little changed on the downside, NASDAQ little changed on the upside, and the Dow down about 0.5%. 10-year Treasury yield at 4.39% and the 2-year yield at 3.88%. Checking WTI now topping $105 a barrel. Brent crude now topping $117 a barrel. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
All right, Amy Morris, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney. We're here in our Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube as well. As Amy was just reporting, we got some red and green on the screen here. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Avalon Purnell. Avalon, what are you looking at today?
Start off with one of the top performers on the S&P 500 this morning. That's NXP Semiconductors, ticker NXPI, jumping 25% to hit an intraday record. Wow. And that's after the chip maker reported first quarter results that surpassed expectations and also gave a second quarter forecast that beat estimates. Part of that optimism, though, which I found interesting, stems from growing demand from the auto industry as companies look to push more software-defined cars and EVs.
That's what I've kind of joked. I've been going to the CES conference in Vegas for like 30 years, and it used to be actually a consumer electronics show.
Not anymore.
Now it's an auto show, with some, so, and my new vehicle, I just upgraded, my lease expired, so I went from a 2023 model to a 2026. Even that change from 3 years, I have to relearn everything.
Yeah.
That's how much it changed.
Well, I mean, a car is now just a tech gadget on wheels.
Yes, it's
essentially.
It's my iPhone with 4 wheels is what I say.
Well
said.
That's
pretty interesting. And that's a 52-week high for NXP Semiconductors. What's next?
What's next is Wingstop. That's ticker Wing, now falling about 5.8%. That's after the chicken chain lowered its guidance for the full year as those first quarter same-store sales fell below expectations. The results really confirmed investor concerns that customer traffic to the chain is continued to significantly drop off. TD Cowen writing that it was a tough start and that part of the miss can also be attributed to Wingstop's customer base potentially being more exposed to those macro headwinds that we've seen throughout the start of the year. And some are also questioning if the loyalty program will help drive sales back as we head in towards the second half of the year. We'll see, though.
Everyone's got a loyalty program.
Yes.
Speaking of loyalty programs, there's one for Starbucks as well, and you're taking a look at that one.
Yes, that's ticker SBUX, B-U-X, now gaining close to 9% right now, most intraday since January. That's after the company's second quarter sales topped estimates, and it boosted its full-year comparable sales forecast. Starbucks largely had U.S. sales to thank for that beat, and interestingly enough, at least to me, the popularity of cold foam among Gen Z.
What?
Yeah, the sales of cold foam was up more than 40% in the second quarter. So looks like that push towards protein is working.
That's different from cold brew, right?
Yes. It's like the little foamy top that you have on top of your drink. Instead of whipped cream, you could get cold foam.
Okay. Double short mocha. I've been ordering the same thing for.
Now ask for cold foam.
Yeah,
oh, you should. That's your protein.
My first Starbucks I ever went to like 100 years ago was outside the offices of Janus Financial in Denver, Colorado. And I walked in, no idea. I had no idea how to order, no idea.
You told them you wanted a small and they laughed at you.
Yeah, exactly, exactly. I got behind one of those people just Saturday. This person came in and like she had never been in a Starbucks before. So the burst I had to take, I had spent like 10 or 15 minutes explaining all the drinks, and then we got to the sizes.
Yeah,
you couldn't forget that.
Yeah,
so
I know.
It was
you can't explain that.
The line was going crazy. People were going nuts. It was very funny to see. Very good. We appreciate that on the stocks on the move there. Avalon Purnell, we appreciate that. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. We got the Fed meeting today. Big deal for those who follow the Fed and rates and treasuries and all that kind of stuff. there are people who actually do this for a living. Ira Jersey is one of them. He's the chief U.S. interest rate strategist for Bloomberg Intelligence. Ira, what are you going to be listening for from outgoing Fed Chairman Jay Powell? And I don't know, we may get an incoming chairman in the next couple of weeks.
Yeah, I mean, given that Kevin Warsh got through the Senate Banking Committee on a party line vote this morning, it's going to be a done deal that he's going to be the next Fed chair. He'll start in about 3 weeks in that seat, and then he'll take over the helm probably of the Federal Open Market Committee come mid-June at that meeting. I think Jay Powell, he'll obviously, given that this is likely his last meeting, there'll be a lot of questions about his time as chair. I think on a forward basis, it's going to be, incrementally what other members think and are thinking about the path of monetary policy. We see, with oil prices back up above 100 and the like, I think that will be certainly something that he's asked about quite a lot is what are these pass-on inflationary effects and what it might mean if, it seems like inflation expectations become unanchored.
How much of a language change are we going to see in the statement itself? Because right now, the FOMC has this posture that the next move is more likely to be a cut than a hike. Will they remove that language? And if they do, what kind of signal does that send?
Well, Scarlett, they did take an incremental step back in March, right, toward the beginning of the war, where they became a little bit more balanced than they were in January, right? January's statement was more dovish, and the last statement was, a little bit dovish, but mostly balanced. I think they might take another step toward being completely balanced. And when you look at things like other forward indicators that the Fed likes to look at, such as the Beige Book, the sentiment of the Beige Book, and we have a natural language processing model that looks at, all of the statements within these types of Fed communications, the Beige Book was completely neutral. So I think it's very likely that the Fed will continue to lean that way and basically say, hey, we might have to cut at some point in the future, but it's a long way off, particularly given the current economic environment and our fears and worries about inflation.
What do you think Fed Chairman Powell will do in terms of his term going forward?
Well, it's a good question. Typically you wind up getting Fed chairs typically resign after they finish their term as chair, and they also resign as governor. Now, Jay Powell's governorship doesn't end until January 2028, so he'd be allowed to stay. And it's not unprecedented. There have been a few former chairs that have stayed on to finish out their term as governor. But I think that as long as he's convinced in some way that the Justice Department won't come back and prosecute him when he's a private citizen, that he probably will, take a bow and leave his governorship as well. It'll be interesting to see if that happens and if that transition occurs very smoothly on May 15th, or if he stays on a little bit longer and kind of there's some lingering doubt. I suspect that he would like this to be behind him, so I think it's really in the DOJ's and the White House's purview now to kind of let him kind of go off and do his whatever he's going to do next, probably in academia or in the private sector.
Yeah, retire first and then look at his options
Yes,
after that.
exactly.
Ira, thank you so much. Ira Jersey is our chief U.S. interest rate strategist, joining us to preview the Fed decision and, of course, the Jay Powell news conference. It all begins at 2 p.m., but we will have coverage starting on Bloomberg Radio and Bloomberg Television at 1:30 p.m. with the Fed Decides. Tom Keene, Jonathan Farrow, and Lisa Abramowitz. Also, after the close today, we've got a slew of earnings. The argument that Bloomberg News is making is that 80 seconds of big tech earnings is going to decide the stock market's fate. The S&P 500 already holding near record highs, the NASDAQ as well. Let's bring in Anurag Rana, our Bloomberg Intelligence technology analyst, to give us a sense of what he'll be watching for. So we've got 4 big companies, Anurag, reporting today: Alphabet, Meta, Amazon, Microsoft. Which of these do you think has the potential to surprise?
I think all of them should show improvement in growth rates. The surprise could be on the Microsoft side, only because last time they talked about their cloud not accelerating as much as they would have liked, or in a sense, if they would have allocated more GPUs to their Azure business, it would have climbed more. The big wild card is, what is management going to do this time? Will they allocate those GPUs again, or will they please Wall Street by reporting a much higher cloud number? I think that's somewhere where we could see some divergence.
So What do you think the message is coming from these big tech companies this quarter as it relates to AI? I'm asking as it relates to spending and returns. How do you think they're going to? How do you think the message should go?
The message should be very clear. There is a big opportunity that they have in front of them, which is evident from the backlog they have or the revenue that they have but not recognized. They have to build capacity in order to recognize that revenue. And for the investor side of it, they need to show that their core KPIs, which is for Google, Microsoft, and Amazon, is going to come clearly from their cloud revenue. And for Meta, it's going to be total revenue. So those numbers need to improve in order for them to show that their story is resonating, that they have a clear AI strategy.
Okay, so when it comes to spending, and this is a question I posed earlier to David Kirkpatrick as well, with CapEx spending, investors tend to be, I don't know, they haven't figured out whether they're comfortable with companies matching what they have forecast or being disappointed when that happens. It's kind of like it's either too hot or too cold. People just aren't comfortable. So where are investors positioned in terms of how comfortable they are with these big hyperscalers spending exactly what they had promised?
So let's say you could take any company in this example. If, let's say, Amazon decides and they want to increase CapEx, they go on and talk about, oh, we're going to raise CapEx for the next 12 months. But their cloud numbers have not improved. That's not going to go well. I think both have to go in tandem, that they are showcasing an improvement in cloud growth rate. At the same time, they're saying, listen, the book suddenly became much bigger this quarter than it was in the quarter before, which is why we are investing. So those KPIs need to match because you can't just go with one and, you know, that's not going to go well, frankly.
Who's from these big companies reporting after the close today? Are there winners and losers? Or could people doing a little bit better than others, or is it just I got to own all these things?
Yeah, Paulo, it's a lot about it is timing as well. When we, when the three of us talked about the same thing about a year and a half ago, it was all about there was only one company showing this AI boost, and that was Microsoft because they were hosting the ChatGPT app. Now, when you look in the last 6 months, Claude has done really well, Anthropic has done really well, and Amazon Web Services is the choice cloud provider for them. We have also seen, as of a few days ago, OpenAI going to Amazon Web Services and adding their models to their portfolio, which means Amazon now has multiple things to sell. And if enterprise adoption is going up, then they are probably going to be better positioned in the next 12 months. In the case of Microsoft, they have, again, a really good cloud business growing 38%. That's not a small thing. But at the same time, they got to figure out their own, model strategy. They have to figure out their own chip strategy. So they need to allocate some resources on that. So there's a lot of, honestly, everybody's dissecting this in the third degree at this point. Yeah. But if you move back and think, all three of these companies will have much larger businesses 3 years from now than we are today.
Let me ask a very basic question. We keep talking about tech being kind of divorced from the macro and the geopolitical events taking place right now. But are they? I mean, does what's happening in the Middle East affect any of these companies?
So I actually say that tech itself is divided into two buckets, AI versus non-AI spending. But when we look at non-AI spending, it's bad. It's really bad. When you look at results from ServiceNow, even SAP said that if the war continues for another quarter, they will see their cloud growth go down. Now, these are the companies that are not in AI infrastructure play. There are only 6-7 companies in the AI infrastructure play, and they are the only ones who are seeing the benefit irrespective of macro conditions. But all the others, we expect IBM Consulting, Accenture, all of them are seeing that pressure because of Iran, because of the allocation of spend, of enterprise spend from to AI from non-AI work.
All right, who's the genius that scheduled all these conference calls today for 5:30 Eastern time?
Yeah, it's going to be an interesting evening today. You're after 4 p.m. and you have to dissect every company in both those three parameters of KPIs going up, cloud spending, as well as the CapEx. So it's going to be a lot of fun today.
I bumped as I was leaving work yesterday out on Lexington Avenue, bumped into Dead Dan Ives. And he says, the next 48 hours is going to be...
brutal. He had to get sleep like last night in advance of everything. All right, Anurag, thank you so much. Anurag Rana is our Bloomberg Intelligence Technology Analyst joining us from Chicago. And it kind of reminds me of the big bank earnings as well.
Yes.
You know, when big banks start reporting, you've got 4 of them coming out the same day, but at least they space it out. So it's like 1 per hour, you know?
Right, and then the conference calls don't necessarily on top of each other.
Right.
So again, from an investor
They need to spread a spreadsheet around, you know, and just pass along and say, you know, here, what time are you going to report? What time are you going to report?
I don't think they care. All right, very good there. S&P down 7 points, the Dow off 267, and NASDAQ down 12 points here today. Crude oil higher yet again today, $105 on WTI crude.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. I'm Amy Morris. This Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, Go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. We check markets for you all day long here at Bloomberg. The S&P 500 down 0.1%. NASDAQ little changed on the downside, and the Dow is down about 0.5%. The 10-year Treasury yield at 4.39% and the 2-year yield at 3.88%. WTI now more than 5% higher, topping $105 a barrel. Brent crude also more than 5.5% higher, topping $117 a barrel. The entire stock market may be riding on 4 big names today: Alphabet, Amazon, Meta, and Microsoft, all reporting earnings this afternoon. We're also waiting for the Fed's April rate decision, plus possible insight into the future of Fed Chair Jay Powell. Our coverage of the Fed decision begins at 1:30 this afternoon on Bloomberg Radio and Television and the Bloomberg Business app. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Amy Morris. That's Bloomberg Business Flash. Let's go back to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Thank you so much, Amy. And of course, for once, the focus is not on the war in Iran and oil prices, because we've got so many other things going on. On the calendar, you've got the big tech earnings. You've also got the Fed decision. But oil prices do remain an issue, and certainly it's going to come up in the FOMC decision and certainly press conference. WTI and Brent are both up more than 4%, and the U.S. benchmark is now trading at $105 a barrel. Let's bring in Rob Barnett. He is our senior energy and commodities analyst to tell us more about what he is seeing. Rob, what's the big driver right now? I think everyone has kind of gotten into this this new normal of oil prices will remain higher for longer and the Strait of Hormuz remains blocked up.
Yeah, so I think that the market is trying to ascertain how quickly we're going to see a resolution to the conflict. And I like to think in scenarios. So if you kind of had 3 buckets to put things in, you could have status quo, basically where we are today. One day the strait maybe seems to be open, next day it's closed. You get a little bit of traffic flowing through, but very difficult oil environment. That puts us roughly at where we see crude today. You could see escalation even. If we return to a conflict, that could be a bullish signal for prices. And then we have the idea of normalization, which the market seems to think could happen. And certainly if you look at the forward curve, prices out in December or into next year are much lower than where we see spot at today.
So, Rob, when you talk to investors out there, I mean, are they factoring in some kind of longer-term risk premium for the oil coming out of that part of the world, even after the strait is presumably opened at some point?
Yeah, it's a good point, Paul. So when we think about oil prices, we entered the year really expecting an oversupplied market, kind of a bearish sentiment flowing through. I think now, given the conflict, you can raise the floor on where you think prices might end up, because even if you get that normalization scenario where things reopen, it's going to take a long time to get back to business as usual. We've really been stressing inventories, and so I think a lot of folks will want to refill and get storage levels back up to perhaps where they were before the conflict, and that's going to take some time. But at the same time, you've got conflicting narratives out there, right? So yesterday we saw the headlines that UAE is leaving OPEC. That's ultimately going to bring more supply to the market once the strait is open and once things normalize. So there are some contrasting signals out there, but at least in the near term, probably the floor on pricing could be elevated versus where you might have been thinking at the start of this year.
Yeah, higher for longer, in other words. One thing that is really striking to me, Rob, is the idea that natural gas prices in the U.S. is below zero if you look at Permian natural gas versus what we're seeing in Europe, which they, of course, have gone up and remain higher. How long can that divergence last for?
Well, this is really leading to a great renaissance in some sense for the U.S., whether you're looking at LNG exports or petrochemical businesses. I mean, the U.S. is very competitive versus Europe or Asia or many parts of the world because we do have this abundance of shale natural gas. And we generally think that even if you saw some uptick in prices on the gas side here in America, there do tend to be seasonal variations, but we do have a sort of healthy amount of relatively low-cost supply, and at least in the near term, I would continue to anticipate a very big disconnect between U.S. natural gas prices and European natural gas prices. And part of that has to do with how Europe has approached its energy policy. It's been prioritizing decarbonization over the last decade and not thinking too much about energy security. Given where we are today, perhaps that's a bit of a mistake, and it's been a good news story for anyone with exposure on the gas side in the U.S. just because we get cheap molecules.
Rob, at $105 per barrel, I'm going to go down in Texas and start drilling some holes here. What's happening with our oil producers? Are they taking advantage of this and ramping up production?
Well, Paul, you've raised a really interesting point. Higher oil prices is really great for folks in the oil patch, and my general sense is we are going to see some response on the production side given where prices are. But you got to keep in mind, this is a boom-bust industry, and many folks in the industry, they've got long memories. They know when prices run up, they're worried that there'll be a correction to the downside at some point and they'll get burned. And so there's this tension of, well, cash flow's higher right now, but what do you do with that cash? Do you return it to shareholders, or do you start to let CapEx budgets increase and raise production? I think we're going to see a little bit of a mixed narrative on that. I do not think that the U.S. can fully make up for the Strait of Hormuz being closed. So while U.S. and North America are going to be more dominant, they can't fill the gap completely.
Rob, always a pleasure speaking with you. Rob Barnett is our senior energy and commodities analyst for Bloomberg Intelligence, joining us from Miami. Here with us in studio, as opposed to in Arizona, is Nancy Tengler. She is CEO and CIO of Laffer Tengler Investments. So great to see you in New York with us.
Thank you, Scarlett. It's good to be here. Great weather.
I was noticing in taking a look at your notes that you've been trimming your energy holdings. We're just talking about energy companies. You've been trimming your energy holdings about a month ago. What's your exposure now to oil companies, given what we're seeing overseas?
So we exited EOG Resources, and that was what brought our holdings down. We're still overweight the S&P sector, but we own Chevron, EQT, and we added to Williams during that period. So, our thought was just that we got a great run in the first quarter. We saw some other places to redeploy, and so that is what we did.
Overall in the market, are you surprised at the degree to which the market rebounded off of those initial declines when the war started? Boy, the market just kind of ripped back higher.
Yeah, it's like 42 days down, 11 days up. So on April 4th, I wrote a piece that we published on the 6th that said I thought we had bottomed. We may have actually bottomed a little bit before that, but we were in buying on the 7th, which was the Monday. And we added to risk assets. So we added to some of the software names like Palantir and Microsoft. We also added to Starbucks and some of the other consumer discretionary names like Ulta and TJ Maxx. And then we added to GE Vernova, which looks super smart after earnings. It's had a little trouble in the last couple of days, but we're in that one for the long term. So I think we're pretty bullish, to answer the question, Paul. And so we've been using these periods like DeepSeek, like the war, as an opportunity to add to high quality names.
You got out of energy, or at least trimmed your exposure to certain names. What about software? Because not all tech is created equal. So, there's the AI plays, and then there's software.
Yeah, it's hard. So we used to have Adobe in our 12 best ideas portfolio, and it wasn't feeling like a best idea. And that was about almost 2 years ago now. So we sold it. And what we didn't see was a management team that was pivoting to the new AI options. Same with Salesforce. Also used to be a member. We kicked it out of both our 12 best and our growth portfolios. And I think those were the right decisions. The one where we've really had to take a big gulp is ServiceNow. I think Bill McDermott's one of the best CEOs in the industry. I think they will be a winner, but you've got a lot of the shorts in there, and until they exit, same with Palantir and Michael Burry. They will ultimately be tailwinds, but for now they're headwinds. And so we've been adding to ServiceNow and Palantir as well.
As we all know, a big afternoon of earnings coming up here after the close. What are you going to be looking for, given that you do have exposure to the technology space?
Yeah, actually, we own all of them except for Meta, all
Okay.
the big players. And we own Apple, which will be obviously tomorrow, most of which are in our TGLR ETF. But I think what I would say is we're going to be looking for monetization of AI. So the knock on Microsoft has been they were capacity constrained, so we hope that logjam has lifted a little bit. We'll be looking at Amazon, which is our favorite in the group at the moment, just because it had lagged. And so has Microsoft, which we recently added to, but we've been adding to Amazon over the last year. I think we'll be looking for advertising there and the Trainium part of the business, and then of course AWS, like everyone else. And we're going to be thinking about backlogs, like where are these companies in terms of capacity, because that will give us information for the chip stocks and for the infrastructure stocks.
That TGLR ETF, by the way, the ticker is hands down like the best ETF ticker, short for Tangler. Nancy, talk a little bit about why you don't own Meta. You mentioned you have all the big Mag 7 names that are reporting today, with the exception of Meta. Why not?
Yeah, we had shifted out of Meta into Spotify a number of years ago and watched Meta go up, but Spotify go up more until recently. I think for me, it's the business model. I don't love it. I don't love the purpose of the software, and I don't really. I'm not a big cheerleader for the CEO. Let's put it that way, and the two-share business. But mostly it's because it's going to be difficult for them to monetize AI, and so they're going to use it, and they're going to use it in advertising. But it's not. They're not going to be one of the pivotal players in our view. So we thought there were better places to be, and I haven't seen a reason to get back in.
30 seconds, Nancy. We go to the Fed meeting today. What are you going to be looking for from the outgoing chairman?
Yes, I'm going to be looking to hear if he's leaving or not.
Right, yep.
And then I just think, kudos, well wishes, and I don't think we're going to get a rate hike. And I think even though everyone's saying that Warsh is only one vote, we haven't heard that in the past when it was Powell, just one vote. So I think Warsh is a consensus builder, and hopefully we'll hear a very friendly handoff.
Do you think Jay Powell will answer the question directly on whether he's going to step down? No? Okay. So he'll continue to obfuscate.
I think so.
All right. Just asking for the prediction markets people, right?
Right.
That's great.
Nancy Tangler is CEO and Chief Investment Officer at Laffer Tangler Investments. Always a pleasure speaking with you, Nancy, and thank you for coming in again. We are looking at stocks marching lower right now. The S&P lower by 1/10%. The Dow off by 2/3 of 1%. And the NASDAQ, little change right now. A big, big day of earnings coming up with a number of big earnings being reported. Alphabet, Meta, Amazon, and Microsoft. And that FOMC decision at 2 p.m. Eastern Time, followed by Jay Powell's news conference at 2:30 p.m. Oil prices are higher as well, up by at least 5% this morning. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. I'm Amy Morris. This Bloomberg Business Flash is brought to you by Chapter. The average couple spends more than $300,000 on health care in retirement. Want to know how much of that you could keep? Find out today in under 20 minutes with one free call to Chapter. Go to askchapter.org to get started. We check markets for you all day long here at Bloomberg. The S&P 500 down 0.1%, NASDAQ unchanged, and the Dow is down 0.7%. The 10-year Treasury yield at 4.39%, the 2-year yield at 3.89%. WTI now topping $105 a barrel. Brent crude topping $117 a barrel. Bill Ackman's Pershing Square going public after raising $5 billion, which is at the low end of its fundraising target. Pershing Square USA shares are indicated to open below the $50 per share IPO price, the company facing questions about what will drive demand in the secondary market. The entire stock market may be riding on 4 big names today when Alphabet, Amazon, Meta, and Microsoft report earnings this afternoon. Bloomberg Tech host Ed Ludlow.
We're bracing for Armageddon, and more than ever, Wall Street is looking for evidence of ROI. They want to see that capital expenditures is followed by boosted forward guidance and tangible revenue growth.
Bloomberg Tech host Ed Ludlow. Look for those earnings potentially within 80 seconds of each other after the closing bell. And we're hours away from what may be the final Federal Reserve rate decision of the Jay Powell era. It comes your way at 2 p.m. Wall Street time. Our coverage begins at 1:30 on Bloomberg Radio, television, and the Bloomberg Business app. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
All right, Amy Morris, thank you so much. We appreciate that, as always. Again, it is Fed Day, as Amy was mentioning, and Tom Keene and the surveillance team, John Farrow and Lisa Bronwich, they're going to bring it all to you starting at 1:30 p.m. Wall Street time. 2 o'clock, we get the statement. 2:30, the press conference. Bloomberg's own Michael McKee is in D.C., and he will be at that press conference. So we got you covered there. Let's break it down with Dennis Lockhart, former Atlanta Fed president, joining us from Atlanta, Georgia. I'm going to guess some Peachtree Street or Avenue or Boulevard or something like they do down there in Atlanta.
Way or court.
Exactly. I don't know.
All of the above.
All the above, exactly. Dennis, it's going to be a very interesting Fed meeting today. It'll be the last meeting for Fed Chairman Jay Powell. I guess for a lot of people, the biggest question, or one of the key questions, is what is the chairman going to do once he steps down from his chairmanship? How do you think he'll stay?
Well, we haven't had a decision yet, and I doubt you're going to hear a decision today in the press conference. I think that Chair Powell probably is still deliberating and waiting for some more information. The Supreme Court finding on the Lisa Cook case will be an important piece of it. He may very well not be satisfied with the finality of the decision to drop the investigation by the Department of Justice and be trying to get more certainty around that. So there are reasons why he may very well hold off on that question for a bit longer.
I'm interested in your saying that the Lisa Cook decision by the Supreme Court might be something that he's waiting for. Just walk us through what that means in terms of the makeup of the Fed's board if the Supreme Court does come out with a ruling. And remember, it has until potentially end of June before it has to come out with an opinion.
Well, it's a fairly complex picture, but in straightforward terms, if Lisa Cook could be fired, it opens up another position. It means that the White House and President Trump can add one more ally to the Board of Governors. That may, in the view of some people, imperil Fed independence. It's a very, very important case because it puts every governor potentially as a target if that governor does not vote the way the White House wants. And you can find some reason to fire that governor. And so they're all in peril. And it just is a chilling effect on the independence of decision-making in the committee.
So, Dennis, I guess just from the economics perspective here, inflation, full employment, the war in Iran is arguably impacting the inflation part of that equation here. How do you think the the Fed is kind of viewing the geopolitics of the day?
I think they're in a wait-and-see mode. They want to see if the war lasts much longer, and if so, what effect do higher energy costs have on prices, and are some of those effects more persistent than transitory? There's a lot to learn in the coming months about what the war is going to do to the price level and also the rate of inflation. I think because gasoline is so important to consumers, the committee members some at least, are concerned that the public's inflation expectations could very well be affected by the higher gasoline prices. And inflation expectations is something that economists and the Fed committee members really pay a lot of attention to, because it can dislodge the anchoring of expectations of the public, and that can lead to sort of a self-fulfilling inflation cycle.
Yeah, I think about, and this is something that the Wall Street Journal wrote about as well, the U.S. economy and what it's had to absorb in the last 5 years. You could argue there have been 4 supply shocks: the pandemic and the reopening from the pandemic, Russia's invasion of Ukraine, tariffs in April of last year, and the war in Iran. You could say that these are one-offs at different points, but what is the cumulative effect of one-off supply shock after one-off supply shock over a condensed period?
Well, I think you're suggesting, Scarlett, and I would agree with it, that the overall picture is the U.S. economy has been very resilient to a number of supply shocks. The importance of the term supply shock is it's not something a monetary policy can affect directly. And therefore, the Fed, in setting interest rate policy, really has to often look through a supply shock. And that's one more reason why I think in this particular case, the committee is likely to be on hold for several months.
Dennis, how is Kevin Warsh, how do you think that transition is going to go? How do you think he will put his imprint on this Federal Reserve? Because his candidacy is making its way through Congress today pretty quickly.
Yeah, I believe it's gone from the committee now to a Senate vote, so he will be confirmed shortly, and I think he's extremely confirmable. He's a very able guy, and has really very good experience. So we've really got a good person, I think, to become the next chair. I don't envy him the tightrope walk that he's going to have to execute particularly in the first year in office, because certainly he's going to be under some pressure from the political side, the White House. And at the same time, he's got to establish himself with the committee. The committee's respect is not just automatic, whoever's in the job. And he's going to have to, I think, to assert a degree of independence to convince his colleagues that the decision-making independence that the Fed has enjoyed is going to be preserved under his watch. And if, so he's going to be pulled in 2 different directions. He's now making a transition, in my view, from someone who was effectively campaigning for the job and got it, to someone who has to be a consensus builder and guide a process in which there are 12 people who vote on policy.
All right, Dennis, really appreciate your joining us. Dennis Lockhart, the former Atlanta Fed president, joining us from Atlanta, Georgia. Dennis Lockhart was the Atlanta Fed president from 2007 to 2017. Ahead of that Fed meeting, we have equities marginally lower.
Yep.
I mean, the NASDAQ is unchanged right now. The S&P 500 is lower by 0.1%. There's a lot of wait and see going on right now.
I think there is. I think you're right. I think it's a wait and see on the Fed, certainly, and on the earnings after the close for some of these big technology companies. Mandeep Singh from Bloomberg Intelligence said, you got to, beat and raise and do it decisively.
Yeah.
Not just a little bit. So, the bar is always high for these companies, so we'll see how they perform.
But with the S&P near record highs, it's a lot higher now than it was before. This is Bloomberg Intelligence on Bloomberg Radio.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio in New York City. We are streaming live on YouTube. We're streaming live on Bloomberg.com as well. IPO priced to last night to this morning. That's Pershing Square. It's Bill Ackman's combined initial public offering for his closed-end fund and alternative asset manager, Pershing Square USA. The ticker is PSUS. Initial price of $50. It hasn't started trading yet today. Looking at the bid-ask in the pre-market, $37.50 to $42.50. Anthony Hughes, equity capital markets reporter for Bloomberg News, joins us here in our Bloomberg Interactive Broker Studio. So first, let's go to this discount that the pre-market trading is showing. Explain to us why this is not unusual, and it does not mean that this is a disappointing deal. It has to do with the structure of a closed-end fund.
Well, it has to do with the structure of the overall transaction, which is quite unusual. I mean, closed-end funds have really lost popularity over the years, and I think mainly because they don't really deliver returns initially, and they do tend to trade at a discount to net assets because it's really just a pool of cash, and hopefully the manager in this case will go off and invest that money and they'll do well over time. But at this stage it's really just a pool of money, and the manager here will be charging a fee on that, so there's not really a lot of reason for it to trade at a premium to the NAV, which is effectively $50 a share in this case. But this is unusual, specifically this deal, because we've actually got two companies listing today. There's Pershing Square USA Limited, which is the closed-end fund, which you've just been talking about. Okay. And then as he structured this deal, he also offered a bonus share in his own management company, and that's also listing today. So this is a little bit confusing for some people, I think, but really this is the thinking from Ackman was that due to the inability to provide an IPO pop from the closed-end fund, he thought he'd provide some sort of compensation for that by offering this bonus share in his own management company. Now, that's also going to list today soon, and at the moment, I think the indications are for about, maybe $25, $30 a share. I mean, it remains to be seen here. But if you do your math, you can see that if the closed-end fund trades down, say, 10%, and, if you bought 5 shares for $50 each, you spent $250, you're losing, if you lose 10%, you lose $25, but you get your free share in the management company, which might be worth $25, so net, you could be flat.
Gotcha, interesting. Yeah, so, I mean, it's a very interesting, unusual structure, but what and people are buying into Bill Ackman and his track record over decades, right? Has he indicated how he may invest some of these funds?
Yes, it's pretty clear how he'll invest. I don't think he's been as clear about it as he could be, but essentially what will happen here is he will pretty much replicate the portfolio he already has, which is a concentrated portfolio, about a dozen stocks. In a lot of the money he already manages is in this European vehicle, which is very similar, although it has a different fee structure. But really, this includes big holdings in, these are some of the holdings which he's well known for, which, his number one investment is in Brookfield, and then he's also got a big investment in Uber, and he's talked about Fannie and Freddie, but also he's got some Mag 7 stocks there, I think Meta, Alphabet, and Amazon.
Okay. The fee structure, what is the fee structure here in the US? Because he's not doing this for free.
Yeah, so the big selling point here from his perspective in terms of getting people to subscribe to this IPO was that, he's saying this is the cheapest or the lowest cost hedge fund in the world. And, that's an interesting line. But essentially what he means in saying that is that he's charging a flat 2% asset management fee, and there's no performance fee. So usually with a hedge fund, it'd be or a private equity fund, say for instance, it'd be a 2 and 20, famously a 2 and 20 structure where 20% of the upside or the carry, whatever, would go to the asset management. That's not the case here. So he's really just charging this flat 2% fee. So that's one of the key reasons he thinks that this is attractive to investors.
And it's just it's another revenue stream for him. 2% of $50 billion.
Yes,
that's his revenue stream right there.
Yeah, that's $100 million that goes straight to the management company, and obviously, as I noted, the management company is also listing today, and how much money he raised through the closed-end fund also affects what the value of the asset management company is, because it's going to be another. He's got really $20 billion of assets under management now. This adds another 5, so it's a pretty significant lift to his assets under management and the value of his management company. Permanent capital too, which theoretically gets a premium as opposed to open-ended funds where people can redeem their money. So, that's the package that he's put to people. And I think, but ultimately it looks like from the early indications, it's going to be a pretty sort of flat outcome, basically.
Right, for investors here. So presumably, do we know who's buying this? these initial offerings here at institutional retail, it seemed like an opportunity for retail investors to invest with Bill Ackman.
Yeah, so really a closed-end fund would be, let's face it, more for a retail audience, because institutional investors would, they'd invest their own money. They wouldn't necessarily want this third, this other layer of management to invest in, say, the Mag 7 or whatever. Right. But, obviously, Ackman in this situation, he put together a deal for the institutions. He wanted the institutions to come along. He had a capital commitment for $2.8 billion. So of the five, $2.8 billion was upfront committed by institutions. And he said this morning on TV that there were family offices and pension funds and other those sorts of big investors, and they were involved. And so really about 80% of the $5 billion has come from institutions. Okay. But those people who put in the $2.8 billion up front, they got a little bit of a better deal on the bonus share. They got 1.5 shares in the management company for every 5 shares in the closed-end fund, whereas the new investors who came in, including the retail investors, they got 1 share for every
All right, so a little incentive to be
one
early.
bonus share.
Very interesting structure. We'll see how this thing trades going forward. Anthony Hughes, thanks so much for helping us out here. Anthony Hughes is equity capital markets reporter for Bloomberg News. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Golden Crest Metal. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment. We have a red headline coming across the Bloomberg terminal here. Trump says he rejects Iran offer to reopen Hormuz. That's according to Axios. And WTI crude oil trading higher on that news. It's now, WTI is up $6.94, just under $107. This is Bloomberg.
From ABC News, I'm Michelle Franzen. The Supreme Court ruling against a key section of the Voting Rights Act. Here's ABC's Stephen Portnoy.
The case was about the drawing of majority black congressional districts in Louisiana. The court's 6-3 holding strikes down that map as an unconstitutional racial gerrymander. Section 2 of the Voting Rights Act survives, but it's now been significantly weakened by the court. The law seeks to ensure that minorities are entitled to equal participation in voting. But Justice Samuel Alito's opinion, co-signed by his 5 conservative colleagues, is likely to limit enforcement of Section 2 and help Republicans in their efforts to redraw districts that now include large minority populations.
Top Trump administration officials testifying on the White House $1.5 trillion defense budget. Secretary Pete Hegseth facing lawmakers for the first time since the war with Iran began and pushing back on bipartisan criticism over the war and U.S. goals.
The biggest challenge, the biggest adversary we face at this point are the reckless, feckless, and defeatist words of congressional Democrats and some Republicans. 2 months in, I remind you, 2 months in.
Talks with Iran remain stalled over the blockade in the Strait of Hormuz, driving up oil and gas prices. Former FBI Director James Comey expected to self-surrender 1 day after a federal grand jury indicted Comey for his Instagram post last year of shells in the formation of 8647. Prosecutors allege it was a threat against President Trump. ABC's Jonathan Karl says it's the latest effort by the Trump administration to prosecute Comey.
Look, I've been talking to current and former federal prosecutors who are calling this the flimsiest federal indictment that they have ever seen. Even Trump's allies are privately calling it embarrassing, or as one very prominent former Trump DOJ official told me last night, depressing.
King Charles and Queen Camilla in New York City today, on day 3 of their U.S. visit, paying respects to the September 11th memorial. You're listening to ABC News. Tech titan Elon Musk expected to be back on the stand today in his case against OpenAI CEO Sam Altman. Musk is suing Altman, saying he was tricked into investing in OpenAI as a nonprofit. Here's ABC's Mike Dubusky.
Last year, OpenAI transitioned from a nonprofit business to a traditional for-profit business. They make revenue from subscription services and selling APIs and catering to investors and what have you. Musk says that is basically a betrayal of his trust, and that's why he's taking Altman to court in California this week.
Musk co-founded OpenAI with Altman in 2015, but left in 2018. Altman is also expected to testify. In Texas, while Republicans John Cornyn and Ken Paxton have been fighting it out in the primary over a Senate seat, the Democratic nominee has been making waves.
In the Texas Public Opinion Research Survey, likely general election voters in the Lone Star State say they would back Democrat James Tallarico over incumbent Senator John Cornyn, 44% to 41%, just outside the poll's margin of error. In a hypothetical matchup with Ken Paxton, Tallarico holds an even wider lead. But November is still a long way off, and no Democrat has won a statewide election in Texas in over 30 years. Jim Ryan, ABC News, Dallas.
A new study revealing many Americans are not getting enough sleep. According to the CDC, 30% of adults are sleeping less than the recommended 7 hours a night. Michelle Franzen, ABC News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
The market waits for Bill Ackman, and we've got him right here on Bloomberg. Welcome to the Wednesday edition as Ackman's Pershing Square goes public today on Wall Street in a combined IPO that priced at the lower end of expectations. Before we turn to politics, the Supreme Court ruling today on voting rights, the wrangling on Capitol Hill, we bring you an important conversation with Ackman himself, and it's going to begin any moment now. CC, let us know, because we want to see the very beginning of this when it takes place as we wait for voting, or I should say voting. It's the political guy here, actual trading to begin in Pershing Square. We actually get to hear from the man behind the operation. With our eyes on Wall Street today, broadly, we'll take a look at the markets with the Dow Industrial Average down 334 points. 34-point loss for the NASDAQ, and the S&P 500 is down 12. Let's go to Danny Berger, now live in New York.
At least 2 years. It's had fits and starts, much like this American IPO market itself. What was it like to get this over the line?
It's great. It's a great day, but it's really, it's the beginning, right? The beginning of a journey.
So it's the beginning of a journey, and now armed with $5 billion. How quickly can you put that to work?
Actually, we think it's a very good time to put the capital to work, and we invest in the most liquid companies in the world. So it's weeks, not months.
So it's weeks. But there's this question. So some of the companies that you own in your other portfolio, for example, Uber, Meta, they've had a good run, and you're already very long them. So the question might arise, is now the right time to be doubling down?
Actually, I think the companies you mentioned are very cheap stocks today. Interestingly, some of the best businesses in the world are trading at the lowest multiples they've traded at, in some cases, in history. Actually, those multiples bottomed maybe 2 weeks ago, so we're a little bit off the all-time bottom, but very bullish on the economy, and there are some amazing businesses available at really cheap prices. This will be kind of a continuation of what we're doing now, so we're going to just add to existing positions, which will give us more ownership. In our strategy, we like to be a big shareholder.
As you said, very, very liquid stocks. So the market is there. What about for like a Fannie or Freddie, where they trade OTC? How does that work? How do you dive back in without moving the market?
We're going to be very thoughtful about the way we deploy the capital. We're not going to tell anyone on TV what we're going to do.
I see. You don't want to front run anyone. Yes. Perhaps a wise decision. And look, you've discussed, you were talking about it earlier this morning on CNBC, that closed-end funds, they trade at a discount to NAV. That's not a surprise. So what does success look like in this scenario? Is for example, like a 10% discount okay?
So I want to give you a new construct to think about.
Please.
Okay, so there's hundreds of closed-end funds, but they're a very different animal from what we're doing here. We're adopting the closed-end structure, the legal structure, the corporate structure, because it's the most flexible and most tax-efficient corporate structure in America. It's never been used for the purpose that we're going to use it for. But if you think about our business as a business, think of us as an investment holding company. It's a business that's earned a 19% return on equity for the last 22 years. If you look in Bloomberg, someone should do a search real time. Find me a business that's earned 19% on equity for the last 22 years. It trades for less than 2 times book value. And we're taking the company public at book value. So we think that's going to be a cheap price. Now, the nature of IPOs are such that in the first couple of days, I can't tell you exactly what's going to happen. But over time, we're going to compound this book value, or NAV, as some people call it, if we do anything like what we've done in the past, a high rate over time, and it's going to compound and it's going to grow. And we're going to run it like a real company. Closed-end funds are kind of a backwater. No one actually wakes up and gets excited about investing in a traditional closed-end IPO. They're kind of generic. You don't know who runs them. I bet Bloomberg's never even run a story. And they don't hold conference calls with their shareholders. They don't have particularly distinguished boards of directors. If this were a C Corp, no one would be asking me whether it should trade at a discount or not.
Sure.
But you can't deploy our strategy in a C Corp, which is why we've chosen this structure, and it's more tax efficient than a C Corp. It's a flow-through entity for tax purposes. So more tax efficient, and then we fix the things that are problematic about closed-end funds. So it's the lowest cost compensation for a management firm like us to manage this pool of assets. In fact, we charge our other funds incentive fees. We don't do so here. We're not permitted to do so here. So it's the lowest cost version of Pershing Square. You take our record over the last 8 years since we've had permanent capital, it's been a 24.9% return. That's a very high rate of return relative even to the stock market, which did, about 10% per annum, not as well. So it's a liquid way to invest in Pershing Square at very low cost, and we're going to build the value of this entity over decades.
Well, and I know you've said before.
Now, by the way, that's just one of the companies we took public today.
That's true. And you have Pershing Square, the holding company, the holdco, and you also have ambitions to maybe list more funds. How quickly can you ramp up AUM? I know you said just by the nature of what you're doing, by compounding, that you could get to $1 trillion in 20 years. Do you have your own internal targets you're thinking of?
So the first priority is to compound at a high rate for a long period of time. That's a much easier thing than doing an IPO. Right? IPOs can take management time and attention. So we're going to focus on investing. We're going to focus on getting our Universal Music deal done. We're going to focus on helping the administration figure out Fannie and Freddie. We're going to help our company succeed. And the beauty of that is it grows our AUM. And the beauty of this, of Pershing Square, the management company, or some people call it the GP, is it grows with compounding. Other asset management firms generally only grow with raising money. If you look at a KKR or the other sort of alternative asset management firms, if they stop raising money, they shrink because they're constantly sending money back to their investors. As they sell assets, they send money back. In our model, we build off a base, and if we're up 20%, the assets will grow about 20%. And so that's a very fast rate of growth without the need to raise any additional capital.
Can you rival the size of those? I mean, I know it's a very different model, but do you see yourself growing to a size of a Blackstone, of an Apollo?
Over time, for sure. And that was the point I was making. We'll have 25, today, post the closing of this IPO, we'll have 25, 26 billion of fee-paying assets.
Does the way you invest need to change then? Because these
all.
are huge platforms that have many different types of assets
The
invest in.
beauty of our strategy, we invest in the largest companies in the world, kind of large cap, mega cap companies, mostly based here. We're tiny in the context of the capital markets. We manage the money in a concentrated fashion, but with 25 billion of capital, a couple $1 billion per investment, that's small in the context of the market we invest in.
By the way, and this is quite unique. As you point out, there's not really another structure that's listed like this. How are you thinking about it, though, in terms of having a listed structure, both Pershing Square and PSUS, that it is centered around you and your very small team, which I know is you see that as a benefit too. Does it change how you communicate? Does it change what you put on social media?
Yes.
Because it could impact share prices?
It does.
Well, I guess legally is one question, but beyond that.
Well, actually, believe it or not, I've been very constrained on social media. Maybe you find that a surprise. But with respect to talking about Pershing Square, there are a lot of limitations up until this moment in time. Now we have an SEC-registered entity. Our existing offshore closed-end fund, we're not allowed to talk about it in America.
Right.
And this is where I spend the vast majority of my time, so it's something we can't talk about. The beauty of this entity is we're going to be able to, we make an investment. We can say today we bought a 10% stake in company ABC. Here's why we own it, ticker symbol PSUS, and investors. We can keep very close touch with our shareholders. And one thing that Elon Musk has done very well over a long period of time is he built a base of followers that were very supportive of Tesla over time. It reduced the cost of Tesla stock, and that's been a competitive advantage that Tesla's had over time. We have already a very large base of followers in the capital markets. They haven't had a way to invest with us until now.
It does sometimes make for more volatility, though, when a post can potentially move around share prices. Sure. How do you think about that?
I mean, we're only going to post stuff that's true. I think that's
a good rule to stand by.
Yes.
At the same time, you've been pretty early in some major dislocations in this market, be it COVID, be the inflation that followed, and some really successful hedging strategies behind that. Do you see any dislocations like that at the moment and hedging strategies you'd want to deploy?
No, actually. I think we're heading into a very good place. Obviously, we have a war still underway, but I think we have by far the upper hand. I think Iran has been denuded of military capability, and I think it's only a matter of time. Administration, I think, this move of closing the strait, I think was a kind of a kung fu grip type move on the part of the president, and I think it's putting a huge pressure on Iran. So I think we're going to get this resolved in the relative short term. I think that's really the biggest overhang on the market, right? We close the strait, obviously has an impact, whatever, 4 percentage points or something of oil on a daily basis can move a market, and that has an impact, causes inflation in the short term. But I think it's a short-term phenomenon. And I think once we're through it, I do see, a Federal Reserve that should be able to reduce interest rates. We have massive, AI spending. We have massive energy spending. We have a tax bill that's driving investment. Every day there's however many deals that are being announced. You have an administration that's very supportive of transactions as opposed to an FTC which would stop everything. So I think you're going to see lots of reasons to be bullish on markets generally.
You were pretty early in this call posting on X that any dips would be short-lived, and they were...
I didn't say any dips. I basically called a recent bottom, let's put it that way. I thought stocks were getting stupidly cheap. So I just sort of called it out.
They didn't even sell off 10%. I feel like some people feel uncomfortable with that. I think oil today is trading somewhere around 116, and stocks feel unbothered.
You can't think about stocks. You're thinking about stocks from an index perspective.
Okay.
The index is like looking at the surface of the ocean. The index is like looking at inside the ocean, but the surface is moving around a lot. And what I mean by that is there are, a lot of stocks. There's enormous disparity there's enormous volatility. We have a lot of earnings coming out in the next 24, 48 hours. And you can see massive moves in different directions. There's so much capital leveraged, short-term focused, tightly risk managed, which means stop losses and things like this. And the result of that is that our capital markets, you can see massive moves in share prices. If you have the ability to be long-term, every once in a while, the price of a really high-quality company gets stupidly cheap because someone is forced to sell because of a bad print for the quarter or a guidance change. Really something that doesn't necessarily have any material impact on the long-term business. And those are the kind of dislocations we take advantage of.
But the dislocations, it sounds like, are over. The stupidly cheap moment has come and passed. Is that fair?
I would say we're above stupidly cheap bottom, but I still think there are a lot of very high quality. Like the way we sort of model each of our companies, we build a model. And our kind of go forward next 3-year IRR was something north of 30% at the bottom. You don't see that with really high quality companies. It's probably now in the mid-20s. It's still a very high rate of projected return for some of the best businesses in the world. And that's suggestive to me the market's cheap, or at least cheap. This is a case where the highest quality companies are cheap. I'm not saying that energy companies are cheap today.
Sure. So you have to avoid value traps essentially in this market as it stands.
I think that's a
true of any market. Fair enough. In this sort of quest to build a Berkshire Hathaway type model, so you've listed these two.
Let me clarify.
Sure.
Because I think there's a little confusion. So we're building an asset management firm that has some of the similar attributes to a Blackstone and KKR, but it's extremely investment centric. We're going to grow this business principally by compounding as opposed to raising lots of funds. So that's one. Buffett was not in the asset management business. Buffett was building a corporation over time. We have a company called Howard Hughes Holdings. We bought an incremental stake in about a year ago. I became executive chair. Our CIO, Ryan, became CIO. The full Pershing Square team became available to the company. And that's the company we talked about building a modern-day Berkshire Hathaway. And the first step we took was we signed an agreement to buy a company called Vantage Holdings. That deal's going to close in the next, call it 60 days, something like this. And we're going to manage the assets of that insurer. And we're going to work with management to make sure they underwrite very high-quality, profitable insurance business. If you look at Berkshire over the last 60 years, it's built most of its value becoming effectively an insurance holding company. That's what Buffett has built over time. And it was his successful management of the assets when you heard Buffett buying Apple, it wasn't Buffett buying Apple. It wasn't even Berkshire buying Apple. It was the Berkshire insurance subsidiaries buying Apple. And we're going to do the same thing. We're going to manage this. So the goal of Howard Hughes is to build a long-term, diversified holding company akin to what Buffett has done over a long period of time.
And sort of defining what your various holdings and your investments look like and what they're not. I know one distinction you've made very clear, because there have been these nerves around retail funds, but it's been really centered around BDCs and private credit. And you've really drawn a distinct line that these are not, there's no exposure there.
Correct.
I wonder if part of that, though, is skepticism of the asset class itself. Is there any skepticism of that asset class?
Of private credit generally?
Yes.
Look, anytime you have an asset class grow very, very quickly with a lot of participants competing, you either have to accept lower returns or more risk. That's the only way you can kind of grow in that environment. And there's, like everything else, there's a continuum of quality in terms of sponsorship. I don't think there's inherently something wrong with private credit. I think the one thing I would say is investing in illiquid assets, you really should have very long-term capital or permanent capital.
And here you are on your quest to obtaining more permanent capital.
There's so much capital is managed where the underlying asset is long-term. A company, a stock, is a long-term asset.
Right.
The vast majority, what's caused the stock market to behave the way it does is the vast majority of asset management firms have very short-term money. They have money that can leave in a minute, an ETF. They have money that can leave overnight in a mutual fund, or even a hedge fund. Bulk of our assets were hedge funds. About half the money could leave every year. It's hard to be a long-term investor if your money can leave overnight.
So one of the arguments for that, though, of being able to redeem is just you're accountable to shareholders. How do you keep that? How do you keep accountability to shareholders when they're not able to redeem assets out of the fund?
Shareholders have more liquidity than they do in any fund because they have a stock that trades and they can buy and sell over time.
What needs to go right on the flywheel? Because if you do have any sort of discount to NAV, does that make it more difficult to list other vehicles like this?
We're going to focus on doing a great job for the PSUS shareholders. And if we do a great job, we communicate to them well, we deliver the kind of performance we have over time, we deserve to trade at a premium as opposed to a discount, right? Again, the average closed-end fund, the best performing closed-end fund over the last 8 years generated a 14.5% return. At a time, we generated a 24.9% return. That's a huge disparity. And by the way, that fund trades at a 15% discount. 15% premium.
Do you think you could trade at a premium?
Here's my argument, right? Businesses that earn the kind of return that we have generated over time trade at 2 to 3 times book value. Should we trade it at a discount to book value? It makes no sense. And we have a tax advantage, right? We have a favorable corporate structure, much more flexible, much more tax efficient, liquid, listed on New York Stock Exchange. I mean, put aside, I don't know what happens in the first couple of days after an offering, but with good shareholder communication, keep people informed, good performance, this can become a core holding. And by the way, the bulk of this entity is sold to very long-term holders.
Right.
And so now, with so much of the stock held by long-term holders, it's the marginal buyer and seller that will move the price around.
By the way, are you as excited as everyone else is about getting to hear from you quarterly now when you give quarterly updates? Or do you wish it was semi-annually?
No, I'm very happy to I enjoy communicating, and I certainly enjoy communicating with people who've entrusted their future to us.
Yeah.
We actually operate, you're not as aware of this, but today we do quarterly conference calls for our existing vehicle.
Sure.
We're now going to be able to do them onshore.
Yes.
We'll be able to answer questions from shareholders the way that you would want those questions to be answered.
We're very much so looking forward to that. Bill, thank you so much for your time this morning. We appreciate it. Bill Ackman, CEO and founder of Pershing Square.
All right, Danny Berger, thank you so much. Fascinating to have that much time with Bill Ackman on this day as we wait for trading to begin under both of those tickers. That could happen at any moment, and of course, we'll have full coverage for you when it does. Made a lot of news here, set to raise $5 billion, of course, in this public offering today. Talking about it as the beginning of a journey. Really interesting. Said it would take weeks, not months, to invest the proceeds from this offering. And they talked as well about the markets as a whole. Ackman saying that we are above a stupidly cheap market bottom. but still sees a lot of opportunity in the markets here with his goal to build a long-term diversified holding company. Stay tuned for the opening trades of Pershing, which again is a combined IPO. So we're going to be looking at the closed-end fund as well as the management firm, and all that could happen at any time now. Live from New York, Bill Ackman with Danny Berger. Let's check the markets and see what kind of a market Pershing is diving into today. Not too inspired at the moment. Amy Morris has the look for us from here in Washington. Amy, how's it going?
Hey there, Joe, sorry. I was actually looking at Pershing Square, watching to see if it was going to start trading yet, and you're absolutely right. Bill Ackman's Pershing Square is going public after raising $5 billion. We are expecting those trades to begin any time now, but that $5 billion was at the low end of its fundraising target. Pershing Square USA shares are indicated to open below the $50 per share IPO price, and the company is facing some questions about what's going to be driving demand in the secondary market. And the markets are actually kind of holding steady, a little bit lower now. S&P 500 down 0.2%, NASDAQ down 0.3%, the Dow down 0.6%, the 10-year Treasury yield at 4.39%, and the 2-year yield at 3.9%. WTI is now 6.8% higher. It is closing in on $107 per barrel. Brent crude has already topped $118 per barrel. That's about 6.6% higher. The entire stock market also riding on 4 big names today when Alphabet, Amazon, Meta Platforms, and Microsoft report earnings this afternoon. We're also waiting for the Fed's April rate decision, plus any possible insight into the future of Fed Chair Jay Powell. Our coverage of the Fed decision starts at 1:30 this afternoon, Wall Street time. That's about an hour from now here on Bloomberg Radio and Television and the Bloomberg Business app. You can get on-demand news 24 hours a day by subscribing to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. It's a Bloomberg Business Flash. Let's get back to Balance of Power with Joe Matthew.
All right, Amy, thanks a lot. I'm Joe Matthew in Washington. Thank you for being with us here on the Wednesday edition of Balance of Power. We served up a special conversation with Bill Ackman to get us rolling, and we turn now to breaking news. It's been a doozy of a day already here in Washington. We were just getting into our editorial show meetings when it hit at 10 o'clock, a ruling that we have been waiting for from the Supreme Court for months, curbing the use of race in drawing up voting districts. This is right down the middle on our program, and against the backdrop of the redistricting effort that's been happening on both sides, right? We had an advantage for Democrats when we came through Virginia, and now we're looking at Florida with a potential vote today that would up the ante for Republicans. Hold on, everybody. That may not matter, as the Supreme Court limits the use of the Voting Rights Act to create predominantly black or Hispanic election districts, rejecting the Louisiana congressional map with a second majority black district, calling it an unconstitutional racial gerrymander. And this sets up a whole new test for creating, or I can only assume maintaining, if we're in this age of redrawing maps, heavily minority districts. Jumping on the breaking news, June Grasso, as we would hope, the host of Bloomberg Law, with us now from New York. June, this came along partisan lines. What happens next if not another redrawing of congressional maps?
Well, yeah, it was 6-3 with the Republican conservatives in the majority and the Democratic liberals in the minority. What happens won't happen probably until 2028. We don't know really how much is going to affect the midterms because we're so far along and so many states already have, ballots drawn up, and it might be hard in some of those states to just rejigger everything. But come 2028, it means, according to some estimates, that about, I think it was, 19 Democratic congressional districts with primarily black or Hispanic populations are at risk. As much as 30% of the Congressional Black Caucus, according to one survey, will be at risk. And we forget, the legislative seats, about 200 legislative seats held by Democrats in the South. So it's going to change things dramatically. It is basically just demolishing the Voting Rights Act, which little by little the Supreme Court has been taking apart. I mean, the Shelby County case, you remember, they said that, you couldn't have pre-clearance anymore because you didn't really need pre-clearance of certain states, that they would have to pre-clear with an entity before they redistricted. You didn't need that anymore. I mean, put this in the context that the Chief Justice has said that the way to get rid of discrimination by race is to stop discriminating on the basis of race. So you can look at this decision through that lens where they're pulling back in every way they can on any kind of race-conscious decision-making.
Okay. So what happens with this second district in Louisiana to start? This is the district represented by Democrat Cleo Fields. The Chief Justice, John Roberts, described the district as a snake. He was talking about the way it actually looks on the map, to be clear, although I found that to be an interesting choice of words here. That map is an unconstitutional gerrymander, Justice Alito wrote, for the 6 conservatives. Does it go away, or do all of these now have to get another look?
I assume that it goes away, but they'll probably have to do it in context. And talking about a snake, I mean, have you looked at the maps across the country in both Democratic and Republican-led states? I mean, the way they draw these maps is crazy. And so having a snake doesn't make much difference when you have like tortoises and other ones and rabbits and different people look at these maps and go, well, what does that look like? Because it doesn't look like anything like you'd think, like a circle around here or a square. Here's where it's been done for ages this way. And the Supreme Court got rid of the ability to challenge maps based on partisanship. So partisan gerrymanders are fine. And now they've gotten rid of basically the way to challenge it based on race. So racial gerrymanders are fine. And, you know, in the dissent by Justice Kagan, which was really, you know, emotional, she talked about the Voting Rights Act being raised on the blood of civil rights marchers. And she said that this is a 3-part plan, and basically it's the end of the Voting Rights Act, and that it will allow states to dilute the votes of minorities. And Justice Alito, who wrote the majority opinion, sort of downplayed it. No, this isn't really a big deal. We're not overruling the Voting Rights Act. But if you look at what he's done, it basically is overruling the important parts of the Voting Rights Act. So it's such a mental decision, and it makes the court look more political. And I just want to say that the 6 conservatives justices were at the dinner last night held at the White House, but the liberals were nowhere to be seen.
Yeah, I noticed that. You know, what else I noticed is that all the whole lineup from Fox News was there, and I'm pretty sure
you weren't
they were
invited,
not from
Joe.
other networks. I don't know what's going on. I felt like I could have enjoyed the Dover Soul. June, thank you. You got a day in store. You're great, and we'll be listening to an important edition of Bloomberg Law. She's right. Justice Kagan saying the decision renders Section 2 of the law, quote, all but a dead letter, unquote. We're going to be unpacking this throughout the day. And look, we've got a Fed special that starts an hour from now. This will be something that comes back around on the late edition of Balance of Power as we keep our eyes now on Capitol Hill. Republicans cannot agree on anything. We've established that. And it's going to become a problem pretty soon here when it involves Section 702 of FISA and whether the speaker thinks he can throw this on the floor. They can't get it through the Rules Committee. They also can't seem to figure out a way to fund DHS. Don't even ask about the farm bill because we don't have enough time with Mike Dorning. Let's bring him in right now. He helps to run our Capital Influence team here in Washington. It's been too long. Good to see you,
Good to see you.
Mike.
As
this
always.
is being described as a conference in dysfunction. Can they get any of these things done?
Well, they've been like punting the ball constantly, and I would expect they'll punt the ball again if they can't get something done. It's
Get another
really
10 days or something?
Yeah,
On FISA.
On FISA. It's really tough. They barely have enough Republicans, and they're divided and fractured. And as the election comes closer, they have to worry about facing the voters. And so these divisions over, you know, how much the federal government should be snooping on people without warrants and things like that come up. And it's harder to rally them.
Is part of the problem that the speaker doesn't want to deal with Democrats on this because there'd be a couple Democratic votes to extend FISA, maybe even 10 to overcome the Freedom Caucus, right?
Yeah, the problem is the more he
that's how you get fired around here.
Antagonizes the people who keep him employed, the bigger the trouble he has with the next vote. So he's in a tough spot. He's wrangling these people, and unlike Nancy Pelosi, he doesn't have like 10, 12 years of stuff that he may have done for
Favors to
them.
draw.
And, with her, like another 10 years earlier, raising money for people.
Yeah.
He was just thrust into this, and he's got to make the best of it.
I've lost track of how long DHS has been closed. I had it here somewhere, like 70-something days now,
February
right?
14th,
Yeah.
Happy Valentine's Day.
Happy Valentine's Day. So the White House kicked out a memo basically ordering House Republicans to get this done here because without this pass, 74 days, by the way, they will not be able to pay DHS employees starting next month. What are we at? The 29th of April.
Yeah.
Is that a motivator?
It could be once the TSA people stop getting paid again, but some of the Republicans want to do more on this legislation than merely fund DHS and immigration enforcement. So there's kind of a back and forth on that.
Interesting. Okay. Farm bill, can't get arrested? I mean, if we can't get this done, how do you get the Farm Bill done? Or is that another CR or another kicking of the can?
Well, even getting it through the House they're still got to get it through the Senate, and they can't even get an agreement in the committee on it. So if they kick it down the road in the House, it doesn't really matter because there's no agreement in the Senate on how to proceed.
So there's a question about, does Johnson keep the House in over the weekend? Do you cancel recess in May? Or do we just keep going home with things not resolved?
Well, he's got a judgment to make.
Yeah.
As it is, he has a hard time corralling his members. Does he really want to make them more angry at him by keeping them in? There may be a point where he wants to keep them in to try to get stuff done. But if you just make people more angry at you, it could be counterproductive.
Wow. I have to ask you in our 30 seconds remaining just quickly about Kevin Warsh.
Something works.
Yeah, confirmed in committee today. When do we see a floor vote? Do we know?
Likely well before the May 15th deadline. The Senate and the House are both on vacation next week, so they may not get to it this week, but when they come back, they'll probably get to it.
Next couple of weeks. Interesting to see they finally got that done as Tom Tillis steps down. Great to see Mike Dorning. Thank you, sir. Look for him on the terminal and online. I'm Joe Matthew in Washington, where we will assemble our political panel next. Rick and Jeannie are both with us for the hour as we walk our way up to special Fed coverage. This is the last one, the last hurrah, the swan song for Jay Powell, and it's all covered here on Bloomberg.
1240 on Wall Street, I'm Amy Morris. A renewed rally in oil drove stocks and bonds lower amid worries that a prolonged closure of the Strait of Hormuz will fuel inflation, and we do check those markets for you all day long here at Bloomberg. The S&P 500 down 0.25%, NASDAQ down 0.4%, the Dow down 0.7%. 10-year Treasury yield at 4.4% and the 2-year yield at 3.91%. WTI now 7% higher at $107 a barrel. Brent crude now more than 7% higher. It's now topped $119 a barrel, and Bitcoin is down about 0.8%. The entire stock market may be riding on 4 big names today when Alphabet, Amazon, Meta, and Microsoft all report earnings this afternoon. Mandeep Singh is global head of tech research at Bloomberg Intelligence.
You want to see a clear contribution of AI workloads or AI products to the top line, and then how that trickles to the bottom line. That's where, the job cuts and the cost controls come in.
Mandeep Singh with Bloomberg Intelligence says the Magnificent Seven names could report within 80 seconds of each other after the closing bell. The U.S. has spent an estimated $25 billion on the war in Iran so far. Acting Pentagon Comptroller Jules Hurst provided the most complete public estimate of the conflict's costs so far.
So approximately at this day, we're spending about $25 billion on Operation Epic Fury. Most of that is munitions. There's part of that is obviously O&M and equipment replacement. We will formulate a supplemental through the White House that will come to Congress once we have a full assessment of the cost of the conflict.
Acting Pentagon Comptroller Jules Hurst testifying before the House Armed Services Committee. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's get back to Balance of Power with Joe Matthew.
All right, Amy, thank you so much. I'm Joe Matthew in Washington, and glad to have you with us here on Balance of Power, the Wednesday edition. That means Fed Day. About an hour, a little bit less. We'll turn things over to World Headquarters for special coverage and our Fed special here on what is the last one for Jay Powell. Not clear he's going to leave the building, but as chair, this is it. And as the man who really redefined transparency on the Fed, he'll be holding his final news conference. I bumped into Michael McKee in the newsroom a little while ago. He's down here. In fact, I'm sure he's in the building right now waiting for it to happen. You're going to hear all of that transpire. The announcement, of course, followed by the news conference at 2:30, and you'll hear McKee asking him questions. Mike will join us on the late edition of Balance of Power to talk about it. With big news today from the Supreme Court, we'll get to this in a moment with our panel, limiting the use of the Voting Rights Act. They actually came out with it today. The court rejecting this Louisiana congressional map that had a second majority black district, calling it an unconstitutional racial gerrymander. I'm sure our panel has feelings about this in an age in which we are redrawing congressional maps almost as a hobby now. But we've got a lot of other news to deal with. Remember the idea of a $1.5 trillion Pentagon budget. It was a big deal to get the first $1 trillion budget. Now we're looking for a 50% increase. Well, the administration is. And part of the job in budget season is you have to go up to the Hill. Each cabinet official goes up to the Hill to make the case for their respective agency. And sometimes they face some tough questions that might relate to their purview. And if your name is Pete Hegseth, you're going to hear about a lot. He was up there today with Dan Kane, the chairman of the Joint Chiefs, to make the case for this budget request. Again, $1.5 trillion. And there were a couple of pretty tough exchanges, as you would expect, with Democrats on that panel, not fans of Pete Hegseth, and in many cases, not fans of the way this war with Iran has been comported or transmitted, with any number of lawmakers, D's and R's, saying that they're just not getting the information. And also a lot of questions about, well, what exactly was the motivation? If the president says there was an imminent nuclear attack, how does that rationalize with what he said last year when we bombed Iran and the whole thing he had claimed was obliterated? The top Democrat on House Armed Services, the ranking member's name's Adam Smith. He's a Democrat from Washington. That was his line of questioning for Hegseth today. Take a listen.
Okay, we haven't gotten there yet. For all of the...
Well, their nuclear facilities have been obliterated. Underground, they're buried, and we're watching them 24/7. So we know where any nuclear material might be.
Reclaiming my time for
we're
just a
watching
quick
it.
second here. We had to start this war, you just said, 60 days ago, because the nuclear weapon was an imminent threat. Now you're saying that it was completely obliterated?
They had not given up their nuclear ambitions, and they had a conventional shield of thousands of missiles.
So Operation Midnight Hammer accomplished nothing of substance. It left us at exactly the same place.
And he gets to do it again tomorrow. He's back at it, right? They took a break there, but he goes to the Senate side tomorrow. That could be even more chippy. I don't know. We'll see what everybody has in mind. But it's where we start our conversation with our political panel. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are both with us right now. Rick is our Republican strategist and partner at Stone Court Capital. Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick, I remember you were the first to say on the air, look out for the first ever $1 trillion Pentagon budget. This is probably, a year ago. We're already on $1.5 trillion. And the administration's making the case that this isn't just about paying for ongoing operations. This is about replenishment, number one, and two, catching up with where we already needed to be in terms of our defense industrial base. Do you think they can get this done?
Yeah, I think it's going to be a hard slog. Obviously, the idea of even increasing substantially beyond the $1 trillion level is, a year ago would have been a pipe dream, right? No way, this is way too much. We're going to have to gut the domestic spending. But that's exactly where we are today. Yes, replenishment is a big issue. We've been spending our rockets down considerably, not just since Trump was elected, but prior to that, for the last 5 years, we've really done nothing to replenish our stockpiles of strategic weapons or missiles. So that's a problem, and we need to catch up. And all that costs money, and we're not in the process of cutting budget funds because we're building a new Navy. We're increasing our spend on the Air Force. The Space Force is in full array trying to catch up in space to what China's doing. So it's hard to find a place where you can't make an argument for more spending except for the fact that we don't have the money.
It does appear to be an administration that's hunkering down for something longer. Jeannie, the reporting today is that the president has instructed aides to prepare for an extended blockade of Iran. And we got something interesting today, a price tag. $25 billion is what we have paid so far in this war. We're at 60 days now. And the next 30 are going to be interesting as we approach that 90-day deadline. Will this blockade still be in place by then?
It's hard to see at this point how this gets reopened. Iran has come to the table with a new three-step plan, if you will, as we sit there and listen to the defense secretary talk about the fact that this is all about Iran's nuclear weapons, and that is our goal, to rid them of not just their weapons, but I guess their ambitions in that clip you played. We see the Iranians saying, wait a minute, we have reordered the steps. We are now putting nuclear program number 3. First is we get an end to this war and assurance it won't happen again. Second is we get the Strait open where we still have a role in controlling the Strait, and then we'll talk nuclear. So we have an administration that has entered a war with a Strait open and the economy getting stronger. We are now 60 days in, the Strait is closed, and any talk about nuclear ambitions, which was going on when we started this thing, has been moved down the ladder. So it's hard to see, unless they're willing to negotiate on that, where we go forward. And, it was striking to hear Ro Khanna ask the secretary questions, and I've been listening to this all morning, and for the secretary to describe the cost, questions about the cost of this war to the American people as gotcha questions. When Ro Khanna, a member of Congress, is saying, what is this going to cost? And he had run the numbers and said it's $5,000 per year per American. The secretary dismissed all that as merely a Democrat's attempt at gotcha questions. And last time I checked, they had an opportunity here to come forward and make the case for this funding. And we have yet to hear it beyond him blaming Democrats as the biggest enemy in terms of what we are facing. So I think it's a missed opportunity on the secretary and the administration's part today.
Rick, I spoke off the record with a Republican senator last evening who seemed very concerned about the lack of briefings, which is something that we have talked about, but also the timeline here, the lack of explanation, and made it pretty clear that we're going to need an AUMF. There will have to be an authorization for the use of military force if this crawls past 90 days. And he implied that there would be, in fact, many other Republicans who agree with him. What's your expectation on that front when we get to 90 days and the congressional response?
Yeah, look, I mean, this is not an administration that felt it had to keep the Congress informed on any of its military plans. We've been attacking the sea lanes in the Caribbean to fight drug lords, and the Defense Department, for whatever reason, has just ignored the cries of Congress to come and explain how they have the intelligence to know whether or not these are fishermen or narcotics dealers. We didn't have any heads up on the Capitol Hill on other attacks, including, the attacks that leveled the nuclear programs in Iran. So it's a long list of, I would say, ignoring Congress. And as you point out, Joe, that bill comes due. By the end of the 90-day period in this war, Congress has an obligation to address this, and nobody wants to touch it. It's a hot political issue, but they know they have to, and they're just begging the administration, please, help sell this for us. Don't just give us the highway. It didn't help when Hegseth started out his opening statement by basically saying the biggest threat to America are Democrats in Congress. I mean, that's not the way you're going to get a positive response.
That's literally what I heard last night, Jeannie. He said, help us sell this. You might only have 30 days to sell it, so let's get it started, because the Republican membership in the Senate and the Republican conference in the House support this effort. They need to go home and sell it, though. Will they have the administration at their side?
They should have started today. I mean, to your conversation, today was a day. I would argue we're 60 days, 90 days late on doing this, but never a moment to waste. They could have done it today. As I just mentioned, Pete Hegseth went in there aggressively. He's very concerned about what representatives are saying on television, calling the war a quagmire, sort of ignoring the American public and the polls, which show this is widely unpopular. And it's unpopular for a lot of reasons, but one is that they have done nothing to sell it to the American public or Congress. And I am reminded of Cap Weinberger's doctrine, the fifth of the 6 steps that you need to go through, according to that doctrine, before you enter a war, is you need to ensure that you have the support. That is the support of the American public, the support of Congress, not to mention our allies. The administration has completely ignored that. And so what we're hearing today, because they didn't have a debate for authorization of this war, that debate is happening now when they're up there asking for more money to continue this. So they are coming from behind. And again, it is a missed opportunity at the hands of this secretary today.
Look at oil prices today. The crude oil now almost $107 in New York. WTI is up 7%. Brent is also up 7%. Now above $119 a barrel. Gas prices, what did I see? I got to look at this again because I don't even trust myself anymore. $4.23 on a national average. Rick, you heard the story I mentioned about oil supplies, oil storage, I should say, for Iran. They're running out of storage. They're starting to load it onto ships because they can't keep it in the ground. And at some point, it's going to be a problem. They have to, in the next couple of weeks, probably start closing wells. Is that the strategy here? If Trump is telling aides to prepare for an extended blockade, is that the way this ends, that we simply wait them out so they can no longer produce oil?
Yeah, I think that the president has figured out that he can't bomb them into submission. That was the first 3 weeks of this campaign, and it didn't turn out that they were ready to surrender as he required them to do. And so now I guess it's choking them out economically. I think everybody is all sort of on board with this nacho strategy. Not a chance that the strait opens up, and so, yeah, I think that this is just the second phase of the campaign where now it's an economic game. There are a lot of people I've talked to who are experts on Iran and the region who just don't believe that you can, create a scenario in Iran that will bring them to the table where their nuclear program is willing to be discussed first. And so we, I think, are in for a long slog on this one.
The nacho strategy? I had to Google it. This is, all right, I'm catching up on this one. Not a chance Hormuz opens. Not actually committed, humiliated overseas. Never avoids confronting hard obstacles. I think he meant not a chance Hormuz opens. The nacho. Who needs a taco when you got nachos? Rick Davis and Jeannie Shanzano stay with us. We'll plow into our second hour as we count down to the Fed. Thank you both for a great panel. We'll talk about the Fed and the confirmation of Kevin Warsh coming up, happening on the same day here on Bloomberg.
Washington, D.C. This is Balance of Power with Joe Matthew and Kaylee Lines.
It's Jay Powell's last meeting as chair, just as his replacement clears committee. Welcome to the Wednesday edition Fed Day with an announcement on interest rates now 1 hour away, followed by Powell's final news conference. with the Senate Banking Committee voting today to approve Kevin Warsh as the new chair. We're going to get the latest in a moment from Stuart Paul at Bloomberg Economics with insights from our political panel today and from Republican Senator Shelley Moore Capito of West Virginia. It's the fastest show in politics today. We've got special coverage starting in just a half hour, and we start, as always, by setting the baseline on Wall Street. Let's turn to the markets. Here's Amy Morris.
This Fed decision amid mounting concerns that any elevated energy prices are going to curb the potential for interest rate cuts this year. We do check markets for you all day long here at Bloomberg. S&P 500 down 0.25%, NASDAQ down about 0.4%, the Dow down 0.6%. 10-year Treasury yield at 4.39%, the 2-year yield at 3.91%. Now let's look at oil. Both WTI and Brent crude are more than 7% higher. NYMEX crude oil now topping $107 a barrel. Brent crude topping $119 a barrel. Investors looking for clues on which direction the stock market will be headed in the coming weeks. They'll be getting a rapid-fire reading as soon as trading ends today. 4 of the biggest companies in the U.S., Alphabet, Amazon, Meta, and Microsoft, are going to be reporting their earnings after the bell. And if they all hit at the same time as last quarter, this should all play out within just 80 seconds. We're buckled up. The Fed's April rate decision is about an hour away, 2 p.m. Wall Street time, but the focus may be less on the future for rates than on Jay Powell's future as a member of the board after his term as chair runs out in just about 2 weeks. Our coverage of the Fed decision and likely final Powell news conference will start about 30 minutes from now on Bloomberg Radio and Television and the Bloomberg Business app. And of course, we are watching for Pershing Square Holdings to start trading. The ticker is PSUS. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Balance of Power now with Joe Matthew.
All right, Amy, thank you so much. As we count down to our special Fed coverage less than a half hour away, we've got some important news in Washington with a pretty quiet day now that the king has left town, making his way to New York, in fact, where he's meeting with Mayor Mamdani at the 9/11 memorial. The Supreme Court takes our attention with an important ruling today that we have been waiting weeks and months for, limiting the use of the Voting Rights Act to create predominantly black or Hispanic election districts, rejecting a Louisiana congressional map that had a second majority black district, calling it an unconstitutional racial gerrymander. The decision along ideological lines, 6-3. We are also watching the confirmation process, and this plays right into our discussion about the Fed today of Kevin Warsh. He cleared committee just like that. It was less than a week ago that Tom Tillis dropped his objections after the DOJ dropped, if I can use that word, or transferred its investigation into Jay Powell from DOJ to the Fed IG. Tillis dropped his blockade, and just like that, Warsh, as expected, clears committee. The question is when he will see a full confirmation vote, and many expect that to take place on the floor of the Senate by the end of this week. But today, it's about the matter at hand and what it's going to mean for Jay Powell, his final meeting as chair. And I'm glad to say that we're joined by Stuart Paul, of course, Bloomberg Economics U.S. economist. It's great to see you. Just as I introduce you here, Stuart, red headline on the terminal, Brent rises above $119.50 a barrel, the highest since June of 2022. How difficult, before I ask you about Jay Powell's swan song, is this war in Iran, the reaction on the energy markets, going to make it for the Fed to ever cut rates?
Well, so the war in Iran creates two-way risk. Of course, it almost mechanically boosts inflation acting through gasoline, but it also weighs on real household spending growth. I expect that we're going to end up seeing some dulling real spending, especially in the second quarter. Given the fact that the Fed cannot do anything to bring additional barrels online, I wouldn't be surprised to see the Fed become a bit more attentive to downside growth risks in the future. I think that even as oil prices stay high, we could see the door open for rate cuts if we end up seeing further deterioration in the labor market and, again, that downside growth materializing.
Okay. Really interesting. Headlines, by the way, crossing the terminal on Pershing Square. Easy for me to say. We're waiting for the initial trades of this combined IPO. Pershing Square USA now indicated at $32.50 to $37.50 with an IPO price of $50. Pershing Square Ink indicated to open at $19 to $22 each. When this crosses the screen, we'll, of course, let you know. What's Jay Powell going to say today about the way forward? We don't expect any change in rates. What's the statement going to read?
I expect that the statement is going to acknowledge the downtick in the unemployment rate that we saw in March. So if he were to describe the labor market as solid, if the statement were to describe the labor market as solid, for example, that might be an incrementally hawkish change to the statement. If we were to see any sort of additional emphasis put on well-anchored, long-run inflation expectations, again, just hinting that the committee as it currently exists has no intention of cutting rates in the near term. I expect that those are going to be the sort of changes that we're going to see. Again, there's so much uncertainty. Policymakers are just going to have to acknowledge that and really lean into uncertainty to maintain to keep their options open.
Move on to the news conference. All anybody's going to want to talk about is him, right? I mean, I guess they're going to want to talk about policy as well, but it's going to be, what are your future plans? Does he tell us today? Do you think when he plans to stay, when he plans to leave, I should say, or if he's going to stay once Kevin Warsh is confirmed?
I don't think he's going to break any news about his future plans today. I think he's going to be pretty precise and vague. And so I expect that, again, this is going to be the first question we're going to get. It'll probably be 30% of the questions we get at the press conference. And I expect that he's going to start by saying that he's there to represent the views of the FOMC. He's not there to make any personal announcements. I imagine that he's going to acknowledge that Kevin Warsh's nomination still needs to be debated on the Senate floor. It still needs to be voted on the Senate floor, so it would be premature for him to announce any sort of decision that he's made. So we're going to really need to focus on some of the code words that he might bring up during his press conference. For example, there's a difference between saying that he wants to follow the precedent of former Fed chairs, which would hint that he'd be willing to walk away from his board seat. There's a difference between that and saying that he wants to facilitate a leadership transition, for example. Like, to me, if I were to hear that, that would be a hint that he'd be more inclined to stay into 2028.
Okay. Stewart's got the decoder ring out. There was a question in one of the tip sheets this morning if he just goes YOLO and starts saying everything he ever wanted to say about Donald Trump, but that would be a bit out of character, I'm guessing. You mentioned Kevin Warsh. Stewart, let's go back to the committee, the hearing that was held for his confirmation before Tom Tillis dropped his blockade, if you will, knowing that Warsh was confirmed today. Let's go back to the banking committee hearing. Remember Elizabeth Warren? Listen.
Trump is still going after control of the Fed, and he is keeping the threat of bogus criminal charges alive until he gets what he wants. These are uniquely dangerous circumstances to advance any Fed chair nominee. But Mr. Warsh is uniquely an unfit candidate.
It's no secret that the reason that Mr. Warsh's nomination could have been held up is because of my concern with the investigation. I want to thank the Department of Justice for the assurances that they gave me. I've got confidence that this investigation is over. And I think that Senator Warren, I get that she wants to score some political points, but she is flatly wrong on every point she just tried to make.
That'd be Tom Tillis right there, the senator from North Carolina who held this whole thing up, and knowing that he was a Kevin Warsh supporter. We could see a vote, Stuart Paul, on the floor as soon as this week. What will the Fed look like once Kevin Warsh is in the building? What will it mean for the culture in the building and his ability to achieve consensus?
Well, so first things first, he'd be replacing Stephen Myron on the Board of Governors. He would then be chairman of the board. I think that a lot of the folks in a lot of the staff are going to be a little bit nervous. This is Kevin Warsh, who has said that he is in favor of institutional reform. He's in favor of cracking heads if need be. So I imagine that he's not going to receive the warmest welcome from the staff. But then again, he's the guy who's going to be in the driver's seat. He's the guy who's going to be setting the agenda for board meetings. He's the guy who's going to be determining what interagency rulemakings he wants to consider and whether that could lead to deregulation of the banking industry so that he could achieve the sort of balance sheet reduction he said he wants. So I imagine that it might be a little bit of a culture shock for staffers, and I imagine that Kevin Warsh when he walks back into the building for the first time in several years. I think that this is going to be a Fed that he perhaps struggles to change its course.
Interesting. I just saw Tom Keene walk by behind you. He must be on his way to the studio, so we're getting close here. The T-Rex of financial news is in the building. Stuart, it's great to see you, as always, on this Fed Day, no less. Stuart Paul with us live from New York. Let's assemble our political panel, because the politics are pretty involved here with all of this when we consider the impact of the war in Iran, the pricing pressures that consumers are facing. It's a huge conversation on Capitol Hill, much like the confirmation of the new chair. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us. Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. There's Rick Davis, our Republican strategist and partner at Stone Court Capital. Jeannie, what's the swan song going to sound like for Jay Powell when he stands before reporters today? Does he play it straight?
You know, I think he will, but I know many of us are hoping he does like an un-Powell-like thing and really lets us know how he feels, as to your earlier point, but I seriously doubt it. You know, it's interesting to listen to Senator Tillis, though. He says he has a lot of confidence this investigation is over. And we are sitting here, you know, not 24 hours after they indicted Jim Comey on seashells that he took a picture of a year ago. And I wonder, do you think that Jerome Powell feels quite as confident as Senator Tillis that this investigation is over? Or does the Department of Justice come roaring back? Because, of course, Todd Blanche is, you know, aiming to be the Attorney General, not just acting. He is performing for an audience of one, and he is indicting a former FBI director for seashells. So, you know, I'm not sure if I'm Jerome Powell that I would feel quite as confident this thing is over, because apparently the retribution tour continues.
Well, I mean, if you just go and look at the statement from Judge Janine, she made it pretty clear that if this Inspector General report turns up new information, she could reopen this investigation. Rick Davis, I'm guessing Jeannie's implying that Jay Powell might want to stay around for a while. Do you agree?
Well, first of all, it makes me laugh you call her Judge Janine, U.S. Attorney Janine Pirro. Right. But I made the same mistake earlier today, so I applaud you. Yeah, look, I mean, the safety play here is stick around, right? You know, use the cover of the Fed and the lawyers of the Fed to defend yourself. And I would point out, I mean, you know, Chairman Powell did a video pushing back directly at the president when he was first attacked by the Justice Department. This guy has not held his breath when it comes to fighting for Fed independence and his own credibility. And so I can imagine when he is replaced by Kevin Walsh as chairman, it may be a liberation moment for him, especially if we're right in that, like, the Department of Justice decides to continue to harass him.
Yeah. Are you optimistic about Kevin Warsh? Jeannie, I'm not sure where Stuart Paul left that with us, but he implied that he might not be terribly popular when he gets in the building. I guess Myron's going to have to figure out what to do in the meantime, because if Jay Powell doesn't leave, he might have to find another job. What will the Warsh culture look like?
That's right. I mean, I think to the earlier point, there is a lot of concern. You know, there is no question he is eminently qualified for the position, but things that he has said, and I think in my mind, even more importantly, just like Todd Blanche, the fact that so many people that Trump brings into any position, even one that is supposed to be independent, people feel beholden to the president. They feel pressured. And if we just go back to his hearing, that was the number one concern. Will you be able to maintain independence given the onslaught of pressure that you're going to feel? And as we all know, Trump will be your best friend one day and, you know, criticize you up and down the next. And so I think that's where the concern is going to be raised. And of course, we are talking about a very fraught time. We've got the inflation, we've got high unemployment, we've got what seemingly now never ending, hopefully not, but never ending war. And we've got consumers very, very concerned, and an administration that just a few minutes ago was in Congress telling members that if they ask about the cost of something, it's a gotcha question. So all of that is the environment. So, bless Kevin Borsch for wanting to come in on this, but I do think it's going to be a really, really tough moment if he intends to fulfill his promise to maintain independence, and I hope he does.
Well, that's interesting. Rick, I don't know if the Fed chair is going to weigh in on the war with Iran, but you've seen oil prices today. I mean, these are some of the highest that we have seen yet since this all began. In fact, I think Brent is in a whole new world at $119.50, the highest since 2022. Their WTI and Brent are both up both over 7%. And in the case of New York crude, up almost 8% today. Gasoline at $4.22. I can only imagine what the next UMich Consumer Sentiment Index is going to look like, which you frequently point to. It's going to handcuff the Fed, isn't it?
Yeah, I think that they're going to put me in a really tough position. I actually looked at some of the gallon gas prices in competitive Senate races, and it's a disaster for Republicans going into re-elections for some of these races, because in some cases it's approaching $4.50 a gallon. And when you look at the current spate of polling, which will be reflected, I'm sure, in the consumer sentiment indexes, folks are getting more and more grumpy. I mean, the president's numbers are falling precipitously in 1 month. That there's a lot of things going on. It could be the war, it could be the economy, but more and more people are going back to the cost of living, and I think that is really going to pinch the Fed on its policies.
It's really something. $4.23 for gasoline. Jeannie, we're creeping back up to that $5 or whatever the high was during the Ukraine war. And the president is now saying, according to reports today, he's telling his aides that we need to hunker down for an extended blockade in the Strait of Hormuz to essentially wait out the Iranians. If this goes up to $4.50 or $5, if crude oil keeps rising to $120 or $150, what will it mean for our economy? We're going to be talking about the R word at some point soon, aren't we?
We are, and some people have described it as, if this keeps up, the war and the blockade, we are heading towards a Titanic-style disaster. And, the idea that the president is going to wait out the Iranians, if we can just all take a step back and think, time is on the Iranian side. Iran can wait this out. They have been practiced at this for decades. What the president needs to do, and I'm happy he's not escalating, what he needs to do is get back to the negotiating table. The only end to this thing is to negotiate a settlement. And unfortunately for the president, given where we are now, that negotiation is not going to be pleasant or fun for the United States by any stretch of the imagination. Iran is saying, first things first, we end the war. Second thing is we open the strait and we remain in control, and then we'll deal with nuclear. That's not what the U.S. wants. But at this point, if we think we can wait it out, we should remember recent American histories of wars. When somebody feels that they're under an existential threat, and that is how Iran feels in the face of Israel and the U.S., they will fight to the end, and Iran is well prepared to do that. And so the impact on the economy in the U.S. and worldwide would be devastating, and Iran will sustain that. And I'm not sure that the U.S. people are going to feel the same way. That's the conundrum we have gotten in 60 days into this.
Just want to mention quickly the headline on the terminal on Pershing Square, USA, now indicated at $36 to $39 when trading begins in this IPO, remindingly the IPO price of $50. It has not begun trading yet. Reporting today, Rick, that President Trump summoned oil and gas executives to the White House yesterday. They were there presumably after the king went up to the Hill to talk about the menu of options here and how energy markets would respond to some of the various decisions the president could make, including what we're doing right now, just maintaining the blockade, but for a longer period of time, but also the potential for a resumption of strikes or other military kinetic action. Among the attendees, according to Axios, Chevron CEO Mike Wirth, you had the Treasury Secretary, Chief of Staff Susie Wiles, Kushner, and Witkoff were both in the room. Is he going to ask them to start increasing production? Is there something that the oil industry can do to relieve some of the pressure?
Well, the problem is they can't increase production enough to supplant what the entire world is currently short of because of the closing of the strait. So prices are a global price. And regardless of our America First strategy and our ability to pump more and our ability to, be energy independent, a lot of the global pricing is still fixed. And I think a lot of these individuals you just described have a global point of view. They can explain to the president that we're caught in the trap of our own making, that, as long as the strait's closed, the prices are going to continue to go up, and those affect the prices here at home. And you can see it every day in the reports on Texas crude pricing. So at the end of the day, there's no real solution that the U.S. oil producers can do just for the U.S. I mean, our economy is actually holding up better than virtually any other developed country in the world right now. But that doesn't fix his political problems, that people don't feel that way.
Yeah, really interesting. As we wait for trading to begin and ahead of our conversation with Senator Shelley Moore Capito, Jeannie, what are your thoughts on this? I mean, some folks say it's time to crank up the shale oil, but to Rick's point, it's going to be a drop in the bucket.
It would be a drop in the bucket. And let's not forget, even if the strait was open today, it is going to take time to get back to where we were. The answer to this is a difficult answer, but it is a negotiated settlement with Iran. And we are talking just to get back to square one, which is an open strait and a stabilized economy, and then deal in a negotiated way for a settlement on the nuclear end. That's the only answer we're going to see, and that's the only answer that will work. Everything else, the United States has lost steps to Iran, and that is a really unfortunate reality of where we are 60 days into this.
Yeah, something tells me this will work its way into the conversation today with Jay Powell. Rick Davis and Jeannie Shanzano, thank you so much both for a great conversation. Bloomberg Politics contributors and our great panel today here on Balance of Power with our eyes on oil prices. Both WTI and Brent are up over 7%. And before we talk to the senator, let's bring in Amy Morris for a quick update on the markets today, energy prices, stocks, and beyond. Amy, what do you have?
Well, we got a renewed rally in oil. That's driving stocks and bonds lower. The standoff over the Strait of Hormuz, as you were discussing, continues to drag on as we check the markets for you all day long. Here at Bloomberg, the S&P 500 down 0.25%, NASDAQ down 0.3%, the Dow down 0.7%, 10-year Treasury yield at 4.39%, the 2-year yield at 3.9%, WTI topping $107 a barrel, Brent crude also topping $119 a barrel. Now, briefly, like a half hour ago, Brent crude hit $119.50 a barrel. That's the highest price we've seen in Brent crude since June of 2022. The entire stock market may be riding on 4 big names today: Alphabet, Amazon, Meta, and Microsoft, all reporting earnings this afternoon after the closing bell. We're ready for that. Bill Ackman's Pershing Square going public after raising $5 billion. Pershing Square USA shares indicated to open around $36 to $39 per share, still below the $50 IPO price, and the company's still facing questions about what will drive demand in the secondary market. So for on-demand news 24 hours a day, you subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's the Bloomberg Business Flash. Let's go back to Balance of Power with Joe Matthew.
All right, Amy, thank you so much. As we count down to special Fed coverage that's less than 10 minutes away, it's always a pleasure to bring in Senator Shelley Moore Capito, the Republican from West Virginia, joining us now live from Capitol Hill with a very important deadline ahead tonight that, Senator, we'd love to ask you about. It's great to see you. Welcome back to Bloomberg TV and radio. Around here, we say Happy Fed Day, so I hope you're celebrating. But importantly this evening, and I hope you're feeling all right, by the way, I've got the same pollen going on here. This is Washington this time of year. The House cannot seem to find footing around a FISA reauthorization, which expires tonight. Is the House the main impediment to the president's policies right now?
Well, I think the president's been very forceful and asking, and so have the intelligence community as well, that we need FISA reauthorization to be able to disrupt and to catch and to be the most effective intelligence operation that we can be for the safety of the American people. I certainly would vote to reauthorize, and have many times, to reauthorize FISA. I think it's found to be helping us when we're investigating foreign individuals that are after us and wanting to do us harm. And I hope the House can see the way towards passing this tonight.
Well, indeed, that would be a pretty big deal. Does the president have options, as has been reported, to continue working under FISA if there is a lapse?
Well, right now, I think what we're operating under now is almost a 2-week suspension, and as you mentioned, it expiring later tonight. We would have the option, possibly, to re-extend the extension, but I do think the president has some maybe extraordinary means that he can use to still use the asset of FISA for our own homeland security and our international security. Those options, but the preferred options and certainly the best legal option is to have this confirmed so that we can have it for the next 3 years, which is the goal. And this, people need to realize this is not listening in on American citizens. This is foreign people, foreign actors in foreign lands that are trying to disrupt and terrorize and figure out cyber crimes and other things to disrupt our national security.
We've got a Fed meeting today, once again, Senator, and of course, oil and gas prices, energy prices broadly, are going to be part of the conversation as we consider the impact on inflation or the potential impact. With a national average today of 423, I'm looking at West Virginia. You're hovering just over 4. You've got a 4 handle now in West Virginia at 406. I don't think we're going to be driving coal-powered in your state, Senator. How concerned are you that this stalemate could drag on for months?
Well, I think we're all concerned, and I think rightly so. I think we see what the impacts of the situation in Iran and in the Straits has caused to the international markets. I noticed that the barrel of oil is up today fairly significantly, and that impacts our gasoline and particularly our diesel prices. You know, when you talk about ag and other industries in this country that use diesel in great amounts, this has huge impacts for them. And so the longer it goes, the more not just impactful, but worrisome it is for the long-term economic effects. The president is working hard to try to bring this to a close. He's been at the negotiating table with his team. The problem is Iran is not trustworthy. We know this. But it seems to me as though they are having a lot of infighting to decide who's going to be in control of their country. And while I think that's good to have the disruptions, it makes it difficult to know who you're dealing with here. And, they want to take talks about whether they're going to develop a nuclear weapon off the table. In my opinion, that's a non-starter because that's the real danger to the world. So hopefully sooner than later, we'll see things wrap up. The fact that we are talking and briskly talking, I think is a good indication that this could come to a close sooner than later.
I've been hearing from some of your colleagues in the Senate, Senator, that at the 90-day mark, we will be needing an AUMF to continue in Iran. And these are members who support the war, but that something should be codified congressionally, knowing now we have a $25 billion price tag. Would you support an AUMF at the end of this period of time, whether it's 60 today or 90 days?
I'm certainly going to look at that. I do think that there is a push and pull as to how much oversight we have, I will say the administration has been forthcoming in terms of information and classified briefings to keep us on top of what the situation is and what kind of assets we have there and what a little less transparent on what the real cost, but we should be getting more of that transparency there. That's where I think we can be most effective. Whether I would vote to authorize a use of force, I'm going to cross that bridge when I come to it. Hopefully things will have settled. We don't have boots on the ground there. I think that is a significant factor in terms of making the determination as to whether the president needs to come to Congress for a declaration of war. But there's no question in my mind that Iran is and was and continues to be a source of concern for us, and not in a small way. This, in my view, it was not if we're going to do this. It was when the president had the nerve and the ability to do this at this time, and I have been supportive of that.
Yeah. We've only got a couple minutes left, Senator. Something that you know a lot about as chair on environment and public works is the impact of this energy conversation that we're having. And we've seen kind of a push and pull when it comes to alternative energy. Gas and oil prices start to go up. Fossil fuels are more expensive. People are as human nature would dictate, more likely to reach for an alternative. But we've seen an unwinding of wind, especially, and solar under the Trump administration. As the chairwoman on this important committee, do you see that alternate energy industry being unwound permanently?
You know, I'm one of those who believes we need everything, and we need everything all the time. I come from a coal state, natural gas state, so on that side of it, we've been providing energy for this country over 100 years, certainly from our coal. And so we have a great appreciation for that, and we still want to be a part of that, and we are. But at the same time, the insatiable desire for more power is going to require everything. And so my view is if we can permit, which I've been working on a lot, and keep the environmental parameters in place, we should have it all.
The president talks about coal, clean, beautiful coal, as he likes to say, as part of that, all of the above. What does that mean for your state?
Well, that means a lot. It means the elongation of a lot of the power generation from coal, where the Biden administration was trying to force the premature closing of many of our coal-fired power plants, but also the Biden administration was going to prevent you from being able to build a natural gas new facility to power. We have to do things that make sense, and baseload energy is absolutely critical here. If we don't know it now, we certainly have learned it over when we see the impacts, what happens internationally on our energy. So these are big things for our state because we're a big natural gas provider, but also coal.
Just quickly, does all of the above or everything include wind? The president has really isolated wind as kind of the outlier.
You know, I know the president doesn't have much affection for wind, either offshore or onshore. Yeah. Personally, we have wind in West Virginia. If it's sited properly and can generate the kind of power that we need, I think we should be looking at everything. Absolutely.
How about that? All of the above means all of the above. To Shelley Moore Capito, Senator, thank you. It's great to have you back on Bloomberg TV and radio. I'm Joe Matthew in Washington. I'll meet you back here on the late edition of Balance of Power, 5 p.m. Eastern. Right now, a special edition of Bloomberg Surveillance. The Fed decides. It starts right after this.
Live from New York City for our audience worldwide, Bloomberg's The Fed Decides starts right now.
This is a special edition of Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Bloomberg Surveillance, The Fed Decides.
Live from New York City this afternoon. Good afternoon, good afternoon. Your afternoon starts right now. And that rate decision is 27 minutes away. After that, 4 of the biggest companies on the planet reporting earnings. And this is how the stage is set. Let's kick it off with the cross-asset price action and start with crude. Crude taking out the closing high of the year so far, just in the last few hours. Brent crude, 118 on an 8-day winning streak. Over that period, higher by more than 26% and up another 6% so far. Check out the bond market. This is the read-through. Crude up, yields higher. 390 on 2s, 440 on 10s. New highs for the year on 30s if we close at these levels, 498. Something's out of whack. We've got new highs on crude, close to new highs on yields, and equities still 13%, 12 to 13% off the lows. Equities this afternoon, just down 0.2%.
And it all hinges on what we get after the bell, which is the earnings from the likes of Meta, Microsoft, Google, and Amazon. Do they justify the enthusiasm for AI, and can it overwhelm some of the concern about a stagflationary shock that's coming to fruition? And that ultimately is what the Fed will be discussing.
I get that almost distant. I mean, it's there and it's really important, and we're all glued to it. And I've had a lot of research notes in this morning. And John, this is the economist Michael Tyson with Everlast. Everyone has a plan till they get punched in the mouth. And your data check, which was wonderful, is that the new punch in the mouth where things become a bit unraveled?
We're taking a beating at the moment, but not in the stock market. That's what's interesting about this setup at the moment, Bramo. Insulated by the earnings story so far. And the earnings story so far, coupled with the economic data, so far so good.
This sets up the real tension for a Federal Reserve that has to decide whether or not the strength in the economy can allow the inflation from oil prices, from the supply shocks, to ultimately transmit through the economy and become a more prolonged shock. This sets up the tension because ultimately, can you have your cake and eat it too? Can you have a resilient equity market that also allows consumers to keep on spending while absorbing some of these higher prices?
We're going to get started with the show, but I would just suggest, John, what's so important here.
Show started, T.
No, I mean, get to the guests and all that. We got Bob Michael on deck. But what I would say that's just so important, John, is you look at the moment we're in right now. What does Powell do? Just softball it through the press conference?
With great difficulty.
He's got to step up and make a statement.
There is some suspicion, and I think this is the question going into this decision, the statement and the news conference, whether they introduce a more symmetrical reaction function, or at least try and articulate one to anchor inflation expectations with the price pressure that's brewing in the commodity market.
Some people are saying ultimately they have to say the next move could be a hike or potentially some sort of cut. And could that change the market reaction? I'm not going to answer. Much better people are going to answer than that. Coming up shortly, JP Morgan's Bob Michael, SocGen's Subhadra Rajappa, and Deutsche Bank's Matthew Lazzetti. They'll be taking us up to that Fed rate decision at 2 p.m. Eastern. Then immediate reaction from Stephanie Roth of Wolfe Research and Citigroup's Kate Moore. And finally, breaking down Chair Powell's news conference, which I'm sure will be completely a snoozeville, Jim Bianco of Bianco Research and BlackRock's Jeff Rosenberg. It will not be a snoozeville. That will be where all the fireworks are, John, and we all are waiting to see what that looks like.
Looking forward to it. With us around the table, Bob Michael of JP Morgan. Bob, good afternoon. Good to see you.
Happy to be here.
Is it a problem that we're talking about none of that going into this decision? We're only talking about the future of the chairman of the Federal Reserve.
I think that's one of the big elements of this meeting. Is he going to stay? Is he going to go? There's certainly an exit ramp for him. The Department of Justice has dropped its investigation. He already called the Inspector General that reports to the Fed, by the way, to start its own investigation. If he wants to leave, he can.
Are you more interested in that, or are you more interested in this question of how they really portray a reaction function at a time where inflationary risks are back on the table?
So that's one of the three things we're looking for. The first thing we're looking for is how they characterize the economy, the labor market, and inflation, given all the uncertainty in the Middle East. Changing a word here or there, inflation remains somewhat elevated to just elevated can tell us a lot. The second thing we're looking for is exactly what you said. It's also in the FOMC statement. Look at the third paragraph. If they change the sentence that talks about the changes in additional adjustments to their policy range and drop additional, that tells you they're migrating to something that's more symmetrical. And of course, the third was what happens to Powell.
Bank credit analyst up in Montreal had a beautiful note the other day that said, look, there's a reset here in inflation, which means all in all, we're more restricted. This meeting versus the last meeting, $119 oil, you know, the 30-year bond, 4.98% rounded up. Are we in a more restrictive space for Americans?
I think so. I think what we're looking at is cost push inflation. So it's behaving as a tax right now. When you've got gas that's probably over $4.20 a gallon on average, that's going to eat into discretionary income. So it will slow things down. What we have to watch is, does it pass through to core prices?
Yeah. What's great about this is cost push inflation, John. That was the last time people wore thin ties.
Oh, are you taking a dig at me?
No, not a dig at you.
Are you saying this
is pushes from the 60s?
Are you saying I'm a choiceful consumer and can't afford a wider tie?
No.
Is that what this is going?
You're fashion forward.
Or fashion backward. If fashion backward compared to what you're talking
Why
about.
am I the target of criticism? We're only 8 minutes into the program. Give me a break. Can we move on? What if you wear bow ties? What decade are you in?
This is $119 panic green.
This is what happened after the Depression. Yeah.
All right, guys. Wow.
Well, you know, we're exchange.
Yeah.
So you want to talk about markets?
Yeah, I do actually.
Let's talk about that. Let's talk about inflation pressure. Bob, the pushback we get to the inflation review is the labour market simply isn't tight enough to worry about broad-based price pressure. Would you go along with that?
No, I wouldn't. Unemployment's in the low fours. To me, that looks like a reasonable level for full employment before COVID. Let's see how the Fed characterizes that. And if you look at wage growth, it's going up pretty nicely. I think what we are seeing is inflation starting to pass through the system. Whether that will hit aggregate final demand, we have yet to see. But I think right now the economy looks in pretty good shape, can absorb some level of inflation for the foreseeable future.
This feels different to me from the last time we've spoken to you, or the last couple of times we've spoken to you. You said you see this more as something more that causes demand destruction than, say, inflation. And you're all in on bonds, right? The idea that there definitely is an opportunity here. Can you describe what's shifted for you in terms of your expectation for inflation and how that kind of bleeds into your call?
Yeah, I didn't think we'd be here 6 weeks later with the Strait of Hormuz still blocked. I thought we would be in the end game. We'd talk about it reopening. There would be moderation in oil prices and take some pressure off of inflation. It seems like we're more in the middle of it still. So does that mean it goes on for another 6 weeks to 2 months? It could do. And then you're stuck with energy prices that are higher. You're stuck with gas prices that are over $4 a gallon, and you're forcing businesses to make a decision. How long do they absorb those costs versus trying to push them on? You will see some demand destruction, but remember, this time last year, we thought tariffs would create a lot of demand destruction. It did initially, but then the economy picked up again without missing a beat. So I'm reluctant to say this time the economy will stumble. It didn't last year. It might actually absorb that this year.
What's the unexpected you worry about?
The unexpected is that things spiral out of control. You do have $150 oil per barrel. That starts to push through and create a lot of demand destruction. And then the Fed's in a very uncomfortable spot. You've got very high headline inflation, but you've got an economy that's about to tip into recession. They have to decide which decision they make. Right now, we're talking about they could just remain on hold through year end and see how things play out. But a material spike higher would create a lot of problems.
Do you think we're really close to that tipping point right now?
I don't think so. It feels a little different than actually a couple months ago. It feels as though there are workarounds that are going on. We know there's an east-west pipeline. The 80% of oil that doesn't pass through the Strait of Hormuz probably could increase capacity. We're already seeing the UAE talking about leaving OPEC. So I don't think we'll get there, but you certainly can't take it off the table.
Bob, it's good to see you. You're going to stick with us. Bob Michael of JP Morgan Asset Management. This equity market wanted to move on. And to be fair, even this afternoon with crude close to 120, this market's not really responding to it.
Yeah, although what Bob was talking about there is really interesting. Is the stock market's sort of placating feature that the economy can look forward actually be a real negative for the bond market that the bond market hasn't woken up to? And maybe that's what we're seeing in the bond market, just waking up a little bit over time.
Looking forward to this. The decision about 18 minutes away. 30 minutes later, a news conference with Chairman Powell. Feeling a little self-conscious now, TK?
No, you look great. You're
I
styling.
think it looks fabulous.
You know I'm delicate in the afternoons.
Well, you're styling.
You've got to look after each other. Build each other's confidence,
Finish
not knock
it
each other
forward.
down.
I haven't changed my look for
Come
40
on.
years.
And you guys look fabulous.
Maybe after the commercial break we'll swap.
Oh, that.
Please. I will pay good money.
Not a chance. Not enough. Not enough. Up next, Evadra Shaffer, Matt Lazzetti.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Have you ever used a credit card and had it denied? I get to Wells. First thing I want to do is get a Wells Fargo credit card. I was out to dinner with some good friends, and I pull out my card and it got denied.
In case you missed it on the opening trade.
All
revenue has now hit $30 billion in run rate. And we're seeing really significant demand customers like Spotify, Lovable, for example, that are really using and harnessing the power of the technology. 2 months ago, we had 500 customers that were spending over $1 million with us. That's doubled in size just in the last 2 months. So we're really seeing a lot of amazing growth.
Don't miss the opening trade, live every weekday.
Oh, hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is.
Hundreds and hundreds of billions of dollars are at stake.
We're pushing the envelope of technology in multiple directions: software, hardware, chemistry, physics.
And yes, we will be talking about AI. Watch season 2 on all these lovely channels.
I think it's going to be very hard for the Fed to do anything right now.
The Fed is boxed in here.
The Fed is going to sit on the sidelines. The Fed is just content to hold where they are. And
hold. On hold.
On hold.
On hold. We're in a wait-and-see mode for the Fed.
Wait and see as long as possible.
There's a case for the next move is a rate cut, but it's really hard to say that should be happening right now.
You want to make sure that that door is slightly open.
It's unlikely that the data is going to be that clear moving forward.
I doubt that this Fed is going to be cutting into that.
There's plenty of officials who are worried about, the stickiness of inflation.
We have not seen this kind of political angst around a transition of leadership.
Jay Powell will stay at the Federal Reserve for some period of time.
Powell is going to stay on for a period of some months as a regular governor.
What we're going to hear from Powell is uncertainty.
He wants to come out of today, I think, with no market move.
Priya Misra of JP Morgan at the end there. That decision 15 minutes away. The price action, the scores, they look like this. The S&P 500 doing virtually nothing. This looks like a snooze fest. We're down only 0.2%. It is anything but right now. Check out crude. Up for an 8th consecutive session, the longest daily winning streak going back to May 2022. Up by 7% this afternoon, approaching 120. And this move in the bond market. Check out the front end of the yield curve. 2s right now. 391, up 7 basis points on the session. Go back to the day when the Fed last met, March 18th. That morning, 368. That afternoon, 377. We're higher now than we were then.
The thing that's changed is the length of time that this has gone on. And now the question is this a Fed that can cut rates at all this year? Right now, we're seeing a 25% chance baked into the market.
I went back early this morning before you guys got in, and I looked at the 30-year bond yield, and above 5%, I think it was 22. It was 7 days. So you think that's funny, huh? 7 trading days, John. 7 days. And the real risk here to our esteemed guests is, do we see a more persistent 5-year yield?
TK, just for the record, I'm sat here from about 5 a.m. Eastern Time. Got Bramo here, and just behind Bramo, I can see the elevator that everyone coming down needs to go down. TK appears at about, I would say, 6:53.
Oh, yeah, I was okay. That's a little early.
6:53, and walks past the radio studio before even going into it. So,
Yeah,
just to set the stage for who gets here first in the morning. I'm getting more feedback now about you and I doing a tie swap than anything else.
I'm glad that's important stuff.
Joining us now to discuss, not that, more important things, Subhadra Rajappa of SocGen. Subhadra, welcome to the program. What are you expecting to see in 13 minutes' time?
Hopefully no fireworks. I mean, I think that we'll be looking to see what the changes are to the statement. And at the press conference, I'll be listening to Powell and see if risks are a little bit more two-sided as opposed to, I would say for a good portion of this year, the expectation was that the Fed would deliver cuts later on this year. So, the price action in the bond market's been very, very interesting, as you've been talking about. I mean, 2-year yields are close to, 3.90, maybe headed towards 4%. But what's happening globally to global bond yields is even more interesting to me. So I think what might overshadow the Fed today is the ECB meeting tomorrow, and whether they sound hawkish and there's more potential for them to hike maybe 2 or 3 times this year.
Subhadra, before we get to tomorrow, there's a long road ahead of us, not only the Fed press conference, but also earnings in the United States. Do you think that anyone would care in markets if this Fed moved to a two-sided risk type of signaling, given the fact that the leadership at the top of the Fed is likely to change to someone who's going to be getting an earful from the White House?
And I think that that's really been the bias of the market, is that when Kevin Warsh becomes the chair, the Fed would sound somewhat dovish and, in fact, potentially deliver a couple of cuts this year. But, I mean, that is, yet to be seen. I think that I still think that the bar for the Fed to hike rates is still relatively high, but we'll be looking for the nuance in the statement, because it's still a committee decision ultimately. And if you do see a persistence of this conflict over a much more extended period of time than what the market's prepared for, and this actually leads to much higher realized inflation, then the Fed will definitely be in a very tight spot.
Bob, Michael, what happens if we do get a persistent higher yield, to pick on the old benchmark to 30, if we get a persistent 5 or even 5.1% for more than 7 trading days?
I think then you have to start to think about what is the Fed going to do. And if the Fed is going to validate that move higher by switching first to a more symmetrical policy stance and then start building in rate hikes, perhaps at the end of this year or early next year, then yeah, you're going to see rates drift higher and stay there. But if they remain more balanced to the downside and thinking about this is transitory, we'll get through it, that will offer us a chance to bring rates down, and the dots don't change in the June meeting, then I think you'll see rates start to settle back down.
Let's say they go with a more symmetrical reaction function. This is what I'm interested in from your perspective. You're in the market. Would you believe them, or would you fade that move? Is that just a communication exercise, or does that display any real intent?
I would 110% believe them. I think it's an enormous policy shift from where they've been over the last 9 months. I think they choose every word carefully. They would sit there and deliberate. They also know that at some point, Jay Powell is going to leave. So do you change something that important right as Kevin Warsh is about to step in? So yeah, I would imagine that they're concerned about.
I have no doubt that the market would react to that move. But Subhadra, from your perspective, is it a move that you would fade? A move that you would take the other side of?
It'll be tempting to kind of look at that and say, you know what, maybe if 2-year yields start getting meaningfully above 4%, that might be a buying opportunity. I don't know if that's necessarily a fade. You do get a good opportunity to be long the front end under those circumstances, because ultimately the expectation is that the bias of the committee will be somewhat dovish, and this could be a high yield to lock into. I think going back to the Fed stance, the U.S. is in a very good position overall, and we're energy independent. Yes, the higher oil prices are going to hit the consumer, but for the most part, I think the economy is in a very strong trajectory. So I just don't see any need for the Fed to really change its bias or react in a meaningful way. So to me, that signals a buying opportunity in the front end.
Elisa, this is a central question to a key part of the yield curve right now. Does the 2-year have any business trading above where Fed funds is at the moment?
Ultimately, if this inflation does remain sticky and people can look through it, absolutely, because then you have to imagine that a rate hike is in the picture. And to your point about, do you sell anything, do you not believe them? Well, sure. If everybody does that, then they don't get the tightening that they want, and then they got to go even harder. More. So it's it's sort of this is lots of fun.
It just feels like a communication exercise at the moment. Still feels like, from my perspective, listening to Fed officials right now, that the bar to actually hike is still extremely high. Now, maybe that changes with guidance, and you'd have to respect that guidance in the next 60 minutes. But certainly the way they've set things up with their own communication into this particular decision, it still feels like the bar is pretty high.
This is the reason why the dollar has underperformed places like Europe, even though you look at the U.S. economy and it's outperforming, because people believe that Europe will hike rates, and in the U.S. they won't, even at the expense potentially of inflation running a little bit higher for longer.
All of that can change in the next 10 minutes, the next 60 minutes, the next 90. Matt Lazzetti at Deutsche Bank joins us now for more. Matt, in your opinion, let's go through what you expect to see. Is this a Federal Reserve that's willing to drop its easing bias, given that crude is back close to 120?
Yeah, I mean, that is the central question for 10 minutes from now when we get the FOMC statement. I think that there's strong fundamental reasons that they should potentially adopt a more balanced language. The economy is looking pretty resilient. We got very strong CapEx data out this morning. Labor market looks more solid. Downside risks have been diminished. Inflation's at 3% on core PCE for the 5th or 6th straight year, and we think they're essentially at neutral. And so I think that there should be a discussion about a more balanced outlook. At the same time, I think strategically they are unlikely to adopt that in 10 minutes' time. In part, there's a lot of uncertainty. They don't want to change the communication language today, only have to unravel that at the June FOMC meeting. They probably don't gain much from going two-sided given market pricing at this point in time. And finally, just ahead of a turnover in Fed leadership, I think they might want to allow for Kevin Warsh to kind of give his view on what that communication should look like. And so I think fundamentally we should be having that conversation, but I'm not sure the Fed adopts it today.
Matt, what's the liability for this Fed if they don't adopt that kind of messaging, this sort of symmetric risk type of approach, given the fact that the market seems to be somewhat subdued on inflation expectations? If you look at the five-year forward break-evens, are there any signs that the market is pushing back on a Federal Reserve they perceive to be overly dovish if they maintain a cutting bias?
No, I think that's exactly the point, that they're at the moment, it doesn't look like they're at any meaningful risk of, if they don't send a materially hawkish signal, that inflation expectations will pick up materially, or that you might see financial conditions ease in a way that they might not like. I think that they're probably happy with where market pricing is for the Fed this year. Forward-looking measures of break-even inflation rates or inflation swaps are relatively subdued. So at the moment, it looks like a relatively low-cost choice for them to not adopt that language at this point, when there is the potential cost that, given the uncertainty that we have today, you have to undo that communications change at the June FOMC meeting. And I think that the Fed just likes to avoid those types of outcomes where they have to quickly flip on their own communications.
So Matt, speaking of forward-looking, what if the dots go away? How blind will you be at Deutsche Bank if Chairman Warsh does away with the dots?
Yeah, part of me would not mind seeing the dots go away. I think having to think about those in great detail every quarter as we look ahead. I think many Fed officials might agree with that as well. I think that there's times where they view the dots as constraining their potential reaction function in the near term. No doubt when you set the September dot, it does seem to back them into a corner a little bit for that December outcome. But I don't think they completely go away. I think more likely they change in a way that reduces their forward guidance signal. Potentially that they talk more about central tendencies, that they go on a rolling window. The dots stay, but their influence is reduced.
John, should we medicate Bob Michael? He seems like
He
he's
didn't seem
going to
too
come out of
happy,
his
did he?
chair.
As soon as you were asking that question and Matt started to answer it, Bob Michael just shaking his head.
Yeah.
You disapprove?
Yeah, Matt Lizzetti, has a day in your career ever gone by where you haven't had to render opinion on the direction of rates? Have you gone 10 minutes into a conversation where somebody hasn't said, well, where do you think rates are going? I have about a dozen meetings a day, and everyone expects you to have a view on rates. Here is the body that sets the cornerstone for rates, and they're telling us they're not going to give any guidance because it's too difficult? Nonsense. I think they should do dots every meeting. They should put it out there. We're expected to have a view on rates. They're set the cost of money in the system. It's crazy that they're going to drop forward guidance. Okay, I've said my piece.
I agree with Bob there, but as somebody that has to identify each individual dot, I wouldn't mind if they reduce the emphasis on this a little bit. Completely agree with Bob. I think that there's some views that they might drop them completely. I do not think that happens. At the same time, I think that the Fed is overly worried about the precision around the dots and the focus on the median dot in an inappropriate way. And I think there are just some things that they can do to keep the broad guidance, but to downplay the precision of that forward guidance, perhaps by focusing on the central tendencies.
So Matt, just to weigh in, just tell us a little bit more. How's that going to change, do you anticipate? How should it change? Just show the median dot, not show the dispersion?
So I think when you look at the SEP when it was originally introduced, it did not have even the medians. It had the central tendencies and the ranges. And I think, that is probably an outcome that Kevin Warsh prefers, which is that, I think last week he noted that on inflation, he doesn't look at anything to the right of the decimal point. And so I think he wants to reduce the emphasis and the over-precision that you see within the Fed, forward guidance, which might be precise and can become counterproductive. And so I don't know that they lose all that much by doing away with the dot plot and the specific median that everybody focuses on, and simply to say, look, this is where we think the direction of travel is for rates over time. We're not going to tell you exactly exactly where we think rates are going to be, and we think people focus too much on the medians. But here is, broadly speaking, where we think rates could go over the next 2 years.
Bob Michael's not done, by the way. Forgive me for jumping in.
No,
Please carry on.
Go to a trim mean on the dots.
Okay.
There you go.
That's the direction
Give
of
the
travel.
trim mean and the high and the low of the trimming.
Matt, it's good to see you. Matt Lazzetti, alongside Sebastian Rajappa, counting down to this Fed decision. That Fed decision is about 90 seconds away.
I am there for all of the dot passion this morning or evening or wherever we are right now. All I can say is this is definitely a clear thing that we can analyze and discuss, which at least is positive for us. So for us, it's fodder, as well as for analysts who also can point to that.
Quickly to Bob Michael's point, Robert Kaplan, ex-Dallas at Goldman Sachs, was brilliant on this today, taking the victory lap for Dallas on trim mean. But the research out of Kansas City, and particularly out of Cleveland, on what do you do with inflation to take out the excesses, and then that wandered down to Dallas, and that's what Powell and Michael are talking about, the importance of that trim mean.
It reminds me of that hearing with Kevin Walsh in the last week or so, and I think this will be an important question in the news conference later on this afternoon. Inflation's a choice. That was a pretty powerful statement from an incoming Fed chair. Inflation is a choice, and I wonder how the current Fed chair might respond to a question on that later on.
Well, are you saying we choose the inflation to be high, or are you saying we're choosing which metric to look at to decide about inflation? Because those are two different things.
I thought what King Charles said in his speech yesterday about inflation was really poignant.
You really love the
I'm sure
Royals,
you hung on every minute.
You really love the Royals, don't you?
I do.
Yeah.
I thought it was really quite
We're not talking about King Charles in this program.
He mentioned inflation.
This is a royal-free zone, okay?
Sort of.
Let's turn to the price action. Got a king around the table, don't we? Okay, decision, seconds away. Equities negative by 0.1% on the S&P 500. Bond yields elevated, crude elevated. Mike McKee has your decision.
No change in rates, but we have four dissents. Lori Logan, Beth Hammock, Neil Kashkari agreed rates should stay on hold, but they did not support including an easing bias in the statement at this time. Stephen Myron wanted a quarter-point cut. The last time there were four dissents, October 6th of 1992. As for that easing bias, the statement still contains the phrase, in considering the extent and timing of additional adjustments to the target range, a line meant to suggest that the easing cycle has not necessarily ended. The Iran war figures prominently in the economic overview. Inflation is elevated, in part reflecting the recent increase in global energy prices, the statement says. Developments in the Middle East are contributing to a high level of uncertainty about the economic outlook. The committee remains attentive to the risks on both sides of its dual mandate, it says, even though recent indicators suggest that economic activity has been expanding at a solid pace. Job gains have remained low on average, the statement says, and the unemployment rate has been little changed in recent months. The dissents open up a whole new line of questioning for Chair Powell. Four dissents would ordinarily be a sign of discontent with the chair. Since this is likely Powell's last meeting as the chair, it may not be anything more than expressions of concern about the toll of the war. At each meeting this year, the number of open market committee members who have worried they might have to raise rates has increased. We shall see when we get a chance to talk to the chairman.
Mike McKee, stay close. I just want to run through the price action. I've got a big question to come back at you with in just a moment. Equities have stayed slightly lower, no drama here, down by 0.2%. Into this decision, yields were already elevated, particularly at the front end of the curve. They stay somewhat elevated, up 7 basis points at 390. This isn't the kind of decision that moves around crude. Crude is still higher by 6 to 7%, 118 on Brent. Mike McKee, I just wonder, coming into this decision, we were talking about the possibility, the potential that this Federal Reserve introduced some symmetrical reaction function. But looking at that kind of dissent, I wonder if the dissent alone has achieved the same thing, just by introducing some two-way risk, given the level of dissent you can see in this afternoon's decision.
That's a very good point, because, of course, if Powell leaves the Fed, that's one less vote that we know would be on the easing side at this point. We're going to have to wait for the minutes unless the chairman wants to give us a number, which I doubt he will, of people who think that they should be at least suggesting the idea of raising rates in the future. But it's obviously grown since the last time, and feelings have grown more certain, at least among those who think that two-way warning should be included in the statement. statement. It's very, very unusual. Obviously, it has been almost 30 years since we've seen anything like this, and it is definitely a sign that the Fed is split over this question. And one would think that if these people were willing to dissent because they wanted a two-way warning, because they did not want an easing bias in the statement, that they probably would have voted for a rate increase had that been on the table.
Mike McKee, appreciate your time. You're getting the news conference. Looking forward to your line of questioning a little bit later. That news conference 27 minutes away. We have an 8-4 vote at the Federal Reserve. That's some level of dissent.
Yeah, and didn't Mike just say that that was the first time we've seen that since October 6, 1992? This is unusual. To me, this really highlights the committee aspect of this, and the fact that Fed Chair Jay Powell, for all of the jawboning from the president, sits on the more dovish end of this, and I think that that's very notable. So how does he message this, given that A, he probably doesn't matter as much, but B, how does he signal that this isn't necessarily a sign of dysfunction ahead of a new Fed chair coming in, but rather how difficult this moment really is?
The expert on this is John Farrell, is the gentleman from the United Kingdom, where dissent is far more evident. There were 2 moments of 4 dissents in the 89-92 period, and the distinction here, John, is those dissents were to ease, to let up as Greenspan was stricter, and this is radically and historically different.
So I remember a level of dissent, a degree of dissent back at the Bank of England coming out of the financial crisis.
They basically told Mervyn King what to do, right?
He wanted more QE. Yeah. And I remember the governor being voted down on countless occasions. On this occasion, I'm looking at this level of dissent, and I just wonder if the chairman would welcome it. I think it's probably a good thing right now that there is no groupthink, that we're in a situation at the moment that deserves some kind of debate about where policy should be and where's it going and what kind of risks we face in the economy right now. I actually also think that that's the kind of committee that Kevin Walsh should want to inherit. Groupthink has been a problem at this institution for the last 5 years. I wouldn't look at that as a committee that's voted down the chairman in quite the same way that the committee voted down the governor at the Bank of England a number of years ago. This feels somewhat different. And if you want to move to some kind of symmetrical reaction function at the Federal Reserve, based on that vote, I don't think you need it in the statement. I think the dissent already speaks to it.
Which I think is why I'm noting the increase in the dollar more than anything in bond yields. You're seeing a strengthening in the dollar versus the euro, and that, I think, gives you a sense, maybe at least of the Fed independence question and the fact that this truly is a committee.
But to get out front of the pundits, is this the committee in dissent that President Trump wants?
That's a different question.
Yeah.
This president clearly wants lower interest rates, TK. And the kind of thing that we've just seen voted for right now is not for lower interest rates. You've got a committee that's worried about the prospect of a market, thinking they'll always get interest rate cuts, that they don't have to worry about inflation. First and foremost, the first rule for any central banker, any real central banker, anchor inflation expectations. This is part of that exercise.
Yeah, as Neil Dutta put it, he messaged, it's clear that Walsh has his work cut out for him. Good luck convincing some of these folks that it's time to cut rates and potentially overhaul the whole system.
Different question entirely. Bob Michael with us around the table from JP Morgan Asset Management. Bob, your early reflections on this decision?
Yeah, clearly it's in the dissents. Clearly they're moving more towards a symmetrical policy. It's confirmed in the first paragraph where they characterize inflation previously as remained somewhat elevated. They removed the somewhat and it's just elevated. So they're telling us they are increasingly concerned about the level of prices, the level of oil, and the potential pass-through to the system. I think you're right. I think this is less a message about J-PAL and more a message to the incoming Fed chair that, hey, we could be dissenting. Get prepared for that. I think he may welcome that.
TK asked the question about the president, what the president would like. This is another exercise. It's quite important. Everyone's been worried about the future of the Federal Reserve, central bank independence, will the chairman stay on? That degree of dissent makes the life of, I think, Chairman Powell easier to walk away from this institution. There's no capture of this institution. This institution is still independent. Inflation expectations are still anchored, and that is not dependent on Fed Chair Jay Powell staying on as a governor on this board for the next 2 years.
I see what you did there. So maybe they agreed. 4 people dissent, although one of them is perhaps in a different direction.
I'm not suggesting this was choreographed. And then opening the door to Jerome Powell coming out and saying, I'm gone. Good luck for you. Go ahead, Kevin Walsh. I'm not suggesting there was any choreography here, just that there are some benefits to that level of dissent. Stephanie Roth of Wolf Research has been going through the statement, reacting to all of this and looking at the price action. Stephanie, your early take, please.
Yeah, I mean, I think, one, it tells us that the committee is certainly divided, and they're not going to be a committee that's willing to just cut rates because Warts wants them to do so. And it's also interesting because in in the hearing last week, Warsh noted that he wants debate in the room, but he wants a more unified statement, and that's certainly not what we got today. So the odds of cuts later this year certainly should go down on the back of what we're seeing today. It's just a committee that certainly doesn't even want to have an easing bias, let alone easing in the near term.
Stephanie, does it surprise you that more members of the Federal Reserve didn't get on board with moving to a more symmetrical type of approach?
A little bit. I mean, certainly it sounds like it was a fairly divided group, and perhaps there were others that were even more on the fence that didn't officially dissent. This was a big question for the meeting today. There was actually two big questions. One was, were they going to maintain the easing bias in the statement? And many thought that they would actually remove it. So that was, perhaps a bit of a surprise to some extent. And then, of course, the other question is, how is Powell going to answer the questions about what his plans are once Warsh is actually confirmed?
Bob Michael, what is our overall stimulus right now? I know we had timing for tax season where everybody got a check in the mail and all that, but is all of this discussion about an historic post-COVID stimulus that is just starting to make the wheels come off the wagon?
Yeah, well, when I was listening to Matt and Subhadra earlier, going into this, I was thinking the Fed would be nuts not to move to a symmetrical posture because we know we have higher prices. And what I heard from them is the economy's doing just fine. They're right. You've got the stimulus from the One Big Beautiful Bill Act. That's not finished. We know there's a tremendous amount of CapEx. When I talk to our clients, they're just getting started on the AI journey. There's a lot more spending to come. And we also know there's a lot of money sloshing around the system. You look at any measure of money, M2, right, deposits, money market funds, they're still going vertical.
Can I do an audible?
Yeah, you're about to.
We're about to do an audible here to get to 4 p.m. and 4:15 p.m. You're the bond pro. What's the so what of $30 billion from one of these Mag 7s? They're going to put the money out. They're going to call Bob Michael. It's all going to go to J.P. Morgan. And when they do that, what does it mean for the dynamics of their balance sheet? What does it mean for the dynamics of the American fixed income market?
Well, the guys reporting today, if they were to issue $30 billion, you'd hardly notice it. That's how big they are. That's how little leverage they've carried. And in our conversations with a lot of big borrowers, we want to know, do they see the demand? These guys have the demand. They'll show you the demand, and they can't monetize it until they put in place the capacity. So there is a big build to go. And I think these guys are right to borrow and get that bill going.
Can I say you some twos at 393, up 10 basis points off the back of this?
You asked me, what if the Fed did this? And we never really thought they were going to do this. It's a very artistic way to do it. Nope, I wouldn't touch it
To that point, to that framing, that's really important. Haven't they achieved the same thing? You don't need it in the statement. Haven't the dissents achieved the same thing?
Well, it's kind of in the statement. It's the last line of the statement. And you talked about, was this choreographed or not? I absolutely think it was. Every single word in the statement is choreographed. They sit there and they debate it. I think this very nicely opens the door for Jay to peacefully depart from the Fed.
So this is their sort of offering to him, their farewell gift to him, as here you go, and that ultimately we're going to give Kevin Warsh a hard time?
Okay, I didn't say that. I think what they're indicating is we recognize inflation's a problem. We're not going to sit there and keep advocating for more monetary ease. We're going to be more balanced. Don't worry about the independence of the Fed, Jay. Go off into retirement.
You said you wouldn't buy it. Why wouldn't you buy it?
Because I think the Fed has flipped the tables on the markets right now. And
what does that mean?
I think they've now shifted to something, it's not outright hawkish, but it's more hawkish than where they've been. And then you step back and go, there is still stimulus out there. And we're in the middle of the Middle East conflict. Those things have yet to be settled. Let's just get out of the way of this and see where the market's
Okay, so let's build on that. Let's extend the conversation a little bit more. 10s are at 441 right now. What kind of numbers are you thinking about?
Well, we're breaking through to new highs. I don't think you get to 5%, but do you get to something like 4 5/8? Probably. Then I'd get interested. Then you're putting a percent on the Fed funds rate. And I think it's one thing to switch to a symmetrical bias. It's another thing to actually come in and start hiking rates. And I did say I don't expect any changes in rates this year. That's cuts or hikes.
John, 5/8 is how we used to quote paper. We'll do 30 seconds in the next hour.
I'm aware. 10's right now at 441. With this move at the front end of the curve, as I mentioned, up 10 basis points. 394, let's call it 393. Equity's starting to break down just a little bit. Don't want to make too much of this. We're down by 0.3% on the S&P 500. You will notice, Brammer, the underperformance in the Russell down by 1% plus.
These are the companies that are most vulnerable to rates going higher. I really am struck by what Bob's talking about because this is a market shift. And really it does highlight how much this war has changed the dynamic fundamentally for people who believed that rates would just gradually go lower. And if they don't, how much does that change some of the expectations about the equal weight market, which we've seen being baked in, and frankly about the broadening out trade, and adding to that, how much steam can there be behind some of the tech trades that are somewhat dependent on some of the consumer aspects? I'm thinking, for example, Meta, advertising, or Amazon, your cleaning supplies, your children's costumes, whatever.
Children's costumes?
I end up buying a lot of those.
Okay, what, ahead of Halloween? Just getting the discount in?
Also senior parties.
Okay, all right. Important stuff. Hey, Stephanie, good to hear from you this afternoon. Thanks for your time. Stephanie Roth there of Wolf Research. To talk about the equity market, Kate Moore of Citi joins us now for more. Kate, yields are starting to move higher. Getting a squeeze over in crude. Brent out to close to 120. Equities somewhat softer, but not really looking at this as a dramatic event. How would you frame things?
Yeah, I don't think today's event with the Fed is the big event for equities right now. This is also like a massive lollapalooza when it comes to earnings this week, which you know, Jonathan, quite well. And I think the equity market attention is much more there. And so far, everything that we got yesterday, expectations for after the close today and tomorrow are for actually quite strong numbers, reiterating not just the AI tech story, but also actually a very solid U.S. consumer. So I think that is really where kind of equity risk is focused right now, less so on this, what I would argue is also a very interesting set of dissents in the FOMC.
Kate, that said, is there a level or is there some sort of rate of change that gets you concerned as an equity investor about what's going on in the bond market should this Fed suddenly move to put rate hikes squarely on the table?
It seems unlikely, in our view, that the Fed is going to put rate hikes on the table, Lisa. I would say that is not in our kind of any of our distribution for the back half of this year. Stability, even as inflation is warm, and even as the Fed is going to wait and see and more dissent happens across the FOMC. But we, of course, will watch what happens because the relationship between equities and bonds has broken down a number of times over the last couple of years. The correlations are not exactly what they had been historically, and bonds have not been the safe haven asset that some people had become used to in their early days of asset allocation. So across our multi-asset portfolios, we've been more tactical. We've continued to be short duration. I heard Bob a moment ago say he wouldn't be buying 2 years at this point. I tend to agree with that. And we tend to like to take most of our risk on the equity side and think about other diversifiers outside of the fixed income space.
Kate, I look at where we are in the market, and John, I brought this up today because, frankly, I have misplaced this. The Dow up 20% 1 year trailing. SPX up 28% 1 year trailing. All in NASDAQ up 41% 1 year trailing. Kate is completely separated from the nation's angst. What do you see as an indication that that keeps going, and how can the Fed assist with that?
Yeah, Tom, one of the things we've been focusing on and something our investment committee was talking about earlier today is the massive dispersion in terms of sectoral earnings, not just this quarter, but through the balance of 2026. And this is also kind of what we're seeing in the overall economy. We've gotten tired, I think, of talking about the K-shaped consumer because even the bottom part of the K seems to be holding up relatively well with decent real wages. But there is a huge amount of dispersion below the surface in the equity market fundamentals and in the macro fundamentals. And that can make people uncomfortable. But unfortunately, what's really driving the market higher has been extremely strong earnings and expected free cash flow from the largest parts of the market cap. And we continue to stay kind of anchored to the equity risk and loving U.S. large caps, even as we recognize it is going to be a very uneven experience and perhaps a better opportunity for some more active management as we go through this year.
Unfortunately, part of the dance right now, monitoring equity markets, bond markets, markets and commodity markets, more importantly, is following these headlines regarding the Middle East, and we've got more from the president. This time, some comments on the Russian leader, Vladimir Putin. They've had a conversation. The Russian leader said he'd like to help with the Iranian enrichment. There has been some suspicion for a while that maybe that enriched uranium would be moved to a third party, and perhaps that would be Russia. And some headlines, I have to say, looking at this, that alludes to that, Lisa, at least this afternoon. Now, as we've said on countless occasions over the last 2 months, one headline that speaks to one story will last about 5 minutes and things can quickly change. All I can do with you is share with you the current headlines, and they're the headlines that dropped just moments ago.
Yeah, and they include the idea of potentially having a ceasefire with Ukraine and Russia, and then uranium moving from Iran over to Russia. I mean, a lot of things that are a lot of questions. What you do with this, I think people have shrugged it off and moved on because they don't know what to do with it because it's just a headline. So they look at things like, oh, the placating idea of rates going down. You start removing some of these pillars, that's when suddenly some of the angst starts to percolate up a little bit more.
Initially, I think this market took comfort from the intent. The commit to de-escalation, the commitment to de-escalation, and not returning to hostilities. But the fact of the matter is that over this entire period, crude's not been moving, energy's not been flowing sufficiently, and every day over the last 8 sessions, crude keeps grinding higher. What's intriguing about this, every time we get a bit of hopium, some headlines, some reports here, there, and everywhere, crude has really stopped responding to it in the same way.
Yeah.
Brent is still elevated here, TK, at 118 and up on the session by 6%.
I really agree with that. And you see the angst in Southeast Asia and other selected geographies, and it's way more tangible than anything we have. The sum of this is real GDP and the inflation piled on top of it. Kate Moore, if you're still with us, I'm absolutely fascinated how you feel nominal GDP will affect our listeners and viewers. It's still going to be buoyant, I guess, but it's a different nominal GDP, isn't it?
Yeah, it is. And look, I think some of this, Tom, is getting reflected in the consumer confidence data and the surveys that have come out where consumers are talking about their discomfort. It's not just high gasoline prices. Maybe it's they don't like the direction of the country. They don't feel as confident as they have in the past. Yet the thing that I keep anchoring on is actually what's happening in their behavior. And we've been looking at all this high-frequency consumer data, whether it's around dining outside the home or traveling and spending. And we got some good reports from a couple early consumer companies this quarter. And all of it is showing that despite all these negative surveys, people feeling uncomfortable with the path of the economy, that they're continuing to operate more BAU. So, Tom, this is a little bit of a friction I think we have, which is maybe we don't get a massive acceleration that benefits all parts of the economy, but as long as both the consumer and the AI tech space continue to fire, we feel like you can't be on the sidelines for risk assets.
Hey, Kate, it's good to see you. It's great to catch up as always. Kate Moore there of Citi, breaking down this equity market and reflecting on this decision from the Federal Reserve about 20 minutes ago. If you're just tuning in, welcome to the program. In about 10 minutes' time, we'll hear from the Chairman of the Federal Reserve, Chairman Jay Powell, in what should be, his final meeting at the Federal Reserve. Just moments ago, 20 minutes ago, we had a decision from the Federal Reserve to leave interest rates unchanged. What stood out was the degree of dissent, 8-4. 8-4, and that 8-4 vote marking the first time since October 1992 that 4 officials have dissented against an FOMC decision. So something we haven't seen in a number of decades. All of this in anticipation of earnings after the closing bell from some of the biggest companies on the planet, including Microsoft, Amazon, Meta, Alphabet, all of that still to come, which has supported the NASDAQ. The NASDAQ is still positive by 0.25%. But if you want to look at the small caps right now, the Russell down by 1%. Allow me to give you the why. This move at the front end of the yield curve on a 2-year, up 9 basis points to 393 off the back of this move in the commodity market. Lisa, Brent crude 118 and up 6%.
Fed funds futures have now priced out completely any rate cuts this year. We are now pricing out interest rate cuts by the Federal Reserve for 2026. Whether we shift to people starting to price in rate hikes like we did a couple of weeks ago, that remains to be seen. It also is unclear exactly how much the press conference can really do to that. It will be political intrigue and drama with Jerome Powell's future. Nonetheless, this market is moving. It's responding. And the idea that the strength in the U.S. economy can continue is the reason why this is viewed as more inflationary right now than maybe disinflation or outright deflationary later on.
The cross-asset moves are particularly spectacular. We've gone back to where we were about a month ago. About a month ago, when the equity market was about 13 percentage points south of where it is right now in the S&P 500, yields are back through the highs on some maturities. I'm looking more at the long end of the curve, the long bond on 30s. And crude has made new highs as well. And what's more important, I think, away from the front month of the futures curve is what's happening on longer dated prices as well. You've talked about this throughout the week on Bloomberg Surveillance, Bremo, where December's trading, where the latter months are, the back end of the futures curve. That's making new highs as well. This is a market that's pricing high for longer, not just for interest rates, but for energy as well.
Yeah, and that's why we always have been talking about boiling the frog, because it's getting hotter and hotter and hotter. And at what point do capital markets start to slow down as a result of benchmark rates going higher and inflationary pressures being there?
This has been the exercise for us now for the best part of 2 months. Energy shock, rate shock. What does it mean for growth? But that's the question. I think is still an open-ended question, really. We've seen it in commodities. We've seen it in energy. And I'm asking this question with America in mind. Before we get to the international backdrop where it's much harder, what does it mean for U.S. growth, if anything at all?
Well, I think we have to acknowledge that the three dissents weren't in favor of hikes. They were in favor of a more symmetrical policy, which leaves 3/4 of the Fed still biased towards ease. So let's accept that. That said, the bar to hikes just got lowered a notch. What does it mean for growth? It means that unless the economy can absorb higher prices from energy and higher cost of funding from where rates are, then you're going to see a real slowdown.
At what point do higher yields start to crimp the capital markets activity? I'm talking about all the bond sales. I'm talking about beyond that, mergers and acquisitions that have been absolutely flying recently.
I don't think we're there yet. I think really you'd have to get the 10-year above 5% to create any kind of damage. And let's also remember that most of corporate America finances itself with floating rate. We should know that from private credit and direct lending now. So unless the Fed is going to start hiking rates, which we're not calling for this year, then the cost of funding for most of corporate America is going to remain roughly the same.
Is the Fed doing policy for the haves? It's just as simple as that. The dichotomy here between the haves and the have-nots, we witness the tension of 4 cents. How does the new chairman address the have-nots, the people flat on their back?
I don't think it's a question of have or have-nots, and I think you go back to the 2022 experience. I think they're scarred from that. They were late to react. Inflation was painful, and it hit all levels of the economy, both the haves and the have-nots. And I think they are genuinely, as a body, trying to get their arms around that. And there are a group of people who are courageous enough to step forward and do something different than what's been done in the past.
What will the next meeting look like for you? If you guess right now what the next meeting will look like.
I think there will be a lot more two-way debate on whether they should be hiking rates.
Right.
Will they have to cut rates down the road, or will they remain?
Larry Meyer wrote that monograph years ago about Alan Greenspan, and there was some real back and forth going on way back. Is that what we're up for now? Is a Lawrence Meyer, Alan Greenspan Fed with Chairman Warsh?
It doesn't feel like the Middle East is in the rearview mirror, or will be 6 weeks from now.
I've got a personnel question. When they next meet, should be Chairman Warsh. Is Powell there or not?
I don't think he will be.
You think he steps away?
I think the Fed is in good hands with Warsh. I think you've had a group of people say, don't worry, we're still independent. And I think you've just got to pass the reins on and let somebody else try things that may be a little bit more innovative, a little bit different from what you've done.
Is there a market liability if he doesn't do that? Is there a market reaction?
I don't think so. I think there will be a lot of concern that it's too much of a political decision. I think the door is wide open to exit gracefully.
John, June 17th. I guess I got to cancel my plans. I was supposed to be in Cheltenham, but instead June 17th, I'll be here.
Two things. One, Cheltenham. And two, for the record, I won't be here. I will be away. I won't be at Cheltenham, though. So
I'll be missing Cheltenham?
I'll be missing that one. Does this make the life of Kevin Warsh just that little bit easier? Entering the Federal Reserve, this might sound somewhat counterintuitive, but entering the Federal Reserve under a little bit of a dark cloud, where some people are concerned, particularly the Fed watchers, about the future of this institution and central bank independence. I think not only have these dissenters done Chairman Powell a favour, I do think they've done Kevin Warsh a favour as well. Yes, he doesn't want this playing out in public, but one of the criticisms of this institution, particularly under Chairman Powell, is the groupthink. I think it's refreshing to see the dissent. We've been asking for it for ages. You can't complain about it once you've got it.
Not only that, But arguably, the inner Kevin Warsh is a hawk, is somebody who wants to say inflation is a choice. He didn't mention employment once. We didn't talk about the labor market in those hearings. He wasn't talking about the average American flat on their back. He talked about inflation and how important it was to the credibility of the Fed to get it under control. So what's the risk that he comes in and is actually incredibly hawkish and joins those three other dissenters in case of a more symmetric risk? What does the market do with that?
This is the secret sauce of central bank independence. If you want to make it easier to cut rates, convince the market you're willing to hike. And we have gone some way through that exercise this afternoon with this degree of dissent.
What's interesting is what Bob said, is that levels here are not going to necessarily hijack any of the capital markets activity. It's not going to slow the M&A. It's not going to slow the huge tech trade that's really been the ballast to this market. So what exactly is it going to do to actually slow the economy and actually achieve what the Fed is looking to do?
Bob Michael, in just about 90 seconds' time, the chairman of the Federal Reserve, Jay Powell, walks into that room and steps up behind that podium for probably, likely, the final time. Just a reflection on this man and his tenure at this institution.
I think he was dealt some shockingly difficult circumstances, and I think he did his best to navigate through them. We did get through COVID. We got through the regional banking crisis. We've gotten through different rounds of tariffs, and we're looking at an economy that's actually doing pretty well considering. I think he's done a really good job. And Warsh isn't an outsider. He's an insider. He was at the Fed before. He'll do a good job.
Bob Michael, appreciate your time, sir. Thank you. Bob Michael there of JP Morgan Asset Management. In just a moment, the chairman of the Federal Reserve, Jay Powell, stepping through that door, stepping behind that podium for most likely the final time, following this decision at the Federal Reserve to keep interest rates unchanged, with an 8-4 vote on the FOMC, something we haven't seen since the 1990s, as we get some dissent pushing for a Federal Reserve to articulate a more symmetrical reaction function. Ultimately, that view was voted down. How this Federal Reserve is set up for Kevin Warsh, what kind of FOMC he's inheriting, is going to be an important part of the discussion that we have over the next 60 minutes in this news conference. And also, the future of this chairman, not as the chairman, but as a governor of the board. He has the option to stay there until 2028. Will he take that option? Will we find out in this news conference? The last time we heard from the chairman of the Federal Reserve, he wanted that DOJ investigation into this institution wrapped up with transparency 1 and finality 2. Have we met his bar based on what we've heard in the last week?
And has anything that the Fed did in terms of the committee and the dissents there given him a green light to take this exit stage and go off to golf and give speeches, et cetera? Ultimately, what he says here will be more for the political aspect than it will necessarily for the path ahead for the Federal Reserve, because ultimately that job has been done. The committee is no longer a committee of 1. It is a committee of 12, and they are asserting the power of disagreement. That, I think, does make it somewhat easier for him to come out and have his swan song.
This is how the stage is set going into this news conference. The scores look like this. Equities on the S&P 500, negative by just 1/3% on the S&P. On the Russell, the small caps down by about 1%. The move in the small caps driven by this move in the bond market on 2s, 10s, and 30s, elevated at the front end of the curve. A move on the 2-year of some 10 basis points. Call it 8 or 9 right now at 392. That's the move in fixed income. Off the back of this big move in crude, 8 consecutive days of gains for Brent crude, the longest daily winning streak we've seen for Brent going back to 2022 and May of that year. For the final time, your chairman of the Federal Reserve, Jay Powell, steps up to the podium. Let's take a listen.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy has been expanding at a solid pace. While job gains have remained low, the unemployment rate has been little changed in recent months. Inflation has moved up and is elevated, in part reflecting the recent increase in global energy prices. Today, the FOMC decided to leave our policy rate unchanged. We see the current stance of monetary policy as appropriate to promote progress toward our maximum employment and 2% inflation goals. Developments in the Middle East are contributing to a high level of uncertainty about the economic outlook, and we will remain attentive to risks to both sides of our dual mandate. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand at a brisk pace. In contrast, activity in the housing sector has remained weak. In the labor market, the unemployment rate was 4.3% in March and has changed little in recent months. Job gains have remained low. A good part of the slowing in the pace of the job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including job openings, layoffs, hiring, and nominal wage growth, generally show little change in recent months. Inflation has moved up recently and is elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 3.5% over the 12 months ending in March, boosted by the significant rise in global oil prices that has resulted from the conflict in the Middle East. Excluding the volatile food and energy categories, core PCE prices rose 3.2% over the 12 months ending in March. This relatively high rate largely reflects the effects of tariffs on prices in the goods sector. Near-term measures of inflation expectations have risen this year, likely because of the substantial rise in oil prices. Most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5% to 3.75%. The economic outlook remains highly uncertain, and the conflict in the Middle East has added to this uncertainty. In the near term, higher energy prices will push up overall inflation. Beyond that, the scope and duration of potential effects on the economy remain unclear, as does the future course of the conflict itself. We will continue to monitor the risks to both sides of our dual mandate. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. This is my last press conference as chair, and I will close with a few thoughts. First, I want to congratulate Kevin Warsh on his advancement out of the Senate Banking Committee this morning. This is an important step forward, and I wish him well as that process continues. The Federal Reserve exists for one fundamental purpose: to foster the economic conditions in which American families and businesses can thrive. Stable prices, a strong job market, and a financial system they can depend on. Every decision we make, whether about interest rates or regulatory and supervisory matters or other issues, is made in service of that purpose. Our decisions reflect the collective judgment of the Board of Governors and the Federal Open Market Committee, colleagues who demonstrate analytical rigor, principled judgment, and a genuine commitment to the public interest. Our collaborative and deliberative process has long reflected a shared commitment to finding common ground in service to our mission. This institution is resilient, capable, and staffed by professionals of extraordinary talent and exceptional dedication. It has been a privilege to serve alongside so many great public servants at the Board of Governors and around the Federal Reserve System. The Fed's work is only as effective as the public's understanding of it, and you, the press, are essential to keeping the public informed about what we do and why. The people we serve benefit from your careful reporting. I welcomed the announcement last Friday by the U.S. Attorney for the District of Columbia that she had closed the criminal investigation. She also noted, however, that she would not hesitate to restart the investigation. Over the weekend, the Department of Justice provided assurances that they will not reopen the investigation unless there's a criminal referral from the Fed's Inspector General. And, absent such a referral, if they do appeal the recent court decision, they would not seek, as part of that appeal, to restart the investigation or send new subpoenas. I've said that I will not leave the board until this investigation is well and truly over with transparency and finality, and I stand by that. I'm encouraged by recent developments, and I'm watching the remaining steps in this process carefully. My decisions on these matters will continue to be guided entirely by what I believe is in the best interest of the institution and the people we serve. After my term as chair ends on May 15, I will continue to serve as a governor for a period of time to be determined. I plan to keep a low profile as a governor. There is only ever one chair of the Federal Reserve Board. When Kevin Warsh is confirmed and sworn in, he will be that chair. Once sworn in as board chair, his new colleagues will elect him to chair the FOMC as well. As I regularly point out from this podium, our success in delivering our goals matters for all Americans. I'm confident that the Fed will continue to do its work with objectivity, integrity, and a deep commitment to serve the American people. Thank you, and I look forward to your questions.
Thank you, Mr. Chair. Appreciate the kind words about the press. Often doesn't come from the podium in different places, but appreciate that. Can you talk about what is gone into your decision to remain on the board? What kind of criteria are you weighing, and how long might you stay? Thank you.
Sure. So, my concern is really about the series of legal attacks on the Fed, which threaten our ability to conduct monetary policy without considering political factors. And I want to note here, this has nothing whatever to do with verbal criticism by elected officials. I've never suggested that such verbal criticism is a problem, and neither has anyone else here. But these legal actions by the administration are unprecedented in our 113-year history, and there are ongoing threats of additional such actions. I worry that these attacks are battering the institution and putting at risk the thing that really matters to the public, which is the ability to conduct monetary policy without taking into consideration political factors. It is so important for our economy, for the people that we serve, that they can depend over time on a central bank that operates that way, free of political influence. It's part of the absolute foundation of this amazing economy that we have. It's just one of the many reasons why the U.S. economy is the envy of the world. That piece of institutional architecture separates successful countries from unsuccessful countries. It is extremely important, not for the people who work at the Fed at any given time, but for the people that we serve, that the Fed remain able to conduct monetary policy in a way that doesn't get pulled into politics, trying to help or hurt any particular politician or political party. It's critical for the people that we serve. In terms of when I would leave, I will leave when I think it's appropriate to do so. Was that all your questions, or was that?
Well, I just have a follow-up, which is, what would you say to the criticism that by remaining on the board, you're actually taking a political act and denying President Trump the majority of the board, which as president he would have if you left?
I don't see that at all. As I mentioned, I'm literally staying because of the actions that have been taken. I had long planned to be retiring, and the things that have happened in the last 3 months have I think, left me no choice but to stay until I see them through at least that long. In addition, I don't see how this will interfere. My intention is not to interfere. I was a governor for almost 6 years, and the tradition is at the Fed that governors who understand how difficult the role of chair is, and as a soon-to-be former chair, I do understand how hard it is to get consensus with 19 strong-minded people. You work with the chair. You try to be heard, but also collaborate with the chair and try to support the chair when you can. When you can't, you can't. And I think that's the attitude that people generally take, and that's the attitude that I'll take.
Nick.
Chair Powell, if I could ask about the inflation outlook. In March, you described the standard practice of looking through energy shocks as conditional on inflation expectations staying anchored. Since that meeting, there has been very little progress reopening key energy trade corridors. Can you help us understand how the inflation outlook has changed in the intermeeting period, beginning with the prospects for tariff pass-through resolving on the timeline that you had outlined in March, before getting to the energy shock that is now on top?
So, I would look at it this way. For a long time, we've been working on the hypothesis, really, that tariffs would lead to a one-time price increase, and that would go away over time. In other words, that there would be no further change, so measured inflation wouldn't reflect that higher level going up more and more. And it's time for that to happen. We really do expect that to be happening in the next 2 quarters. So we'll be watching very carefully to see that what we've thought all along would happen. That's the kind of critical part of the forecast. We need to really see that. With energy, it's so hard to say. I mentioned, in sort of the textbook, you would look through an oil shock because they tend to be short-lived and they tend to revert. And monetary policy works with long and variable lags, so you wouldn't necessarily react right away. I think that is all the more true given that we're several years above 2% inflation and that we're already looking through the tariff shock. So I think we're going to be very cautious about that. But the question about looking through energy really is not in front of us right now. It hasn't even peaked yet. And I think we'd want to see the backside of that and progress on tariffs before we even thought about reducing rates.
So if I could follow up, the statement today preserves language that has taken on some meaning as it was socialized when the committee was actively lowering rates. Why is that easing bias still ripe, given how different the inflation outlook is now versus a meeting or two ago? And what more would have to happen for it to get evicted?
So that was, as you will recall, we had a discussion about that at the last meeting, and we talked about it in the press conference after the March meeting. We had the same today. We had quite a vigorous discussion about that very issue and the guidance, and is it still appropriate and that kind of thing. And I would say that the number of people on the committee who either could support that language changing to a more neutral stance so that a hike is as likely as a cut, that number has increased over the intermeeting period, and it's easy to see why. I mean, it's a good question, right? You see, inflation has moved up over the interim a bit. Core inflation is 3.2 now, moving, albeit just a little bit, in the wrong direction. And we know that there will be, that there's headline inflation coming out of the Gulf, and we don't know how much that will be. We're going to need to see. So it makes all the sense in the world that people would look at that and we'd have a vigorous discussion about that. You saw that 3 people dissented over the language. I think all of those people agreed with the rate decision. So the majority of the committee did not want to do that, and I didn't think we needed to do it at this meeting. It really was just a question of why do we need to do that now? We have so much to learn. There's so much uncertainty about the path ahead. There doesn't need to be any rush to make that decision now, because what happens in the next 30, 60 days, even by the next meeting, could really change the picture around that language. So, it's a much closer thing on the committee than it was in March, and that makes all the sense in the world, it seems to me.
Claire. Claire Jones, Financial Times. Just going back to this issue of the easing bias, we've now got oil approaching $120 a barrel when it comes to the benchmark Brent crude. If it stays around those levels 6 weeks from now, what would be your best guess as to whether the easing bias will still be in the statement? Thank you.
I wouldn't want to guess. Well, first of all, we're going to have new leadership in all likelihood by then, and new leadership is going to have a very important role to play in that. So I won't be standing here at this podium to answer your question. So I don't know. As I mentioned, that's all I can really say is that we had a great discussion about that today. It's gotten to be a better question in the interim period. We had the discussion. A majority are still on the page of not feeling the need to move to that level, and that's where I am. I get it, though. At a certain point, you would move, and that conceivably could come as soon as the next meeting.
Thank you. And just to follow on, the new leadership also seemed rather lukewarm on press conferences and on the dot plots. What would your advice to him be on these communication tools? So
I'm not going to give him any advice through you today here, but I think communications generally is. I think every incoming chair takes a look at communications, and it's a very healthy thing. I mean, communications it's very complex, and you can always be looking at new things, and if that happens, it feels like it's going to happen. That's a completely appropriate thing.
Neil.
Hi, Chair Powell, Neil Owen with Axios. Can you tell us if you've been in touch with incoming Chairman Warsh? To what extent is this a normal transition process versus all the things swirling around, something unusual, and what can we expect when he takes that podium in a few weeks?
I haven't seen him since seeing him at a dinner in January where I congratulated him and had a nice chat with him. Haven't seen him. I don't know what a normal process is. You know, the last process was with Janet Yellen, with whom I had worked for 6 years, and so it was, we were sitting down the hall from each other, so it was a very different thing. I think this is and will be a very normal, standard kind of a transition process. So that's what I expect. I have every reason to think it will be.
Quick follow-up: is the Supreme Court ruling on Governor Cook a factor in when you may leave as a governor?
I wasn't thinking of it as such, but no, not really. I mean, I'm thinking more of the other things I mentioned.
Chris.
Hi, thanks for taking our question. I wanted to ask a question about your tenure, and Chris Rugaber at Associated Press. During your tenure as chair, you often spoke about how disadvantaged Americans benefited from extended periods of low unemployment. In the new framework the Fed adopted in 2020, some economists say elevated the Fed's employment mandate. Are you worried that the pandemic inflation spike that followed will make future Fed chairs more reluctant to pursue a hot jobs market, and should they be?
I don't know the answer to that. I mean, what we experienced in the teens, the mid-teens, was really low levels of unemployment for a long period of time and no reaction from inflation. And we all very much took notice of that. We also noticed that the biggest wage gains were going to people at the bottom end of the income spectrum. And we had many reports of, it felt like a fairly stable equilibrium, and a lot of benefits were flowing to people at the bottom end of the income spectrum, including companies were, setting up in people who were confined and like training them before they got out, and it was a very healthy sort of set of societal dynamics. So of course, I think anybody would love to get back to that. I don't think that anything that happened to create the global pandemic inflation was in any way related to overweighting the employment market. I mean, it was a global shock that happened essentially very similarly all over the world. That had to do with closing, reopening, stimulus, and all that. And I mean, you could look at a graph of 10 big economies on the page and not know which was the U.S. and which was Germany, France, and things like that. So I don't think that insight was in any way responsible for the high inflation that we experienced. So, I mean, I think it's always been a balance. You've got to be strong on both of our dual mandates, and we for example, now we don't feel that the labor market is at all a source of inflation, so we don't need to be worrying about that. It's been a long time since we have had to worry about that. Well, actually, during the pandemic recovery, the labor market was super overheated and tight, and that's when we had to worry about it, but not now.
Just on the other issue, do you need more assurance from the Justice Department before stepping down? Is that what you're waiting for, or what else?
I'm waiting, for the investigation to be well and truly over with finality and transparency, and I'm waiting for that, and I will leave when I think it's appropriate to do so.
Michael McKee.
Michael McKee from Bloomberg Television and Radio. I'd like to ask you if you could explain a little more or characterize a little more the discussion about the two-sided view and interest rates, because there were some members of the Open Market Committee who've been suggesting that we may need to raise interest rates even absent the war because inflation was not coming down fast enough. Is there any sense that interest rates might have to go up, or was this just a setup to sort of warn people that you're worried about the war impacts?
So nobody, the three dissenters and others who could have supported that, and others who were voters and non-voters who preferred it, they all supported the rate decision, right? So people are not saying we need to hike now. It's more a question of, don't we kind of feel that we should be neutral? And what are markets doing? People argue that this is consistent with markets are doing. And again, it's a very fair question, but these changes, there is, it's a form of forward guidance.